And chips top of the list this morning. We had Jensen Huang setting that $1 trillion target for sales, so we look for the European read across this morning. Also keeping in mind Commerzbank and UniCredit. We were hearing from the CEO of Commerzbank, Bettina Orlopp, earlier in the programme, saying that she's going to focus on Commerzbank's own strategy after that bid from UniCredit yesterday. And of course, once again, energy in focus. It is the reason for the risk-off mood elsewhere, but we're looking for energy stocks to be higher as you say, Iran steps up energy attacks on infrastructure around the Persian Gulf. So we're heading towards the open, Tom.
Yeah, historically what the IEA describes as the biggest oil shock and energy shock on record. And again, it's infrastructure in the Middle East that remains vulnerable. So let's see how this all reflects at the open today. Futures are pointed lower. Right now, the FTSE 100 is very, very modestly supported. No doubt energy will be playing its role there as the sector potentially gets a lift from higher Brent and WTI prices. Currently, across the benchmark, you're a little bit negative, but wait for the pricing around the DAX. Lizzie was talking about Commerzbank. That's a very separate story to what's happening in the geopolitics, of course. Commerzbank saw a significant rise yesterday, gaining a little over 8% by the end of the close on that bid by UniCredit. We've been hearing, of course, from the CEO of Commerzbank, so we'll be watching that stock as well. Across the FTSE 100, the stock 600 right now, losses of 0.1%, as you can see. The FTSE 100 is a standout, with the energy sector no doubt playing that role. The CAC current over in France currently down 0.2%. The DAX a little weaker as well by 0.2. The auto sector was a drag there yesterday. The IBEX is largely unchanged as well so far in the session. The FTSE 100 up now, just shy of 0.2%. Lizzie, what are you seeing under the hood?
Well, if you break it down by sector, Tom, this is something we haven't seen much recently. We've got about half of sectors in positive territory, half in the negative this morning. So utilities top of the basket, autos and parts not far behind, basic resources in third place, and then bottom of the basket, media, chemicals, industrial goods and services. So it looks like a pretty normal day, actually, when you look at the broad sectoral index. Take it down to individual movers. We flagged the chip stocks. We had that NVIDIA news yesterday, and it's a negative picture here. So ASML down 0.5%, about the same for BE Semiconductor. ST Micro down 0.9%. So red generally in that space. And then the banks. We were hearing from the Commerzbank CEO, those shares are down 0.4%, but UniCredit is also in the negative this morning, down 0.8%. And just in terms of the energy names, as expected, gains for Shell, BP and Total as we see oil prices higher this morning. Brent now at $103 a barrel.
Let's get some market analysis and bring in Jeffrey Yu, Senior Market Strategist at BNY. Jeffrey, good morning. Thank you for joining us. You write in your notes about the relative resilience of these equity markets. When does resilience become complacency?
So when it comes to asset allocation, if we're complacent about stagflation risks, I think it's as simple as that. It's sort of heartening, and in a roundabout way this time around, central banks are very proactive. So this week we're sort of on watch who's going to come in with a surprise hike or warn of a surprise hike, barring the RBA overnight, for example. So that is in some part to defend against stagflation. But on the other hand, if you're going to tighten financial conditions quite aggressively right now, isn't that negative for equities as well? So is it going to be some short-term pain for medium to longer-term gain? I think then that's where getting that balance right is where perhaps markets can be a bit.
Do you think it makes sense to, in some sense, look through inflation and look towards the growth hits?
Short term, yes. I think, if anything, the dampening effect of growth, which had already been on, let's say, a different stage in the cycle compared to 2022, 2023, that has already helped to offset some of the forward inflation risk that we're risking, from the supply issues right now. So it's also important for those hawkishly leaned central bankers to not go overboard.
So you say we're moving from phase one, where oil was in the driver's seat, to phase two, where central banks and the policy response in the driver's seat. What does that look like for markets?
So for markets, it's financial conditions, and it's always after the fact. So when do financial conditions tighten a bit too much relative to where we are in the cycle? And that brings back some other issues, such as valuations, such as credit, private credit, for example. I think that's always lurking in the background because it's something we're concerned about in the first place.
Okay. So do you see contagion risk there?
So right now, no, because I think central banks, they're very, very careful in calibrating, what's going to take place in the short term. So our view for central banks, especially in Europe, and also the Fed and the BOC, is try to sound as hawkish as possible without being hawkish or without actually tightening rates. So that's going to be the balance. I'm curious who's going to be, especially in the Governing Council for the ECB, are there going to be some sneaky one or two?
I was going to say, does that apply to the ECB as well?
I think more so for the ECB, compared to all the other central banks in Europe at this point. And also, going back to the Bank of England, will there be any flips on those votes for a cut going back to a Hold'em, for example? But I think for the ECB, that's where, if you just listen to the language, talking about vigilance, that was Trichet's code for a hike, right? We've had both Bundesbank, the German Governing Council members, talk about that. So I think that's where maybe you have a bit of a marginal risk.
But that's hard to do, isn't it? You've already had so much hawkishness from the Governing Council. You've got so much hawkishness expected from the markets when pricing for the ECB. How does Lagarde pull that off?
Right, so I think she's going to be asked, A, was it unanimous? And B, will the next two decisions, especially heading into the June decision, markets pricing the June decision as almost a done deal for a hike, is the next ECB decision going to be a live meeting? So I think that's where, so maybe the opening, so the statement's going to be as hawkish as possible, but then in terms of communication, the press conference, she's going to try to walk things back. Nothing's done deal. Yeah.
Nothing's a done deal when it comes to the ECB and the rhetoric coming through from Christine Lagarde. When it comes to the BOE, there's clearly a risk from central bank governors that they underestimate the inflation impacts and they don't want to repeat of what happened, of course, during COVID and the pain that came through as a result of that. But there's also a risk that you just exacerbate a weakening economy. Is the BOE closer to making a policy make on one side or the other?
So I think how fiscal plays into this is going to be very important.
Do we have any fiscal?
Is there room for fiscal, Jeff?
53 million. I think, that was the number yesterday for the heating oil support.
Hardly the bazooka.
So hardly a bazooka. I think when the energy price guarantee in 2022, the initial estimate was £60 billion, right? So we're talking cheese here, right? So that's where, if I go back to what the Banque de France governor mentioned, so France does not have the resources for an energy price guarantee for a price cap, but they've brought in a short-term fuel price cap anywhere, I think in France, 15 to 30 euro cents for fuel prices. If it really goes well beyond that, and that would take, and then we have to go back to geopolitics to see what the impact is, then it's going to be a bigger issue. But I think central banks right now can be a bit more cautious. They don't need to go overboard because fiscal is a bit more limited right now.
I mean, we were talking about the political risk with Kim Crawford earlier. Surely in a moment like this, when you've just had the Greens winning a by-election, there's going to be so much pressure to do more and more and more to support people through a cost of living crisis. Right. If this war continues and oil continues to rise, the bond vigilantes are not going to be happy with the UK.
Actually, will be. I think the UK is in a so more by accident rather than by design in a better position because I just got an email about my energy prices for the next quarter, so they're lower actually. So the key date is actually going to be heading into the end of May when we get the next price cap. How that's going to be calibrated. So where are European natural gas futures going to be heading towards mid-May? When the consultancies start to estimate the price cap as well. That's when inflation expectations really start to rise. So if, let's say, things normalise by May, I think the UK will have been in a better place. No headline impact on energy bills per se, but for Europe, it's going to be an individual country basis. But I think right now it seems like they're behaving a bit more responsibly, compared to 2022, 2023. But again, all depend on the situation.
Gilts relatively relaxed in the session today. Yields are actually down 1 basis point at the front end. Kim Crawford at JP Morgan again is a buyer at the front end when it comes to gilts. What is looking mispriced to you at this point?
So I think the mispricing right now is more in terms of the carry trade within FX. So we track, based on our data, so if I look at the high-yielding currencies in APAC, in Central Eastern Europe and the MENA region, and also in LATAM, there's only one currency right now that people are shorting, so they've gone underheld. That's Romania. And because, rightfully so, real rates are very, very low there right now. I think inflation's heading towards like 9 handle or something, but headline rates are 6. Everyone else has actually positive real rates. But it goes back to your point, real rates very high right now, heading into a potential supply shock and a growth shock. Will there be a temptation for actually central banks to pull back a bit from that and lower real rates? And that's when things are coming off. So I think where the mispricing is, can you afford to be almost limit long the carry trade still in this kind of a risk environment? That's what we're seeing in FX markets right now. LATAM is a bit more resilient, a bit more removed from this. That I get. But if I look at APAC, where the balance of payments risks are, if I look at EMEA, where, let's say, Hungary and Poland, where even before the crisis, the deficit targets for this year were heading towards 6%. That doesn't bode well for real rates. So I think that's where some risk-off may happen still.
And this week, with all the central banks making decisions, making commentary, who could surprise the market the most?
So I go back to the ECB, where there may be a few more votes for a hike. A lot of interest in the Swiss right now. So how are they going to try to manage this? On the one hand, people want to buy the Swiss franc. We've seen Euro Swiss run lower because of risk aversion, but they've allowed that to happen. On the other hand, you almost want a positive currency right now to limit the pass-through risk, from higher external energy prices. So markets right now looking for, will the S&B intervene? Are they going to up the ante on that? But actually, I think their tolerance for a stronger franc is going to be stronger than markets anticipate.
Okay, that's interesting. It's further upside maybe for the Swissy because they don't intervene because it benefits in terms of the inflation.
I still think the Swiss franc is going to be the best performing currency in Europe, full stop. Yes.
Swiss franc, best performing currency in Europe.
Yep.
Let's get your take on the BOJ and the yen. There's expectations from some that you get to 160, 165.
Right.
Do you have a clear view on this?
Go back to real rates. It seems like the markets still want to test that 160 level. Yes, rhetoric will pick up, but until there's, let's just say, strong action, you know what I mean, on the back of that, market's going to continue to push against that. I think one area where Takaichi has mellowed a bit is knowing the current situation, she can't push aggressively on the fiscal side, and there are other issues to consider right now. So if fiscal's going to be delayed, that was the big risk to real rates, and that might just support the yen to some extent.
Is it already a balance of payments crisis in Japan?
Not yet. But I think we would need to see that on a more sustained basis. I think there's stronger resilience. I think Japan and Korea, both of them have about 250 days worth of reserves, so they can use that for the time being. If this is going to be extended, let's say towards year end, then it's a different story. It's very, again, same for Japan, Korea, and also for Europe, very different compared to the situation 22 and 23. Yeah.
Jeff, always great to have you on. Jeff, you, BNY Senior Market Strategist, thank you very much. Well, let's take a look at the core six, shall we? How are they faring this morning? The likes of LVMH, Rheinmetall, ASML, all in the red this morning. But actually, we're seeing gains for Novo Nordisk, Schneider Electric, and Nestle. But let's dive into some of the individual stocks on the move this morning with Charlie Wells. Charlie.
Good morning, Lizzie. So we've got some really interesting movers across the digital and real economy. So I've got some very different stories to tell compared to what we've been talking about a lot with, say, oil companies and transit companies. Let's start with Trustpilot. They are up some 14% this morning. This is that online review website. Now, they suffered a short attack last year. You'll remember that. But there was a lot of debate about this company. Do they have a competitor out there? Morgan Stanley researchers said they don't. So we're seeing a lot of strength here. They also delivered a very strong earnings report, so really up almost 16% now, so a lot of strength there. I said we were going to talk about digital companies. Let's bring up Viaplay. They are that Nordic streaming company, so again, streamers so in focus in the entertainment industry. There is news that some investors would like to take this company private, including Canal Plus, the French company, and some Czech investors. So they are up over, around 4%, hovering around 4% there, just indicating the importance that streaming has. And of course, I know a lot of people love those Nordic television shows. So again, really kind of getting a lot of positive momentum there. Staying in the green, but moving into that real economy, let's go to Wix. This is the, the British kind of home improvement company. They're up some 5%. They had a really strong earnings report today. And actually, they had some interesting commentary, right? Talking about how some of the wet weather that we've seen has been bad for their outdoor projects, but actually they've seen some strength inside, people doing some of this DIY inside, leading to a beat there and the market liking what it's hearing. Let's stay in that kind of British home space, the British home builder space, the British financing space, actually, I'm sorry, moving out of that, thinking to Close Brothers. So again, they had a really significant drop yesterday. They, were caught up in that kind of motor financing issue that we've been seeing here in the UK. We had a short report yesterday talking about how they might actually have to set aside more for that compensation in motor financing than people expected. Close Brothers pushed back. They have a report out this morning, an earnings report, talking about how they're going to make some job cuts. So down this morning, but again, not down as much as we saw yesterday, at least not at this point in early trading. And let's end with financing. We're in that financing space right now. Let's take a look at Commerzbank and UniCredit. Again, yesterday, we had that news of UniCredit's, renewed push to take over Commerzbank. But by the end of the day, we got commentary coming from the German government saying, hey, we, at least right now, like Commerzbank as an independent entity. And so this could be the market digesting some of that. Not a huge change here, but kind of dealing with this push-pull and the pushback from Germany.
Yes, the gains yesterday and a little bit of profit-taking maybe on the back of that, but the gains of around 8%, a little over 8% for Commerzbank yesterday. Charlie Wells, Charlie, thank you very much indeed on some of the stocks on the move. Anna Edwards, of course, has been sitting down with Peter all up to talk about that takeover bid. That was a really fascinating conversation. We'll play more of it through this show. I think worth reflecting again as we think about the banking space, what's happening in private credit, and a note put out by Morgan Stanley suggesting that private credit default rates could reach 8%. There is more to go in this story in terms of the AI disruption and what that does to the value of software names sitting in private credit.
It's interesting that you've seen this pause in that great rotation away from software stocks in the US, but not so much in the European space. But yeah, they're saying that while AI disruption has yet to impact private credit fundamentals in a material way, this elevated leverage, the looming maturity walls within software are going to have to mean that there is going to come a time when this pushes default rates back to near peak levels, at levels that we haven't seen since the pandemic. So the reminder of the cockroaches in private credit there from Morgan Stanley. But coming up on the programme, NVIDIA CEO Jensen Huang makes a $1 trillion forecast at its annual Product Expo, and we'll bring you all the details next. This is Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 18 minutes into today's session, and there's not much doing when it comes to European stocks this morning. We're pretty much treading water when it comes to the Stock 600. The DAX is down about 0.25%. The CAC 40 in Paris is flat to the downside. The FTSE 100 is the one that's eking out gains. It is the reason for the risk-off mood elsewhere. It comes back to oil. Of course, we are higher again because of Iran attacking energy infrastructure. We now have Brent above $100 a barrel, $104 a barrel right now, and that cushioning the FTSE because of the exposure to energy names, Tom.
Okay, let's get a take on what's happening in the tech space right now, because shares in Nvidia saw a bit of a pop yesterday in the session, a bit muted in terms of pre-market trading. Well, up 1.6% for a $4.4 trillion market cap company is not bad. That's after CEO Jensen Huang predicted $1 trillion in sales from its flagship AI processors. Huang also unveiled a variety of new products and plans to push deeper into central processing unit CPUs while addressing the company's biggest annual event, which continues today. Let's get more and bring in Bloomberg senior strategist Neil Campling. Neil, what stood out? Did you watch the full 2.5 hours? What stood out to you?
It didn't need to be 2.5 hours, to be honest. It could have been done in 30 minutes. But, yeah, I think the key thing was the shock and awe of the pause before he said the $1 trillion. It made for great theatre and TV, to be honest. But the thing was, the consensus street numbers are almost there at 1 trillion through the next 2 years. So there was no massive upside surprise in terms of the big numbers that were given. So I think for investors, they'll focus more on what we hear from the CFO with the meeting with the analysts today that comes out later in California. So that would be a key focus. We heard some great things in terms of some of the new products, the new Grok chip, which is basically 25% of data center chips expected going forward. And this is because they're facing new competition from AMD or from Google's called TPUs. Tech loves an acronym, of course, and others in the space. They're trying to stay ahead of the competition. And, of course, they have done so far, but whether they will going forward remains to be seen.
Okay, and you had loads of different partnerships and deals announced. What was most important for you?
Well, the interesting ones were the partnership with Uber, potentially on the robo-taxis, which is a technology that's been much promised for the last, in reality, 8 or 9 years. But we haven't yet got there, so that could be a key one, I think. Also, Samsung with the announcement of the new memory chipset, which was announced after hours, which gave a boost to that particular stock. And that's critical in terms of memory and the HBM that's required as a side for the technology. So I think that's a key partnership as well. And then actually some of the stocks that you think would be threatened didn't actually fall as much as you may have expected, such as Intel. You mentioned CPUs, for example, on the call. And that didn't really get hit. The stock closed flat in an uptake, but it wasn't like hit massively like some of the disruption we've seen inside the AI areas that we've seen in recent
That's just a really interesting relationship, isn't it? Because on one level, NVIDIA's competing, but they're also a shareholder now in Intel. They've invested, haven't they? So it's an interesting dynamic. You talk about memory, which is so important when we think about the broader ramifications of that demand for data center memory and what it all means for electronics and devices and prices, as we already think about inflation, of course. The chairman of SK, which is the parent company of SK Hynix, which makes this high bandwidth memory, has come out and said that we could be seeing these prices elevated into 2030.
Yeah, absolutely, and that's a key risk in terms of the inflationary risks of the AI, kind of the whole story around AI, but also in terms of when we saw from these Grok chips, for example, that were announced. They were saying they didn't require memory. So based on current projections that we could be in short supply for the next 3 to 4 years. But whether we actually get there or not remains to be seen, because memory, by its very nature, is highly cyclical within semiconductors. Triple-digit price gains that we've seen in this quarter in this space in terms of DRAM memory pricing, that's really unsustainable. So at some point in time, we're going to have to either reduce the expectations of growth in the whole AI complex, or something's got to give in terms of the demand-supply push-pull dynamics.
Okay, Neil, thanks for the analysis. Bloomberg senior strategist Neil Campling. Well, turning back to banking, of course, we were listening to the Commerzbank CEO Bettina Orlopp speaking to our very own Anna Edwards earlier. She says she didn't see UniCredit's €35 billion takeover bid coming.
It was a surprise to us, as to everybody else. The takeover offer, it was not pre-aligned, and more surprising, I would say, was then that this is an offer at a very low price if you compare it, for example, to our target price of €37. And it's apparently also not meant to take control. So that's surprising.
For more, we're joined by Bloomberg's EU finance team leader, Stephen Aarons. Good morning. So you heard all up there. She says there's been no contact with the bank about UniCredit's takeover bid, and it's a low offer. Where do we go from here?
Yeah, so, I mean, it was a surprise to everyone. Really big news yesterday. A lowball offer, really. No one, including UniCredit, expects many investors to accept it. They don't want many investors to accept this offer. They just want to go past a 30%, which under German securities law would require them to make a mandatory bid. Once they pass that threshold, they can then buy shares as they wish on the open market. And so that's probably the plan that the UniCredit CEO, Andrea Ogel, is pursuing at the moment. And then, hopefully, I guess for him, at some point, Commerzbank will come to the negotiation table and talk to him about if a deal is actually possible.
Stephen, Bettina Orlopp told Anna Edwards that she had not seen, the Commerzbank had not seen a detailed proposal, that UniCredit was not sitting down with them with a detailed proposal. Is that a fair characterization? And if not, why not?
So I guess it's a sort of fair description from her point of view. UniCredit has been pretty open that they want to buy Commerzbank. There are certain obstacles in the way, most notably the opposition by the German government, which is still a shareholder in Commerzbank. But what UniCredit CEO Ogel hasn't done is really put a very concrete plan on the table and say, these are the synergies I see, the revenue that we'll have together, and so on. So I guess from her point of view, the Commerzbank CEO's point of view, she can say, look, I haven't seen the proposal. Why should I sit down with you if I don't really know what you want? So clearly she's putting the ball in his court to say, put something on the table and I'll sit down with you, which makes it easier for her to say, you know, there's nothing to talk about and I'm not talking.
Stephen, thank you very much indeed with the latest in terms of that tussle between UniCredit and Commerzbank after we heard, of course, from the CEO of the German lender, Bloomberg's EU finance team leader, Stephen Aarons. Let's briefly check in on what's happening and take you back to the equity markets this Tuesday. So a little bit of softness, flat, in fact, across the benchmark stocks 600. The UK holding its head above water, up 0.2% on the FTSE 100. CAC current is largely unchanged. A little bit more pressure coming through on the DAX over in Germany. The DAX is down 0.2%. Utilities outperforming in terms of your sectors, up 1%. On the downside, tech off by 0.7%. Lizzie.
Yeah, we've got UniCredit shares down nearly 1% now. Commerzbank flat to the downside. But coming up right here on the opening trade, despite calls from President Trump, European foreign ministers say that they have no appetite to expand their existing naval operations into the Strait of Hormuz. We'll get back to the geopolitical story as we look at oil. Currently higher, above $100 a barrel. Brent now trading at 103, just shy of $104 a barrel, up 3.7%. Stay with us for more. This is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The opening trade. We're 30 minutes into today's session, and it's a pretty slow start here in Europe. The Stock 600 and the CAC 40 pretty flat this morning. The mood is risk off on both sides of the Atlantic. Futures pointing lower stateside as well because we have higher oil prices again. Iran stepping up its attacks on energy infrastructure in the Persian Gulf. Hence, we have Brent over about $103 a barrel. That pushing up the FTSE because of its exposure to energy names. We're up about 0.1% at the moment, but weakness for the DAX here, down 0.3%. Tom, what are you seeing under the hood?
So the disruption, the uncertainty continues in the Middle East, and of course you may have some investors waiting on the sidelines ahead of the central bank action of this week as well. In terms of the split, here's how things are shaping up this Tuesday then. You've got 230 stocks in positive territory. You've got what's happening in the energy space, of course. You've got utilities performing relatively well. On the downside, 345 stocks currently in negative territory. Volumes are lighter, though, in the session today, down 42% versus that 20-day average. Let's flip the board and have a look at the leaders in today's session. In the infrastructure and private equity space, you've got 3i Group coming through with some details in terms of results, interestingly, and planning to invest potentially 300 million euros to build out a majority stake in Lefdal Mine, which is a data center as well, up 2.5% on that story. That's a very separate, idiosyncratic story to what's happening more broadly on the macro front. And in NL, as we think about the energy space, it's also coming through with some news in terms of damages and loss. It's looking for damages and loss of profits in an arbitration request it filed against Wari Energies, and that seems to potentially be supportive, though it's arguably more about what's happening in the broader energy space. That currently up 1%. Talking of that uplift in terms of Brent prices, Shell gaining 1%. Just one example, of course, of the feed-through in terms of high oil prices and how that's benefiting at least those energy majors. On the downside, let's flip the board and have a look. UniCredit, of course, we've been talking about that tussle in terms of Commerzbank versus UniCredit, of course, and we've been hearing from the CEO of Commerzbank. The German government has essentially said this takeover is not going to happen at this point. Commerzbank have said, show us a proposal, show us details. UniCredit currently down 1.2%. ASM International, this could be a supply chain story, falling 2.3%. International. Interesting despite and in light of what we've been hearing from Jensen Huang and that demand that he still sees for those chips through 2027, $1 trillion, but that isn't benefiting that story and that narrative. ASM International lost, at least not in the session today. Richemont in the luxury space currently down 0.8%, also facing some downside pressure. Lizzie.
So not the best day for luxury. Well, here's what else you need to know this morning, Tom. The New York Times is reporting that the US has told Cuba that for meaningful progress to be made in negotiations, President Miguel Diaz-Canel must step down. The paper reports that officials are negotiating the future of the communist-ruled Caribbean island, and it comes after Cuba's power grid suffered a total collapse yesterday as the nation struggles with crumbling infrastructure and a de facto US oil blockade that's pushed the island to the brink. Elsewhere, the Wall Street Journal is reporting that the Securities and Exchange Commission, the SEC, is preparing a proposal to eliminate quarterly earnings requirements, giving the companies the option to report just twice a year. The Journal says the proposal could be published as soon as next month. The move likely to face opposition, however, from investors, but supporters saying that it could help to boost the number of public companies in the US. And US President Donald Trump is reiterating his appeals for other nations to help secure the Strait of Hormuz. This as the war continues to roil energy markets after Iran stepped up its attacks around the Persian Gulf, further hampering the outlook for global fuel supplies. Israel is also expanding its military presence across southern Lebanon, potentially creating a depopulated buffer zone as long as the threat from Iran-backed Hezbollah persists. Tom.
Let's get a perspective in terms of how the EU has been responding to the war against Iran. Of course, the EU Foreign Affairs Chief says European ministers have what she called, quote, no appetite to extend their existing naval operations into the Strait of Hormuz. President Trump has called on other countries to escort tankers through the shipping lane, which has been effectively closed, of course, since the US and Israel attacked Iran. Kai Kallas said ministers rejected the idea of expanding current EU naval patrols from the Red Sea.
The discussion on whether we are, also extending this mandate to cover the Strait of Hormuz to go north from the Muscat line, there was no appetite from the member states to do that. As I said, this is nobody wants to go actively in this war, and of course everybody is concerned what will be the outcome.
Let's bring in Oliver Crook, Bloomberg's chief Europe correspondent, joining us from Brussels, who, of course, was attending that meeting as well, at least on the sidelines, and listening in and speaking to ministers. Ollie, President Trump wants a coalition now. Suddenly he likes coalitions, and he wants his allies to participate. It seems like the EU is not going to be playing that role, despite, as the Trump administration fairly points out, Europe's relative dependence on energy out of the Straits of Hormuz. What is the thinking in the halls of power in Brussels?
So there are two dimensions of this. The first is the EU naval mission that's already active in the sort of Red Sea that was in response to the Houthi threat to the shipping lanes there. And it's a very small mission, we should say. It's about 3 naval vessels. There have been deliberations about potentially expanding the size, but expanding the remit to potentially send a political signal of some kind to President Trump to potentially be helpful in the Straits of Hormuz. But again, after deliberations among European foreign ministers yesterday here in Brussels, the answer to that question was no. The second dimension of this, of course, Tom, is the question of NATO activity within the Straits of Hormuz. If you asked on Friday, I think almost anybody in NATO whether or not this was a NATO responsibility, the answer would have been no. But then over the weekend, Trump posed the question very openly to NATO, basically threatening again American support for NATO if there is not some sort of coming to the aid by certain NATO members to the United States in the Straits of Hormuz. And again, the response to that appears to be no from NATO members. We should say that some of the people I've spoken to, particularly the Baltics, and we've heard comments from Poland and Finland, they tend to be more open and receptive to these sorts of ideas because they are very dependent on keeping the United States on side in NATO. But you talk to the other big players, whether it's the UK, whether it's France, and specifically Germany, who is really sort of an interesting case here. Germany has been standing most closely with Trump in terms of his activity in Iran. They have been sort of least in terms of objecting to it. That being said, we heard from the German defense minister yesterday, Boris Pistorius, saying that there would be no military participation by the Germans in any sort of way, that this is not their war. If NATO wanted to expand its remit to beyond the region, you'd need an international framework to do that, and you'd need, of course, consent from the German parliament. So that's a no across the board. I think for European leaders who will be having a summit here in Brussels on Thursday, they are now bracing for the possible consequences of defying Donald Trump. Of course, there have been some abstract threats, but that is certainly going to be in focus and certainly going to be a topic of conversations for those leaders when they assemble here on Thursday.
And of course, for Ollie, what matters for markets is the impact on inflation. It's also what matters to politicians. What progress has there been on EU efforts to curb energy price rises caused by the war?
So the war is obviously a huge concern from the European continent on a number of different issues. Longer term down the road, there's conversations about migration, but immediately there is the question of energy prices. Of course, not a huge number of the cargoes from the Middle East come to Europe at the moment, but of course they're much more dependent on LNG today than they were before the war with Russia, so they're very sensitive to these price spikes. I think that the people that I've spoken to, for the time being, they're considering this a sort of energy price shock, but not yet a crisis. I think there's a little bit of runway, potentially 2 months is the figure I've heard from a couple of people, where before this becomes a crisis. But for the time being, some of the measures that are being discussed, there are some at the member state level, so there are price caps on gas, on energy. You've seen a couple of countries roll that out. At the EU level, there's going to be discussions about potentially reducing taxes on electricity, grid costs on electricity as well. And of course, and I won't give you the sort of all the details and the ins and outs of the emissions trading system, but this is one of the things, a sort of EU mechanisms to put prices on carbon emissions is another thing that they're talking about tinkering with. The Italians want to put it fully on pause. Others do not want to. So that's going to be some of the issues, some of the debates that they have in terms of reducing energy prices. But Lizzie, I think the bigger conversation that this has prompted in Brussels was, again, these sort of comments from the Belgian Prime Minister over the weekend, who's openly calling for normalization with Russia to get back basically on those gas and oil supplies. He says that European leaders in private say that this is a good idea. They won't say it publicly. So this is something we're going to be pressing European leaders as they arrive here on Thursday.
Okay, Oliver Crook, our Chief Europe correspondent for Bloomberg TV, thank you so much for the update. And speaking of that European reaction to this war, Finland's president says that NATO allies should take Donald Trump at his word when he ties the future of the alliance to actions taken to secure the Strait of Hormuz. Speaking to Bloomberg, Alexander Stubb also called for mediation to end the war.
I think we now need to de-escalate rather than escalate. So what we probably need is peace mediation. The actual original operation was not discussed with allies, but I'm sure that President Trump is now in conversation with the UK, with France, Germany, the big players.
I think President Trump said that NATO faces a very bad future if U.S. allies fail to assist. How should we take that?
Well, I think, we obviously have to take everything that the President of the United States says seriously. I think the key now is to focus on the alliance and what we do. We are a defensive alliance, which means that we don't do military attacks as such. We're 32 countries. Of course, after the Cold War, we had some peacekeeping missions, but they were always justified through international law and UN charters. So this is quite different from that.
Do you think the U.S. should be helped?
I think those countries that have the capacity and the will to help the United States will do that and should do that. We have to understand that the situation, of course, in the Middle East and in the Gulf region right now is extremely serious. We have Iran that has attacked somewhere between 10 to 13 different countries with missiles and drones, and that's why I think any de-escalatory measure right now would be very useful. Iran's interest, though, the problem here is that Iran seems to have three interests. One is to cause damage to its neighbors. Two is to maximize the harm on the global economy through the oil price. And the third one is to keep up their current regime.
But how does this de-escalate? First of all, who are the right people or the right person to try and help?
Well, we need a ceasefire. So I'm just wondering whether the Europeans or actually India could get involved. We saw Foreign Minister Jaishankar calling for a ceasefire and negotiations just to calm down the temperature and freeze the situation as it is. The problem in these kinds of situations is when you kind of have three players, Israel, the US, and Iran, all with more or less different interests. It's very difficult for them to organize themselves into a peace kind of a situation.
Finnish President Alexander Stubb speaking with Bloomberg's Francine Lacqua. Coming up, more insights on the commodities impact of that war, of course, in Iran. Emily Ashford, Head of Energy Research at Standard Chartered, joining us with her analysis. Stay with us. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies. You know, I was traveling, the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Welcome back to the opening trade. We are 45 minutes into today's session. European stocks up on the benchmark just by 0.1%. You're seeing a bit more strength here in the UK with the FTSE 100 up close to 0.3%. Energy, utilities giving a lift. They are the best performing sectors so far. On the downside, consumer is under pressure, down 0.7%. Tech also taking a bit of a hit, down 0.5. You can see the picture, of course, over in France. The CAC current up 0.2%. The DAX down 0.1. You've seen industrials with the defence names actually falling in the session today, interestingly. And that is the picture broadly across your equity space this Tuesday, Lizzie.
Of course, the geopolitics continue to dominate this morning, Tom. Iran stepping up attacks on energy infrastructure around the Persian Gulf. Operations were suspended at the Shah natural gas field in the UAE as officials assess damage from a fire set off by a drone attack. Standard Chartered has now raised oil price forecasts to reflect a prolonged disruption to the energy complex with a longer tail than previously expected. Joining us now is Emily Ashford, Head of Energy Research over at Standard Chartered. Good morning to you, Emily. So even if President Trump could persuade allies to help him supply naval escorts to get ships through the Strait of Hormuz, how much would that help to lower the oil price?
I think some of the mechanisms that the US has been trying to apply for the past couple of weeks have actually been successful in maybe metering the increases in prices that perhaps we expected to see. So the fact that we're trading comfortably between $100 and say $105 a barrel at the moment, I think shows that although some of those appear to have been met by the market with a shrug, they actually are slightly softening prices. And there's so many different mechanisms that we've seen being suggested by the US. US is clearly looking for an off-ramp in this conflict. So from some of the sanctions relief from Russian crude, talk of repealing the Jones Act, the IEA's release, and then a lot of the comments that we've seen just coming out of the Trump administration that have been downplaying the severity or potentially how long the conflict will go on for. Those are actually the two key questions that I'm being asked by clients. When does this end and how does it end?
Well, you say that they're downplaying the rhetoric, Emily, but you've also got the president saying that he could still strike oil infrastructure on Carg Island. I think it's 5 minutes' notice. If he does that, where does oil go?
That's one of the key questions. It would be at odds with what we think the Trump administration wants for oil prices. Is very aware of the cost and the trickle down from, say, an intangible crude oil price to a tangible gasoline price at the pump for the American consumers and the American voters. So everything that they've done so far has been effectively avoiding Iranian exports and the infrastructure in the Gulf there. Iran, conversely, has done the exact opposite. We have seen a huge scattershot approach of its attacks across the region, and it has started to not only target some of the transportation hubs, but look at some of the energy infrastructure over the past couple of days. So Iran is looking to escalate and really squeeze the conflict. It's it's trying to give a deterrence for this to happen again by showing that, yes, it can push prices significantly higher. Obviously, Iran said prepare for $200 a barrel. We're not there, but they're giving that threat that, yes, we are able to control something that is so acutely important to America and to the Trump administration right now.
Emily, and yet Brent is at 103, so it's up 3.4% in the session today. There will be some who are surprised that it's not higher than that, given what we've outlined in terms of the infrastructure attacks and what's happening in the Straits of Hormuz. Is Brent accurately pricing in the disruption right now?
Brent, I think, is also pricing in this enormous reserve release that's been announced, the largest ever. Reserve releases are often a double-edged sword because whilst they do over time add more product into the market, they also panic the market, and it thinks that this is a situation grave enough to necessitate something that happens so rarely. So yes, we're pricing in the fact that there could be more barrels in the market, and the idea, I said that the US is desperately looking for an off-ramp. I changed my price forecasts yesterday. I think you're going to see a whole suite of banks making adjustments to forecasts because whilst I tend to pride myself in not changing them very frequently, this is such an extraordinary 3 weeks in the energy market. And I actually changed them 2 weeks ago. But we'll see people, I think, starting to price in a longer lag, so a longer tail to any disruption. And then in the very long term, I think this has really exposed what we all knew, but it's really exposed how fragile the oil market is to these various choke points, and that the fact that we take comfort in, say, OPEC spare capacity, well, that spare capacity is very geographically concentrated, and I think it's really exposed that. So what I expect to see is prices elevated, perhaps maybe $10 a barrel higher than in pre-conflict forecasts for the next couple of years.
So you've shifted your forecast for 2026 to $85.50 per barrel from $70 a barrel. We're not getting demand destruction at that level, are we, Emily?
No, we're starting to see a little softening of demand, and we've definitely seen various countries, particularly those reliant on a lot of refined product imports, starting to curtail their exports. So Japan, Korea, for example, have been softening that. So yes, there'll be a little bit of demand adjustment, I think. But no, I don't think we're yet at the point where I would use the true definition of demand destruction, in that it will never come back. What we have seen is obviously within the product space some really acute escalations in product prices, jet in particular. So I think it'll become very interesting to see how that plays out over the next couple of months. If we start seeing some of those refined product margins coming down a little bit, and refineries maybe dialing back some of their production, or using this as an opportunity to bring forward, say, maintenance periods, that is another mechanism that they can pull to maybe just see how this conflict plays out for the next couple of weeks.
Emily, we know how exposed Asia is to energy in the Middle East. We've seen the disruption, and we've also seen President Trump delaying his meeting with President Xi. Do you think that it's a secondary aim of the US presidents to hurt China via higher oil prices?
Well, China has been very strategically and opportunistically adding to its strategic reserves. It's been something that's been very important, actually, in maintaining global demand over the past couple of years. And this is the exact time, the exact reason when you start utilizing those reserves. So China is relatively insulated. Obviously, the majority of Iranian crude had two customers, India and China, and India is potentially the country more exposed to this. So China has a relative level of comfort that it's able to start drawing down on those strategic reserves, which are opaque. We're not really sure how much is in them and what their actual capacity is. And I'm not sure how much information we will get from China as to when it does start to draw those down. But it's really India that I think is more exposed to this conflict. It's one of the reasons that we saw the initial sanctions relief for some of the Russian crude targeting the Indian refiners. Obviously, that's now been broadened to all countries, but India definitely the country I think most exposed, and conversely, Russia, the country that's benefiting from this conflict the most.
Emily, valuable insights. Emily Ashford, Head of Energy Research at Standard Chartered. Emily, thank you. Let's get another view on the broader markets right now. Bring in Skylar Montgomery-Koning from our Bloomberg M Live team. Skylar, equity markets, are they still pricing in a relatively short conflict at this point? We're the third week in right now. Is this resilience we're seeing in the equity markets, complacency? What is your take on how equities are adjusting?
Yeah, I mean, I think it's absolutely complacency. I think, yes, we've had some big moves in some markets, but if you think about where we were coming from with markets in Asia in particular having very strong gains at the start of the year, if you look at a market like Korea, if you look at a market like Taiwan, we're still up significantly on this year. And I think that's also reflected, as your previous discussion alluded to, in the energy price market, right? So energy prices, they're very elevated right now as a reflection that the supply disruption is very serious. But if you look at the forward curve, it's priced to go to $80 a barrel by the end of this year. Consensus expectations are even more subdued in terms of you're still at $65 a barrel by the end of the year. Yes, some of that will be because forecasts haven't been updated, but I think because there is this bias within the market to look through geopolitical shocks, because more often than not, that proves to be right, you're having a hesitancy now as well that proves to be complacency in the long term if the disruption continues. To what extent do traders just sit back, hold their breath until we hear from central bankers, more central bankers this week? We've been discussing throughout the show how hawkish can they be without actually hiking. Is that what they'll be waiting for? Well, this is the struggle as well, right? We've already had an impact on central banks, right? The RBA hiked earlier today, and prior to the Iran conflict, they weren't expected to do anything at all at this meeting. So you're already seeing an impact on inflation persistence worries from a central bank perspective. Now, that in itself is negative for equities because you have higher yields triggered by inflation rather than growth as being very much a negative. And I think because of that, investors are looking for other ways to position. So there's been more activity in options, for example, than outright positioning. Within your kind of division of who's moving what, leveraged funds have moved out of euro, for example, very quickly, whereas your more real money is still quite exposed on a long perspective. So I think certainly you're waiting for a signal of what central banks and policymakers generally from a fiscal perspective to do to kind of recalibrate what you're thinking in the medium term. And indeed, the Stock 600 pretty flat this morning, not doing much in the meantime. Skylar, thanks very much. That's Skylar Montgomery-Koning from our Bloomberg M Live team. Well, we've got a big interview coming up in the next hour, in the next few minutes, in fact. Cathy Wood, ARK Invest CEO and CIO, will be joining Anna Edwards on the Pulse as we look at markets pointing lower, not just here in Europe, but also stateside. S&P E-minis down 0.4%, NASDAQ futures down 0.5%. They've already had the Nvidia boost yesterday, and so we are looking negative this morning. But that is it for the opening trade. The Pulse is up next. This is Bloomberg.
the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Oil rallies with Iran targeting energy supplies across the Persian Gulf, including a drone attack on a massive natural gas field in the UAE. President Trump delays his much-anticipated visit to China, saying he needs to oversee military operations in the Middle East. Plus, $1 trillion forecast. NVIDIA CEO Jensen Huang says demand continues to soar as investors want more evidence the AI boom is here to last. Let's have a quick look at where we are on these markets then, everybody. European equity markets into their stride. 1 hour is the trading day here in Europe, and Brent crude is up by 3.8%, gaining momentum once again after yesterday's drop in Brent. That's on the back of these attacks that we're seeing by Iran on energy infrastructure in the Middle East. The dollar is pretty flat after earlier strength. S&P futures reflecting the future direction of travel, the fact that European equities, or rather global equities, might be on the back foot later in the session. And the Aussie dollar in focus, as we heard from the RBA, the first of the big central banks to decide on interest rates, and they decided on a hike this week. Let's take a look at the European equity market map. This is the picture for you this morning. 1 minute past 9 here in London, so an hour and a minute into the trading session, and we have European equity markets trading a little higher, but really not by much. The FTSE 100 getting some decent gains, up by 0.3%. The CAC 40 up by 0.2%. Elsewhere, we see weakness, in particular in Germany, down 0.2%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning, everybody. Welcome to The Pulse. I'm Anna Edwards, in for Francine Lacroix here in London. A massive gas field in the UAE has been set ablaze as Iran steps up its attacks on energy infrastructure around the Persian Gulf. The escalations are adding more pressure to a fraught global fuel supply situation and further roiling oil markets. Let's bring in Bloomberg Horizon's Middle East, Africa anchor, Jumana Versace, who's with us, of course, from Dubai. Jumana, what can you tell us then about the latest attacks by Iran and where are Israel and the US directing their attentions? All of that adding to nervousness this morning.
Yep, that's right. Well, it's day 18 of the Iran war. Again, and I feel like I say this every day, really no signs that things are letting up.
And in fact, the attacks from Iran onto the UAE have intensified overnight. Many of us residents would have received several missile alerts throughout the course of the night. UAE airspace was closed for a couple of hours due to precautionary measures. And then it emerged in the morning that Iran had struck one of the key oil gas fields in the UAE. This is the Shah gas field. It's responsible for about 20% of the gas that the UAE produces and about 5% of the global sulfur supply on the market. So another key upstream energy site that Iran have tried to target. And it seems as though this has caused the operations to be temporarily halted. At the same time, reports of another fire that has come through out of Fujairah, that is that key port on the Gulf of Oman, and not just for oil exports, but also for refueling for many of the ships that also pass through on their way to the Indian Ocean. So can't really underestimate how important that is from a global strategic perspective as well. So ongoing attacks on these key energy infrastructure sites within the UAE, also an attack on Iraqi oil field as well, and then more drones intercepted in Saudi Arabia at incoming projectiles targeted towards their eastern oil fields. So this is part and parcel of a strategy that Iran is pursuing and has really intensified in the last couple of days, targeting these key energy sites. At the same time, the operations, as you say, Israel and the U.S. ongoing. President Trump has painted a picture of very strong military success. He said that they've managed to cripple their air defense systems, their radar systems. The Navy is eviscerated. They're taking out senior commands. But at the same time, Iran is still capable of inflicting damage on its neighbors and on these Gulf states, even by firing over these drones. And even though 90+ percentile are being intercepted, that doesn't mean that they aren't still causing a significant amount of disruption, which is the state that we're in today.
Yes, absolutely. And we do see some vessels passing through the Straits of Hormuz. I think 12 in the past 24 hours, Jumana. But of course, these are not from countries, certainly not from Western economies. And President Trump remains very focused on trying to improve access to the Straits of Hormuz and is disappointed with countries with supposed allies for not lending their support.
That's right. So it's interesting. Typically, on a given day, you'd get about 50 vessels, between 40 to 50 vessels passing through the straits. Over the last 24 hours, 12 vessels actually have managed to make it through, but they're all Iran-linked somehow. Some of them were directed towards China, Turkey, Pakistan as well. And Iran have made it pretty clear that they will allow access or facilitate access to friendly nations, but will make it difficult for any country that's involved in the conflict for their own vessels to pass through the strait, or even be threatened if they do pass through the strait, which is keeping many of these vessels away. At the same time, as you say, President Trump is trying still to build this coalition of countries together to help provide a mission or naval escorts to ensure the safe passage of vessels. But it seems as though many countries are disinclined to sign up for it, mainly because they don't want to get dragged into the war, and two, out of an abundance of caution. So you've heard from the European Foreign Policy Chief, Kaja Kallas. She's saying overnight that there's no appetite to get involved in any such mission. You've heard outright rejections already from Japan, from Australia, from other nations. And the big one, obviously, is China, given that China accounts for the lion's share of the oil that goes through the Strait of Hormuz. No official commentary there, but President Trump did push back the summit that was supposed to take place between himself and Xi at the end of this month. Unclear whether the two things are linked together. But the point is, there are no countries around the world really scrambling to join in on these efforts. And anyway, to begin with, our colleagues have been reporting on this, but it is very difficult to ensure the safe passage of vessels through the strait so long as Iran have these capabilities to either launch other vessels with explosives or to fire at tankers that are passing through the straits.
Jumana, thank you very much. Bloomberg's Jumana Basetchi with us with the latest from the Middle East. Now, President Donald Trump has requested a delay to his summit with the Chinese leader Xi Jinping for about a month, saying it was important for him to remain in Washington to oversee the Iran war. China had previously proposed a later date to allow more time for preparations. The U.S. president said discussions about a new schedule are ongoing.
I don't know. We're working on that right now. We're speaking to China. I'd love to. But because of the war, I want to be here. I have to be here, I feel. And so we've requested that we delay it a month.
The delayed meeting between Xi and Trump perhaps suggests there may be no imminent end to the war in the Middle East, sparking fresh concerns for more about the timing of these events and what markets are concluding. Let's talk to Morwenna Coniam from the Bloomberg Markets Live team, who's with us on set here in London. Morwenna, good morning to you. So we've heard about the geopolitical context. We've heard about the fact that this meeting has been delayed. That prompts thoughts about this going into more weeks. I mean, what are you hearing from those in the markets about what they're assuming?
Well, I think the focus is really on what the impact of this is. And ultimately, there's just a huge amount of uncertainty at the moment. We have seen sort of signs of incremental progress in the Strait, but the sense from Trump delaying his meeting is that things are not anywhere near resolved. We've got oil prices still above $100 a barrel, and whether that's already been priced into the inflation concerns that brings, I think is still something that the market is trying to assess. We have a lot of central bank meetings this week, and expectations have shifted dramatically since the beginning of the month in a much more hawkish direction. And of course, we did see the RBA hike rates. So that is what I think the market will be focused on, is actually what the banks say, as well as what they do about how they see that inflationary risk and what that then means for monetary policy, which could really impact equities and obviously bond markets across the continent and in the US and in Japan too. And of course, we also have to watch out for the possibility of any intervention in currencies. So I think there's a lot of uncertainty, and the eyes will be very much on those central bank meetings this week.
Yes, a lot of central bank meetings, and it's hard to know what to take away from the RBA that's relevant to the others, because of course the RBA was on a hiking path already, and this is the second back-to-back hike we've seen. So in terms of what higher energy prices are doing to markets, I can see that energy stocks are up by 9% month to date. That reflects the period of the war. So that's the most obvious place that we've seen reaction. But we've also seen lots of different markets being affected by shifting inflation expectations, haven't we?
Yeah, I mean, particularly if you're just looking here in the UK, we've seen gilt yields rising an enormous amount, particularly at the beginning of the month. Today, they have been faring a bit better the last couple of days, but we haven't really seen the impact of earlier in the month unwinding yet. And that's the same for equities. The FTSE 100 is doing a little bit better today, outperforming Europe, mainly because of those energy shares, as well as utilities. There is a defensive tilt to trading today, I think, because of the uncertainty. That's benefiting, exposure to those traditionally more sort of haven and defensive sectors. But at the same time, it's not by any means unwinding the risk that's been damaging for equity markets. And in Europe, we're seeing technology shares falling this morning, which after Nvidia's news overnight, there had been a bit more optimism again about AI, around AI, but that has been overshadowed once again by oil prices, and that's really driving the narrative now.
Yes, I see that technology stocks actually weaker in Europe this morning, which is interesting on the back of Nvidia. Thank you very much, Morwenna. Morwenna Coniam, Bloomberg Markets Today editor. Now, Commerzbank CEO Bettina Orlopp says UniCredit's €35 billion hostile takeover offer undervalues the German lender. Speaking to me a little bit earlier this morning, Bettina Orlopp admitted the move caught the bank off guard.
It was a surprise to us, as to everybody else. The takeover offer, it was not pre-aligned, and more surprising, I would say, was then that this is an offer at a very low price if you compare it, for example, to our target price of 37 euros. And it's apparently also not meant to take control. So that's surprising.
For more, we're joined by Bloomberg's EU finance team leader, Steve Aarons, with us this morning. Steve, good to get your analysis then of this fascinating story on the programme. Why do you think then that UniCredit CEO Andrea Orcel is pushing ahead with the bid for Commerzbank, given that there's opposition from the bank that keeps surprising the Commerzbank management? What do you think's really happening here?
Yeah, I mean, it's really a fascinating story. The UniCredit CEO, Andrea Orcel, has been pursuing Commerzbank for over 18 months now. This is the first time, yesterday was the first time he actually presented a bid. So a decisive step forward, even though, as the CEO of Commerzbank told you on the interview earlier today, it's actually not meant to be accepted by many people. So this is a bit of a procedural step to get to a level where he can continue to buy shares if he wants to on the open market and get UniCredit gradually, slowly toward that point where they can take ultimate control of the bank. It's a bit of a chess game. It's really fascinating, and this is the next step in that game.
Yeah, absolutely. I mean, what is the German government's role here then, Steve? Because the German government is a shareholder in Commerzbank. It's also spoken out dismissing this transaction. What do we expect from the government?
So the German government is really the most important, as it were, adversary to UniCredit. UniCredit probably would have bought Commerzbank a long time ago if it wasn't for the German government, which is strongly opposed to the deal. They're a shareholder in Commerzbank, the second largest after UniCredit. And of course, as the government, they wield control beyond the power you have as a shareholder. And so their opposition is the biggest obstacle that Orgel, the UniCredit CEO, is facing in his pursuit. He hasn't yet overcome that, but he's not giving up. So the German government has been saying since the very start that they're against the deal. They've never backed down from that position, but UniCredit is not giving up.
Yeah, there's also a fascinating Italian dimension to this, isn't it? I understand from our reporting, Steve, that the government in Rome is actually happier to see Andrea Orgel busy trying to do cross-border M&A than they are to see him trying to consolidate the Italian banking sector. What's happening there?
Yeah, that's true. So Orgel, the UniCredit CEO, previously tried to buy an Italian bank, a smaller one, but the Italian government was against that deal and effectively shot it down. So they're sort of tacitly, as we've reported, backing his bid for Commerzbank. They're in favor of it. You know, it keeps him busy outside of Italy. It also means, you know, a big Italian bank perhaps owning a big stake or a big bank in a German market, and the biggest one in Europe. So it's probably a pleasing thought for the people in Rome.
Thanks very much, Steve. Good to get your perspective on the programme. Bloomberg's EU finance team leader, Stephen Ahrens. Coming up on the programme, we discuss the latest tech moves. Kathy Wood is with us, ARK Invest founder and CEO. How is her investment strategy shifting as we digest geopolitical news flow around the world? This is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm here to tell you that right now where I stand, a few short months after GTC DC, 1 year after last GTC, right here where I stand, I see through 2027 at least $1 trillion.
NVIDIA's CEO Jensen Huang predicting at least $1 trillion in sales through 2027. My next guest is one of the world's best-known investors in NVIDIA, but her flagship tech fund has come under pressure over performance and outflows. Let's talk about the tech landscape, how that butts up against geopolitics in 2026. Cathie Wood is with us, founder, CEO, and CIO at ARK Invest. Cathie, really nice to see you in London. Thank you so much for joining us. We heard there from NVIDIA, from Jensen Huang. I wonder what that kind of confident outlook means for somebody who invests so much in tech.
Well, we understand it because we are seeing revenue generation exploding from the frontier model providers. Anthropic's annualized revenue run rate, so ARR, went from $9 billion in December to $19 billion today. So annualizing revenue at $19 billion, that's astonishing growth. OpenAI from 20 to 25 billion. The productivity that we are enjoying from these large language models is astonishing, even within our own firm. I'm even former skeptics that this was going to amount to very much, very New York skepticism. They're blown away by what they can do.
Do you find that already? Do you think productivity is delivering already? I mean, within your business, but for the US, for the global economy, is it already the case?
Yes, actually, on a year-over-year basis, non-farm productivity is up 2.8%. Which is above trend, and we think it's going much higher, maybe 4, 5, 6%, based on these new productivity tools. And it's not just AI, it's the convergence of AI with many other technologies, that autonomous mobility. So if we're talking about robotaxis, the productivity, the unlock there is huge. We're going to see 10 to 12 trillion in revenue generation within the next 5 to 10 years from almost nothing now. That is going to be a needle mover in terms of GDP.
Okay, we'll come back to the technology themes in a moment, Cathie. Just to take a detour to geopolitics, because it's become such a dominant market driver, and I wonder how it influences your thinking. We are week 3 of a war that's taking place in the Middle East. Many tech businesses, of course, probably quite insulated from everything that is happening there. But I wonder, what rethinking does it prompt at ARK? What shift in focus or shift in strategy, if any, does this kind of thing prompt?
Yes. Well, of course, it depends how long-term this is. And we are thinking it will be short-term. We do have midterm elections this year and other considerations. But, of course, energy prices going up, any supply shock, to the extent it slows unit growth down, it will slow down the learning curves associated with various technologies. If this is, a month or 2 months, it's not going to have a big impact at all. If this is extended, COVID, we did not understand that the supply shock would reverberate for 3 years, and that inflation would take off, and that monetary policy would accommodate the inflation the way it did. We're not in that situation right now. Monetary policy is not accommodating inflation. We're at 4.3% M2 growth on a year-over-year basis. So nothing like the high 20s, low 30s in COVID.
Okay. And do you sense that investors are maybe less interested in technology, trying to make space in their portfolios for other themes around geopolitics, around defense, around infrastructure? Is that something that is causing outflows at ARK and other technology investments?
Yeah, it's interesting. In the US and here, UK, Europe, we've had inflows into our ETFs. Not huge, but there's been a turn. And so I think many people are beginning to think that this is just like April of last year. And I was here in London saying, we're in a bull market and we're climbing a wall of worry. And the tariffs put in a few bricks. The government shut down. Now the Iran war. So they seem to be using this opportunity, this setback, to buy into some of these technology-oriented themes.
Okay, and do you think then that, I mean, pre the Iran war, big tech was already undergoing something of a rotation away from some of the software names and funding the software names much more towards hardware, and that was benefiting Asian tech. How are you thinking about US versus Asia tech at this point?
Well, we think that the two biggest competitors, of course, are the U.S. and China, and we actually are impressed by some of the open source models coming out of China, DeepSeek and Qwen and others, and they're open weight, so our models can distill from them when they're clever, and vice versa. So it's very interesting on the software side, as opposed to the hardware side. Our government is not saying a thing about this kind of exchange. In terms of SaaScopolis, which is what you're talking about, you know, you could see that coming. In our Big Ideas 2025, we broke this tech stack into three parts. Infrastructure, so data centers, chips. Platform as a service, poster child there is Palantir. And then applications, much of which was SaaS. And we saw that the incremental growth in technology over a 5-year period was moving much more towards platform and infrastructure than it was to applications. Yeah. And that was our first clue that platform as a service was going to customize software and take share from SaaS, which is one size fits all.
How far through that SaaSpocalypse do you think we are, Kathy?
Well, I think in terms of the stocks, we've discounted a lot. And my experience with disruption, and SaaS is being disrupted, make no doubt about it, is that at some point they become value stocks. And value managers start looking at the cash flow characteristics and the stickiness of some of these software products, and they venture in and really take over from growth managers.
You've been, we talked about Iran, and that's got a lot of people focused on defense and opportunities within defense. And I think that you've been pivoting some of your investments over at ARC within the defense space, from more legacy aerospace to more of the technology variety. What are you seeing there at the forefront?
Yes, well, Palantir is one of our largest holdings, and that a little less than half of that is defense now. We think Palantir is a very big force in this war, and is probably the most important defense tech play out there. But then in the unmanned space, so drones, Kratos, AeroVironment are new names. And what's interesting about them is many people think, okay, why aren't the primes? Why aren't you focused on the primes? These companies work very well with the primes, but they are smaller, and they have much more leverage to this environment than the primes do.
Yeah, there's a lot of focus on the Ukrainian startups in the defense space.
Yes.
Where do you see, which geographies do you see the most interesting startups within the defense space?
Oh, well, I think in the U.S., I was in Poland on behalf of SOCOM. They wanted to, with a few venture capital teams, see what was going on. And, we came back with information about Ukrainian drones, and what we're seeing is very rapid evolution towards that strategy. It's unbelievable how quickly the government has moved here. I didn't think it would move that quickly, but there is a sense of urgency. This is a new kind of war, and it involves AI, it involves 3D printing, all kinds of new technologies. And so it's a booster for the tech space.
Kathy, thank you very much. Thank you for joining us. Kathy Wood, founder, CEO, and CIO at ARK Invest. Coming up on the programme, a lot of focus this week on central banks. They're very much in the spotlight as the Middle East conflict sets off fears of higher inflation. We will discuss that with the Chief FX and Emerging Markets Strategist at Goldman Sachs. Kamakshia Trivedi will be with us shortly. We'll talk about emerging markets. How do they stand up with the moves that we're seeing in the dollar and higher energy prices? We'll also talk about fixed income markets with Kamakshia. Lots to discuss. This is Bloomberg.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Nuvian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Flutter Wave by empowering our customers across all our segments?
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg. Welcome back to the programme. This is The Pulse. I'm Anna Edwards in London, and these are your top stories. Oil rallies with Iran targeting energy supplies across the Persian Gulf, including a drone attack on a massive natural gas field in the UAE. President Trump delays his much-anticipated visit to China, saying he needs to oversee military operations in the Middle East. Plus, $1 trillion forecast. NVIDIA's CEO Jensen Huang says demand continues to soar as investors want more evidence the AI boom is here to last. Welcome back to the program, everybody. We are getting some breaking news coming to us from Israel, so we'll just bring that to you. We've had some headlines from the Israeli defense minister, and these concern Ali Larijani, who is the security chief over in Iran. The defense ministry, or the defense minister rather, in Israel is claiming that Larijani has been eliminated. That is the news coming from Israel right now. This follows separately other reports within Israel suggesting that the Israelis had carried out a number of attempted assassinations overnight in Iran. So we will look for confirmation on all of that. But certainly a focus on Iran and what it is and how it is behaving also across the Persian Gulf. That seems to be what is moving oil prices right now. So let's get to that theme. Iran is stepping up its attacks on energy infrastructure around the Persian Gulf. Operations were suspended at the Shah natural gas field in the UAE as officials assessed damage from a fire touched off by a drone attack on Monday. Anthony DePaula is with us, our energy reporter who joins us from Dubai. So a fast-moving story this then, Anthony. What has Iran been targeting when it comes to energy infrastructure? Because this has been increasingly a focus of international energy investors.
Good morning, Anna. Yeah, the attacks on energy infrastructure, and particularly here in the UAE, have picked up really since the weekend, since Saturday. That's when we saw Fujairah, which is an oil export hub and a trading hub for lots of refined products, that was struck by drones. That's located outside the Strait of Hormuz, and that is also Abu Dhabi's main crude oil export facility. So it's a very important facility that was hit again on Monday. And as we understand it, Abu Dhabi National Oil Company, ADNOC, the state producer here, has suspended oil shipments from that facility. Then we got into last night when there was a heavy barrage against the UAE. UAE reported incoming drones and missiles and lots of defensive maneuvers. The Shah gas field, as you said, was hit. And that is a very remote field in the desert, several hundred kilometers away from Abu Dhabi City. It's in the huge, vast desert called the Empty Quarter. Across the border into Saudi Arabia, there's another field called Sheba, which is a big oil and gas field that Saudi Aramco has. That's also been targeted several times over the past week. So we've seen this step up of targeting of these energy assets. These particularly important ones in the UAE, the Fujairah oil export hub, the Shah gas field, as you said, has been halted. And we've also seen two of the biggest refineries in the region, the Ruwais refinery in Abu Dhabi, more than 900,000 barrels a day of capacity. That's been shut down due to a strike. And the Ras Tanura refinery, more than 500,000 barrels a day in Saudi Arabia, also shut down. So we've really seen this intensification of strikes that's really impacting their ability to work, as we see, Anna.
And Anthony, it seems that markets are focused on this, these attacks by Iran, because we see oil prices once again a little higher this morning, 103 on the Brent price. But at the same time, we're also seeing more reports of some tankers getting through the Straits of Hormuz. Now, these are ones that are politically affiliated perhaps with Iran, or at least not affiliated with the United States. So, for example, we see India, Pakistan, to some degree, getting some tankers through. What more can you tell us on any progress being made there?
Yeah, so we have seen those tankers come through. The first one to come with its signal, its satellite signal on, was a Pakistani tanker that passed through in the last couple of days. It's limited still at the moment. We have heard from the Iranians themselves that they were loading tankers at Karg Island even after the U.S. had bombed military facilities on that island. Of course, as we remember, the export infrastructure there was not damaged. So we had seen vessels loading there. We have seen some Iranian vessels exiting through the strait, even during this war, because it is the Iranian attacks that have stopped the passage through the strait. So the Iranians are letting their vessels go through. It's few, it's not that many, so the market is waiting to see, is that flow going to increase? Who's that flow going to go to? And is that going to be enough to kind of impact the global markets in terms of getting supply to consuming countries and getting supply into the places really where those global benchmarks are going to be impacted and potentially decrease the oil prices. So now it's very itinerant, and we're just really waiting to see if that flow is going to increase and who it's going to go to. But at the moment, traders are still really looking at this as a blockage and a closure to the main exports. And there's still a threat against a lot of those exports coming out of the Gulf countries. UAE, Saudi Arabia, Kuwait, Kuwait and Iraq remain pretty much shut in. And so that's a big issue for global markets, Anna.
Anthony, thank you very much. Anthony de Paula, our energy reporter, with the latest on what is happening in the Middle East from an energy perspective. Let's get back to the war itself and what we're hearing out of Israel. The Israeli defense minister has said that Iran's Larijani, that is the security chief of Iran, Ali Larijani, has been killed. This is according to the Israel defense minister. Of course, investors watching all of these developments very carefully to try and get a sense of what this means for the duration of the war. But let's get further details on what we know from Israel and what we don't know yet. Bloomberg Horizons Middle East and Africa anchor Jumana Basechi is back with us with an update. Jumana.
And major developments coming through from IDF and Israel in the last half hour or so, and they pointed to some military successes that their operations have had overnight, targeting senior personnel out of the regime. And just a short while ago, we had comments come through from the Israel defense minister saying that they had successfully eliminated Iran's security chief. This is Ali Larijani. He is the chief of the National Supreme Security Council, effectively the man who has been responsible for the military and security decisions that have been taking place throughout the course of this war. They've also said, the IDF have said that they've also managed to eliminate the head of the Basij unit as well, and this is a paramilitary group, the group that is responsible for acting on the regime's behalf to suppress and put down any opposition. They were actively involved in those demonstrations and those protests. So 2 key personnel, according to Israel, have been eliminated by these operations that took place overnight. I should say that we're waiting for confirmation from Iran But, this comes back to one of the big questions as to who was running the show in Iran. There have been plenty of conversations about the whereabouts of the new supreme leader, Mojtaba Khamenei, whether he's actually still alive or disfigured, per Pete Hegseth's comments. He put out a statement a couple of days ago, but that was read out by a news anchor on air. And so the assumption is that many of the military decisions that have been taken by Iran would have come through from the likes of Ali Larijani, also the Speaker of the House, the Speaker of the Parliament, and other key figureheads. But the elimination of Ali Larijani from Israel does constitute a major step in terms of what they're describing as military success. And this builds on what President Trump was saying overnight as well, in that they have had a huge amount of success in terms of eliminating and destroying Iran's naval capabilities, their air defense capabilities, their radar defense systems, in addition to the stockpile of missiles and the missile launchers, and of course, the taking out of some key figures in the regime as well.
Jemana, thank you very much. Bloomberg anchor Jemana Basetchi joining us there from Dubai with an update on that news flow coming to us from Israel. Now, the conflict in the Middle East is heightening concerns, of course, about stubborn inflation as oil prices rise. The Reserve Bank of Australia today stepped up its battle against rising prices with a second straight rate hike. To discuss what we can expect from global central banks this week, where we are in terms of our global expectations on inflation and interest rates, let's bring in Kamakshir Trivedi, Chief FX and Emerging Markets Strategist over at Goldman Sachs. Very nice to have you with us, Kamakshir. Thank you for joining us. A fast-moving situation, clearly, in terms of what's happening in Iran. And I guess that is the context into which all of this central bank news flow will fall. We're not actually expecting many of the globe's central banks to change interest rates, but what will you be watching for in their narratives as to how they tell this story around inflation?
Good morning, Anna. So that's absolutely right. You mentioned the RBA. They hiked this morning. I think they're going to be the exception rather than the rule in terms of the raft of central banks that we have this week. I think the main focus of the market so far has been on inflation. It's been priced as an inflationary shock, the very significant disruption in the Strait of Hormuz that you were discussing earlier. I think that's been the key, and I think that's what drove the RBA as well. However, I think when you look across most central bankers, they're also going to have to worry about whether there are growth implications further down the line. That's the shoe that hasn't dropped yet, whether you see downside growth impacts from the inflationary shock. And so what I expect to see is most central banks preserve the optionality as they get more data, as they get more clarity and visibility on both the duration and the intensity of the conflict. I think you're going to see a lot of no changes, essentially, and the narrative talking about waiting for more information and being in a good place to respond if and when that information comes.
Is there any rule of thumb, Kamakshir, and this might be entirely too reductive, but is there any kind of rule of thumb as to oil prices stay elevated by this much for this much time, and then central bankers need to take it seriously and react to it? Anything less than that, they look through it, because they always used to look through spikes in energy prices, but since what happened in 2022, they'll be nervous about that kind of statement.
Definitely. I think you're right that there is a lot of, if you like, sort of the trauma from the 2022 episode, and the fact that perhaps waiting for that transitory impact to fade was perhaps, waiting too long. I do think the situation is somewhat different, though. I think 2022, you had a negative supply shock in energy, in oil, in gas, that came alongside a very big fiscal expansion that was running through the system, the post-COVID reopening, kind of uncoiling of economies. And I think those two things came together to really produce that very sustained inflation surge rather than a kind of one-off shock in inflation that proved to be transitory. I do think that's not quite the case yet. We don't have that same degree of demand-side stimulus moving through the system. So I think the inflation impact should be more moderate. That's certainly the kind of, shift that we have made. But it's too early to say. I think it's, very early days. Our baseline scenario is that you start to see some more normal, passage through the Strait of Hormuz by the end of this month. And time is not your friend. Every day that doesn't happen, I think that the risks of, greater increases both in energy prices and in inflation go up. And so that's what we're watching.
Okay, so still the normal passage, anything that looks like moves towards normal passage through the Straits of Hormuz is the focus for investors. What does the dollar do in the meantime, Kamakshir? Because we saw actually the dollar retreat substantially yesterday. That's on the back of better risk appetite for whatever reason. We had slightly weaker oil prices and the dollar retreated as well. then, but is the instinct still going to be buy dollars whenever things look more tense and conflict looks more prolonged?
Broadly speaking, yes. I think the last 2 weeks have been a good reminder of the dollar's safe haven properties in an oil shock with global risk events. And so I think anything that pushes towards an intensification of that shock, anything that pushes towards higher oil prices, I think that's going to keep the dollar well supported. Anything that pushes the other direction, the kind of de-escalation, I think less so. I do think if you can look forward beyond some of these shocks, I think we will go back to a world, and that's certainly our view, where kind of the dollar resumes its sort of shallow depreciation, a kind of unwind of the overvaluation that has been built up over many years. But that will have to wait. I think for now, I think in an oil shock, terms of trade matter the most. The U.S. is on the right side of that terms of trade divide. A lot of Asia, a lot of emerging markets, Europe is on the wrong side of that terms of trade divide. And I think you are going to see the dollar remain well supported as long as the shock continues to be acute.
Yes, and how will that terms of trade shock be expressed through currencies, do you think, in the currencies, the emerging markets that you focus on, Kamakshia?
I think it's already been very well expressed, and I think there's room for that differentiation to go further. So if you think about it, the dollar we talked about, that's been a strengthening currency, but even something like the Canadian dollar, has been outperforming on crosses. The Aussie dollar, again, the rate hike helped, but also the terms of trade, are helpful. And even within the emerging market universe, currencies like the Colombian peso, the Brazilian real have been some of the better performing currencies because they're, again, on the right side of that terms of trade divide. A lot of Asia, however, I think on the wrong side of that. So we have seen weakness in the rupee, in the Korean won, in Europe, in the Hungarian forint, in the euro itself. And I think that is the way the market is pulling the currency universe apart. An inflation shock, a risk-off shock, but beyond that, most importantly, a terms of trade shock from the energy price.
Kamakshia, where does that leave China and the tectonic plates that shift thinking around the Chinese currency?
It's a super important issue because if you look at this fix for the CNY, that's actually stronger today than it was at the start of the war. But China is also a big oil importer. It's also, to some extent, does not benefit from a kind of oil shock. But I think that there are enough offsets there. They have, significant reserves. And I think, as long as the U.S.-China trade détente remains in place, the summit may be postponed but not, eliminated or anything like that. I think that this, sustained but gradual appreciation of the CNY, I think, is likely to continue. And I think it's going to be an important anchor for global currencies.
Okay, really interesting. Thanks so much for joining us, Kamakshia Trivedi, Chief FX and Emerging Market Strategist over at Goldman Sachs. Coming up on the programme, more from our interview with the Finnish President, Alexander Stubb, on why NATO allies should take the latest threat from President Trump seriously. That is next. This is Bloomberg.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Welcome back, everybody. This is The Pulse. Now, Finland's President Alexander Stubb says NATO allies have to take Donald Trump at his word when the U.S. president puts the future of the alliance on the line to safeguard passage through the Strait of Hormuz. Stubb spoke with Bloomberg about the Iran war and the wider implications for the world.
I think we now need to de-escalate rather than escalate. So what we probably need is peace mediation. The actual original operation was not discussed with allies, but I'm sure that President Trump is now in conversation with the UK, with France, Germany, the big players.
I think President Trump said that NATO faces a very bad future if U.S. allies fail to assist. How should we take that?
Well, I think, you know, we obviously have to take everything that the President of the United States says seriously. I think the key now is to focus on the alliance and what we do. We are a defensive alliance, which means that we don't do military attacks as such. We're 32 countries. Of course, after the Cold War, we had some peacekeeping missions, but they were always justified through international law and UN charters. So this is quite different from that.
Do you think the U.S. should be helped?
I think those countries that have the capacity and the will to help the United States will do that and should do that. We have to understand that the situation, of course, in the Middle East and in the Gulf region right now is extremely serious. We have Iran that has attacked somewhere between 10 to 13 different countries with missiles and drones, and that's why I think any de-escalatory measure right now would be very useful. Iran's interest, though, the problem here is that Iran seems to have three interests. One is to cause damage to its neighbors. Two is to maximize the harm on the global economy through the oil price. And the third one is to keep up their current regime.
But how does this de-escalate? First of all, who are the right people or the right person to try and help?
Well, we need a ceasefire. So I'm just wondering whether, you know, the Europeans or actually India could get involved. We saw Foreign Minister Jaishankar calling for a ceasefire and negotiations just to calm down the temperature and freeze the situation as it is. The problem in these kinds of situations is when you kind of have three players, Israel, the US, and Iran, all with more or less different interests. It's very difficult for them to organize themselves into a peace kind of a situation.
Do you have a clear understanding of what the U.S. is trying to achieve?
I think the original aim, and you know, obviously I don't want to give advice to the U.S. administration, but from what I understand, number one was to shut down the Iranian nuclear program. Number two was to damage their capability in terms of missiles and both launching and defense. Number three were the proxies, so terrorist organizations such as Hamas, Hezbollah, and the Houthis. And number four was regime change. And then, of course, you know, you're going to have to ask the American administration which one of this is more important, which one is going to materialize.
President Stubb, the EU High Representative Kaja Kallas was talking about repurposing the EU's Red Sea naval mission to the Strait of Hormuz. Is this a good idea?
Well, I haven't seen the latest reports on the EU foreign ministers meeting, but that could be one way of helping out. But that is for the EU foreign ministers to decide, and I think they're still sitting as we are having this conversation, so I don't know the outcome.
And I understand you're calling for de-escalation, but what, you know, how worried are you that this actually escalates, that the conflict widens?
I'm worried because what we used to see, especially after the Cold War, were local conflicts, almost like wars of sort of civil wars. Now we're seeing regional. I mean, first we saw Israel, Palestine, then we've seen Russia, Ukraine, and now, of course, we see Iran and 10 to 13 countries. So, of course, I'm worried. And, you know, to all of my European friends or American friends, I sort of asked the question that how would we feel if there were missiles flying in our region to 13 different countries. Of course, we would be extremely worried. And that is the mindset that I think a lot of the countries in the Gulf region and in the Middle East have, because they didn't want this war. And that's the problem. That's why I think we need to bring down the temperature. The United States military has shown its might. There's no question about that. They've hit X amount of targets quite successfully, but now it's time to please calm down.
There are also media reports that actually Russia was reportedly sharing intelligence with Iran on the location of U.S. forces.
Yeah.
Is that true?
Well, it's super worrying, yes. I mean, I wouldn't put it past them. And this is what I try to tell my American friends as well, that, there are two elements of this. One is that Russia is now giving shaheeds back to Iran, which they can hit American bases. And two, they're giving intelligence about where the American bases are. So basically giving the executive order to kill American soldiers. And I'd be very worried about that. But of course, as a Finn, I'm more worried about the repercussions on the war in Ukraine, because that's in many ways, our war, which we feel very strongly about. And we're seeing now increased oil prices, which basically feed the Russian war machinery. We're seeing the United States lifting sanctions on Russian oil. We're seeing the U.S. giving a waiver to India for buying Russian oil. So everything is linked to everything. And we now need to get back to focus also on Ukraine. That's why we need a ceasefire in Iran.
That was the Finnish President Alexander Stubb speaking, of course, to Francine Lacroix. Now, earlier on, we brought you news that Israel said that it had killed Iran's security chief, Ali Larijani. Iran has not confirmed that yet, but we've seen heightened kinetic activity. As a result of this, perhaps linked, the IDF detecting a launch of missiles from Iran and working to intercept. And at the same time, Iranian TV confirming that Iran announces a new wave of missile launches toward Israel. So we continue to monitor this volatile activity. On day 18 then of the war in Iran, the EU Foreign Affairs chief says European ministers have what she called no appetite to extend naval operations into the Straits of Hormuz. President Trump has called on allies to escort tankers through the shipping lane, which has been effectively closed since the start of the war. Kaja Kallas said ministers rejected the idea of expanding current EU naval patrols from the Red Sea.
The discussion on whether we are, also extending this mandate to cover the Strait of Hormuz to go north from the Muscat line, there was no appetite from the member states to do that. As I said, this is nobody wants to go actively in this war, and of course everybody is concerned what will be the outcome.
Oliver Crook joins us, Bloomberg TV's chief Europe correspondent from Brussels. Ollie, why have European ministers then been so quick to give their response to President Trump's request, given how much Europe relies on the oil and gas that does travel through the Strait of Hormuz?
Yeah, so there are two dimensions to this. I think it was really summarized quite succinctly by the German defense minister, who basically came out yesterday, despite the fact that Germany has been one of the largest supporters of the activity within Iran by the United States and Israel. And despite that fact, they say that the Germans want to play no military role, even in a supporting capacity, and that this is not their war. This is not their war to participate in. If they wanted to get engaged, and if NATO wanted to get engaged, that's something that needs to have a sort of international framework in order to do it, and they need to get consent from the German parliament. And at this point, they see no reason to do that. I think that the sort of main concern now for European leaders, after having sort of drawn the line there in the sand with Donald Trump, is the consequence that the President of the United States may want to now inflict upon NATO. We got that threat over the weekend that there will be very bad consequences for NATO, yet again, a sort of abstract but very large threat by the President of the United States. And I think that is what European leaders will be bracing for as they convene here in Brussels on Thursday to discuss that, and of course the implications for the possible energy shock that the Europeans are suffering at this moment as a consequence of the war in Iran.
Oliver, thank you very much. Bloomberg's Oliver Crook, Bloomberg TV's chief Europe correspondent in Brussels. Up next, Bloomberg Surveillance will continue to take you through the market conversation, the war in Iran, and how that is playing into the market's thinking. More on that coming up shortly. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Markets are ruthlessly efficient at exposing what the weak links are.
Most assets should be able to come back within a month to 2 months if and when the war ends.
War has a momentum of its own.
If this only lasts for, let's say, a month or less, we will be okay. There will be a snapback.
Longer term, there is still that diversification story.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday with stocks down and crude higher, Iranian attacks on energy assets keeping Brent crude in triple digits as President Trump is delaying his summit with China's Xi Jinping. Chair Powell's Fed is beginning a two-day meeting stuck between Iraq and a very hard place.
What you have right now is increasing inflation and decreasing growth projections, which is exactly this stagflationary type of mix that central bankers absolutely hate. David Seif of Nomura yesterday saying, watch the descents, and I think it's a really salient point. 9-3 is what he potentially could expect. How much does this end up being a dovish decision or a hawkish decision to do nothing?
If in doubt, do nothing and say little, and appear to be very non-committal in the news conference. The forecast is where this gets really, really tricky. Finger in the air type stuff. Which way's the wind blowing? I've got no idea how you put a forecast together in a moment like this.
Nonetheless, they have to put out a statement of economic projections, and nonetheless, people are going to read into it much more than maybe some of the participants mean as they put their projections out there, just because how do you know anything? You can expect them to increase their inflation expectations and decrease their growth expectations, which leaves them with a really interesting question of, can they still forecast 1 or 2 rate cuts for the remainder of 2026?
It's another morning on Wall Street, drinking from the fire hose. Headline after headline crossing the Bloomberg this morning. This one, notable in the last hour, from the defense minister of Israel, saying the security chief in Iran has been, quote, eliminated. That headline crossing just moments ago.
This is one of the most important people in Iran in terms of security, as well as an individual that was sanctioned by the United States in January when it comes to the deadly, brutal crackdown of those protesters, the Iranian people. So this is going to be an incredibly big deal. in Israel as well as in the United States as they continue their campaign against this regime.
Brent crude this morning, 102.90, WTI 96. Equity futures attempting to build on yesterday's gains, just about negative by 0.1%. Coming up this hour, we'll catch up with Julian Emanuel of Evercore, with stocks coming off their best day in 5 weeks. The former Deputy National Security Advisor, Victoria Coates, as President Trump demands support for Hormuz. And Tony Wong of T. Rowe Price as NVIDIA sees chip revenue reaching $1 trillion. We begin this hour with our top story. A new wave of Iranian attacks on key energy sites across the Middle East, keeping crude in triple digits. Joining us now is Bloomberg's Jumana Basechi out of Dubai. Jumana, welcome to the program. A key headline crossing just an hour ago. Anne-Marie broke it down. An individual we've been tracking for quite a while.
Yeah, well, this would be the most prominent assassination in the Islamic Republic and for Iran since they took out the supreme leader on day one of the operation. So you're referring to the killing of Ali Larijani per the Israel defense minister. We're still awaiting confirmation from Iran, of course, but this is a key figurehead, another key figurehead within the regime. He had been appointed to the head of the National Supreme Security Council last August, which means effectively he's been responsible for many of the military and also nuclear decisions on behalf of the Islamic Republic. He was very close to the former Supreme Leader Khamenei and would have been involved as well in many of the military decisions that would have been taken throughout the course of this war that's been going on for 17 days now. Also interesting is that he had been posting post after post messages of defiance. He'd been last seen walking the streets of Tehran on Friday at a pro-government demonstration, sending words of defiance to President Trump, saying to him that it's very easy to start a war at Twitter, but it's not easy to get out of it. And of course, now the IDF and Israeli defense minister saying that they have successfully eliminated him alongside the chief of the Basij, which is the paramilitary force, the paramilitary arm. Again, that is a huge IRGC adjacent group that are responsible for putting down any sort of opposition that emerges to the Islamic Republic and had a very effective role in those brutal crackdown on the demonstrations that we saw at the beginning of this year. So 2 key people eliminated. But at the same time, Iran have continued to be defiant. And you mentioned these strikes on key energy infrastructure. That is ongoing over here in the UAE. It's been another very challenging evening. Residents received a couple of missile alerts throughout the course of the night. The airspace was temporarily halted for a couple of hours. And then it emerged that Iran had also targeted a gas field. This is in quite a remote area of the UAE. It's known as the Shah gas field, responsible for about 20% of UAE gas production. Sulfur specifically, which supplies around 5% of the global sulfur market. Limited operations there now. Another fire, once again, at that key port on the Gulf of Oman, Fujairah, also halting operations there too. And remember, you will recall that a week ago, they also targeted a key refinery in the UAE, the Ruwais refinery, which is also seeing a halt in production. So the blows to energy infrastructure keep incoming. I should say, though, interception rates are high. And a lot of the halt in production we have seen is on back of precautionary measures as opposed to these facilities sustaining a serious amount of damage. But the point is that Iran continues to strike back and on non-U.S. assets.
Jumana Basechi with the latest. Jumana, appreciate your time, as always, over in Dubai. More from Jumana in the next hour. Here's the view on Wall Street this morning. Julian Emanuel of Evercore writing, this is one of the riskiest moments of the 21st century, but betting on the end of the world has been a losing proposition consistently since 1982, and we expect that to be the case once more. Julian joins us now for more. Julian, good morning. Good to see you. Good morning. Is that 5% dip a Bible one?
Well, it's actually, the better question is if you
There's a better question than the one I asked.
There is definitely a better question, John. If we had known that you were going to more than double from the December low in oil to where we got to a week and change ago, and we saw the string of payroll reports that we've seen over the last 6 months, would you have really thought that stocks would only have been down 5%, essentially in a 6-month range? We would have thought the number would be down 15, 20, or 25%. It speaks to the resilience of the market. It speaks to the resilience of the economy. And ultimately, in our view, the fact that you're going to get double-digit earnings growth this year speaks to the fact that markets can move higher.
It's impressive. Some people might say complacent. I would say it's impressive because of the earnings profile. You did some work on this. I read through the research. Just walk through how good earnings are at the moment and traditionally what that means for an equity market going forward.
So, and this is the irony of it, we're projecting 11.1% growth for 2026, and we are below consensus, okay? And when we create those numbers, we like to put out a number where we see symmetrical risk, and we feel good about that. But in fact, when you have had double-digit earnings growth, you've had that 11 times since 1996, 10 of the 11 years, the market has been up. The average is 13%. And that's a very compelling story for us.
I was struck by the split screen. On one hand, we're talking gloom, doom, the end of the world, World War III. And then people were completely wowed by an AI robotic Olaf who came out and could speak and was so cute and everybody was so excited. And Jensen Huang talked about $1 trillion of sales through 2027. Is some of that earnings really being driven by the artificial intelligence, the deployment, et cetera, or is it still broad-based? Is it still on the expectation that the U.S. economy can move through whatever kind of oil shock we experience?
Well, so our work on oil says you're actually at the point where time and price are meeting, and that's why we're seeing this volatility. The market and the psychology can cope with prices in the 90s for a short amount of time. The real break point for the consumer is $4 a gallon in gasoline. We're getting close there. We've seen in the past, whether it was 2022 or 2008, that precipitates economic slowdowns, that precipitates market turndowns. So that's why there is an urgency to sort of moving the narrative. But from our point of view, when you think about earnings power, it really goes back to this idea that productivity has been increasing over the last couple of years for reasons other than AI. And now all of a sudden you're starting to hear much more concrete evidence, which we think will continue to accelerate throughout 2026, about how AI is being used for both cost save and revenue generation.
If we're getting to the point where oil prices start to pressure the consumer and start to pressure just exactly what we're looking at, why is credit not reacting more strongly?
Well, again, credit has gotten a little bit ruffled the last few days, and there's this sort of circular logic. In fact, the hedging in both the equity markets and the credit markets, and in fact to the upside in the oil markets, taking together are as extreme as we've ever seen them. And this, dates back, but I was a youngster on the trading desk in the first Gulf War in the early 1990s, and it wasn't as extreme as this. So I would argue that, number one, again, going back to the earnings profile, going back to the consumer staying steady, it really says that credit is holding in. And in fact, the place where credit is stressed, in high tech, high yield tech, it's really been contained. And again, to the extent that growth continues to look north of 2%, we think it can stay contained.
Julian, is the bigger issue this morning, though, the fact that diesel is above $5 a gallon? We haven't seen that since December of 22, and this has a bigger effect on the economy than just consumers going to the pump.
It certainly is an effect. We'll have to see how that plays out. Obviously, the logistics companies, and frankly, when you think about the last couple of months, whether it's a function of speculation or the function of the potential for rising fuel prices, you have seen more volatility in logistics company share prices than we've seen in a lot of other areas. So it's definitely an ongoing issue. But again, I think you're probably still a little bit away, our work says, from the break point where it does dampen economic activity.
We often say in financial markets that markets can shape the events they anticipate. And I think it's good news that we're not getting a material tightening of financial conditions, that you are still seeing capital markets somewhat wide open. We had just yesterday JP Morgan selling nearly $15 billion of debt to back the biggest leverage buyout ever. And how was demand? Pretty decent.
And it really speaks to this idea, again, going back to one of the reasons that the credit markets are as well behaved as they are in general, that particular issuance is really sort of overlooked as a soothing factor, saying that things are still open and there is value being created by this spread widening where people are willing to enter.
Julian, good to see you. As always, a constructive view going forward. Julian Emmanuel there of Evercore. The earnings profile is decent and capital markets are still open. That's supportive of risk for now.
Yeah, you could argue that the reason why you're seeing investment grade spreads widen is because the issuance has been just tremendous, and you're seeing the issuance pipeline continue to grow and people come to market and sell bonds, sell loans. So exactly where is the stress coming from? And I think that that really gives you the reason for what some people are calling complacency.
Things can change very, very quickly, that's for sure. Equity futures on the S&P negative here by about 0.2%. Let's give you an update on stories worldwide this morning. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Good morning, John. Brent continuing to trade above $100 a barrel as Iran strikes new targets across the Persian Gulf. The UAE suspending operations at the Shah natural gas field due to a fire, while a drone attack temporarily shut the Fujairah ports. An Iraqi oil field and a key Emirati port were also targeted. Meanwhile, President Donald Trump requesting a delay to his summit with his Chinese counterpart Xi Jinping for about a month. The president citing the need to stay in Washington to oversee the Iran war. Trump was scheduled to travel to China from March 31st to April. Teams from the two countries met in Paris in recent days ahead of the summit. And NVIDIA CEO Jensen Huang predicting the company's flagship AI processors will generate $1 trillion in sales through 2027. Speaking at the company's biggest annual event, Wang also unveiled a variety of new products and plans to push deeper into central processing units. That's your Bloomberg brief, John.
Yahara, thank you. Appreciate the update, Yahara there. More from Yahara later on in the hour. Almost forgot, Julian. SEC quarterly reporting. Got to squeeze that in. Can we survive without that? Quarterly earnings.
Look, you want things in general that cause less market volatility, not more. I don't know that it would change investor behavior to that great an extent. Okay. We like frequent reports.
Wanted to squeeze that in. It's good to see you. I know it's important to you. Up next on the program, we'll talk about that a little bit later. Calling for a coalition.
Numerous countries have told me they're on the way. Some are very enthusiastic about it, and some aren't. Some are countries that we've helped for many, many years, and they weren't that enthusiastic.
Up next, we'll catch up with the former Deputy National Security Advisor, Victoria Coates, from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Snapping a four-day slide on the S&P 500 in yesterday's session. Back on course for declines this morning. We're down by 0.2% on the S&P, and the Nasdaq down by a third. Pretty marginal stuff, but the inverse correlation between equities and crude sticks. It holds. Check out crude. WTI and Brent up by 3%, 103.36. WTI just short of 97, up by 3 percentage points this morning. Under surveillance this morning, calling for a coalition.
Numerous countries have told me they're on the way. Some are very enthusiastic about it, and some aren't. Some are countries that we've helped for many, many years. We've protected them from horrible outside sources, and they weren't that enthusiastic. We'll protect them, and if we ever needed help, they won't be there for us.
So here's the latest this morning. The president struggling to find a coalition to escort tankers through the Strait of Hormuz. The president also threatening to expand strikes on Kharg Island, Iran's main oil export hub. Bloomberg's Tyler Kendall joins us now from Washington for more. Good morning, Tyler.
Hey, John, good morning. Well, President Trump maintains that the Strait of Hormuz will get going, in his words, quote, very soon, as he reiterated his call for allies to surge assets to the region. But as you heard, it's highlighting what's been past strained relations between the Trump administration and traditional allies when it comes to defense spending. Plus, our own analysts at Bloomberg Economics say that for our European partners in particular, they're constrained by capabilities and politics, but also they risk not acting now to help the Trump administration with the war in Iran could compromise this White House's engagement when it comes to the war in Ukraine. The thing is, at this moment, our allies appear weary at best at meeting the president's demand for naval escorts to go to the Strait. And at this point, we heard from a flurry of leaders, including the German Chancellor Merz yesterday, who said that NATO is a defensive alliance, not an intervention alliance. And the UK Prime Minister Keir Starmer, who appeared to refuse to say whether or not the country would commit resources before a ceasefire is reached. We did hear from President Trump yesterday suggesting that Secretary of State Marco Rubio could soon announce a coalition, though he declined to give further details. John, as you well know, it appears Iran is allowing some vessels to move through the strait, as this morning Iraq confirmed it's currently in negotiations with the country after being one of the first producers to cut output when the conflict began.
Some of those headlines bringing traders a bit of comfort in the last 24 hours, something to keep on tracking. Tyler, thank you. Tyler Kendall there outside the White House this morning. To build on this conversation, the former Deputy National Security Advisor Victoria Coates joins us for more. Victoria, welcome back to the program. Let's just recap some headlines. So an hour ago, we got a headline from Israel, a minister from Israel, that the security chief in Iran had been, quote, eliminated. The fate of the supreme leader is still very much unclear at this point. Who is leading the war effort in Iran?
Well, good morning, John. It's very difficult to tell. And the elimination of Ali Larijani, who is essentially their national security advisor, is a huge blow to them. He is a long-term politician. He was the Speaker of their parliament, also deeply involved in their nuclear program, part of a very powerful family, and would have been in contention to be one of the, or a candidate rather, to be supreme leader in the event that Mojtaba Khamenei turns out to have not survived his injuries. So this is a huge blow to the decision-making of the Iranian government. Again, another powerful figure. He was marching in the Quds Day parade last Friday. Very active Twitter feed. His pinned tweet is mocking the dignified transfer of our 6 heroes through Dover earlier this month. So this is a very, very big deal, and I think will contribute to the just kind of disintegration of command and control that we've seen in Tehran.
A significant development for sure, Victoria. This morning, coming off the heels of what the president said yesterday, we don't know if he's dead or alive, talking about the supreme leader. Nobody's seen him, which is unusual. Building on Jonathan's point, if the U.S. wants to have discussions with the regime, who do they actually have an outreach to?
Well, again, this is an excellent question. And I think what we may start to see are some lesser known figures who are more kind of career bureaucrats in the Iranian system start to step forward. We'll see if this has the intended effect of getting what's left of the Iranian leadership to reconsider their very hardline positions, and potentially, they will reach out to the Americans to try to make a deal. Another problem they have, Lisa, though, is that they have been they've been attacking systematically all of their neighbors, including countries like Oman and Qatar, who traditionally are interlocutors. They're the negotiators who could be carrying out these discussions. But by very aggressively attacking them, Iran has alienated them. So they're not all that interested in talking to the Iranians either. So the Iranians are in an increasingly difficult position.
When it comes to energy and the flow through the Strait of Hormuz, do you think the president is going in the end to get this coalition together? He voiced a tremendous amount of frustration yesterday with the countries he had previously called upon.
Yes, and this should have happened 10 years ago. I mean, the United States is not dependent on the flow of energy out of the Gulf. The countries who are, countries like China, South Korea, the Europeans, they have to have that energy. We don't. And so the fact that we've been spending billions upon billions of dollars in ensuring this safe passage is patently unfair. So this is the kind of capability that these countries should have developed a long time ago. The president's absolutely correct on calling on them to do it. However, the fact of the matter is that particularly for the Europeans, they don't have the kind of the ability to project power, force protection. They haven't been building their navies. And so it's not that Keir Starmer, doesn't want to send a carrier to the Gulf. I don't think he can at this point. I don't think he has the force readiness. I mean, they couldn't even get a destroyer to Cyprus in 10 days at the beginning of the war. So I think we're really exposing a terrible weakness in NATO and something that needs to be addressed long term.
Long term, what does that mean for the future of NATO?
Well, I mean, I think it could be a really good thing for the future of NATO. I think what the president did at the NATO summit last year in The Hague, getting our European allies to commit to that 5% of GDP on defense, was an excellent first step. We need that money to be spent, though. We need those ships to be purchased, and then if they want to protect their national interests, their energy security, then they should be able to deploy them.
Does it make it easier or harder to open the Strait of Hormuz that we have chaos right now in Tehran?
I guess that's sort of a mixed bag. I mean, the more we degrade their ability to fire missiles, the easier it is to open the strait. But that said, one guy with a limpet mine on a small boat can do a lot of damage. So it remains a menace and a nuisance. But the other thing we have that's coming online and it looks like we can expand its capacity are some pipelines that bypass the strait. We have Petroline in Saudi Arabia from Abqaiq to Yanbu, essentially from the Persian Gulf to the Red Sea. That can run, apparently, we thought it was about 5 million barrels a day. It's up around 8 now. So that's not all of the 20 million barrels that usually come out of the Gulf, but it's a big chunk of it. So I think we'll see that pipeline activity expand, and that really, in a way, diffuses the Iranian threat.
Victoria, always good to catch up. It's good to touch base, as always. The former Deputy National Security Advisor, Victoria Coates there. That east-west pipeline, thank goodness the Saudis saw this happening ahead of time.
Right, but the conversations I'm having with people is what if the Houthis get involved in the Red Sea and the Bab el-Mandeb Strait? And if they start attacking ships there, that means that basically that crude that Saudi is banking on going through that pipeline and boarding those ships in the Red Sea, that is going to become another tremendous problem.
And that's been a problem over the last couple of years. Victoria was talking about how exposed two countries are, Japan and South Korea. This from SocGen, the most exposed to Hormuz. They have historically sourced 81% and 62% respectively of their crude from the Strait.
This is the reason why you're seeing some of those stocks, some of those assets selling off most significantly, and why some of those governments have taken immediate action to finance some of the increases in cost of living.
Up next on the program, we'll catch up with Tony Wong at T. Rowe Price as NVIDIA announces a $1 trillion forecast. Plus, Yahira has your morning movers, energy stocks rising alongside the rally in crude.
I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Snapped a 4-day losing streak on the S&P 500 in yesterday's session. Equities dipping 5% from all-time highs, and that dip got bought briefly. Now we declined by 0.25% on the S&P, and the Nasdaq down by 0.3. If that's where stocks are, you can guess where crude is. This is where crude is right now. WTI and Brent closing above 100 for a third consecutive session, adding to it this morning, up by 3%. Brent at 103.53. And in the bond market, things get very interesting. Yields backing up by 30 basis points over the first 2 weeks of March, and all of a sudden, everyone seems to be saying buy bonds. This from JP Morgan's Mislav Matejka. We think that the move in bond markets might not sustain. If this conflict ultimately leads to a recession, it is, of course, unlikely central banks will be hiking. And if there is a respite, any inflation spike might be looked through. Buy bonds either way.
It will be a growth shock, given the fact that people are looking to potentially slowing growth, the idea of consumers that are pulling back because they don't have enough money beyond just simply to finance the higher oil prices. And this is a reason why people are saying, look, either way, people are overestimating the inflationary shock of oil, or people are overestimating how long growth can remain this solid.
422 on 10s this morning. At the front end of the curve, T's at 367. The Fed's two-day meeting begins a little bit later this morning. As we count you down to the open, about 3 hours away, let's get you some morning movers. Yahira has more. Hey, Yahira.
Hi, John. You are seeing a clear move into U.S. energy right now, with oil prices, as you said, triple digits right now after Iran struck gas fields in the UAE, as well as other targets in the Persian Gulf. And that is sending names like Sable Offshore and Occidental higher as investors look for domestic names that are removed from the conflict but still benefits from the rise in crude prices. Meanwhile, one of the headline deals coming out of NVIDIA's GTC conference is sending shares of Uber higher 2.75%. The two companies announcing plans to launch NVIDIA-powered robo-taxis in 28 cities by 2028. Lyft also seeing a boost. Shares are up 1.3% after it also announced a partnership with NVIDIA to use its AI for its machine learning systems. And we end on a big mover to the downside, and that is Lensar. This is an eye care company. Shares are plunging 23% after its takeover deal with Alcon, which of course makes contact lenses, fell apart. The two companies agreeing to terminate the merger following nearly a year of regulatory review and pushback by the FTC. John?
Yahira, appreciate the update. Thank you. Just reading through the fund manager survey just dropping from Bank of America just moments ago. This is the title: A cash surge, but no equity capitulation. Growth optimism tanking, cash levels surging. Here's some numbers for you. Global growth optimism has slumped to a net 7% from 39%. Inflation expectations have jumped to a net 45% from 9%. The epicenter of this, of course, is the Middle East on risk. Geopolitics and inflation replace an AI bubble as the biggest tail risk. And on asset allocation, Bramo, a March rotation from boom to stagflation.
Yeah, and a question of where do you put your money? Well, cash. We saw cash levels in this survey jump from 3.4% in February to 4.3% in March, which Michael Hartnett said was the biggest one-month jump going back to the pandemic. So trying to raise cash. Yet to your point earlier, not pricing in a recession, which really highlights that people aren't willing to throw their chips in and explains why we're seeing the action that we are in risk assets.
A big short in consumer discretionary stocks, the most underway since December 2022. We'll keep coming back to those lines coming out of the Bank of America Global Fund Manager Survey published just moments ago. On our radar this morning, Morgan Stanley warning default rates for private credit loans could reach 8%. Analysts saying AI disruption within the software sector would push defaults to levels unseen since the pandemic. Elsewhere, Iran striking new targets across the Gulf, hitting key energy sites in neighboring countries. The UAE suspending operations at an oil field and export terminal following fresh missile attacks and drone attacks too. And finally, President Trump pushing to delay his planned meeting with China's Xi Jinping by a month, with the war in Iran remaining his priority.
I don't know. We're working on that right now. We're speaking to China. I'd love to, but because of the war, I want to be here. I have to be here, I feel. And so we've requested that we delay it a month or so, and I'm looking forward to being with them. We have a very good relationship.
China reportedly welcoming the delay, given the chances the war could lead to embarrassing moments during the summit. That, according to a person familiar with the matter.
Yeah, and also because they haven't really made a lot of headway going into this. They just had that 3-hour meeting between different negotiators from both China and the U.S. and didn't really come to any resolution. And typically, China likes to have something buttoned up to present at these summits. Also interesting, though, in terms of the signal from President Trump. Does this indicate the distraction from the war in Iran is making it difficult to tackle some of the other issues that he has out there? And I think that that's something that increasingly some of the foreign relations members are talking about and wondering what that does for the leverage dynamic.
Look, when you have tens of thousands of servicemen and women in the Middle East, and we have also had some casualties, there is no place the U.S. president needs to be than Washington, D.C. And the optics as well would have been bad. Of course, there's a number of issues. The fact that actually they haven't dived into these details. They are unprepared for this meeting. The Chinese actually wanted it at the end of April, so for them, they're thinking that this actually works well for them. But at the same time, this is a prudent decision from the president.
Reading between the lines, doesn't it also suggest they're prioritizing stable trade relations with China right now? Because of the optics, you could end up in a situation, an embarrassing moment, where the president is basically saying, we need to reopen the strait. China depends on the oil coming out of the strait. Why aren't you doing enough? And ultimately, I think that's the tension they're trying to avoid.
Absolutely. Beijing does not want that attention. The president, every single day when he talks about the Strait of Hormuz, talks about the fact that the country that's the most reliant on it for their fossil fuels, or the country that gets all of the Iranian, the lion's share of the Iranian crude, is China. And that's going to be incredibly awkward for Beijing.
That's the latest on China this morning. Let's turn to tech. The NVIDIA CEO, Jensen Huang, reassuring investors with a massive sales forecast of the company's biggest annual event.
Right here where I stand, I see through 2027 at least $1 trillion. $1 trillion is an enormous amount of infrastructure. That infrastructure investment you could make on NVIDIA, you could make with complete confidence. We have now proven that.
Tony Wong of T. Rowe Price writing, strategically, NVIDIA isn't just selling GPUs anymore. They're trying to be the platform agents are built on. Tony joins us now for more. Tony, let's pick up on that number, and welcome to the program, buddy. 1 trillion. What's he talking about? 1 trillion what?
Yeah, well, I mean, it's definitely a really big infrastructure number. But I think that what's really important is what underpins it. And I think we're seeing like Claude Code, OpenClaw, and these are just autonomous agents that can continue to be operating 24/7. I think that's what's really exciting here, in that we don't have to have as much human intervention. And so to me, that was a big takeaway for me, that inferencing is really taking off here.
Tony, I just want to stand the numbers. What are their revenue numbers right now? And what are you projecting for 27?
Well, look, I think that the numbers are big. They continue to grow. And I think it's the sustainability here that the market's looking at, is that what are the 3- and 5-year numbers going to look like from here? I think there's a lot of doubt right now that the market is assigning it. I mean, historically, semis are very cyclical. And so I don't think we've seen these kind of growth rates, these kind of numbers. And so, to me, the tech trends and the first principles of how the unit economics, the ROI on these tokens that's what matters to me when I look out here.
Yeah, the $1 trillion number, just putting it into perspective, crunching some numbers, the total sales for NVIDIA since 1999, total less than $600 billion. So this would be more than what they have done in all of that time. Does it exceed what you were expecting, though, going into this particular conference?
I think the number is really impressive. I mean, they're clearly upsized it from last year. And to me, it's a continuous, improvement in demand. And then when I look at like the roadmap, what's really important is that they are continuously dropping the token cost. And you saw that they are integrating with Grok, their new acquisition. And so these really impressive inferencing stats that are going down in terms of cost by 35 times. And so I think it's really like the demand meeting like their product roadmap, and becoming the inferencing platform that agents build on is really important because there's all these new TAMs that are coming online, like robotics as well as agentic. So, the partnership with BYD, for example, and Uber, those are really important, statements in terms of people building on the ecosystem.
I'm glad you picked up on the cheaper aspect, and this goes to the whole CPU, the central processing unit effort that NVIDIA has worked on. Given the fact that Intel and AMD are trying to chart a territory into there to really eat some of NVIDIA's lunch, how much did NVIDIA fight back and actually impede some of the efforts that we've seen from some of the other chip makers?
Yeah, well, I think that it's becoming more of a system level solution. And so you have to bring the full rack and connected everything with the software. And so to me, I think the CPU is just one of the core areas of development. And it's becoming, a bottleneck. Every time you speed up one part, whether it's the GPU, then there's the networking, then there's the memory, and then there's also the CPU. And so I think that's why NVIDIA has been developing their own CPU because of that. And so to me, I think it's a whole system solution. Isn't just one piece that you need to focus on.
Tony, what struck me is one of these slides behind Jensen Huang, and he is talking about the $1 trillion through 2027, but at the same time, 60% of revenues come from hyperscalers. So hyperscalers need to do well for NVIDIA to do well. Is that a huge vulnerability right now?
Well, I think of hyperscalers as having internal workloads as well as external. So a lot of that is selling to Fortune 500 companies, new AI startups. And so to me, it's a pretty distributed customer set. And so what's important for them is are the token costs going down? Essentially, they rent these GPUs out, right? So if you have the best AI system and you saw the performance improvements are, anywhere from 3 to 10x, with the new systems, it makes sense because you can make more money renting them out. So to me, that's like what really matters. And the hyperscale is an aggregator of demand in many ways.
Tony, before you go, can we just finish on the story of the moment, the story that's dominated the headlines for the last several weeks, and that's the Middle East. That was a source of revenue and growth for this company. And a lot of headlines came out of some meetings in that region over the last year. To what extent are developments upending the hope that that will be a big source of revenue in the years to come?
Look, I think that the Middle East is a big opportunity probably for U.S. tech companies and infrastructure. There's clearly a lot of demand there. It makes sense in terms of strategically what those countries are trying to do, and they have really efficient energy production. And so to me, it's an extension of the U.S. tech platform. It's important, for the ecosystem that, innovation is built on it. So to me, I think that what's going on in the Middle East right now is, hopefully, resolves itself pretty soon. And so I think longer term, the tech trends are usually what's most important to drive the companies.
Tony, good to see you. Thank you, sir. Tony Huang there of T. Rowe Price on NVIDIA. Putting $1 trillion into perspective, some context here about how much money that company has actually generated through its history.
Which is a reason why your question's a good one. Is this bookings or is this sales through 2027, given the fact that the total volume of sales going back to 1999 was $567 billion. They're talking about $1 trillion in less than 2 years, exceeding by far anything that they have earned in the past several decades. It just highlights the pace of growth. Is this so much faster than people were expecting? Can they continue this pace? And what exactly are we talking about with this $1 trillion number? I think that a lot of people are going to be asking that.
Yeah, these stock investors faded that story pretty quickly yesterday after it spiked. The stock this morning positive by about 0.3% of the pre-market. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara's back with more. Hey, Yahara.
Hi, John. The nationwide average of U.S. diesel is above $5 a gallon for the first time since December 2022, as the war across the Middle East continues to disrupt supply chains. And according to the U.S. Energy Information Administration, prices for residential heating oil have also climbed above $5 a gallon. Quite the chart there. Meanwhile, Chinese Vice Premier He Lifeng urging the U.S. to completely remove unilateral tariffs during trade talks with American negotiators in Paris. China's state news agency reporting He Lifeng warned that Beijing was ready to take steps to safeguard its interests. U.S. Trade Representative Jamieson Greer said the two sides are considering setting up a new mechanism to oversee economic ties. And the SEC reportedly preparing a proposal that would remove the quarterly earnings report requirement. Sources telling the Wall Street Journal companies will be given the option to report just twice a year and that the proposal could be published as soon as next month. The rule is expected to make quarterly reporting optional, not eliminate it altogether. That's your Bloomberg Brief, John.
Yahara, thank you. Appreciate it. You just wonder how much that would change. How many companies would still choose to publish quarterly?
We've already heard from a lot of them saying that they still would have to publish quarterly because it would be demanded by them of investors. Look, if investors were worried that there was some sort of malfeasance or some sort of surprise to the downside, well, they would start to sell the stocks because when in doubt, sell. I mean, haven't we learned? Isn't the story of this year transparency and the lack of it leading to people to just bail?
Getting some transparency from Delta right now. Some companies give you updates outside of quarterly earnings as well. Delta Airlines, demand momentum. The first quarter revenue growth, they see in the high single digits. They had seen 5 to 7%. That stock in the pre-market getting a nice little pop in early trading.
Yeah, expect a bunch of the airlines to restate their forward-looking expectations. They're at a conference, a JP Morgan conference in Washington, D.C. They're talking about how demand and capacity growth is still continuing to gain momentum. Look, big question, who is the best protected from this? Delta has a refinery, so they've been able to offset some of the impact. Whether we get the same story from some of the other airlines is another case.
Investors might be happy this morning. The stock is higher by more than 3%. I don't think travelers are right now. I'm not sure flyers are happy in this country at all.
Absolutely not. Jet fuel's going up, so flight costs are going up, and at the same time, DHS is still shut, so if you're someone like me that recently came back on an international trip, you cannot use global entry and all these other issues, and the lines are very long, and it's a headache.
Prices are going up, lines are getting longer. Up next on the program, two-sided risk from the Middle East.
The Fed will have to increasingly acknowledge the two-sided risk from this. It's not even clear that its response would be to be more hawkish, as is being priced in.
Blake Quinn of RBC Capital Markets joins us next, live from New York City. You're watching Bloomberg TV.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
This is the kind of moment where corporate America and investors are looking for corporate America to provide some positive guidance. And you're getting that from Delta Airlines just moments ago. The stock is higher in the pre-market by 3.6%. They've raised their revenue forecast. They see some demand momentum. Here's the new number for you for the first quarter. Revenue growth in the high single digits. They had seen a range of 5 to 7%. The latest from Delta. Lisa, the stock higher by more than 3%.
Yeah, they didn't mention that capacity growth was impacted by winter storms. They also talk about other potential issues. That said, the fact that they're maintaining guidance and they're talking about momentum at a time when people are expecting some pretty dire forecasts from airlines speaks to at least this airline's resilience in the face of a lot of chaos. Whether you get the same tone from the others that are presenting at this JP Morgan conference will be something that we'll be watching throughout the morning.
As we'd often say, is this a Delta story or a consumer story? It's often just a Delta story, and we'll find out when we hear from the others. Equity futures doing better off the lows. We're down by just 0.2% on the S&P, and as the two-day meeting gets set to begin down in Washington, D.C. over the Federal Reserve, your bond market looks like this. Bond yields on 2s and 10s slightly higher, the 10-year at 4.22. Under surveillance this morning, two-sided risk from the Middle East.
The Fed will have to increasingly acknowledge the two-sided risk from this. It's not even clear that its response would be to be more hawkish, as is being priced in. We really just don't see a huge amount of pass-through from this sort of headline inflation rise, which is really oil-focused, into core inflation. And so we look to the Fed to probably look through this.
So here's the latest this morning. The Federal Reserve kicking off its two-day meeting ahead of tomorrow's rate decision as the war in Iran threatens to pull policy goals in opposite directions. Joining us now to discuss is Blake Gwynn of RBC Capital Markets. Blake, good morning.
Morning.
I think we all remember the title of your note about 12 months ago. It could have been an email. Are you thinking that we get the same meeting later this week at the Federal Reserve?
Yeah, I think there's a lot of similarities. I think that was a meeting that came very soon after Liberation Day. Very much like Liberation Day, I think this energy price spike does represent a supply-related price shock that does pull the dual mandate in both directions. I think there's downside risk around labor, but then you also have to acknowledge that there's some upside price risk. So it makes it very difficult for the Fed, and very much like that May meeting last year, I think it's a little too soon for them to really come down on one side or the other. So they're not going to lean into the price side. They're not going to lean into what this might mean for demand, for growth, for labor. So I think we're just not going to learn a lot from Powell. I think that's our base case, is that he just plays it very close to the vest. We hear wait and see, we hear wait, careful, we hear a lot of words like that.
Unfortunately for them, because of their own communication apparatus, they have to put out some forecasts in the SEP. What's curious about this is that at the January meeting, the chairman was talking about a better growth outlook compared to the December meeting. Where are they going to be now when they sit around that table?
Well, it's interesting. I think what we're really looking for is a little bit of an upgrade to the inflation forecast, just given where core PCE has come in, since that last meeting. That makes it a little bit difficult because that is going to be a bit of a hawkish message if you see their inflation forecast going up. At the same time, we expect their dots not really to change all that much for them to still show a cut. So I think that's one way they can kind of communicate almost a little bit of a dovish bias, because they're saying, yes, there are some, more upside inflation risks, or the outlook has increased slightly, but we're not really taking away the cut that we have in later this year.
There was a time when saying they, when referencing the Fed, made sense. Does it still make sense, given some of the dissent that you're seeing and some of the fissures on the committee?
That's a great call out, because I just used the word they, and you're totally right. I think it is hard to talk about them as a monolith. I mean, I do think there have been different camps, but I do think that this year that fissure has started to pull together a little bit. I don't think Waller's probably going to dissent at this meeting. I think some of the labor data that we've had, even though that February report was a little bit softer, we had the strong report in January. And I think even just the amount of time having passed, it does become somewhat clear that we're not seeing some kind of nonlinear deterioration. And I think that's really, if you go back to August of last year, they were really worried about this kind of stall speed concept. So I think the dovish side was worried this is just the start of, it's going to start, the unemployment rate is going to start ramping up. That clearly didn't really happen. So even though we got that poor report in November, it does look like it's kind of chopping sideways. So I think that dovish side is starting to collapse a little bit with the center.
So if it could be an email, would it just say things are balanced, we've got people on both sides, but we probably are going to stay where we are, and Jerome Powell's not going to talk about whether he's going to stay on after his term is up?
I think both sides, and we need to see how this stuff's going to play out. We just need to know more about how this war is going to play out, what the impacts of that are going to be, not just on the inflation side, but is there going to be demand destruction? Is this, is paying higher gas prices, potentially paying higher food prices, is that going to start to drag on consumers and businesses that are already a bit stretched? And they just don't know that yet.
Do you think Powell's going to get into what happens on May 15th if Kevin Warsh is not confirmed?
I don't think he's going to. He's been pretty evasive of those questions in the press conference. I mean, obviously, he released that statement that was that video statement where, that's probably the most we've heard from him on that front. But in the press conferences, he's usually pretty evasive on that. We did learn a little bit in the court documents that it does look like perhaps there's some plan to stay on. And if, we have this process frozen up because Tillis has said that he will not move that forward as long as those subpoenas still stand. It does look like they're challenging those in court. So maybe Powell just continues until these subpoenas go away, until they allow the confirmation of Warsh to go through. Maybe Powell's our chair for the time being.
I think you've just got to ask a direct question. Don't dress it up in the politics. Is this your penultimate meeting or not? At some point, he's got to answer that, and we're getting closer and closer to his final meeting.
Yeah, and increasingly, he's probably going to say, look, I'm here right now, and I'm not going to talk about that. But at this point, a lot of people are wanting to know, and how much is Tillis almost giving him a green light to stay on?
Also, take Powell out of it. Take the personnel out of it. What happens if a Fed chair is not confirmed and the current Fed chair's term is up? Take his name out of it. Take Kevin Warsh out of it. Just go through the process for us, Mr. Chairman.
Okay, I will. I'm not going to speculate because those things are out of my terrain.
They're not really,
right now, I'm focused on the economy and doing the job for the American people, which is to balance dual risks that potentially could hit the economy.
Isn't succession planning part of the job?
Yes.
It's not my succession
Send
planning.
us in. Me and Lisa want to go ask questions at this press conference.
I have a feeling that there's going to be a whole bunch of deflect and defer.
Like 20 seconds, go.
There was something interesting in the minutes, which is that they do approve the FOMC chair. So the FOMC votes on the chair. They approved Powell for a whole year in the minutes of January. So presumably, if nobody's there to replace him, he serves the rest of the year.
Blake, it's good to see you. Thank you, sir. I'm not sure what the president will think about that, but stay tuned. Blake Gwynn there of RBC Capital Markets. Up next on the program, Alex Altman of Barclays, Bob McNally of Rapid and Energy, Jonathan Pingle of UBS from New York City, the second hour of Bloomberg Surveillance. Up next.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general, and what we, when we first, I'll give you a really prime example: the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8? Right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
When it comes to Iran, we really just don't see this having a big impact on Fed policy at this point.
They do not want to hike in a period where growth dynamics were deteriorating.
The challenge is going to be this push and pull between potential for lower growth and potential for higher inflation.
No central bank is going to be hiking into this.
If this gets worse than people anticipate, we should be talking about more cuts, not less cuts.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and the price action scores look like this. Equity futures on the S&P pulling back by just 0.1% on the S&P 500, following a bounce yesterday, which followed a 4-day slide. If you see that move, you can guess this mood. Crude, WTI and Brent advancing slightly this morning. 103 on Brent, 96 on WTI, up by close to 3%.
And you have right now Iran attacking infrastructure, gas fields in Qatar, in the United Arab Emirates, other oil fields in Iraq. And it raises a question of how long this is going to go on. And are we breaching the amount of time where suddenly people have to price in a higher risk of long-term disruption? We're looking forward curves in the oil market. They're creeping higher. So at what point does it start hitting growth estimates? And at what point does it start more materially affecting your risk appetite?
Yeah, waking up this morning to further headlines of strikes on energy infrastructure across the Middle East, and a notable headline crossing a Bloomberg terminal just a few hours ago. The Israelis indicating that they've eliminated the security chief in Iran. That's a major headline as they pursue their goals in this war.
Absolutely. Ali Laranjani is an individual that is really part of this security complex, also an individual that the United States sanctioned in January because of the horrific crackdown of the Iranian protesters. I've been speaking to Norman Rule offline, former head of intelligence on the Iranian desk. He says it reshuffles the deck. Obviously, this needs to be confirmed by the U.S. Denies the leadership cohesion. What to watch for will be signs of regime entropy. So really also, when the president speaks about this, I think he's going to reiterate what he said yesterday, which was not really sure who we're dealing with right now in Tehran.
And that could be a problem or a solution. We don't know. That's how confusing things are at the moment. For the Federal Reserve, equally as confusing as they look at their mandate. of inflation, price stability and full employment. The Federal Reserve getting together a little bit later this morning. That two-day meeting commences. That decision is on Wednesday. A whole host of central bank decisions through the week. On Thursday, the BOE, the ECB and the BOJ.
I'm actually more interested in the ECB and the Bank of England than the Federal Reserve, and I don't think I've said that very often, if ever, because usually it's watching paint dry with a lot of rhetoric that doesn't really move the needle. But over with the ECB and Bank of England, there are now price hikes, rate hikes being priced into the forward curve, which really puts them in a hot seat, given that you also have a much more significant hit to growth in that region. How do they navigate that? How do they navigate fragmentation in the region? In the United States, they can remain on hold and mumble jumble about dual mandate and go home. It's a little bit different over in Europe.
My bar for the ECB is somewhere down there. I can't quite see it. It's very, very low for a news conference of the ECB. I'll say this about central banks. When they have big moments like this, they're actually very, very slow to react. And then when it's very, very obvious, they go all in, and as fast as they can. And I would remember the pandemic. We all remember that famous line that came from Christine Lagarde, the ECB president, "We're not here to close spreads." What do they do a week later?
Close spreads.
They close spreads pretty quickly.
So this is why I'm actually curious to see whether they see this more as an inflationary shock or whether they do address the growth shock aspect and speak to a disinflationary future beyond what we're seeing right now. Because right now in the U.S., people are starting to come around to that view more than some sort of prolonged inflationary shock.
Need to talk about some single names as well. Delta Airlines in the pre-market up nicely by more than 3%. An update from the company moments ago. It is a raise to the outlook, a lift to the outlook, and I think that's key at a difficult time.
Yeah, they say that they now expect high single-digit revenue growth for the first quarter. That's up from 5 to 7% at a time when they are crimped by both TSA lines, by both international travel being potentially disrupted by the Middle East, and by oil prices that are about a third of the total cost. Of course, they have exposure to refineries, which can offset that. And they do say they maintain the ability to adjust capacity to meet some of the higher oil prices. Does this mean they're going to take some planes offline and really consolidate everybody in the same tube as much as possible?
We're seeing that across the industry at the moment, aren't we? And they're certainly leading, that's for sure. Some updates from the airlines throughout this morning. Equity futures on the S&P. Net session highs down just 0.1%. Coming up this hour, we'll catch up with Alex Altman of Barclays as the equity rally stalls. Bob McDally of Rapid Energy as Iran squeezes energy flows through Hormuz. And Jonathan Pingle joins us of UBS as the Fed feels the pressure of the war. We begin this hour with our top story. Iran intensifying attacks on critical energy sites across the Middle East and taking a hit of their own. Bloomberg's Jabana Basechi joins us from Dubai for the latest. Good morning, Jabana. Let's get the latest on that strike. Not of the Iranians, but of the Israelis and the update that came from them a few hours ago.
Yeah, so lots of developments to get through, John. I would say the main one that has occurred in the last hour or so was the Israeli defense minister announcing that they had successfully killed Ali Larijani, that is the chief of the National Supreme Council, a very authoritative figure, very close to Mujtaba Khamenei and his father, part of that inner circle. He was a former commander of the IRGC, and he was seen patrolling the streets of Tehran on Friday at this pro-government demonstration. He's been very active on Twitter, on X, I should say, throughout the course of this war. So a significant assassination, if indeed it is confirmed by Iran. We're waiting for confirmation. And the Israeli defense minister also saying that they, through another operation, also eliminated the key figure behind the Basij. This is a paramilitary force also responsible for some of those very brutal crackdowns against the demonstrators that we've seen over the past few years. And of course, the most recent incident being back in January. So this would be two very prominent assassinations. What I would say, though, is that, you know, in the past hour or so, people have said that this could have been one avenue for a diplomatic off-ramp, and namely because Ali Larijani was involved in some of those nuclear discussions prior to the war started. The question from here onwards is who is going to be responsible for a potential off-ramp if indeed the diplomatic channel is reignited. For the time being, though, I will say Iran continues to lash out, especially at its Gulf neighbors. Here in the UAE, another challenging night. Residents here received multiple missile alerts on our phones throughout the course of the night. Airspace was closed for a couple of hours. And then, of course, we found out in the morning that they had targeted more energy infrastructure sites, including that Shah gas field, which is in a remote part of the UAE, but accounts for about 20% of the UAE's gas production, about 5% of the global supply of sulfur. More strikes, attempted strikes at the Fujairah, that key strategic port that we spoke about in the Gulf of Oman, not even on the Straits, and then more attempted strikes on those eastern fields in Saudi Arabia and in Iraq as well. So they have branched out in terms of the targets. The interception rate, I should say, is still very, very high. But the point is that Iran clearly, over the last couple of days, has stepped it up with their efforts to target key logistics, infrastructure, and energy sites across the Gulf.
I can't imagine how tense things are in your region, so thank you for making time for us this morning. Jumana Basechi there, leading our coverage of this war out of Dubai. Yesterday, Brent crude down by almost 3%, still closed above 100 for a third consecutive session. Tracking the traffic through the Strait of Hormuz, just a handful of tankers getting through, very, very dependent on the flag that's on that vessel.
Absolutely. So you saw a Pakistani tanker get through. Obviously, Chinese and Iranian ships are getting through. Some Indian vessels have been able to get through. What this shows is that the strait is actually not closed. It's controlled by the regime. And if you're having conversations with the regime, you're able to get your cargo through.
Brent crude 103 so far this morning. Here's the view on Wall Street. Alex Altman of Barclays writing this. Investors should be mindful of the one-sided debate around Iran. Systematically betting against President Trump has generally been a high-risk, low-reward strategy. Alex joins us now for more. Alex, good morning. Good to see you.
Good morning. Good to see
Is
you.
that true of this incident as well?
I think that it's important to take a balanced view. And that was the point of that message in that email, was that if you go out and talk to the investment community right now, it's such a lopsided debate. You would almost think it was borderline Iranian propaganda. And the narrative is there's no way the administration can get out of this hole. We've painted ourselves into the corner here, and along those lines. And I just think that we need to take a more balanced view, is that the president has shown in the past multiple times his ability to wrong foot markets, to wrong foot whatever the consensus narrative is, obviously most recently with Liberation Day. And especially when positioning has actually moved quite aggressively, neutralized now in US risk especially, we should just be prepared for a slightly more balanced debate.
The pushback to that is when you talk to oil strategists, they're not talking about President Trump. They're talking about just the actual barrels that are available and not transporting, and just how big the deficit is becoming. How do you brush off the fear that you're seeing in the physical crude market, which is pricing in a much higher price than what we're seeing in futures, as well as some of the commentary coming from some of the CEOs of big oil companies?
Well, look, I mean, I think you've got to take into account the fact that, look, the physical market, I'm not going to be able to sort of be an expert on. I'll defer to other individuals on that. But what I will say is, remember, there's been a lot of experts that were pricing in or saying that oil was going to get to $40 a barrel. And then those same experts were saying that potentially the Strait of Hormuz wouldn't close. And now all of a sudden, you've got a lot of individuals that are talking about every $10 a barrel, every $1 million a barrel that's taken off is equivalent to $10 increase in price. And yet, actually, it's been about half that number so far. Now, why is that? So I think we just need, again, I'm just trying to basically bring back a little bit more balance to the debate.
I know where you're going. You're trying to identify some asymmetric opportunity. I hear that. But the problem is this is not April 4th. On April 4th, we dropped 5%, then almost 6% on the S&P 500. We're only 4-5% away from all-time highs on the S&P. Has that dislocation actually opened up yet?
I would say that parts of the market have. So you've got to remember, the market was pretty well hedged going into this from the fast money community. And that's not universally true. Look at, like, for example, CTAs, they were pretty long rest of world equities. And again, if we just look at the S&P, then I think it's only one dynamic. We look at Korean equities. Look what happened in Europe. Europe was outperforming US equities by 7% going into this. It's now effectively wiped that out. So it's significant underperformance from any region that was a net energy importer. So we have to sort of look a little bit more holistically. But you're right, there is still a body of equity risk in the US that if they sold, it would be a serious problem. Number one, obviously retail. We're in that tax window right now where retail are notoriously going to buy less equities because they've got bills to pay next month. And then also vol control. Vol control exposures to US equity risk is still, I'd say, in line with the long-term average. So there's room for them to go materially lower. But that will require a significant vol shock beyond here. And so that's something that you've got to consider. What could drive that from there?
You have seen a significant vol shock when it comes to certain emerging markets, when it comes to the rest of the world, and this is sort of turning everything on its head from the first couple of months of the year when everyone was saying, sell America, go diversify to the outside. Is this a tipping point where people come back to the U.S., or are you going to move counter to that? Do you think that all of this is overblown in terms of the hit to growth globally?
I think, I think trying to forecast the path of this Middle East conflict is incredibly difficult. It's fraught with difficulty. But what I will say is that it once again highlights U.S. exceptionalism in different formats. So remember, all those dollar flows that were going to rest of world, they're all net energy importers, whether it's Europe, Korea, Japan. These were the three biggest regions. The US, big net energy exporters. So it's yet another reason, on top of the fact that we've had a significant domestic derating of the equity market, on top of the fact we've still got corporate exceptionalism that hasn't gone away, on top of the fact we're dealing with a capex cycle for hyperscalers, some of the best companies in the world. And I think a lot of people kind of lost sight of that in favor of foreign equities. And I think that, yes, I think this does bring back home another reason why actually the domestic equity market may be slightly safer in a port of storm, for a port than other parts of the world.
Alex, you're very constructive on the president and his ability potentially to see the thresholds and the pain thresholds in the market and act. And he did that in Liberation Day. But what happens when you have a massive question mark on the other side? The president said yesterday it takes two to tango. We're talking about a regime that are not rational actors. And right now, they're going to have to come out and at least show a bit of sign of force, because we are absolutely decimating their top brass.
And so I think that the key point that I think about, again, first of all, balance, is trying to think about the two-way debate, and not to in any way go against what you're saying. I think that those risks are real. I would just highlight that the key word is regime. And if the regime wants to survive, then it is at some point going to have to negotiate. And I think that's what a lot of people at the present have lost sight of, because if you do start going down the threats of destroying civilian infrastructure, that effectively is the regime gone. So I'm working off the basic premise that if that regime doesn't in any way, shape or form want to exist a year, 2 years, 5 years from now, then they will actually have to at some point step up to a negotiation.
But what if the damage is done? Lisa was talking about physical barrels. If you look at where Omani crude is and Dubai crude is right now, they are closing at $55 premiums to Brent. Those are physical assets and cargo. You see diesel today, $5 a gallon. That's freight, that's our food, how we get our food to our table. At some point, how long can this last where you start to think potentially this is going to have a bigger impact?
Look, again, I think that trying to determine the path of war is incredibly difficult. Diesel, $5, you make a great point there. It reinforces actually the lack of sensitivity from a US-specific perspective. As a case in point, every 10% increase in diesel prices domestically only affects the food basket by around about 50 basis points in terms of the price increase. And even that, based upon some analysis, will probably take about 12 to 15 months to feed through. So from a domestic economy perspective, we're, I'd say, a little bit more insulated from this. And of course, if it goes on for a long period of time, yes, then of course all bets are off, and we would probably expect a significantly lower move in risk assets. But I would just sort of highlight one final point, which is the sensitivity of risk assets to these moves in oil prices are also decreasing.
It's true.
Right? So, and I think we've got to, it's as much about the velocity of the move in oil as it is about the level. And I think this is an important point here. Between 2011 and 2014, the US economy averaged $95 WTI, averaged. And during that time, stock market went up and the US economy was okay. Right, so the velocity of the move, I think, is what's really surprised people. So if that velocity begins to decelerate and this is our new baseline, more or less, then I actually think it's something that we can become desensitized to.
A constructive view from Alex Elman of Barclays this morning. He's sticking with us. The equity market's doing okay. It's down by not even 0.2%, with an update on stories worldwide this morning. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump continuing to ask other nations to help secure the Straits of Hormuz. The president voicing frustration with countries that have been publicly non-committal about helping ensure vessels can safely pass through the key waterway. He has called out NATO and others for failing to act. Meanwhile, we are seeing shares of Delta rising more than 4% in the pre-market. The company issuing a more optimistic sales target for the first quarter after bookings accelerated into March. The outlook showing the carrier's resilience in the face of higher jet fuel costs. And Bank of America releasing its monthly fund manager survey for March, finding sentiment has begun to turn bearish after months of near-peak optimism. The war in Iran and concerns around froth and private credit have begun to weigh on investors, overtaking AI bubble concerns as the biggest tail risks. Rate cut hopes now sitting at their lowest levels since early 2023, but so far, no one is pricing in a recession. That's your Bloomberg Brief, John.
Yeah, just to pick up on that last line, I think it's so important. Yahara, thank you. Lisa mentioned this earlier on the macro. Global growth optimism has slumped to a net 7% from 39%. On inflation, expectations have jumped to net 45% from 9%. Rate cut optimism is the lowest since February 2023. But, and this is a key but, no one is pricing in recession. The probability of a hard landing is just 5%.
This is not full bear. This is people who want to be bearish, sort of, because they know it's the prudent thing to do, but are still fundamentally bullish, which is the reason why they're hoarding cash. Is it because they're scared, or is it because they want to buy when the all clear is sounded? And ultimately, a lot of people are preparing for the latter.
Lining up to buy. We'll talk about that in a moment. Up next on the program, sidelining the China Summit.
We're speaking to China. I'd love to, but because of the war, I want to be here. So we've requested that we delay it a month or so, and I'm looking forward to being with them. We have a very good relationship.
Up next, we'll catch up with Bloomberg's Tyler Kendall, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Equity futures down by not even 0.2% on the S&P 500. Just a little bit of weight to the tape, as TK would say. On a Russell, the small caps are down by 0.4. In the commodity market, Brent and WTI, Brent crude higher by about 3% this morning. 103 on Brent, WTI at 96. Under surveillance this morning, sidelining the China Summit.
I don't know. We're working on that right now. We're speaking to China. I'd love to, but because of the war, I want to be here. I have to be here, I feel. And so we've requested that we delay it a month or so, and I'm looking forward to being with them. We have a very good relationship.
So here's the latest this morning. The president looking to delay his meeting in Beijing with China's Xi Jinping as the Iran war upends his foreign policy agenda. With the latest in Washington, Tyler Kendall has more. Hey, Tyler.
Hey, John, good morning. Well, as you heard, President Trump is requesting to delay this meeting by a month or so, in his words. As a person familiar with the matter tells Bloomberg News that China is willing to grant the request for a delay, given in part that there was considered to be a short preparation period ahead of this visit and amid, of course, uncertainties with the war. Now, we heard President Trump saying that this decision came solely because he is needed here in Washington to oversee military operations, despite previously signaling that he could request a delay if China does not send assets to help secure the Strait of Hormuz. In fact, China has been at the focus of a lot of the president's pressure when it comes to the strait.
Tyler, that's a good time to throw it back. Tyler Kendall there with the latest from the White House. Just can't get a break outside the White House, can you?
Her timing nailed it, though. Yeah, but they're always this time, 5 to 8, 9 a.m. The workers are always out there making sure it looks pristine, so it's always a challenge.
Leaf blowers start to come out as well. Yeah, I get it.
That'll be next.
Alex Altman of Barclays, still with us around the table. Alex, this from Jonathan Krinsky of BTIG. You're sounding constructive. This is the bear view, okay? Perhaps the real pain trade would be if we get a deal and we get a rally off the back of the deal, but that gets sold. The weakness we're seeing started well before the geopolitical escalation, so why would resolution there fix all the damage that's being done?
Well, I know Jonathan, and he's right in the sense that I think if I was to sort of parlay his words into what else should we be talking about? We should be talking about private credit. We should be talking about AI disruption. Remember those nice narratives we were talking about before the Iranian war kicked off? And you know, those aren't going away. However, I would say they're much more focused topics than necessarily as a catch-all that is as big and as problematic as the Iranian war.
That said, Morgan Stanley came out with a report saying that you could see an 8% default rate among private loans if you do see this software disruption really take hold because of the structure of some of these loans. Is the market being overly complacent in the face of some of those risks just because they're distracted with what's going on in the Middle East?
Well, look, from the conversations we have, I would actually say that private credit is something that investors really want to talk about. That's what they wanted, the topic that's really at the center of the debate. Are they complacent? I would say no. I mean, look at some of the alternative asset managers. I mean, these names have been cut in half, essentially. They're down between 35 and 50%. So no. Has it spread to the broader market? Well, to a degree, yes. Obviously, high yield spreads have moved out 350, 375 on whatnot. Is that showing you complete panic? No. I mean, you could easily see them 100 basis points wider than that. I mean, ultimately, high yield is a 300 basis point to 700 basis point kind of spread range asset, and we're still towards the tights of that. So there is a degree of complacency. I would say that the counterpoint to that is that trying to understand what innings we're in on a private credit unraveling is incredibly difficult. What I would add on top of that is that not all private credit is bad, and not all bad credit is private. And I think there's a lot of ultimately private credit, public credit, they're all credits at the end of the day. And I don't think you should necessarily disaggregate them from one another. And ultimately, are we going to have a credit cycle at some point in the future? Yes, we probably will. That's just inevitability of the way the world works. But does that necessarily mean that it's all doom and gloom? And again, I just want to take a more balanced view. And the reason I want to take a balanced view is simply because the world or the US economy is sitting on the lowest private debt to GDP in the past 25 years. The banks are the best capitalized they've been in a very long time, having been under regulatory thumb basically ever since the GFC. Yeah. We've got $7-8 trillion of money market funds. We are in, as an economy, a better place to handle a credit cycle than we were at any point for the past 2 decades. And that's
to the conclusion, Alex. Trade for the brave. Are you saying there's a buying opportunity here?
I still think there is a buying opportunity in risk right now. Yes.
In the banks and in the private credit players.
So if push came to shove, do I think that, again, I'm not going to get into individual names, but do I think if push comes to shove in certain of these alternative asset managers that they will still exist? Will they still be generating fee-related income a year, 2 year, 5 years from now? And I think the answer is yes. Do I think you could see a multi-percentage point impairment to their assets? Yes, but ultimately they've derated spectacularly. And just a point, sort of a line that you guys can work with is that if you go back since 1990, financials have only ever sold off as a group 50% more than 50% once. And that was in the GFC. Right now, those alts are down basically 50%.
We'll run with that line this morning. It's good to see you, buddy.
Good to see you.
Thank you for dropping by. Alex Altman there of Barclays. Up next, Bob McNally of Rapid Energy as Brent holds above $100 a barrel from New York City. You're watching Bloomberg TV.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Stocks just a little bit softer. We're down 0.1% on the S&P and the Nasdaq, down by 0.2, down by 0.3 on smalls. This from Mike Wilson and Morgan Stanley to start the week. Constructive. Why is our constructive 6 to 12-month view still intact? The answer, the main reason, is that the earnings acceleration is continuing and that the current setup looks very different from the prior late cycle periods when oil spike ended the business cycle. That's the latest from Morgan Stanley this morning. Here's the crude spike. A rally continues this morning. Brent and WTI. Brent crude up by 3% at 103. WTI up by 3% also at 96. Unlocking this in the bond market. Slightly higher yields through this morning. Now lower, turning lower by almost a basis point, 421. The move we've seen over the past few weeks, 30 basis points plus at the front and long end of the curve on 2s and 10s. What does it mean for the Federal Reserve? This from Neil Dutta over at Renmac. It's much easier to see the Fed revising up core inflation than changing the unemployment rate outlook materially. And here's the punchline. I think it is more likely that a cut is erased altogether in the outlook.
Right now, we're seeing markets flirt with that idea. If you get that kind of hawkish pushback to markets that are still optimistic about one rate cut, do you have some really fierce rhetoric on the other side? Again, this committee is split. This is not going to be one decision that's coming out. You're going to hear a couple of different points of view. So again, how much guidance can they give at a time when events are fast moving, when the economy is unclear, and when the personnel at the top of the Fed are going to be shifting around?
Fed decision tomorrow. Are they going to be shifting around? We'll find out. We'll try and get some clarity from
Stay
Chairman
tuned.
Powell. Chair Powell forever at this point, right? He's got to answer some questions about that. I'm sorry.
Well, you know, maybe we'll find out on Apprentice.
Penultimate meeting or not? When do you leave? Haven't you got some plans to make?
I'm guessing we're probably not going to find out, but I'm hoping that people press him on that because, frankly, a lot of people are trying to figure out that answer.
Neil Dutta of Renmac, who I mentioned a bit earlier, is going to join us tomorrow in anticipation of that news conference and decision tomorrow afternoon. 2 hours away from the opening bell, let's get you some morning movers. Danny has more. Hey, Danny.
Hey, John. Some airline earnings this morning. Delta out with a better forecast for the first quarter, seeing revenue up 7 to 9%. That was previously the 7% was the high range of its previous end. There's still demand, and they're able to weather some of the literal weather issues for them. They've seen less capacity because of the winter weather. JetBlue, same sort of story, better demand, but they are seeing higher costs, as are all these airlines because of higher fuel prices. Delta, for example, has been down 7% since the start of the war. That rebounds more than 5% this morning. Speaking of the war, just some of the stocks moving as we tend to see as the intensity of the war picks up. The fertilizer companies, CF Industry, Mosaic, are on the up this morning, 1.4%, 1%. The underlying fertilizer chemicals themselves, urea, has seen a sharp price spike higher because about half of that product flows through the Strait of Hormuz. Now, relatedly, we've also seen an increase in attacks on oil infrastructure, including a suspension of operations at a UAE natural gas facility. So some of the energy providers, which we should have in a moment, but if not, they are moving higher. Occidental being one of them. Interestingly, that UAE field is a JV with them. but all of these American ones moving higher. Devon Energy, Sable, Occidental, all up at least 1 1/3%, John.
Danny, thank you. Thanks for the update. More from Danny in the next hour. Incidentally, Neil Dunter of Renmac just wrote in on the outlook over the Federal Reserve. So he's saying there'll be no cuts in the SEP. When we get the projections from the Fed, no cuts implied in those forecasts for 2026. He said the RBA just hiked. They all think the same way. Central bankers.
Well, this to me is a real question for the ECB. Are they going to make the same mistake? The Fed has more leeway to make that mistake because no cuts is different than hiking rates. That is a very different expectation. There's a feeling you need to fight the inflationary shock. Long term, it always is. Potentially a hit to growth. The bond market's starting to price that in. Does the central bank rhetoric start to match with it?
Huge week for central banks coming up. Federal Reserve, of course, tomorrow, then on Thursday. BOJ, ECB, BOE. On our radar this morning, Iran stepping up attacks on energy infrastructure around the Persian Gulf, setting a massive gas field on fire in the UAE. The overnight strikes also targeting an Iraqi oil field and key Emirati port. Elsewhere, the president reiterating his call for other countries to help secure the Strait of Hormuz.
We strongly encourage other nations whose economies depend on the Strait far more than ours. You know, we get less than 1% of our oil from the Strait, and some countries get much more. So we want them to come and help us with the Strait.
US allies in Europe and Asia hesitant to send ships to Hormuz, expressing unease about getting pulled into the war. And the president claiming he can do anything he wants with Cuba as a US-imposed oil blockade causes a total power blackout on the island.
You know, all my life I've been hearing about the United States and Cuba. When will the United States do it? I do believe I'll be having the honor of taking Cuba. That'd be good. That's a big honor.
Taking Cuba.
Taking Cuba in some form, yeah.
Trump previously saying he will finish the war with Iran before turning his attention to Cuba. The word in there, very interesting, taking Cuba.
It's almost like, and I think what started that conversation was Peter Doocy asked, is this going to be like Iran when it comes to Cuba, or is it going to be like Venezuela? And he said, I can't tell you that, but they're a failed nation. But already the administration is making it incredibly difficult for the communist regime in Cuba. They've cut off fuel imports coming from Venezuela, which for months, which is why they have continuous blackouts. A key report yesterday from the New York Times, as we see these negotiations take place, the Trump administration is basically saying the president cannot exist in Cuba. They have signaled to Cuban negotiators that the president must go, but are leaving the next step to the Cubans. So it feels like the Venezuela situation, but potentially leaving it a little bit more in the Cuban hands.
You can forgive traders for feeling a bit numb, because ultimately it's Venezuela, then it's Iran, now it's Cuba, and ultimately people are focused on private credit and other things, because how do you analyze or get an edge on this? And ultimately, I don't think I have an answer for that.
I'm not sure anyone has an answer to that at this point, which is why a lot of people chose to ignore it.
And I think at this point, people are turning uncomfortably numb with all of the potential headlines.
What do we always say, that Rick Reader line, you can only focus on the shark closest to the boat? There's tons of sharks off in the waters at the moment.
And none of them are predictable, and none of them are really visible. I mean, ultimately, you don't know the scope of how big that shark is. So you're focused on the private credit shark, which is right here and analyzable.
Let's get to another shark, closest to the boat right now, Brent Crude, holding at over $100 a barrel this morning as doubts linger over a US-led coalition to protect energy flows through the Strait of Hormuz. Bob McNally of Rapid and Energy predicting disruptions will last a few more weeks, writing this. It appears that our 30-day worst-case Hormuz disruption scenario modeled last June may have been overly optimistic. Bob joins us now for more. Bob, welcome to the program. Speaking of optimism, there were a number of tankers that got through the Strait yesterday. I think that provided some people in this market some comfort. Could you give us some perspective on that?
Hi, John. I think you're right. You know, we also saw traders were probably hedging the beginning of the SPR draw in the United States. The president called for escorts and so forth. And as you noted, the Iranians are letting out a few hostages. And so Secretary Besson also made comments saying this is a good thing, you know, we're supporting it. So, you know, the market, John, in my view, is still coming to terms with the fact that a load-bearing assumption in energy is collapsing. And that load-bearing assumption is that the U.S. would permit anybody to strangle the Hormuz Strait for more than a few hours to days max. And so I think there's still this reservoir of kind of disbelief and hope that this is going to be over soon, that this math, these disruptions, not only for oil, other things, as you just noted, Danny noted, it's got to stop. And so we took a breather yesterday, but it's not stopping, and crude is going to march higher, I'm afraid.
Bob, is it a good thing, though? I know you reiterated the words of the Treasury Secretary. Basically, the regime is saying this international waterway is not closed, it's controlled, and it's controlled by us.
Right, Anne-Marie, but they're not going to let enough oil out to put oil prices down. What should have been obvious is Iran would play the only card it had, which was to inflict an oil price increase and a gas price increase on the president. It's the only thing it has left. Its military's gone even since last June. So Iran's going to let out a few tankers just to divide the United States from other countries and curry favor, just enough, but it is not going to allow enough out to halt the upward march in crude and product prices, in my view.
Is there a point where the prices are too high, where some of Iran's backers, like China, start to put pressure on the regime?
You know, I think so. I think as we get closer to that level, which we may discover, which is where global economic growth starts to slow, because you can't have global economic growth without 20% of the energy returning. Whether that level is 150, 160, we don't know. But yes, when we start seeing shortages too, when refiners have to start dropping runs, which we're starting to see, when folks run out of refined products in Asia, jet fuel, that's when things get serious, and China will increase pressure. We expect so will other countries.
What's your forecast for full year oil prices, given the fact that when you look at the forward curve, you're looking at something like $75 a barrel by the end of this year? Does it seem like that is an underestimation or an overestimation?
Well, one thing I've learned is the futures curve is an awful predictor of future spots, so we ignore it entirely for that. Lisa, it's really tough. I'll say my oil analyst colleagues at Rapid Energy Group, we're putting together balances, we're updating them here, but you know, we could be at 30 by the end of the year. If we have to go to 150 or 160, but booms tend to be followed by busts. So 70 is as good as any other price at the end of the year. It's wildly uncertain. As you guys noted, with all the sharks circling, almost any price is imaginable toward the end of the year. And the higher we go, though, I'll say, the lower we're likely to be at the end of the year.
Can you walk us through what goes into that? Is it demand destruction, or is it people looking for alternative uses of energy? I'm struck by Jeff Curry. He put out another note this morning. You can't print molecules, talking about all the stockpiling that's going to take place after this, and how we really never even recovered from the Houthis and what happened in the Red Sea. It took a while. Why do you think that isn't likely and prices could inflect so much lower?
Well, it's about demand destruction. So what happens is, if you look at all the major recessions in the since World War II, an oil price spike is usually present at the scene of the crime. They either caused it or contributed to it. Because oil demand, if you think about it, is really inelastic. It's not like going to the movies or buying cigars or whatever people do. It is necessary for life, right? If the pump price is higher, you still have to drive to work. So the only way to get demand down is to stop the work, if you will, is to slow economic activity, because oil is embedded in that. So what happens is oil keeps on rising until it causes a demand slowdown. And then when that happens, demand collapses. It goes away, and the price collapses. We saw that in 2008. We saw that in other times. And I'm afraid that's what we could be looking at here if we have to balance this market by demand destruction at much higher levels.
Bob, I'm really glad you brought up products. Goldman Sachs was out with a note saying that the greater impact will be on products like jet fuel, like on diesel. We saw diesel hit $5 a gallon, north of $5 a gallon. That is important for freight. That's important for construction, for the factories in America. We haven't seen that since the spike of December 2022. You worked in the White House. What policy tools do you think this administration is ready to deploy?
Well, we've seen the policy tools more or less deployed already. They're looking at a Jones Act waiver, which helps because now the East Coast of the United States can bring in a little more product from the Gulf Coast at lower price. That was a good step. There are a few other things. They can ease RVP or kind of volatility waivers, regulations on gasoline to make it a little easier to make gasoline this summer a little more cheaply. So there are nips and tucks they can do around the edges, but they're really marginal, Anne-Marie. I think there's really nothing they can do. The only major things now, I think, on the table would be big mistakes. The idea of intervening in futures or restricting exports. I don't think the export restrictions are on the table, but in a panic, you can't rule that out. Futures intervention, I know, has been an issue you have been covering. Right now, it's about avoiding mistakes, I think, not coming up with policy solutions to these, especially refined product problems.
Bob, I've got to ask you, because you mentioned it, what would that look like, restricting exports? Because as a professional like yourself, it's obviously something you don't think would work, but don't rule it out for a politician who is probably looking at other things. Bob, what would that look like?
Yeah, stroke of the pen, John. I mean, President has clear authority there under emergency economic powers. He could just, at stroke of the pen, say we're not going to export gasoline and diesel anymore. We're not going to export crude. He can say we're going to wait until stocks get to a certain level, or if they get below a level, we'll restrict exports. He can do pretty much whatever he wants with regard to restricting exports. So the power is clear. It would take 2 minutes, stroke of the pen. It would be an amazing, massive mistake, but you can't rule it out. Again, I hear, listen, I don't think they're looking at it. I don't. I think they know it's dumb. I mean, they got elected partly by criticizing President Biden for restricting kind of gas, LNG exports. So it's a last ditch.
Given the Biden administration, look, the lesson that I've always had from following politicians, Bob, never underestimate their ability to do stupid things. Bob, it's good to see you. Bob McNally there of Rapid Energy. This from Delta. So this is important. We're talking about the energy outlook. Let's talk about the reality on the ground. How are consumers interacting with the economy? Is that changing? Ed Bastian of Delta Airlines, the CEO, speaking at a JP Morgan conference just moments ago after raising their outlook for the first quarter, saying this: we've seen 8 out of the 10 highest sales days in history in the month of March.
Yeah, talking about how it really has been both the main cabin as well as premium leisure. Talking about the hedge on its fuel that it has from the Monroe refinery, but without that. And I think that this really highlights the pain aspect of this well, that they're able to overcome with demand. They saw a $400 million spike in fuel costs in March. Even with that, they still see profits on the higher end and above what they had previously said because of that demand that you were just talking about.
Stock is up by 4% in the pre-market. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Brent continuing to trade above $100 a barrel as Iran strikes new targets across the Persian Gulf. The UAE suspending operations at the Shah natural gas field due to a fire, while a drone attack temporarily shut the Fujairah port. Meanwhile, an Iraqi oil field and a key Emirati port were also targeted. Australia's central bank raising its key interest rate for a second straight meeting, stepping up its battle against inflation as rising energy costs from the Iran war threaten to intensify price pressures. The Reserve Bank's 9-member policy committee splits 5-4 in favor of a hike. The decision reverses 2 of the 3 cuts delivered last year. And Kraft Heinz is rolling out a range of healthier products to bolster some of its lagging brands. The company planning to unveil a high-protein Kraft mac and cheese, a snack-sized version of Lunchables, and a low-sugar hydration beverage from Capri Sun. Kraft is investing $1 million to offer shoppers samples of some of its new products. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Why are you laughing?
I just think it's really funny, the things that people will buy in order to not feel as guilty to give their children.
High protein mac and cheese.
It's really good for you because it's got extra protein in it.
You're not convinced?
I mean, it just speaks to the fat of the moment.
Yeah. Not in my house.
I'm guessing it's still probably bright orange.
Not in my house.
Totally in mine. If it fuels them, absolutely.
Really?
Here.
Extra protein?
I mean, look, it's quick. It makes me feel less guilty, 100%.
Calciferro, that stuff, blasphemy.
Doritos protein rolling out this month with 10 grams of protein per serving. Doritos!
Health food.
Where's RFK?
Seriously, this is not Maha.
He's shirtless, drinking milk.
Up next on the program, navigating Egyptians.
It's crazy to me that you see all these narratives being written that central banks are going to tighten into this. If this gets worse than people anticipate, we should be talking about more cuts, not less cuts down the line.
Up next, we'll catch up with Jonathan Pingo of UBS, live from New York City. You're watching Bloomberg TV.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Brent crude this morning up by 3%, 103.40 on Brent. WTI around 97, 96, 77, and up by more than 3%. Under surveillance this morning, navigating geopolitical tensions.
It's crazy to me that you see all these narratives being written that central banks are going to tighten into this. I think central banks have learned along the way you don't tighten into energy shocks. I think if anything, you know, if this gets worse than people anticipate, we should be talking about more cuts, not less cuts down the line.
So here's the latest this morning. Traders widely expecting the Federal Reserve to hold rates steady at tomorrow's meeting as the war in the Middle East clouds the economic outlook. Jonathan Pingle of UBS writing, we expect Fed Chair Jay Powell to acknowledge the inflation risk from an energy price shock, but remain balanced in conveying the risks. Jonathan joins us now for more. Jonathan, good morning. Good to see you.
Good to see you.
2 p.m. tomorrow afternoon. How do those forecasts change?
Well, they're, you know, just mathematically, they're going to have to mark up inflation. I think the, you know, I've been, I think the risks to growth are a little sort of two-sided. I mean, I think there's still a certain amount of uncertainty as to exactly how they're thinking through the impact of the oil price shock, because they don't know the duration of this shock yet. But I mean, obviously, we could see inflation forecasts getting marked up. You know, my guess is unemployment rate forecasts are more likely to get nudged up than stay the same. But I think for growth, you know, they've had so much talk about this productivity AI miracle. I actually think this is the SEP where they might revise up their longer run assessment. And that actually, in my view, would have them keep growth the same.
Where would the SEP be for the dot plot for the 2026 year, the median dot? Are we pricing out that cut?
Well, the market's certainly trading that way, but my guess is there's enough participants still worried about the labor market that you get a median of one cut this year. I mean, even before the February employment report, you know, you had Mary Daly. I mean, even many of the board members using words like vulnerable and fragile for the labor market, and then they get handed, you know, sort of a strike-adjusted minus 60K, unemployment rate goes back up to 4.44. I think, and this oil price shock is another headwind to the labor market expansion too. So I do think there's a, you know, I can count 10 participants that I think are going to keep a cut.
Okay, so I'm just wondering. I know that the bingo game over at UBS is the number of people who are going to vote for the consensus and the number of dissents. Where do you put your chip?
We put our chips on 3 dissents. I think Bowman's a close call, but I think Governor Waller, after his speech on what he thought would drive the rate cut decision for him, was the February employment report, which was, I think, by all accounts, pretty weak. And certainly, Governor Murin has not been shy about his views.
I'm just wondering how much of a role Jay Powell has right now, given the fact that it might be his one of his last meetings that he's the Fed chair for. Big discussion around whether he will stay on as a governor or a committee member. A question of what he chooses to discuss, how politically he takes this discussion, given that it actually is a key component into forward guidance.
Well, so I think at this juncture, where the committee is and all of the uncertainty, I will acknowledge, Lisa, I think you're right. I think this poses one of the biggest communication challenges that he has faced. He doesn't know what's going to happen. He's just been handed a terrible employment report. You know, in 2 months' time, the unemployment rate could be 4.6, 4.7, could be 4.3. You know, oil prices could be 120, they could be back to 80 or lower. I mean, right? So given the incredible range of outcomes, it's going to be very difficult for him to provide much guidance, take much of a stand. But I do think that, you know, sort of how he nuances this is going to be really important for financial markets because, you know, the markets are certainly trading this like it's a 2022 shock all over again, pricing out rate cuts. And I'm not quite sure that's what the majority. I think there's enough concern over growth. The starting point for the economy is very different than 22. I do think there's enough concern around the labor market that he's going to want to provide a more balanced message than that. But it's going to be difficult for him, and certainly the politics are swirling around as we were sort of discussing.
What you're painting sounds like a good time to retire, but is there an upside for this administration for Jay Powell to actually stay on?
So, I mean, you know, I have had this conversation with clients, and you know, it is historically the case that every administration eventually gets to choose a majority of the Board of Governors and their chair, right? And at that point, you know, it's really a reflection, to some extent, this is how politics traditionally influences the Fed through the appointment process. And at that point, you know, it is usually the administration's committee. Now, there's always the certain amount of central bank independence, but you know, at some point, this administration, if they do have their personnel in place, it'll be much more difficult to blame Jay Powell for monetary policy.
Jonathan, that's one way of putting it. It's good to see you. Thank you, sir. Jonathan Pingo there of UBS. Can he avoid the question tomorrow? On March 18th, maybe. On April 29th, I think it gets a lot harder from there. You can't keep punting. At some point, you've got to say where you're going to be next month and what job you're going to have or not.
So stay tuned for the Fed Decides, which is going to be, frankly, the bond market's favorite soap opera, and it does continue and gets a little bit more tense with a question about how he answers that.
The Mike McKees of this world will be peppering him with that question repeatedly, I imagine, in that news conference. Coming up later, Liz Ann Saunders of Charles Schwab, Gil Luria of D.A. Davidson, Greg Dacko of EY Parthenon, and Lisa Hornby of Schroders. All of that in the next hour, right here on Bloomberg TV.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, you know, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. You know, stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
2023
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Nuvian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next of goods we've started with by empowering our customers across all our segments?
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And
I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Markets are ruthlessly efficient at exposing what the weak links are.
Most assets should be able to come back within a month to 2 months. If and when the war ends.
War has a momentum of its own.
If this only lasts for, let's say, a month or less, we will be okay. There will be a snapback.
Longer term, there is still that diversification story.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures right now in the S&P 500 negative by 0.2%, down by 0.3% on the Nasdaq. Muted price action off the back of this. In the commodity market, Brent and WTI shaping up as follows. Brent crude north of 103, up by 3% this morning. WTI up by 3.5 to 96.82. Ahead of these events right here, the Federal Reserve meeting about 24 hours away. The two-day meeting starts this morning. It concludes tomorrow afternoon.
Yeah, and there's going to be a real question about how they message what ultimately could be a stagflationary shock at a time when the economy isn't doing terribly. And this is something that Alex Altman really pounded the table on. Look, people want to be bullish, and the reason why is because the consumer still has money to spend, and they are spending. The Fed has to face that off with a potential shock that has an undetermined ending point and an undetermined scope, and that, I think, is going to be difficult to do.
And you see that in the numbers coming out of Delta Airlines this morning. An update from the executives over there. Ed Bastian, the CEO, saying this just moments ago. We've seen 8 out of the 10 highest sales days in history in March. The stock is higher by 4%. They raised the outlook for revenue just earlier this morning.
Yeah, the revenue now coming in, this is according to the latest forecast, between 15 and 15.3 billion versus the expectation of 14.7 billion, an upside beat. They're keeping their profits the same. So what does this mean? It means that ultimately they do see higher gasoline prices, higher fuel costs, eating into their profits, but staying the same where they were, because guess what? Consumer demand is so much higher than they had been expecting because of that robust both consumer and business demand. This speaks to the conundrum that the Fed has to face off with, this idea that the consumer and the economy is strong and offsetting some of the oil shock in terms of price, in terms of the pricing.
That's the latest on Delta Airlines so far this morning. The latest on the conflict in the Middle East. More headlines of energy infrastructure being targeted and being struck overnight, waking up to that, and waking up to an important headline from the Israelis as well, that the security chief in Iran has been, in their words, eliminated. Looking for confirmation from both the Iranian and U.S. side later this morning.
Haven't seen that confirmation yet, but what the Israelis are saying is that they were able to take out in this strike Ali Laranjani. And this is incredibly important when it comes to decimating how the regime works. What comes next is going to be a huge question, because not only has the supreme leader been taken out, we have yet to see, and the president yesterday cast some doubt on where actually the new Khamenei is actually, and no one's seen him. He said his dad used to speak, no one's talking to him, but Ali Laranjani was an important person in terms of security apparatus and also a diplomat, that individual that was talking to the U.S. in part of these nuclear talks.
If you're in the market right now, you've got one question. Who's leading the situation, the war effort in Iran, and does it make it easier or harder to resolve the issues through the Strait of Hormuz?
I think that is a question that we still do not know. At this moment, it looks like this has not resolved the issue with the Strait of Hormuz. But one thing I think it is important, if you brought this up a number of times, there have been vessels that have come through. Chinese vessels, Pakistani vessels, Indian vessels, but really on an ad hoc basis, individuals that are talking to the regime. It's important to remember that the Strait of Hormuz is not closed, it is controlled, which also is not a good look for Washington.
And it's conditional on the flag on your vessel right now. Those headlines bringing this market just a little bit of comfort in the last 24 hours. Coming up this hour, we'll catch up with Lisanne Saunders of Charles Schwab following the best day for stocks in more than a month. Gil Luria of D.A. Davidson on NVIDIA's $1 trillion forecast, and Greg Decker of EY Parthenon looking ahead to tomorrow's Fed interest rate decision. We begin this hour with stocks falling and oil rising as strikes continue across the Persian Gulf. Lisanne Saunders of Charles Schwab writing the following: time is the enemy here, The longer this drags out, the more acute pain points become. Lisanne joins us now for more. Lisanne, welcome to the program. At the index level, pretty muted moves. We've had a 5% decline that ultimately got bought. Is that masking the amount of repricing we're seeing beneath the surface?
It is, John, and there's a number of ways you can look at it. We've, at this program, talked about the average member drawdown level being much more significant than the drawdowns we've seen at the index level. So in the case of the S&P 500, you're right, we've only had about a 6% drawdown maximum year to date, but the average member has had a 16% average drawdown. If you look at the NASDAQ, it's even more extreme. So the NASDAQ's had a little bit more of an index level drawdown, but at the average member level, the maximum drawdown is negative 29%. Another way to look at it is there's about 120 or so names that are trading in a similar band as what the S&P index is trading in, that kind of, 5% up and down band, but almost the same number of stocks have moved by up more than 20% or down more than 20%. So the tails of that distribution are larger than they have been. I think that kind of backdrop is likely to continue.
So picking up on some of the dislocations, people trying to work out if this is a moment to step in, particularly around some discretionary names. We've had headlines from Delta this morning, American Airlines just moments ago, guiding higher for revenue. Lisanne, is this a moment to step in and maybe pick up some of the pieces?
I think at the sector level, I think it's really difficult environment to just make a monolithic call, say on consumer discretionary. I think there's opportunities within every sector. I think it's profit margin stability, profits outlook, to your point about some of the airlines. I think that's really key in this environment. And that's also reflected down the cap spectrum. Unlike last year, this year within the Russell 2000, the profitable stocks are handily outperforming the unprofitable stocks. So I think it's that profitability angle that is really key. And that's where you have to go individual stock by individual stock, as opposed to just making a monolithic sector call.
Can you bleed that stock by stock picking kind of approach into whether you're looking at the equal weight or the tech universe as really driving any kind of rally going forward from here? At the beginning of the year, people were talking about that broadening out, about how more stocks outside of tech would really lead this. Now you're getting a reversal of that. How much are you shifting your view for the rest of 2026?
Not a heck of a lot. I think what's happening now with some of the reversion trades that we have seen, I think that's all about positioning. And I think positioning is really important in this kind of market backdrop. We all know, you certainly do, reporting on it every single day, that trying to gauge what the next announcement is going to be, whether it is from the administration about the war, going back pre-war, tariff-related announcements. We're in this mode of instability right now, and trying to gauge what the trigger points will be is very difficult. But what we can do is assess what the positioning backdrop is. And throughout the course of the last 2.5 weeks since the outset of the war, we have seen a change in positioning. You've seen that de-risking on the part of the systematic funds and the part of the long short hedge funds. We've seen it in retail in terms of individual positions, single stock kind of holdings. Overall, retail has not really pulled back their positioning to a significant degree. You have seen it with the CTAs. So positioning is such that we could get a pretty significant rebound because you've washed out some of that positioning. We can think of the market backdrop as being able to get assessed via the positioning, that goes back to early April last year. Trying to gauge these tariff-related announcements was difficult, but if you looked at positioning, you could see where both the pain trade is likely to be and maybe where there's upside if you get even a modicum of better news.
And Lizanne, just to sort of build on that, we saw that from the fund manager survey from Bank of America today, that the cash build increased the most going back to the pandemic from February to March. Are you getting more constructive right now?
So the cash build is an interesting one. If you look at the $7 or $8 trillion that's in money market funds, that is a record high level. I think one of the errors, though, is looking at a number like that in a level sense, in an absolute sense, without putting it in the context of the overall capitalization of the stock market. I haven't run the numbers very recently, but when we were at about $7 trillion, not all that long ago, it still only represented about, I think it was 12 or 13% of total stock market capitalization, which is historically very low. So if we think about sort of cash on the sidelines, so to speak, and I don't love that terminology, we have to look at it relative to the overall cap in the stock market, because that's how you measure, is that fuel that if it decides to, shift its attention more to the equity market, how powerful is that fuel? It's less powerful when you're talking about a fairly low share of total equity market capitalization.
Lizanne, you mentioned catalysts. This year, right now, the focus is squarely on what's going on in the Middle East and the war with Iran. Last year, it was tariff-induced headlines that potentially moved the market. Can you position your portfolio in the Trump era that ignores Washington?
No, you can't, but you can also, it's also impossible to gauge what those next triggers are going to be, which is why I think you have to focus more on the positioning. I think we've never seen a greater connectivity and short-term volatility being driven by decisions coming out of Washington. There's more, typically there's more of a disconnect between those two. You don't have to kind of draw that dividing line as closely as you do now, but trying to anticipate it, given how unstable policymaking has been and just the manner with which policies get announced is a much trickier backdrop, certainly for longer-term investors, but also for traders.
Lizanne, always good to see you. Thanks for dropping by and making some time for us. Thank you. Lizanne Saunders there at Charles Schwab. Let's check out the airlines again. So we've heard from two big players. We've heard from Delta and American. Delta first. Delta out this morning, revising their outlook, giving an upbeat outlook for the first quarter. That's good news. That stock was higher in the pre-market. Delta Airlines higher by 5%. Some really strong commentary coming from that company. It's not just the consumer, it's corporate travel as well. Surging demand for corporate travel across sectors. That name doing nicely. It's not just Delta, it's American Airlines as well. American Airlines is higher in the pre-market by 4%. They also gave an upbeat forecast as well for first quarter revenue just moments ago. Lisa, I think this is important. So the market's getting some encouragement. More broadly, I think, how's the consumer doing? How are businesses doing? Not just in January, February, after the war, how are they doing in the first few weeks of March? And these companies are telling you pretty well.
The consumer is confident, and the consumer is spending, and the consumer is waiting on those TSA lines and still traveling. The fact that they previously had seen 7 to 10% gains in revenue, and now they're guiding to the 10% level, highlights that resilience and sort of builds off of what we heard from Delta saying that they saw 8 out of 10 of the busiest March days ever so far, given the early quarter read. Question here, what does that mean for profits? It means they probably stay the same because ultimately they are dealing with higher fuel costs. So this goes to the question of, is it stagflationary or just dampening some of the potential growth? In other words, if you get out of the way, the U.S. economy is poised to rip. And right now, sure, there's a bit of a cushion sitting on it, but at the same time, it's not enough to make the stag really the preeminent theme here.
It's one sector, two companies, granted. But we want to know, how are they engaging with the economy? Consumers and corporations right now, are they disengaging because of the headlines of the past 2 weeks? And based on the headlines from those two companies, they're not. Equity futures turning positive, just a touch, by about 0.1% on the S&P 500. Let's give an update on stories worldwide this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump is continuing to appeal to other nations to help secure the Strait of Hormuz. The president's voicing frustration with countries that have been publicly non-committal about helping ensure safe passage, and even called out NATO for failing to act. Morgan Stanley is warning that private credit default rates will hit 8% as AI continues disrupting the software industry. The bank saying that while AI disruption has yet to impact private credit fundamentals in a material way, elevated leverage and looming maturity walls within the software sector may push default rates to levels not seen since the pandemic. And JP Morgan is planning to add hundreds of jobs in Boston after agreeing to become the anchor tenant in the city's newest skyscraper. The bank expects to hire about 300 employees in commercial banking, private banking, and institutional sales and marketing over the next several years. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour. Up next on the program, the morning calls, plus Gil Luria of D.A. Davidson on NVIDIA's $1 trillion forecast. That conversation up next, live from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I think trying to forecast the path of this Middle East conflict is incredibly difficult. It's fraught with difficulty. But what I will say is that it once again highlights US exceptionalism in different formats. Of course, if it goes on for a long period of time, yes, then of course all bets are off and we would probably expect a significantly lower move in risk assets.
That was Alex Altman of Barclays. Constructive for the equity market, more balanced, I would say, coming from the man from Barclays. Encouraged by some headlines that are coming out of the airline industry so far this morning. Delta Airlines, American Airlines, forecasting a better outlook for the first quarter. The first quarter so far, consumers engaging, corporate America engaging. It's an early read on things right now, but a better read of what's happening in this economy, given the risks elsewhere. Things can change quickly, but so far, so good. Equities turning higher off the back of some of these headlines. Equity futures positive by about 0.1% on the S&P 500. On the NASDAQ, just about unchanged. That's the price action. Let's get you some morning calls. First up, Mizuho raising its price target on Chevron to 217, citing higher global oil prices as a positive for the sector. HSBC raising its price target on Johnson & Johnson to 280, saying geopolitical risk and an uncertain macro backdrop could boost the sector. And finally, Stifel reiterating its 250 price target and buy rating on NVIDIA, expecting its longer-term opportunity funnel could exceed $1 trillion. Sticking with NVIDIA, the chip maker making a big prediction.
Right here where I stand, I see through 2027 at least $1 trillion
The CEO, Jensen Huang, making a bold prediction as computing demand soars. Bloomberg's Ed Ludlow joins us now for more. Ed, welcome to the program. I asked this question earlier. Help us out. 1 trillion what? What's he talking about?
Extended visibility for demand into another year. You know, it's as simple as that, really. The 1 trillion is for a range of 2025 through the end of calendar 2027. The prior outlook was $500 billion of demand, specifically for Blackwell and Rubin systems, and it included networking. And that was essentially from October through to the end of calendar 26. The difficulty is when that number hit, and you saw it in the market reaction, right? You know, NVIDIA really surged, took the indexes with it, but Wall Street quickly did the math and it came back down. They didn't include those same qualifiers. They weren't explicit on stage or through a regulatory filing about the composition of what's in the 1 trillion. So it's basically cumulative expected sales. And, you know, the thing that bow ties it, the important point is that they still believe they'll be supply constrained in that period. The way that Jensen Huang put it on stage is they'll be short. And the story being that demand through NVIDIA's lens is very much intact.
Based on what I just heard from you, Ed, that sounds like it was heavy on marketing and low on substance. What was the big takeaway from yesterday?
Yeah, I think mostly the supply constraint. You know, NVIDIA argues 2 things. That it tells its supply chain and customers many years in advance what it's going to do, and that's true, so they have time to plan for it. Within that $1 trillion forecast, there was an associated pie chart next to it, which showed that 60% of that buying is going to still be the hyperscalers, the cloud computing companies. And that's something that's been very closely watched, because if you look at the sell-side reaction, NVIDIA is basically a leading indicator that CapEx in the short term will hold up, if its numbers are to be believed. The issue, and I think you guys just showed the pre-market move in the stock price relatively muted, that 1 trillion is very close to consensus anyway. So it doesn't really move the needle in terms of trajectory. It just gives a bit more certainty to lots of people's mind on what the biggest deployers of capital expenditures are going to do. On the other hand, you know, NVIDIA keeps telling us that we're supply constrained. They won't be able to get hold of enough GPUs to meet the demand that's out there, which is a good problem for them to have, but for the rest of the industry, difficult to model for.
Ed, good to see you. Thanks for dropping by and updating us. Looking forward to the program later. Bloomberg Technology coming up a few hours from now on Bloomberg TV. Gul Luria of D.A. Davidson has a buy rating and a 250 price target on shares of NVIDIA. Gil joins us now for more. Gil, welcome. You heard Ed talking about it there, supply constrained. Is that a good problem to have?
Well, not for NVIDIA. And in fact, they're working very hard to help all the other participants in the ecosystem figure it out so they can sell more chips. NVIDIA's biggest problem right now is that everybody is not catching up to demand as well as they are. And so they've actually gone as far as organizing the whole supply chain around what they're calling an AI factory, which is to say they're going to start coordinating all of the different participants and building out data centers on their platform so they can be more coordinated, so there won't be as many delays in data centers. If there is not a warm shell in a data center ready for GPUs, they can't sell GPUs. So now NVIDIA, beyond just making its own product, has to help everybody else make their product in time so they can sell more GPUs.
Gil, did it bother you that we don't have a lot of clarity around this $1 trillion number that was massive but didn't really offer much visibility?
You know, I'll take the other side of that, which is to say for the longest time, NVIDIA just guided 1 quarter at a time. And that meant that investors didn't really have that much visibility going forward. In October, they extended that for 12 to 15 months. And now they're extending it out another 12 months. That's actually very helpful. Now, is it a specific number with qualifications? Maybe not. But keep in mind, consensus estimates for next year were $460 billion, and he just added $500 billion. So it doesn't matter how you qualify that number. That means that NVIDIA expects to grow more than 30% next year, not just this year, but next year. But part of the problem is the market is not believing it. If NVIDIA is trading at 22, 23 times earnings, which is basically a market multiple, and on the very low end of their historical multiple range, that tells you the market just doesn't believe it. And Jensen Huang is pushing rope. He could have said $2 trillion for next year, and the market's just not believing it. Now, he has a lot of credibility. He's gained it over the years, but the market is saying we are skeptical that this great data center build out will continue into next year. The good news for NVIDIA shareholders is the closer we get to that, the more NVIDIA can show that it is actually going to grow into next year. That's the upside to the stock.
What was Olaf doing on stage with Jensen Huang?
They were trying to illustrate that humanoid robotics and other types of robotics are making huge leaps forward. So they brought Olaf from Frozen to life. They had a music video recap. It was a very high production event yesterday. NVIDIA is expanding well beyond the GPU. That's the big takeaway from day one of GTC, is that really up until now, it's been GPU and CUDA and maybe networking. And now they've expanded that a lot. So multiple software options, multiple networking options. They're going to start selling CPUs individually. And the most important takeaway from yesterday is the addition of the Grok chip into their data center systems. That will bring them to such a level of inference productivity that's going to extend their lead over Broadcom and AMD. That's the biggest takeaway, because there were a lot of concerns that, Broadcom, AMD catching up with GPUs, custom GPUs, ASICs. And what NVIDIA just did is by integrating Grok, they're saying, no, we're going to extend our lead. The cost per token on our platform for inference is going to be a fraction of everybody else. The productivity per second for inference is going to be much better than our competitors. So that was the big news yesterday.
Gil, appreciate your time. Thank you, sir. Gil Lurie there of D.A. Davidson. I'm struggling to find what the takeaways were from yesterday, given your question.
That was Lisa's takeaway. Well, I was just really struck by the fact that they had this whole build-up about the creation of robot Olaf and then bring it to the stage. The takeaway was ultimately they're moving into robotics, they're moving into self-driving vehicles, they're moving into deploying this in some sort of cheaper version throughout a broader swath of the economy. That's the goal. That's how they get to $1 trillion. A lot of the other details kind of not exactly clear.
Market's just not buying it at the moment.
Yeah.
Stock really has stalled. That rally has stalled out big time over the last 4 months. NVIDIA this morning higher by 0.2%. Up next, Greg Dacko of EY Parthenon on tomorrow's rate decision, and Danny with your morning movers, the airlines in focus.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The airlines in focus this morning, the equity market turning higher off a better outlook from the airline industry. We'll get to those names in just a moment. Futures positive by 0.1% on the S&P and on the Russell, the small caps turning around. We were negative across the board about an hour ago. That's turned around in the last 60 minutes. Let's get you some single names, some morning movers. Danny has more. Hey, Danny.
John, let me get you those airlines. Again, the results looking strong for all of them, despite the fact that there are higher fuel prices and concerns about consumer appetite. It is there. Delta, JetBlue, American Air, all of them pointing to a more positive outlook to come. Yes, fuel prices are up, but that is not stopping spending. Just looking at Delta, for example, it now sees its revenue growth in the first quarter between 7 and 9%. Previously, 7% was the high end of expectations. So that's a positive sign. Elsewhere, Uber and Lyft, both the rideshare companies, are moving on the upside. Both of them announcing a partnership with NVIDIA to expand an autonomous vehicle fleet of cars using their technology. Uber looking to expand into Los Angeles and San Francisco. Finally, wrapping things up with the company that was also on the upside yesterday, Nebius. This is the Neo Cloud. Yesterday, we learned that Meta had signed one of their biggest ever single contracts with the company to use more of their facilities. Nebius this morning putting into the market a just under $4 billion convertible debt offering, a dilutive event, so that tends to move shares lower. So they are moving lower, just under 7% this morning in the pre-market, John.
Danny, thank you. Looking forward to the show alongside Matt Miller, Danny Berger, at about 9 a.m. Eastern Time, guiding you into the open about. We're overweighting the headlines coming out of the Middle East for good reason. They're important. The airlines have been beaten up over the past few weeks with higher fuel costs in mind. This update from them is really, really important. Consumers still engaging with travel, not backing away. Corporate America's not disengaging either. This headline, they see surging demand for corporate travel across sectors.
To me, this is arguably one of the better tells on the overall economy, understanding that, yes, the people who choose to fly tend to be higher income, so it isn't necessarily representative of the overall average economy. Nonetheless, the confidence that people have to travel and the fact that everyone who I talk to in the business world is traveling that much more because of the uncertainty, not necessarily less, gives you a sense of why some people are saying, hold on a second, are things really as bad as expected? Alex Altman saying that the increase in oil prices hasn't had the pass-through, negative pass-through to the U.S. economy as much as people had expected.
They're weathering the storm right now, but still, this headline that they saw a $400 million spike in fuel costs in March, if this continues, can they withstand that for much longer? When you think about the crudes coming out of the Middle East, it's medium and heavy crude, more than half of that percent, more than 50% of that is to make jet fuel. These prices are going to go up higher, like we see in diesel today in the United States, above $5 a gallon. At what point does then it start to hurt?
Right now, the stocks are going higher. Delta up by 5%, American up by more than 4%. A two-day meeting beginning in Washington, D.C. later on this morning for the Federal Reserve. The war in Iran throwing fresh uncertainty into the economic outlook. Bloomberg's Enda Curran joins us now for more. Enda, set the stage. They get around the table. It was already confusing enough, and now they've got a massive risk emerging in the Middle East.
Yeah, it's going to be an opportunity now to get a new narrative from the Fed, John. The first time we'll hear from Chair Powell in terms of how Fed policymakers are thinking about the Iran shock. Are they going to view this as the classic supply-side shock, near term, look through it, without, of course, mentioning the word transitory? Or will he give a hint at perhaps bigger picture? They're going to be worried about how higher oil prices will impact consumers and businesses, and then, by extension, at some point, the Fed might actually have to start resume cutting rates down the road. But near term, for this particular meeting, no change in policy expected. Keep an eye on their new growth and inflation forecasts. The new projections for interest rate moves by the FOMC members will be interesting. And, of course, dissents. See where people like Governor Waller come down, whether or not he pushes for a cut if they do stay and hold. Governor Myron is expected to dissent. And keep an eye on Governor Bowman, too.
Governor Waller, on this programme, had already said it was a coin flip, came onto the programme on Payrolls Friday and basically said, you get another weak print, and ultimately I'm going to lead in one direction versus the other. It looks like he's going to vote for a rate cut. And to the other question we've got, are questions for the chairman in the news conference. His future. And what do we know about what's going to happen here over the next few months at the top of this institution?
Still a lot of uncertainty. The political story is absolutely there, John, as you mentioned. We had, of course, the big court ruling last week quashing those subpoenas against the Fed by the DOJ. On paper, that suggested maybe a sigh of relief for the Fed in terms of that particular investigation, but we know the DOJ will push on with that. They've said they will appeal. One wrinkle that came out of those court documents, John, was some commentary in there, some exchanges between the DOJ and the Fed attorneys, whereby it became clear that Chair Powell has said he can't really leave the Fed until this investigation plays out. Now, of course, his term as chair will end in May, one way or another, but his term as a governor of the Fed runs until January 2028. And these court documents show that so long as the criminal investigation is carrying on, he is not going anywhere. That, of course, is very important in terms of allowing President Trump the opportunity to appoint someone to replace him. He has said publicly he wants to stack the board. And, of course, it may have implications for where monetary policy goes near term as well. So there's a lot of both economics and politics at play in this Fed meeting over the next few days.
And Karen, thank you, sir. Down in Washington, D.C., there was an off-ramp available to the administration, and ultimately nobody's taken it.
Yeah, they are saying that they're going to appeal the Supreme Court's decision that they can't go forward with this, which, again, is a question. Does this mean, to Anne-Marie's point, and you raised this, and I thought it was a really salient one, does that mean they want Jay Powell to remain so that he can be sort of the whipping post for all concerns economics?
It's a bit odd, isn't it?
I mean, it doesn't make any sense.
You've got your nomination. He's lined up. Senate is going to confirm him. We've heard from all the key players. They want to confirm this individual, and you're holding things up. Why?
So there are two ways to read this. On one hand, you could say you just can't let it go and you want to win, and it's sort of just this visual win, and that is what we're seeing. And number two, there's a feeling that maybe they want to push this off as long as possible because this is a difficult period of time economically to make any kind of definitive decision, and they want to have a fall boy, and they have one in one person who's at the head of at the Fed.
It gets harder for Chair Powell to pump. Penultimate meeting. What's your future? What's the leadership of this institution look like? Succession planning. You're not in charge of all of that, I get that, but ultimately, where are you leaning? What are you doing? Where are you going to be come June?
And a couple months ago, Jay Powell became much more political with that announcement that he made, that recorded announcement on a Sunday night. Does he revisit that tone and say something specific about this? If he doesn't, that in and of itself is going to be a signal. Is this sort of, misdirection on purpose, or is this ultimately he just hasn't decided yet?
Toothpaste is out of the tube. Now, he didn't start this, but he chose how to react. Right before the opening bells Sunday evening, the opening of markets in Asia, he himself engaged politically in a way that I think people still question to this very day. I think it makes it much, much harder for him now to back away from any conversation about his future, given how political it's become. And you can't, on the one hand, say, I don't want to engage in the politics, and the next moment say, I'm happy to engage in the politics. Once you start doing that, got to be consistent.
Right, and he could just be asked a question that has nothing to do with the actual personalities involved and just what would happen in these cases. The Wall Street Journal editorial board is actually out with a piece today, though, and says to the administration, take the hint. This may be a loss, but actually for you it could be a win, and it's an off-ramp, which is why I started to think about, well, why do they want maybe Jay Powell to stick around?
It's odd they're not taking that off-ramp. Greg Dacko of EY Parthenon doesn't want to talk about this. He wants to talk about the outlook. Given our higher headline and core PCE inflation forecast, we have revised our baseline to show only one 25 basis point rate cut in 26. Greg joins us now for more. Greg, good morning.
Good morning, John.
We'll sprinkle some politics in, no doubt. Clearly, this is a really difficult moment for the Federal Reserve. We're off the back of a really weak jobs report. We can get into that in a moment. And we've got the potential for an inflationary shock as well. How do you think that mix comes up in the outlook tomorrow?
I think in general, what it will show, the outlook from the Fed's perspective, is that we have the greater risk of a stagflationary scenario. And that is problematic for the Fed because we know that a lot of policymakers before the report for employment in February were essentially leaning more hawkish. And even Governor Waller, as you mentioned, was leaning towards a 50-50 coin flip as to whether he would dissent if the Fed held rates constant. So we have this hawkish lean, and what's likely to happen is that the Fed is going to be on pause. Why? Because they do not like this type of stagflationary environment, and they do not want to preemptively react to either inflation moving up or growth moving lower. And with policy being close to neutral, they feel like they're well positioned to essentially wait and see the data. So that's why we're not expecting any move over the course of the next few months by the Fed. They're going to be very data reactive, and they're going to wait out to see how this plays out.
I don't get the sense that anyone's particularly excited about the actual decision, about the fact that they're going to remain on hold, and that's pretty much a given. They are curious, though, about the statement of economic projections. Yes. How seriously do we have to take those? I mean, ultimately, isn't it just at a time like this, throwing a dart in a dartboard?
It is a bit throwing a dart at a dartboard because we don't know what the assumptions are going to be, and we don't know how each policymaker is going to look at these assumptions. We had the same type of issue with tariffs. What were the tariffs assumptions by the different policymakers, and how did that influence the meeting? So if you consider today's environment, what's key to factor is where oil prices are going to be in 3, 6, 9, and 12 months' time. Where are interest rates going to be in that environment, and how is economic activity going to react according to that? I don't think we have a lot of clarity. I think what's even more important is how the statement will be framed. There's going to be more focus on downside risk to employment, upside risk to inflation. Let's not forget, in the minutes from the January meeting, there was a very close call as to whether we would have a two-sided statement putting back on the table the possibility of rate hikes. That should not be discounted in this environment.
Do you think that's warranted? I mean, if you look at history, oil price shocks typically are disinflationary or outright deflationary over the long term. It typically torpedoes growth when it is for a prolonged period of time at a certain level, and I'm talking more $150 than $100 a barrel in today's world. Do you think that it is appropriate for them to put a rate hike back on the table?
I don't think it would be appropriate right now, but I think we have to consider the environment in which we've been evolving over the last few years. I wrote a recent note on the FOMC saying once burned, twice cautious. And the memory of the burn from 2021 and 2022, when the Fed said the tariff shock and the post-COVID shock were going to be transitory, was essentially misguided because we saw this pervasive inflationary environment. Today, we are in an environment where there are a number of supply constraints. What do supply constraints do? They limit your output, they push up inflation. Add another geopolitical shock where oil prices are rising, and they will filter through into transportation costs, into air travel, and that will lead to a more prolonged, longer tail in terms of inflation. And so while rate hikes are not necessarily optimal right now because monetary policy is arguably close to neutral, there could be an environment in which inflation proves more persistent and where some policymakers argue that we should actually have higher interest rates to bring inflation back down consistently and sustainably back down to the 2% target.
Greg, news conference scene. I'm Michael McKee from Bloomberg TV. Chairman Powell, will the next meeting be your last meeting? How does he respond?
I don't know, Mike. I think he's going to be very cautious. He's going to want to stray away from that. It's a bit of a paradox because he did come out quite openly when there was the initial DOJ probe into the Fed and his testimony to Congress. We now have, as you were saying to Anne-Marie, an off-ramp possibility with the judge injunction that the probe may not continue. And so this is a key question, in terms of Fed Powell's future. We have to remember that his term as governor lasts another 2 years beyond the end of his term as Fed chair. We also have to remember that the head of the Fed and the head of the FOMC can be two different individuals. So we could very well be in an environment where past his term as Fed chair, the FOMC just continues to go with Fed Chair Powell as governor, but then head of the FOMC, which is a key decision maker when it comes to policymaking.
I imagine he avoids the question. Base case of many people, he avoids the question. I also imagine it's not hugely consequential if he does avoid the question at this meeting. Does it start to become consequential for anybody, for market participants, for Fed watchers, when we don't know the future of the top of the Federal Reserve?
Absolutely, because there are a number of potential scenarios. He could leave, he could stay on as a governor, he could stay on as a governor and as head of the FOMC. So for market participants that are trying to gauge the Fed's reaction function in the type of environment that Lisa was just describing, where you have the stagflationary shock, and it's uncertain what the optimal policy decision is going to be, uncertain as to how transitory the inflation shock may be. Yes, it is key for market participants to know who is going to be the leading voice around the table when it comes to making decisions. We know this is a vote, but the leading voice from the FOMC chair is very, very important.
Do you think market participants are looking at this and thinking the administration wants someone they can blame potentially some economic fallout on?
I really don't know the answer to that question because it's unclear as to what will be the trajectory over the coming months. We know that policy tends to pivot fairly quickly. We know that we're in an environment where there's a lot of uncertainty when it comes to Fed policy. There's a lot of uncertainty when it comes to geopolitical uncertainty. There's a lot of uncertain geopolitical policy. There's a lot of uncertainty when it comes to tariffs. And we have to remember this. This is an environment where it's not just about what's happening in the Middle East. We still have in the background an environment where you have historical tariff rates. You have a historical reduction in immigration. You have AI that's leading the boom in terms of productivity growth. So you have all of these different elements that are coming at the same time. And we tend to be focused on just one thing. But the reality is that there's so much uncertainty that I think it's very difficult for market participants and for the administration to calibrate what they're going to do next in this type of environment.
Greg, it's good to see you. They had enough on their table already. They got one extra now. Greg Deco there of EY Parthenon. I don't want to inject drama where there isn't any, and there doesn't need to be any. I don't think it has to be a dramatic news conference tomorrow. It could well be a boring one. I imagine that's the goal of the Federal Reserve and the chairman going into that meeting tomorrow. But by the time you get to the end of April, which should be his last meeting at the Federal Reserve, you should be in a position to provide some guidance. And I know a lot of this is out of the Federal Reserve's hands right now. There was an off-ramp. The administration didn't take it. The ball's in their court.
At the April meeting, he'll have to answer on some level. There will have to be some more conclusion, and maybe he can wait it out until there is more clarity about who potentially could be put in. In the meantime, they have a lot of drama in terms of what they have to characterize as boring. I mean, they have to characterize an economy that is absolutely a jumble, with on one hand a consumer that does appear to be strong, on the other hand an oil shock that could potentially torpedo everything. And they want to come out and be as boring as possible. Good luck.
Do nothing, say little, and appear to be non-committal. I think that is the goal, ultimately, right?
Sounds lovely.
Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Iran striking new targets across the Persian Gulf. The UAE suspended operations at the Shah natural gas field due to a fire, while a drone attack temporarily shut the Fujairah port. An Iraqi oil field and a key Emirati port were also targeted. American Airlines rising after projecting a more than 10% year-over-year revenue increase in the first quarter. The outlook comes despite the company losing hundreds of millions of dollars during January's winter storm. And shares of Delta also trading higher, up 4.4%. The company issued a target for the first quarter after bookings accelerated into March. And Bank of America releasing its March fund manager survey, showing sentiment has begun to turn bearish after months of near-peak optimism. Global growth optimism among respondents plummeting from 39% to 7%, while cash levels surged, tracking their biggest jump since the pandemic. And rate cut hopes now sitting at their lowest level since early 2023. But so far, no one is pricing in a recession. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, Lisa Hornby of Schroders drops by on finding opportunity in fixed income from New York City. You're watching Bloomberg TV.
Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
If we had known that you were going to more than double from the December low in oil to where we got to a week and change ago, would you have really thought that stocks would only have been down 5%? It speaks to the resilience of the market. It speaks to the resilience of the economy. The fact that you're going to get double-digit earnings growth this year speaks to the fact that markets can move higher.
Does it speak to resilience or complacency? That was Julian Emmanuel of Evercore. We have thrown a tremendous amount at this market, and it has stood up really, really well. Futures positive right now by 0.2% following an upbeat guide coming out of the airlines this morning from both Delta and American Airlines. Up by 0.2 on the S&P, on the Nasdaq up by 0.1. That's the price action. This is the trading diary as we count you down to the opening bell about 40 minutes away. At 11 a.m. Eastern Time, the President meeting with the Prime Minister of Ireland. On Wednesday, PPI data plus a Fed rate decision and Chairman Powell news conference. On Thursday, rate decisions from, wait for it, BOJ, BOE and ECB, and another round of jobless claims just before Friday going into the weekend. Treasuries holding steady ahead of tomorrow's Fed rate decision and a whole lot more. Lisa Hornby of Schroders writing the following. Fixed income yields have become more attractive, increasing opportunity for building a diversified income-oriented portfolio. Lisa joins us now for more. Lisa, good morning.
Hi.
So the bond market's a buy after the backup of the last few weeks.
I wouldn't say monolithically, but I would say there are definitely components that have...
Selectively.
Exactly.
Where would you select?
Well, let's just start with this. Yields are higher than they have been in the past, and I think that's what's made this crisis a little bit more unique, is that actually, as rates have gone up, we're actually seeing more yield-based buyers come in, and that demand is there.
So they've stepped up.
They have stepped up. We're seeing that in the survey data. Obviously, the cost of hedging in certain jurisdictions has gotten a little bit less onerous, or making the all-in relative value of the U.S. market more attractive, and that's something that we were struggling with a bit 12 months ago, and now we're starting to see that demand come back.
And that's for treasuries, long-end treasuries you're talking about specifically.
And credit as well.
So they're meeting a slew of bond sales. I mean, really, just a huge glut of issuance that we've seen over the past couple of weeks, particularly investment-grade credit. And we've seen spreads start to widen out. Can you explain why credit markets seem to be so wide open, so receptive to all of these potential deals, at the same time that everyone says that they're so worried about private credit?
So I think there's a couple of things. First of all, the yield-based buying is a real thing, right? So even these deals that have come, and people were worried about supply. There's obviously going to be massive supply in tech this year, and already it's started. But people were worried about supply, but also You know, the yields on the index, depending on which index you look at, 5.25%, 5.5%, 60% of the credit of the market is yield-based buyers. So all that matters is kind of the line in the sand. If you can achieve a certain objective and a certain yield objective, then you're coming in to buy. Does that mean that spreads are going to go in a straight line up or even down? No, I think that there's going to be puts and takes, and certainly this year. And part of the rest of the comment that you started with was there's a lot more dispersion in markets. And so this is a much more idiosyncratic issuer selective market than it has been in the past. You know, there are some years where it's just beta. You just want to buy the market and that's it, or you want to sell the market and that's it. This year it's about doing your stock selection homework and making sure you understand the underlying fundamentals of the issuers out there.
Earlier this year, among all asset classes, there was a feeling, go outside the United States, that maybe there was a threat to the U.S. dollar dominance, et cetera. It seems like that has completely gone on its head, and I wonder how much you're seeing yield-based buyers come back to the U.S. from overseas that had been looking for opportunities in emerging markets in Europe and elsewhere.
So I can tell you anecdotally, it's funny. We think a lot about those investors, especially at a British firm. We have a lot of non-US based investors. And I was talking to a Japanese client recently, and yields in Japan have clearly gone up quite dramatically. And one of the things we've been talking about is, hey, are you still interested in the US market, or is it now more attractive for you to buy your own market? And he said, look, it's definitely become slightly more attractive, but at the end of the day, Japanese credit markets are very small and not diversified. We need to look at the US, and we need to continue to do that. And so, yes, there may be other alternatives, and certainly the cost of hedging and things like that, rates moving higher abroad is a big deal. But at the end of the day, you're going to want to build a diversified portfolio. If you have dollar liabilities, you're going to want to match them with dollar assets. So I think there's a whole host of reasons why international investors still look at this market.
This is where the depth is, that's for sure. I want to finish on this. Of the conversations you have across regions right now, do you sense a difference between different regions based on how they're experiencing this shock coming out of the Middle East and their attitudes to it?
Yes. I mean, certainly some areas are more exposed directly to the oil and gas markets. They are more sensitive to importing demand. I mean, you're probably talking more about developed markets. I think that's clearly true. I think it's true in emerging markets as well. I mean, you have certain energy importers that have become under quite a lot of pressure, just given terms of trade are going to be shocking more negatively. On the flip side, you have energy exporters, or those who are less dependent on the energy import sector, and I think they're actually doing quite well and actually well positioned. So yes, on all fronts, in terms of what it looks like for the consumer and economic growth, different impacts depending on where you are, and also in terms of what it looks like for the region as a whole, just, you know, the business and the industry there.
That shock cascading through the global economy. Lisa, good to see you.
Great to see you.
Lisa Hornby of Schroders. Quite a morning so far. The strikes continue in the Middle East. We've seen the damage done to energy infrastructure, some key targets in Iran taken out by the Israelis, confirmed by them a little bit earlier. But still, the backdrop for the American economy in focus, a better story coming out of the airlines, American and Delta. So far this morning, futures just about positive. Big day tomorrow, a Fed decision just around the corner. Looking forward to covering it with you from New York City this morning. Good morning. This was Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing, you know, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
You know, investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's Deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, U.S. diesel tops $5 a gallon as the Iran war continues to squeeze energy supplies.
Meanwhile, Delta delivers an upbeat outlook showing the airline's resilience in the face of higher fuel costs.
And NVIDIA gets a muted market reaction to Jensen Huang's $1 trillion forecast.
Well, I have that muted market reaction, which, by the way, on average, when he speaks, the stock doesn't move a lot. So I don't know what we were expecting.
Right, and as Ed Ludlow points out, this is the Super Bowl for them. Yes. So they say a lot of big, crazy things that are actually stuff, it turns out, we already kind of knew about.
Yeah, and that's kind of priced into the stock. So that's what we're seeing. We're only up 0.6%, 0.7% in the pre-market. They unveiled a suite of partnerships, plans to build chips for everything from robots to data centers and space. They are targeting $1 trillion in sales through 2027. Also announcing a partnership with both Uber and Lyft to give them autonomous vehicle technology. Those shares are moving
right on. And I saw a video of Olaf on stage with Jensen Huang.
Super important.
As well. So we'll talk about their connection to Frozen. A cross-asset check on S&P futures right now higher, even as we see Brent crude futures rise. So that relationship breaking down this morning, Brent up to $102 a barrel. NYMEX is up as well. You can see the 10-year yield continues to come down. That's also an interesting relationship that we haven't seen so far. Typically, when oil futures are up, you see stock futures down and the 10-year yield higher on inflation concerns. But today, I guess, Danny, it's not the case.
It is not the case with continued action in the front of war. Israel claiming it killed another top Iranian official as the war shows no signs of abating. Iran ramped up attacks on energy assets around the Persian Gulf, setting a massive UAE gas field ablaze. President Trump spoke yesterday as questions grow over how long the conflict can last.
Can we wrap this war up this week?
Yeah, sure. Okay.
Will we?
I don't think so, but it'll be soon. Won't be long. And we're going to have a much safer world when it's wrapped up. It'll be wrapped up soon. We're going to have a much safer world.
Diesel prices, as Matt pointed out, have now jumped to $5 a gallon in the U.S. That's the first time since December 2022. The Iran conflict is tightening supplies and ripples throughout the economy. Joining us now is Bloomberg's EMEA News Director, Will Kennedy. Will, we are seeing not just the price of oil, but some of these other products move higher. How sustainable does some of the tightness in this market look with the most recent attacks?
That's exactly right, Danny. We are seeing the impacts throughout the fuel market, and that's because refineries can't get as much crude oil as they used to. That's putting pressure on product supplies. That's having people bid up the price of these products like diesel. And diesel is central to the way the economy operates. That means trucking, but it also importantly means farming. People's tractors and harvesters, they all use diesel. So it's a real input into the economy, which will, if it's sustained over a period of weeks and months, add real inflationary impetus. We should also be looking at jet fuel. We're seeing the price there, and that will feed through into plane tickets. We had the Delta CEO this morning saying that its fuel bill had jumped by tens of millions of dollars this month. So we are starting to see those impacts, and it's transferring through these oil product markets.
Will, I continue to see headlines like the one out of the UAE this morning that they've suspended loading these tankers in Fujairah. Why would they be loading them anyway? Are any ships getting through the strait? I thought that had been closed for the last, 2.5 weeks. So why would we still see people loading tankers?
Well, the significance of Fujairah, Matt, and the reason that the Iranians are targeting it, because it is the one Emirati port, the one port in the UAE that lies outside the Strait of Hormuz. You're right to say that most tankers aren't loading inside the Persian Gulf because there's no ships to put them on and they can't get out. Those ships are full already, but outside they can. There's 1 million barrels plus that goes through a pipeline from the Gulf side of the UAE to the Indian Ocean. So that's why it's vital to this effort to try and get as much oil out as possible, and why the Iranians are hitting it. The other part of this story is the Red Sea. The Saudis are ramping up 5 million barrels a day of exports on this east-west pipeline they have across the Arabian Peninsula that allows them to export from the Red Sea. And that effort, again, is really important to keeping as much oil moving as possible. Those tankers haven't been hit by Iran, perhaps because they can't, perhaps because they think it's a step too far. But that's another thing for markets to watch and will be very alive to.
Well, there are some tankers that are moving through the Strait of Hormuz. The team's most recent reporting, a Pakistani tanker, 2 India-flagged liquefied petroleum gas tankers were also able to exit the strait. Does it seem like there is movement, but it's just on Tehran's terms? And does that move the needle at all for energy markets?
We don't know exactly on what terms those tankers move through the straits, but there have been a few very limited movements, not nearly enough to make a material difference to the disruption that we're seeing in energy markets, but it is important nonetheless. And when we look at the route of those tankers, it does suggest that because of the way they cleave close to the Iranian coastline, that it probably is, as you say, happening on Iran's terms. And we know that some countries have reached out to the Iranian government and asked for safe passage for those ships, including India and Pakistan. And so it's an indication that might be happening. And it's just really an illustration of how much power Iran has in this situation, that it is able perhaps to dictate terms as to who can go through the straits and who can't.
All right, Will, thanks very much. Will Kennedy runs our global oil coverage for us here at Bloomberg. Let's get to the airlines now, a big buyer of those crude products. Delta Airlines issued a more optimistic sales target for the first quarter after bookings accelerated to start the year. The CEO, Ed Bastian, says fuel costs have jumped by $400 million so far this month. Let's get details on what all that means with Bloomberg Aviation editor Benedict Campbell in Washington, D.C. So, Benny, what do we know from Delta and their upbeat forecast?
So we have a whole raft of executives presenting today. Here in D.C., there's a big J.P. Morgan conference, and Delta came out first out of the gate with a very upbeat outlook. And I'll be honest, I think a lot of people are coming into this day thinking there might be more measured comments, there might be more a muted outlook, but in fact, everyone's pretty upbeat. You mentioned Delta, but then American Airlines also came out and said, we've seen some of the strongest bookings yet in our history, frankly, in March alone. So people are really rushing to lock in these prices. The question is, how sustainable is that? If the fuel price, the fuel price for kerosene remains high, what does that mean for longer-term ticket prices? And that's maybe what you're seeing right now, that customers are rushing to buy the tickets, which is why you're seeing the strong demand. But as longer that this conflict keeps going, that might become unsustainable.
what tends to be the relationship between jet fuel prices, especially for the likes of Delta, Benny, which does have its own refinery? When can we expect higher ticket prices, and can we expect consumers to stomach that?
We've already seen some airlines add so-called fuel surcharges, and that's really across the world. You go from New Zealand to India to Europe, so companies are already locking in higher prices, and that feeds right through to the ticket price. In the US, we've not seen it yet, and there is still a group of consumers, a rather large group, that are willing to spend. We heard from Ed Bastian, the Delta CEO, this morning saying there is a sizable group of customers that still want to travel, that have made this a priority for their spending habits, and there's really no let up here. Where it might start hurting is more on the sort of economy-minded end of the spectrum, so people who book cheap tickets, who are cost sensitive, and the airlines that cater to these kinds of people. So the JetBlues of this world, the Spirits of this world, that's where you might see more of a fallout. So really, if you come into this crisis, and it is a crisis for the industry the longer it keeps going, and you're coming into it strong, with a strong balance sheet, and in the case of Delta, you have your own refinery, so you have something of a protection, then you're going to come out of this stronger. But for the others, we're looking at potentially tough months.
Benny, great to have you in our time zone. That's Bloomberg's Benedict Campbell, who's in D.C. for an industry conference, so perfect timing to have you here. Now to AI, NVIDIA's Jensen Huang announcing a number of partnerships at the GPU Technology Conference. He also laid out plans for data centers in space, of course, and reaffirmed his $500 billion annual sales target.
Right here where I stand, I see through 2027, at least $1 trillion. $1 trillion is an enormous amount of infrastructure. That infrastructure investment you could make on NVIDIA, you could make with complete confidence. We have now proven that.
Let's get the latest from Bloomberg Tech co-host Ed Ludlow. Only a matter of time before Jensen started talking about data centers in space. Ed, what new did we learn from the conference yesterday?
Yeah, I think a lot of people are still trying to understand the $1 trillion figure, right? The interpretation from the sell side, at least, is that it's extended visibility on demand, on sales opportunities. So the range is 2025 through to the end of calendar 2027. It's $1 trillion, but they were not explicit that it is just Blackwell and Rubin systems. The prior outlook of $500 billion that you mentioned, which was stated on October 28th in DC, was just Blackwell and Rubin, and also included networking. It emerged after the fact. The main thing that Jensen Huang emphasized and underlined is that they expect to be short. He said, we will be short. In other words, you know, that demand is still going to outstrip their ability to supply. And a part of the kind of more muted pre-market reaction you just showed on the screen relative to the big jump when the headline hit yesterday is that, you know, the $1 trillion still tracks pretty close to consensus anyway. It's more a validation of estimates rather than anything revised.
But, I mean, Jensen Huang is nothing if not a hype man. And Ed, he talks a lot about the importance of NVIDIA in each layer of the AI, like, layer cake. Explain that analogy to us.
Yeah, the five-layer cake. In other words, you know, at one extreme you have the results of AI agents, the output that an AI agent can give, and at the other end of the extreme, the infrastructure, the data centers, which are powered by their GPUs. And a big part of this story has been Jensen Huang trying to convince the market that if broadly, not just the hyperscalers, but software companies as well, invest in the infrastructure, that compute equates to tokens, the generation of tokens, and for those companies, more broadly, tokens will result in revenue growth. And that was very much sort of weaved throughout his on-stage 2.5-hour delivery yesterday.
And yet the stock has been flat for like 6 months. Why can't he move the needle here?
Well, again, just interpreting the sell side's read on the $1 trillion outlook, you know, we call it an outlook. It's not necessarily firm sales guidance. It's visibility on the demand they see for AI compute and AI infrastructure, but it tracks very close to consensus. It's not a huge, it doesn't represent a huge acceleration or additional upside to what the street was already modeling for anyway, and that is a part of the stock. Although, the stock now a percentage point higher in pre-market, maybe people have had more time to read.
All right. Ed Ludlow, we're going to give those people another hour and a half before you come on the program. Ed Ludlow hosts Bloomberg Tech. They kick off at 11. Let's take a look at some of the other movers on our radar right now. Qualcomm approved a $20 billion stock buyback and boosted its dividend. As a result, those shares are up 3% in the pre-market.
Elsewhere, Oklo just got approved by the Energy Department to build its first nuclear reactor in Idaho. Shares up 7%.
And Victory Capital submitted an improved proposal for Janus Henderson that values the firm at $56.84 a share, $56.84. I could put that another way.
They both work.
It exceeds Trian's bid for Janus by $1.2 billion.
Their bid has always been higher than Trian's bid, but Janus is, for whatever reason, doesn't even want to engage with them. That's been the story here.
Right. Well, because I think Trian has a history with the company.
Yeah.
So.
They do, and for whatever reason, Victory.
It's not all about the money, Danny.
It's a big part of it, though. It's a big part.
Coming up, more pain ahead for private credit. Morgan Stanley says defaults could reach 8%, which seems like a relatively low number, considering.
Higher than what it's been.
Yeah, but aren't
it's been
we?
Like 1 to 2.
UBS said 15.
Yeah, true. They did say 15.
We'll talk about this when we come back. This is Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Let's get now to high interest. Look what's making headlines around the world. President Trump says he asked China to delay his summit with Xi Jinping for about 1 month, citing the need to oversee the war in Iran. In the Oval Office yesterday, he also spoke about Cuba.
I'll be having the honor of taking Cuba That'd be good. That's a big honor.
Taking Cuba.
Taking Cuba in some form, yeah. Taking Cuba. I mean, whether I free it, take it, I think I could do anything I want with it.
Meanwhile, car maker Audi expects new SUV models and cost-saving measures to boost the brand's profitability this year. I spoke with the CEO, Gernot Dillner, about the turnaround plans.
I have a very broad strategy covering all you just mentioned. On the one side, we have a cost reduction plan to reduce our fixed costs. We had in 2025 an agreement with the Works Council to reduce indirect personnel till the end of 2027 by 7,500 people. But even more important is that we are working on modern structures.
Morgan Stanley sees private credit default rates climbing to 8% as advances in AI continue to disrupt the software industry. In the note, strategists say elevated leverage and looming maturity walls within the software sector may push default rates near peak levels unseen since the pandemic. Danny?
For more on private credit concerns, Bloomberg credit reporter Emily Grafeo joins us now. Emily, you took a look at this research, and you've been reporting on this sector for some time now. How much of this is just a return to normal, a credit cycle that's been really benign, versus deep issues within software for private credit?
Well, so the strategists at Morgan Stanley do say that they only see most of the defaults in the software sector. But the reason why people are kind of on edge right now is because software makes up so much of the private credit industry. Alternative asset managers were funding this sector for basically the last decade because they thought there were reliable revenue streams. Now, with AI and the disruption that could cause, it's come into question. 8% would be about where we were during the pandemic. Financial crisis, it was about 10%. So 8% is higher than where we are right now.
We survived that after the pandemic.
Yes, we survived it after the pandemic, and they do point out that the credit cycle is in the late stages.
You know, first of all, yesterday there was a Wall Street Journal story about John Zito from Apollo who said, like, he would be cutting all marks right now. It was clarified that he meant in software. He says there will be an issue with respect to credit, which I think will be worse than people expect. And secondly, UBS has said default rates could be 15%. And Bruce Richards from Marathon said not only does he expect 15% default rates, but that could happen in multiple years, in 27 and 28. So this doesn't seem that bad.
Yeah, so 15% though for UBS, that was their worst case scenario. The reason why this Morgan Stanley note stood out to my colleague Renee Ismail and I is because this was Morgan Stanley's base case. If you look at it though, again, they do say risks in the private credit market, significant but not systemic. They pointed to the fact that outside of the software sector, corporate balance sheets still remain healthy, like you were pointing out, Danny. And so they don't see risks spreading beyond just software. So I guess survivable?
That's all well and good, but the thing that I keep coming back to is now that this is a product not just for institutions, but retail too, and it was sold to a lot of retail clients, is this thing is uncorrelated with the rest of this market. It's a safer asset. It's semi-liquid, so you can get your money out, but it just factors in the rest. I mean, you're talking about this. This is the rest of the credit cycle. They are exposed to it, whether it's public or private credit. I mean, it feels like the worst time to be pushing these products onto retail right now.
Right. There's a bit of a self-reinforcing cycle. Once there's fears around credit, then people start to want to get their money out, and that's exactly what we're seeing right now in the retail funds, the business development companies, investors trying to redeem their shares, and some of these funds saying, we can't give you all of your money back all at the same time.
That is the gates are a feature, not a bug, Matt.
Yeah, that's what I thought. But apparently no one told these retail investors that.
Apparently not. Hey, Emily, thank you so much for joining us this morning. That is our Bloomberg credit reporter, Emily Grafeo. Coming up, Jack Janasiewicz says that there are limited catalysts to support U.S. economic growth. He joins to discuss oil, earnings, and much more. Stay with us for that conversation right here on Bloomberg Open Interest.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
If we had known that you were going to more than double from the December low in oil to where we got to a week and change ago, and we saw the string of payroll reports that we've seen over the last 6 months, would you have really thought that stocks would only have been down 5%, essentially in a 6-month range? We would have thought the number would be down 15, 20, or 25%. It speaks to the resilience of the market.
Julian Emanuel of Evercore this morning. Let's add another excellent voice to the conversation. Natixis lead portfolio strategist Jack Janasiewicz joins us now. Jack, thanks for coming in this morning. Do you share Julian's amusement, surprise, call it what you will, that stocks are only down about 5%, despite the fact we're grappling with $100 plus oil and war and supply chain disruption in the Middle East?
Yeah, it is a little bit surprising that the market has held up as well as it has, especially when you look at the forward curves, and that's something that's a little bit concerning for us. When you look at that oil price going out, 12 months from now, it continues to creep higher. Volatility sort of doing the same thing. To me, that's just the market repricing in the higher for longer scenario, and that's probably not a good thing, especially for the consumer, as it acts as a consumption tax going forward here in the United States.
So why is the market so sanguine? It doesn't seem like it's really moving the needle too much. I know we've been down a bit. Right. Well, flat to down is really what it feels like.
My guess would be either one, we still believe in sort of the taco trade. That sort of seems like it might be running out of fumes here, and at some point we might have to rethink that idea. The other one could simply be that from a relative value perspective, U.S. is a little bit more insulated, so to speak, and we've already had a pretty significant derating in there, so the cushion is actually built in that's a little bit more pro-U.S. So maybe from a relative value perspective, the defensive areas of the market, so to speak, tech in this case, lends it a little bit more favorable to the U.S., and it's maybe from a relative perspective why it's hanging in better than everybody else around the world, so to speak.
All right, well, we do see futures higher, Jack. We're going to keep you with us through the opening bell. We will bring you the New York Stock Exchange and NASDAQ market site opening bells in just a couple of minutes. We'll show you what happens when we go from futures to the cash trade, but the market looks pretty strong right now, up 0.5% on S&P futures, even with Brent crude up 2% to $102 a barrel. This is Bloomberg.
tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Moments away from the start of trading, and futures are higher. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at 0.5% gain on S&P futures. The same is true for the NASDAQ and the Russell 2000. This even as we see oil rising again today. I guess it's only $102 a barrel for Brent, and not even $100 a barrel for WTI. So maybe that's some cold comfort. This is really cool. TC Energy, TRC is it TRP? TRP, ringing the bell at the New York Stock Exchange. I was just looking at their stock, and it's doubled over the last 5 years, but it's absolutely soaring this year. It's up another 17%. They do energy infrastructure, moving around sort of things like liquefied natural gas, and people want that, obviously, right now. Also very cool is that Merlin Labs is ringing the bell at the New York Stock Exchange, and Matt George, who you see, at the NASDAQ market side, Matt George, who you see here, will be on our program in just about 1 hour's time. They develop autonomous technology for planes, and that's not just like autopilot, like, you know, the blow-up doll in an airplane, but actually for like fighter jet kind of planes. So very advanced.
And just wanted to make clear, it was the adult at the center. The CEO isn't a small toddler.
Yes, not the kid. Not the kid.
That'd be very surprising. Some of the stocks I'm watching this morning, NVIDIA, only moving up 0.25%. They unveiled a suite of partnerships. They plan to build chips for everything from robots to data centers and space. The company targeting $1 trillion in sales through 2027. They saw an initial move higher after that, but Matt, how much of it is already priced in? So not a whole lot of action this morning.
Yeah, $1 trillion is a great number to throw around, but if you do the math and figure out that that was already in the plans, it's not as exciting. IBM, speaking of, it was among the firms that partnered with NVIDIA to improve AI data sets. It also just closed an $11 billion deal to acquire data streaming platform Confluent. This is another thing that we already knew about, but all the admin has been done. We're going to sit down with the CEO, though, of IBM in just a few minutes' time. Arvind Krishna will join the program. Right now, let's get back to Natixis lead portfolio strategist, Jack Janasiewicz. And Jack, I wonder where you see mispricing here, where you see values that maybe the rest of the market has overlooked. Have we thrown anything out, any babies out with the bathwater, so to speak?
Yeah, and I think a lot of that comes back to really the tech space, because right now, to us, it's really acting more of the defensive sector, right? You've had a pretty substantial derating, so the valuations have come down. I still look at the things that I think after COVID, investors were looking for in those defensive names, you know, big margins, still healthy cash flow, no debt on the balance sheet, buying back stock, going through that whole list. You know, those things are still, I think, superior relative to the rest of the market. So maybe we've discounted tech to a point where maybe that's something to rotate back into from a defensive perspective. That way you're still at least invested in the market, so if we do get the taco trade in effect, the market pops, you still have upside, but at the same time, you get a little bit of a cushion if this longer, higher for longer for oil continues to play itself out and pulls the, economy slower.
Even though tech's doing better, there still is this feeling of the market of there's nowhere to hide because maybe the AI concerns are still very real for them. And with Bank of America, their latest fund manager survey showed cash levels jumping from 3.4% to 4.3% in March. That's the biggest increase since the pandemic. Is cash a better place to be hiding out right now? Do you want to be hiding out on the sidelines?
Yeah, it's tough right now from a portfolio perspective because the concern obviously with the bond market could be that if it starts to price in the inflationary impulse, you'll start to see bond yields rise. So you're not going to be able to hide out there. Gold really hasn't been doing much in this recent sell-off. Maybe you get a little bit of the Bitcoin diversification here, but I think in general, some of the things that we would tend to look for from a diversification perspective for a defensive positioning in the portfolio isn't really helping. And so I think cash is one way to think about it, but I think maybe it's just a general rotation within the portfolio to maybe take a little bit out of the cyclical sector, move more back to the growth side of the equation, and that includes maybe moving from small caps to large caps, moving away from international back to U.S., maybe tilting a little bit in emerging markets to China and to Latin America, those sort of things. I think that's maybe the better way to play it right now.
When we talk about the potential for President Trump, for the U.S. to find an off-ramp and take it quickly, how do you feel like markets would react? If you heard President Trump say, you know what, we've won, I mean, he said that many times, and we're out.
Right. I think you get a relief rally. But the bigger issue is, where do oil prices, where do energy prices go from there? Because at the end of the day, I think what this shows is that Iran still has full control over the Straits of Hormuz. That's never going to change. Does the political calculus now suddenly shift? Because Iran has basically shown that they can take the global economy hostage, and they're doing it through the use of oil in this case. So that perspective really doesn't change. So does that put a little bit of a premium back into the energy space? And as a result, maybe prices don't necessarily return to $60 where we were prior to this, and we have a little bit of a step function higher in the energy backdrop, and I think the market still needs to come to terms with that portion of it.
What difference does that make for risk assets? If we're not at $100 a barrel, but maybe it settles at 70 or somewhere around there, that's higher, but not as high as it's been during this conflict.
It'll probably be a little bit of a chop. We need to digest things, rethink things, but then once we sort of get our feet underneath us, we'll get back to what really matters here in earnings, and then we'll see what the flow through is to earnings as a result of these higher prices going forward.
Jack, are you worried at all about private credit? Because there's been a lot of talk of the distraction this war has caused, and yet every day we have some kind of private credit headlines.
Yeah, based on what we've been seeing, and a lot of this still sort of resides in the BDC space, which is largely a retail product at this point. We still think it's somewhat idiosyncratic. When we start to look at the banks that are lending to the BDCs who are then making the loans, you're basically looking at the idiosyncratic risk. How does that move to a systemic risk? You're probably not seeing that transmission mechanism move right to the banks. And when you start to look at the loans that banks are making, I think it's something close to $300 billion in total. If you look at some of these, it's 1 to 10% of that total loan portfolio that's being dealt out to the BDCs. If you assume a 10% default rate, you're looking at 1% of the total loan book potentially going bust. So from an idiosyncratic risk, I think that's where it stays. Is it a systemic risk? Just to see it translate into the banking system, I have a hard time seeing that. And the last thing I would say there is, I think everybody has this 2008 itis, right? That's going to, I think, help to sort of mitigate things, but it's also, I think, a concern that might be a little bit overblown. The stuff that happened in the global financial crisis, we've taken a lot of steps to prevent that from happening again, and that's also, I think, going to short-circuit this sort of potential nasty cycle working its way from an idiosyncratic risk to a systemic risk.
But if there is an issue in private credit and defaults pick up, should we have the expectation for wider credit markets then? We have seen spreads start to widen after being at historically tights. Are we headed for an actual credit cycle?
Yeah, and this will be, I think, interesting because you're conflating, I think, the potential for a slowing growth backdrop with some of these idiosyncratic risks. So I think when you get the recovery here in asset prices, what I'll be watching for is what are spreads doing? Do we see spreads actually then start to rally as a result of that? If we don't, that tells me there's something more at stake here with regard to this potential pass-through, if you will.
Before these two issues, right, war and private credit, we were so focused on AI. Is it a bubble? They can't spend enough. Now they're spending too much. Where's the money? Like ROI. How does it look right now?
You know, listen, you got to look at these CapEx spends from the hyperscalers. They're coming out and saying, you know, second place is for losers, basically, right? We still need to be the winner.
They're still saying that. They're still spending as much as they possibly can.
So the bottom line here is they're still going to spend. And someone's going to be a beneficiary of the spend. So you may not like the specific spend from that, you know, from that specific stock name, but someone's going to benefit from that. So
by the way, we're funding it no problem, Jack. Every time they come to market with a bond issue, even if it's $50 billion, it sails through.
I mean, these guys look like, you know, AA single or AAA credits from a perspective of balance sheet. So, you know, again, you may not like the CapEx spend for that specific name, but the broader impact to the market is still someone's earnings, and I think that's the bigger takeaway from our perspective here.
Jack, this has been so fantastic to have you on. Thank you so much for joining. That's Natixis lead portfolio strategist Jack Janasiewicz. Let's get your check on equity markets right now, just about 10 minutes into your trading day. And as I told Matt before, I didn't wear green today because the market's doing it for me, so happy St. Patrick's Day to you. The market's up 0.6% this morning, being led by the big cap tech, Amazon, Nvidia, Meta, faring the best in terms of points added to the S&P 500. Uber's pretty high up here too. They announced a new partnership with Nvidia for autonomous vehicle technology. The bank's having a really good day too. They've been somewhat beat up over the past 2 weeks. Looking to the downside, some of the healthcare companies are down. Eli Lilly down 2%. I do want to point out Corning. Okay, so this is a company that makes fiber optic cables. And Jensen Huang in the, whatever you call it, the Nvidia conference that they had, the GPU GTC, of course, rolls right off the tongue. He said that they're still using copper cables. And this is a company that makes fiber optic cables, and one of the big bets is that NVIDIA's and the other data centers of the world would start using their products, but maybe that's not the case, and they're going to just be using copper. So that's the story with that. All sectors, though, are higher this morning, unless things have changed in the past minute. No, they have not. All sectors are higher, as I point out. Healthcare, one of the laggards. That's followed by energy, with oil prices still above $100 a barrel. But it is that rebound in financials that leads the overall market higher, up 1.5%, with the S&P up just under 0.7%, Matt.
All right, so fascinating. I mean, the fact that everything is up, even as oil rises, is interesting. I guess it just isn't rising as high as we had feared. Coming up, IBM's CEO joins the show to discuss their new partnership with NVIDIA, as well as the $11 billion takeover of Confluent. This is Bloomberg Open Interest.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. This is putting the between the rice air. Then make the 4 fingers curl, make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens.
I'm Michael McKee at Mount Everest, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
I checked on equity markets this morning. We are moving higher, if I have them. I promise you we are moving higher. There you go, 0.7%. The NASDAQ also just about at that level. Russell 2000 index also up 1% as bond yields come in, even though the price of oil is higher. Still getting a relief rally. Let's look at some of the top calls this morning, the analyst action that we are following. First up, HSBC downgrades Eli Lilly to reduce, saying that expectations for the total addressable obesity market are due for a correction. That's an interesting one because it is a really big total addressable market. Shares are down 1.6%. Next up, Mizuho raises its price target on Exxon to $162, expecting the sector to benefit from higher oil prices as the war in Iran continues. Shares only up 1/3%. Finally, Argus downgrading DraftKings to hold. They cite aggressive competition from prediction markets. Matt, those shares up just over 1.5%.
All right, so IBM has closed its acquisition of data streaming platform Confluent. That was an $11 billion purchase. Bloomberg Tech's Carolyn Hyde joins us now to discuss that, as well as NVIDIA's announced partnership with the CEO of IBM.
Arvind Krishna joins us. It is a joy to have you on our network, Arvind. And look, speed is the name of the game. This deal has completed swiftly, and indeed Confluent is all about speed and data analysis. How is that important in this age of AI?
Yeah, so Caroline, it's great to be here with you and on Bloomberg. So just look at what Confluent does. Moving data in real time so that it gets available both for the enterprise, for analytics, but more importantly for AI agents, and doing that in a way that is the most capable product in the world is why it is so exciting to get it done. And your point on speed, I think the regulatory environment is definitely friendlier, where we got this done in just under 4 months, whereas it used to take a lot longer a few years back.
If regulatory environment is friendlier, should you be doing more of it? Should there be more M&A, particularly with some beaten up overall valuations of software companies at the moment?
I'll just say watch the space.
Oh, watch the space. Okay, but where would you want to add on in this moment? I mean, what would make sense to be adding to your portfolio?
So we're very focused. Hybrid cloud and AI and the intersection. So if you look at Confluent, some of the data is in cloud, some of the data is in SaaS properties, some of the data is on premise. An AI agent needs to get hold of it wherever. So that's the hybrid piece combined with the AI piece. Our sweet spot is going to be hybrid cloud, AI, automation, are the areas where we are very, very focused on M&A activities, as well as organic development. If you look at what we have done around our What's the Next products, what we have done around mainframe modernization, these are all things that we have built organically, but then we supplement it with targeted acquisitions where the multiple makes sense, where it fits our strategy, and where we can normally increase the growth rate of the target property, which we certainly hope to do in the Confluent case.
Let's talk about What's Next a little bit. Let's look more at partnerships, because of course that's what was announced, a little bit more of a deeper partnership with NVIDIA yesterday, helped your stock. We're seeing expanded collaboration. Again, this is about faster data analysis, but cheaper, more effective. How does that help you seal more deals?
Yeah. So in that one, actually, the work we're doing together with NVIDIA was a 5 times speed up. So 5 times, not 5%, not a little amount, but 5 times. So there we began to leverage the NVIDIA GPUs together with some of their CUDF software, combining it with our What's the Next data. And the example we used was our client Nestle, where together we managed to get that speed up across their massive amounts of data, and that really is important. In that case, combining some of the technologies we work on also in open source with the Presto data engine, NVIDIA, and the example at Nestle, but then we're very excited. We're going to do more work on that and then take it into the market and take it out to hundreds of clients from there.
You're offering these tools, but you're also helping companies like Nestle just embed AI, make sure they're using it in the most effective manner possible. When your consultants go in, how much does a Nestle want to use your offerings, but those of Anthropic, of OpenAI, of others? How much do you see that as a competitive force or a competitive threat?
Look, our goal has always been that we want to help our clients integrate the best capabilities from where they come. And the word integration comes in here because to some extent, we are model agnostic. We believe that our clients are going to use the frontier models from all 3 or 4 of the main providers. They're going to use open source models, and they're also going to use models from us, though we tend to make much smaller models. But helping them really get value, and I really believe 2026 is the year when enterprises are going to be focused and obsessive on ROI or what they're doing on AI. And so if you take Nestle, how do you take cost out of procurement? How do you take cost out of HR, the finance function, procurement, all of these things? And that's where our consultants and our technologies come together to help them do that, using both technologies from IBM, but also in the case of Nestle, from many other of the partners and the software vendors that they use.
So do you think the investor base and just more broadly your customers as well see that AI isn't a double-edged sword for you, but actually that competitive threat that sunk the shares so much on February the 23rd was a misunderstanding of what Anthropic could do with COBOL?
I'm going to be much more straightforward. I believe that the investors and parts of the media misunderstood what that blog said and did. I actually am convinced AI is a tailwind for us. It's not a mixed half headwind, half tailwind. AI is a tailwind for us in terms of how our technology will get adopted, in terms of what we do with our clients. And by the way, we had put out tools to convert and modernize COBOL 2.5 years ago. So there was no new news in that blog, but they certainly can get a lot of attention.
You talk, though, what also gets attention is being able to become more productive, take costs out of the business using AI. A lot of people see that as the costs of people. We're seeing Block remove 40% of their employee base. You hear about headline after headline. Is that what's going to happen to the labor force, Arvind?
So I'll take ourselves. We've been very public that we have taken $4.5 billion out of the enterprise with a mixture of AI and automation. That's a hard number. Now, over $3 billion of that got reinvested into the business in more R&D, in more sales, in more marketing, in more delivery, in more what we would call client engineering, where clients love the fact that our engineers can work with them to help them solve problems. So there is a reshaping of the workforce, but there isn't a net decrease. And to put our money where our mouth is, we will do 2 to 3 times as much entry level, meaning college hires this year, as we did last year.
Wow, so you're still seeing that demand for that level of technical prowess coming straight out of university, Arvind. But I'm interested, you have said in the past, look, you see job displacement, your term and phrase, of 5 to 10%. Is that done now at IBM, do you think?
I think that we're probably halfway down that total journey, and I still stick to my total numbers in that range. And I think we're halfway through that journey, but our total employment has remained roughly stable. So to the point that I make about there will be more opportunities, but you've got to be willing to upskill yourself and retrain yourself.
What's not stable is the geopolitical environment, Arvind. How is that affecting you? How is that affecting the consulting part of the business in particular?
Look, let's acknowledge there's a lot of pain and disruption that's going on in the Middle East right now. I think we should feel a lot of sympathy for our people. We have thousands of employees in that region. The vast majority, I think, are reasonably stable and are getting their work done. There are about 20% of the people in the Middle East who are disrupted, who are not able to get to their clients, who are not able to get the work done. I think within a quarter is going to be very, very minor because most of this work is much more long cycle than short cycle, as in days or weeks. If this goes on for many more months, then I do think that we will take a slight headwind. But in the end of the day, our consulting business in the Middle East is only a few single-digit percentages of our total business. So it won't impact IBM's top line and bottom line, but it is going to be impactful to some of our people and some of our clients who are in the region.
Thanks for that nuance, Arvind. And I'm interested just on the nuance of total sales growth in consulting. Will that come back to growth, do you think, in the near term?
I think when I was talking in January and also in October, I felt that the second half of this year will be a lot better on consulting growth than right now. We kind of said that we could see an inflection coming where the first half of last year was negative. The second half of the year turned kind of flattish. I think that we'll see continued improvement in that inflection to maybe slight growth in the first part of the year. But true growth, I think, is still out in the second half of the year.
True growth, true excitement about quantum always seems to be in the second half of the decade or the millennium. But you really are putting your money where your mouth is when it comes to quantum computing becoming, really tangibly useful by the end of the decade. You want to have a fault-tolerant quantum supercomputer by 2029. How on track are we there? How on track are we to integrating quantum within the data center?
So on all three of your questions, Caroline, I think we are completely on track with what we had said. We said that we're going to have better qubits, better quantum processors, and our processor at the end of last year is now being used, whether it's for medical work at Cleveland Clinic, whether it's for bond pricing at HSBC. Those are real use cases that are coming out. We expect to see error correction between this year and next year demonstrated and out there. So that'll be another big plus. We're investing very heavily in how all tells us how tangible it is, and you can feel it. People are now realizing this is not science fiction. This is not engineering to get through the next 2 to 3 years.
I think I can feel your energy today. Congratulations on the completion of the Confluent deal. And we are staying tuned for any more M&A. Come back on when it happens. IBM CEO Arvind Krishna, great speaking with you. Danny.
Caroline, thank you so much for bringing us that conversation. Bloomberg's Caroline Hyde, and thank you again to IBM CEO Arvind Krishna. Now, breaking moments ago, we want to bring you this X post from the head of U.S. counterterrorism, Joe Kent. According to his social media account, he has decided to step down. It's worth reading some of this, Matt, because it's quite striking, saying, quote, "I've decided to resign from my position as director of the National Counterterrorism Center effective today. I cannot in good conscience support the ongoing war in Iran. Iran posed no immediate threat to our nation, and it is clear that we started this war due to pressure from Israel and its powerful American lobby." He goes on to say that it was an echo chamber that deceived the president into believing that Iran posed an immediate threat to the United States. Should just point out that Joe Kent had himself been appointed to this position by the president.
Yeah, he was, I can see by his CV, a Green Beret. He'd been deployed 11 times, and his wife, Shannon, was killed in a bombing in Syria in 2019. And that is, according to the Washington Post, what pushed him into politics. He ran for Congress twice and lost, but was strongly aligned with President Trump, and so he was appointed to this position.
It will be, this is, I believe, the first case of someone in the administration resigning over the war in Iran, again saying that the president has been deceived. What difference does this make in the president's push to try to find an off-ramp in this conflict?
All right, we're going to continue to follow this breaking news for you. Coming up in the next hour, Marta Norton on the U.S. market looking suddenly resilient compared to the rest of the world. This is Bloomberg.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion, and now we're seeing, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
Investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's Deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Encyclopedia Britannica is suing OpenAI for copyright infringement.
The publisher accuses OpenAI of stealing its work to train its AI models. The lawsuit says ChatGPT generates summaries of the content on its own without sending users to Encyclopedia Britannica's own website, and that drop in web traffic is hurting the company financially. It's asking for financial damages and an order preventing OpenAI from using its content in future training. Last year, the New York Times also sued OpenAI, claiming its articles were used without permission to train AI models. Michael Wallace, CBS News.
A Harlem legend has died.
It's showtime at the Apollo.
Kiki Shepard co-hosted with Steve Harvey from 1987 to 2002, introducing aspiring performers at the iconic theater.
During the 60s, when Bobby Bland would take his brassy blues band to the Apollo, he'd lead the women screaming.
Her publicist says Shepard suffered a heart attack. She was 74. Deborah Rodriguez, CBS News.
There's a difference between liking a house and actually getting it.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming. We're streaming on YouTube and streaming on Bloomberg.com. It's Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence Program. Coming up, we're going to check in with Will Kennedy, Bloomberg News Director for Europe, Middle East, and Africa. Get the latest news reporting coming out of the Middle East. Margie Patel, Senior Portfolio Manager at Allspring Global Advisors, is going to check in with us and get her thoughts about how to invest in uncertain times with all the geopolitical issues going along. Sid Phillips is going to join us, Bloomberg Chief Correspondent for Global Aviation. Airline executives, they are upbeat as travelers book summer flights. So how about that? We heard from Delta today with some good top-line forecasts. They did acknowledge a higher fuel cost for the month of March, so we'll break all that down. Let's talk about global oil markets here. We can do that with Vince Piazza, Bloomberg Intelligence Senior Equity Research Analyst. He's going to join us later to get the latest on where we are with global oil and gas. So a lot coming up in the next 2 hours. Right now, let's kick everything off with John Tucker and a Bloomberg Business Flash. John.
All right, guys. Happy St. Patrick's Day. This Bloomberg Business Flash brought to you by IBKR. Will the U.S. Consumer Confidence Index be above 101 in March 2026? Turn your view into a trade at ibkr.com/forecast. Last trading day is March 22nd. The S&P 500 right now extending its gains into a second day. You have all 11 major industry groups in the index. They are higher. Financials leading the way right now, and it's consumer staples at the bottom of the heap. Oil is still higher. It did pair some of the earlier gains. Let me start with Brent, the international benchmark, 102.01, so that's up 1.8%. And West Texas up 1.6%, so it's above 95.07 a barrel right now. Bob McNally at Rapidian Energy Advisors says investors may actually be underestimating the impact of the war with Iran.
And so I think there's still this reservoir of kind of disbelief and hope that this is going to be over soon, that this math, these disruptions, not only for oil, other things, it's got to stop. And so we took a breather yesterday, but it's not stopping, and crude is going to march higher, I'm afraid.
S&P 500 up 43 points, 67.42. The Dow Jones Industrial Average up 336 points, and the Nasdaq 100 178 points higher. That is up 0.7%. A rare sell rating. Eli Lilly shares, they are down right now about 2.5%. After HSBC has turned bearish on the stock for the second time in a year. They say investor expectations for the weight loss drugs are overinflated. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
Hey, JT, thank you so much. We appreciate that. Scarlett, Phil, and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and Bloomberg.com. As John was just reporting, we got green again on the screen here today. Maybe it's just for St. Patrick's Day. I don't know, but we will take it. Let's see where some movers and shakers are out there in this marketplace. We can do that with Bloomberg's Carmen Reinke. Carmen, what are you looking at?
Yeah, so the first thing I'm looking at this morning is Qualcomm. So this is ticker
QCOM. So shares they're off their highs, but they're up about 2.1% right now. This is the best. Well, at highs, it was the best in about 3 weeks. So this is a smartphone processor maker, and it said it plans to buy back an additional 20 billion of shares, and it's raising its quarterly cash dividend to 92 cents a share from 89 cents. So this is interesting because last month the company issued a pretty lukewarm forecast. So it said that there's a global shortage of memory chip names, and that would mean that some of its customers wouldn't make as many handsets, especially in China. So definitely good to see a little bit more green on the screen here. The stock is down more than 20% year to date.
Ouch. All right, let's stay in the chip space and talk about NVIDIA because it's holding its annual conference, and this is now day 2.
Yeah, so this is day 2. Yesterday, everyone was watching Jensen Huang's keynote. So the stock is at its lows right now. It's down about more than 0.5%. So this is ticker NVDA. So, I mean, I think the thing that was interesting yesterday about the keynote is Jensen sort of mentioned this this new sales outlook. So 1 trillion in sales through 2027, and the stock really spiked on that. And then sort of as the market digested that figure and realized it doesn't really represent sort of a major acceleration in sales growth, it's maybe about the same as sort of what they were seeing this year, which was 500 billion through 2026. The stock came down from that. So as this conference goes on, obviously we'll be watching NVIDIA very closely.
But I was reading some notes off Wall Street that said that $1 trillion number is like double where the consensus was before. So to me, that's like an OMG kind of thing.
Yeah, but I think the thing is, it's the growth. Is the growth accelerating, right? So we see NVIDIA put up these amazing numbers over and over again. And I think investors are just kind of in this space where, it's expected. It's expected.
See, I got fooled by the round numbers. I'm very simple.
I mean, the big round numbers are certainly impressive. And, with NVIDIA, that's what you're looking for because they're kind of leading the vanguard on all this.
Yep. All right, one more. What else?
So yeah, actually kind of also coming out of GTC, we're looking at shares of Uber, ticker UBER, and Lyft, LYFT. So these are both up about 4.5% today. So both rideshare firms and NVIDIA announced separate autonomous vehicle partnerships. So Uber is launching a fleet of NVIDIA software-driven autonomous vehicles. This is by 2028. And then on Lyft's side, they are using NVIDIA's AI to sort of enhance its own machine learning systems across global operations. So both of them getting a little bit of a shine there from NVIDIA partnerships.
All right, very good. We appreciate that. Carmen Reinecke giving us some of the movers and shakers. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, anywhere you listen. Let's get the latest reporting out of a very, very fluid situation in the Middle East. We're joined by Will Kennedy, Bloomberg News Director for Europe, Middle East, and Africa. Will, what's the latest here? It's all about, it seems like the focus is now really focusing on the Gulf of Hormuz. What's the latest?
Yes, that is the biggest issue in energy markets, as it has been for several weeks, that most oil and oil products that are made inside the Persian Gulf cannot transit those narrow Strait of Hormuz waterway that separates the Persian Gulf from the Indian Ocean. And that's depriving oil markets of perhaps 10% of global production. And the strains are increasingly showing, not only in oil markets where we see benchmark Brent trade above $100 a barrel still, but also, I think, importantly, in the markets for refined fuel, that's jet fuel, diesel, gasoline, etc. This morning, the gasoline price in the United States crossed $5 a gallon for the first time since 2022. That's going to add to costs for the trucking industry, for America's farmers. We're seeing gasoline prices about to hit $4 a gallon nationally, perhaps $6 in California. Again, that will hurt ordinary Americans in their pockets, and that's being repeated around the world where people are flying, driving, and using fuel to cook and heat their homes.
As much as we say that the Strait of Hormuz is basically at a standstill, there are some tankers that are allowed to go through. What do we know about what's allowed to go through, what Iran is allowing to go through?
Well, I don't think we should overstate it, Scarlett. There are a few. It is very much a trickle. We're counting them in ones, and typically many tens of ships would transit every day. But what is interesting is that those ships that are going through are cleaving very close to the Iranian coastline. And they are also coming from countries, India and Pakistan, for example, which claim to have negotiated safe passage with the Iranian government. And I think what we take from that is the possibility that Iran is asserting a measure of control about exactly who goes through and who doesn't. And that's incredibly important for thinking about how this crisis resolves itself. As long as Iran is making those decisions, it has a stranglehold on exactly what energy sources makes it into the international market and where it goes. And that's a situation that's going to be intolerable to the U.S.
So with a little bit of hindsight here, Will, was it a mistake by the U.S. and Israel not to secure the Strait of Hormuz as a primary objective here?
Well, securing the Strait of Hormuz is no easy military task. I'm not a military expert, but this is a narrow waterway, just 20 miles or so wide at its most narrow point. One side of it is Iranian coastline. The only way to truly secure it would be to control that coastline. Right. As long as you don't have that coastline, Iran is able to interfere with shipping using pretty low-tech means like speedboats, small craft, to attack and harass shipping. And it is a very difficult thing to control. So there are no easy military options here. And I think most analysts who understand the situation in the Middle East would have been able to say beforehand that this was a risk of large-scale military action against Iran.
I also want to ask about this headline that Israel has said it's killed Iran's security chief in an overnight attack. It raises the question of whether Israel and the U.S. have different goals in the ongoing conflict.
Well, I don't know if this does show any space between Washington and Israel, but it does demonstrate that the aggressive targeting of the Iranian leadership continues, especially on the Israeli side. Larijani was a very prominent member in the regime, especially after the killing of many of Iran's leaders at the very start of this war. He had emerged as the key power broker, perhaps inside Tehran. We don't exactly know the status of the new supreme leader, Mojtaba Khamenei, and how healthy he is. So Larijani had been visible, had clearly been a leading figure, and now he's gone. And that raises questions about the political process if and when this war ends, both whether there are people inside the regime for the US and Israel or intermediaries to negotiate with, and second, who will be in charge of Iran and set its direction once this conflict is over, and indeed during the remainder of this conflict.
Will, thanks so much for joining us. Appreciate your reporting as always. Will Kennedy, he's the news director for Europe, Middle East, and Africa for Bloomberg News. He is based in London. Red headline crossing the Bloomberg terminal here. EU to restart process to ratify U.S. trade deal after block. So we'll have more reporting on that, but that is potentially a good economic sign.
Potentially, the EU Parliament Trade Committee will be holding a vote on Thursday on the U.S. deal. So they're still a few days away, and things take a long time in Brussels. So they're getting the process restarted at this point.
Right, and that's good news here. I think what we haven't seen is really any reporting of any meaningful peace talks or truce talks here as it relates to Iran. There have been reports of one side reaching, Iran maybe reaching out at one point, but no, nothing seeming substantive.
Well, there are claims on the U.S.'s side and then denials on the Iranian side. So we'll see how it all shapes up today on, I believe it's day 18 of the conflict in Iran.
Absolutely. And we've got some green on the screen here for St. Patrick's Day. S&P up 28 points, 0.4%. The Dow and the NASDAQ also up about 0.4%. WTI crude oil up about 2%, $95 per barrel. We'll have more coming up. This
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Yeah, we're higher right now. The major averages, S&P 500 up 36 points, up 0.6%, 6736. The Dow Jones Industrial up 210 points. The NASDAQ 100 right now up 173 points. That's a rise of 0.7%. Brent crude, the international benchmark, 1.8% higher, right at 102 a barrel. WTI West Texas up 1.7%. That's at 95.08. So for the second day in a row, the S&P 500 is higher. In the background, the policy meetings. 18 central banks are meeting this week, including the Fed. That's underway today in Washington, and the European Central Bank with the biggest shock to the oil supply in history. Investors also be looking for any financial policy responses. Delta Airlines shares, they're rising. The airline now says it expects high single-digit revenue growth for the first quarter, up from its previous forecast. And it's also interesting, the CEO in an interview said it was a $400 million fuel spike for the month of March. Delta shares right now up 3.5%. And the airline's also holding on hope for some sort of agreement here. There was news earlier that the White House received a counteroffer from Democrats late last night on funding the Department of Homeland Security. That's a report from NBC. You went through the airport, but you didn't experience any big delays.
Either way.
Do you have TSA pre-check?
Yes, and I have clear and all that kind of stuff.
So you have everything that you could to get past that. But what did the regular line look like?
I don't look at the regular line. That's what I pay the money for. And I had a global entry, which is absolutely
I don't
the best.
bother with those people.
The global entry coming in from overseas is worth $1 million to me.
Okay, well, I'll get that next time I fly.
Be like Paul.
Be more like Paul. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right, thank you so much, John Tucker, with that Bloomberg Business Flash. Looks like when Paul came back, he brought the good times with him because stocks are now higher for a second day, and this is after a, I believe, 4-day decline. So it feels like the momentum may have shifted. I don't know. We'll see. Margie Patel is with us. She is Senior Portfolio Manager at Allspring Global Investments. And Margie, as the Fed begins its 2-day policy meeting, the big question, of course, which the Fed probably won't answer, but everyone's wondering, is if oil prices stay elevated, what is the spillover effect? What's the knock-on effect for the economy, for how monetary policy is conducted? How are you thinking through the impact of higher oil prices?
Well, I think on the economy, it'll actually have a very, very modest effect because energy is such a small percent of consumer spending now compared to the big energy crisis back in the 70s. I think it's about 1/2 the amount of consumer spending that it was then. So it's around 3% now. So I think it'll be relatively mild. And also back then, the U.S. was a net importer of energy products. Now we're a net exporter of energy products. So in a sense, at least that sector will benefit. I think the Fed's really caught in the bind they've been in, which is economic growth is low. You have the effects of potential this oil shock. But on the other hand, inflation is above their target, close to 3%, far away from their 2% target. Real growth in the last quarter was only a little over 1%. So they're really caught between. If they cut rates, they may stimulate inflation in their mind. If they raise rates, that's certainly not something that we're looking at that may have a negative effect because of the knock-on effects from energy. So I think the most important thing is that the Fed does nothing. That would be the best thing for the economy, the best thing for consumers and business. And that's what I hope they do rather than be an activist either way.
So Margie, of course, is not the only one who has made the point that the rise in oil prices is something that consumers on the whole feel less than perhaps they did 50 years ago. However, Paul, psychologically, it is critical because people look at oil prices. I mean, John Tucker quotes the gas prices every day, and they think that this is something that they don't want to spend more on.
Exactly. And the diesel story from yesterday going over $5. That hits, everybody uses a diesel truck, think farmers and that kind of thing. Margie, so if we can, to the extent, look past what's happening in Iran here, how should folks be positioned given what we know about earnings, what we know about interest rates? What's your conversation with your clients like?
Well, I think the equity market still is really quite attractive, especially versus the alternative in risk-free rates. You know, with short-term risk-free rates, say closer to 4%. It looks like corporate profits once again in the fourth quarter were up way over 10%, and probably this year they'll be up, say, 10 to maybe even 14%, assuming the GDP growth is maybe 2%, so pretty modest. And it shows that corporations have the ability to squeeze out the profit margins, pass on price increases, maintain their margins. So that's as a backdrop for equities, still looks pretty attractive, especially in those sectors that have growth. Some sectors look pretty stagnant, and I don't think they'll be very productive. But really, when you look at technology, aerospace, defense, industrial companies, companies tied to increasing the electrical grid to support the data centers, I think those areas will all continue. They're on a multi-year upswing, and I don't see there's a sign that that's coming to an end. So I'd say be long, and I think that'll be a good strategy once again this year.
How are you thinking about the credit side of the equation here, especially with the cracks in private credit, a lot of concerns, some justified, some, you know, maybe getting ahead of themselves, that the credit market is, you know, nearing something that could precipice a bigger crunch?
You know, people say that, but I really don't see it again coming back to the Fed. The Fed, whatever the Fed does, they are not going to suddenly tell banks don't make risky loans and try to pull in that way. And really, I think the credit market, there's two parts. The public credit market is actually in great shape. If you look at U.S. high yield bonds publicly issued, their default rate is only around 2%. It's when you look at the private side that you see default rates up around 5%. And I think really the market has felt lately as if we're having a credit squeeze by the Fed. And I think it's really all the tightening and the risk takeoff that we're seeing on that private credit side, pop-up defaults that people weren't expecting, slowdown in sectors like software that credit investors maybe weren't looking for. So it's really, I see it really two worlds: public market in great shape, low defaults, private credit, that's where we're going to see all the pain and all the damage.
Margie, thanks so much for joining us. Really appreciate it. As always, Margie Patel, Senior Portfolio Manager, Allspring Global Investments, are located up there in Boston. Let's switch to the airline industry. We heard from Delta Airlines today. They gave a better than expected forecast, and that's despite saying, hey, they took a $400 million of increased fuel charge in the month of March, reflecting what's going on in the world. So let's check in with somebody who follows this stuff. Sid Phillip, Bloomberg Chief Correspondent for Global Aviation, joins us here. What did we learn from Delta today, Sid?
Morning, Paul. So Delta Airlines is talking about how they've managed to raise their ticket prices, and that sort of helped them offset the increase in jet fuel prices. I mean, we've seen jet fuel prices soar almost more than double since the war in Iran began, and that's really the biggest chunk of costs for airlines. And what airlines are talking about is saying that they've managed to pass on those cost increases to the customers in the form of higher ticket prices, and that's really helped them sort of continue to weather the crisis and be able to sort of manage to ramp up bookings. I mean, Delta talked about how in the last since the war began, they've had 5 of their 10 biggest sale days, and that sort of really shows that consumers are sort of locking in their travel at the moment.
That's great if you have the pricing power like a Delta Airlines, but what if you are a discount carrier that relies on low ticket prices to get your passengers, to get consumers to sign up? I mean, it's a different story, isn't it?
It is, and so Delta Airlines obviously has a predominance of premium-heavy travelers, so they sort of talk about how they're targeting businesses and corporate travel, which is sort of continuing to see growth. They're also talking about how premium leisure travelers are continuing to buy tickets. But at the lower end of the spectrum, I mean, the Spirit Airlines and the others, they might see their consumers sort of balk at higher ticket prices, and they may put off those trips. Although we are sort of seeing JetBlue, we heard from JetBlue earlier today, and they talked about how they are also seeing people continuing to book. So it does look like consumers are trying to sort of get ahead of future price increases by locking in travel for the summer and the rest of the year early.
So how about the visibility? What are the airlines saying about the visibility of their bookings? I mean, that's also a metric that I know kind of gives you a sense of how confident they are in their business.
So at the moment, the airlines say the bookings look visibly healthy. At the other end of the spectrum, I mean, they're still talking about how they're not quite sure where jet fuel prices will settle, and that's sort of really key in terms of bookings as well as their jet fuel prices. So that's sort of, those two things go hand in hand and determine how profitable the airlines will be. Because remember, if they're able to sort of pass on higher ticket prices, but jet fuel prices continue to grow higher than those ticket prices, that's when the airlines start feeling the pain, because they're sort of not being able to keep up with their costs. On the other hand, if they can sort of take the higher prices and see costs come down, that'll sort of help them boost their profitability.
So one thing that you and your colleagues point out in your reporting is that U.S. carriers, unlike those in Europe, don't hedge fuel prices. Once upon a time, some of them did, but most of them don't anymore. Why the change? And do you think that because of what we're seeing in Iran, because of what we're seeing with the volatility, the uncertainty around oil prices, that airlines might start to hedge those fuel prices again?
So the airlines have typically not hedged. I mean, famously during COVID, a lot of airlines got stuck with hedges that were sort of in the wrong way, in the wrong direction when jet fuel prices crashed, when demand plummeted. And so at the moment, we haven't yet heard from airlines talking about returning to the hedging policies, but Delta does point out that they own a refinery, and that gives them somewhat of a natural hedge. And essentially, they expect that to help them weather the increase in jet fuel prices.
Hey, Sid, what are the airlines saying about the state of TSA today? We've seen a lot of stories, a lot of video over the last week or so of really long lines at airports. Do they have an opinion on how this might play out?
I mean, the airlines, including the industry groups, the Airlines for America has been talking about how there needs to be a deal that would basically allow TSA staff to get paid and basically start reducing those lines, because essentially the problem is that while it's not a safety of flight issue like the previous shutdown, when the FAA had to sort of cancel flights into 40 airports because of concerns about safety, this time it is sort of affecting the comfort of passengers and causing those long lines we've seen in various airports across the country. And essentially, the airlines have been saying that this will get worse as we get into the peak summer travel season. And so they're hoping for early resolution and a return to somewhat normal as they go into the busy travel peaks.
Yeah, speaking of the busy travel season of the summer, also at this conference, a lot of industry executives were making the point that if the Strait of Hormuz were not secured by Memorial Day, that would be a key time frame in which consumers might start to see ticket prices really go up even more than perhaps they already have.
Exactly. That would sort of take that would basically mean that higher fuel prices are here to stay for the slightly longer term, or we're not really sure when those fuel prices will start coming down, and that's when consumers will say, hey, do I really need to take 3 trips? Maybe I can just do with 2, or I can sort of not fly at all this summer.
All right. Sid, good stuff as always. Sid Phillip, Deputy Team Leader for Global Aviation, Bloomberg News, down there in D.C. I can't even conceive, well, I guess I can conceive it, but that would be a real bummer if we're still talking about this in Memorial Day.
I know. I mean, especially with most people in the market talking about how the elevated oil prices are temporary. It's not going to stick around beyond the next couple of weeks.
Yeah, I'm just not sure what gets the two sides to the table to have meaningful discussions. I'm not sure if either side is motivated at this point. The market's up again today after last week's weakness. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News, with this Bloomberg Business Flash. Let's start with this. We did get data this morning. Pending sales of U.S. existing used homes, I call them, existing homes, unexpectedly rising in February. For the first time in 3 months, kind of surprised considering the weather. An index of contract signings climbing 1.8%. This is according to the National Association of Realtors. All the major stock indexes, they're up. You have 10 of the 11 major index groups in the S&P 500 are higher. And right now, it's being led by energy and industrials, the worst performing group right now. Crude oil is higher, but it has paired some of the earlier gains. Brent is up 1.5%, 101.68. WTI is 94.69. That's up like $1.19 a barrel. Tracy McMillian at Wells Fargo says market performance will depend on the length of the war with Iran.
They can take a spike in oil prices for a short period of time. What they can't take is a prolonged spike in prices that really does start to flow into other consumer prices and into inflation.
Eli Lilly shares, they are up, down right now, 2.9%. HSBC has turned bearish on the stock for the second time in a year. They say investor expectations for weight loss drugs are overinflated. There was this headline crossing the Bloomberg from Paris, French President Macron speaking there, saying they are ready to work on an escort system for Hormuz when calmer. So, there's that caveat. I don't know, it doesn't look like it's really moving the needle much. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
That sounds highly conditional. When calmer?
Yes. Isn't that the whole point? We need it now because it's not calm?
Yeah.
I don't know.
I don't know how you determine that and by whose standard is it calm enough.
There hasn't been much positive response from allies in terms of the call from the United States to help protect.
Well, you badmouth them, you tariff them, you do all this kind of stuff.
Don't editorialize. I'm just saying.
Okay.
I mean, the thinking from the Trump administration and its friends is that these other countries suffer more, will really feel the pain of higher oil prices. So it's in their interest to then help the U.S. clear the Strait of Hormuz.
Yep, absolutely. We'll see if it plays out that way. Vince Piazza joins us here. Why? Because he is our senior equity research analyst covering all things oil and gas. And boy, that is the front and center story here for Global Wall Street. He does that for Bloomberg Intelligence. Hey, Vince, talk to us about kind of how you think this is playing out here. It seems like obviously there's a constraint in supply. Now there's a tax on various oil facilities in the region here. How do you think this plays out?
So let's use 2022 Russia-Ukraine as the analog. In February 2022, you saw that spike. It peaked at, call it around 120 in March of that year, and we retraced shortly thereafter, right around April. Now, granted, you have a prolonged conflict there, and the market has become more accustomed to those types of flashpoints. Will that be the same here? I'm not sure, only because it is a much more volatile and key maritime logistics region. So if anything, what will end up happening, how this all plays out, is a reordering of future supply chains as shippers, buyers, sellers try and move away from or bypass or divert as much capacity as possible from that part of the world, from that particular choke point. Now, granted, you're not going to get rid of everything from that choke point, but there are avenues that folks will probably take, shippers will probably take, to remove some of that volatility, remove some of that geopolitical linchpin.
Right. I'm glad you made the comparison to 2022. I've read that quite a bit, but as you point out, we have a Strait of Hormuz issue here that we didn't have back then. Let's talk about diesel prices. They're now above $5 a gallon here in the U.S. Yeah. And one of the reasons why we've seen a price increase in diesel faster than other fuel products is because Persian Gulf refineries are the major suppliers of diesel. Walk us through how this all works.
Yeah, so diesel is the workhorse. It's the workhorse fuel. It's in pretty much everything. It is in the industrial sector. It's in the transportation sector. So trucks, locomotives. It's in the agricultural sector. So it's extremely important. Everything across the economic value chain depends on it. So when you think about the volatility, when you think about the delta, for every dollar increase at the benchmark level, so crude, WTI, Brent, during times of volatility, you could consider somewhere between 4 and 5 cents per gallon increase with that $1 increase at the benchmark level. So you are seeing more volatility there because how intertwined that middle distillate is in the broader economy relative to gasoline or on-road transportation for us here in the U.S. as well.
Hey, Vince, I understand there's also, in terms of trying to mitigate the Strait of Hormuz risk, there is a pipeline to the Red Sea, and this, I guess, some can be diverted there. Is there now talk that let's build like 3 or 4 more of those things to really de-risk the strait?
So when we consider longer term alternatives, Paul, we're looking at very far down the road, right? 5, 7 years, 10 years of attempting to reorder these supply chains to move away from those traditional maritime logistics. But what you end up doing is you end up adding time and dollars to that new reordering of supply chains and maritime logistics. So what you possibly will end up having is down the road a lifting of those break-even levels across the globe when you consider moving away from these geopolitical hotspots, but also lengthening voyage times, moving molecules from one spot, the seller spot, to the buyer spot.
What does the increase in oil prices right now, and again, we don't know how long this will last or mean for the ExxonMobils, the Chevrons of the world. How does this factor into how investors should think about their earnings prospects?
So when you think about the sector overall, it's obviously a modest tailwind right now. For the Exxons and the Chevrons, obviously the upstream side sees more revenue because of a higher price for what they extract, but also on the downstream side, that is a feed cost, to their processes further downstream. So there's not a solid win-win, but for the upstream guys that I cover here in the U.S., for the Diamondbacks in the Permian and the Eagle Ford, obviously higher netbacks, higher free cash flow, most likely investors seeing that cash flow come back to them in the form of supplemental dividends, incremental buybacks as well, is if this moves farther down the road into the second half of the year as well.
Hey, Vince, as I understand it, the cost of production in the U.S. is roughly $50, $55 a barrel. Boy, am I incented now to go drill a hole in the ground. Are we seeing any of that?
Well, we haven't seen it yet. Again, if you look at the curve itself, you're seeing the response, the volatility on the shorter end of the curve. So unless we see the entire curve move up, move higher toward the second half of the year, you could see some incremental barrels coming back into the market. But what the investor base have told the operators is, I want you to control that capital. I want you to control that production. I want to see the excess cash coming back to me in the form of buybacks and dividends. I don't want you to go back to that level of Shale 1.0 when you were growing without any regard to returns on capital.
All right, good stuff. Vince, thank you so much for joining us. Vincent Piazza, Senior Equity Research Analyst covering oil and gas here at Bloomberg Intelligence. Paul, I know everything you know about oil is from Landman.
Yeah.
How would Landman treat what's going on right now? Would they fold this into their storyline?
They could, maybe. I mean, they try to be, pretty constant. But I think, one of the things is, $100 oil, they don't necessarily like that because that translates into really expensive gas, and that's when people get upset. So they like, $75 is kind of what
That's their sweet spot.
That's their sweet spot here. But ExxonMobil stock hitting a 52-week high today, up 32% year to date. This is good.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Hey, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Some other company news here today. Our friends at Kraft Heinz, they were going to split up, right?
Yeah.
But now I think
they called it off.
Yeah, they called it off. They have a new CEO, and I think he feels like can invest in some of these brands and drive growth that way, which is a different strategy than what we've seen from some other consumer products companies. Because let's face it, they're under pressure here. I think a lot of people like me are have traded down, are trading down some of the store brand,
the private label brands.
Private label brands. That's putting pressure on some of those brands that they've spent generations trying to create these brand values through advertising and other ways. Christina Peterson joins us, food industry reporter for Bloomberg News. Christina, talk to us about what's going on at Kraft Heinz. What's the latest news there?
Yeah, as you guys mentioned, they halted their plans to split. Their new CEO, Steve Kaling, is trying a new tactic by investing $600 million in their research and development, their marketing, lowering some of their prices. And as part of that effort to restore growth in the company, they are unveiling some new, healthier products in some of the brands that have really struggled, but are showing some signs of growth. So we are going to be able to purchase a higher protein version of Kraft mac and cheese later this month. And then in April, they are unveiling a Capri Sun lower sugar hydration beverage and a snack size version of Lunchables. So these are some of the brands that Kraft Heinz has been weighed down by, but when they're investing some money, they've seen a little bit of growth coming into those brands.
Okay, adding protein makes sense given the shift among consumers towards more protein-packed foods, but isn't the bigger shift about people wanting to avoid food that is seen as perhaps not as healthy as fresh food? I mean, we're still talking about packaged goods, right?
Yeah, I mean, I think that is the sort of inherent risk here. I asked the CEO about this, and he said he thinks people are leaving the center aisles of the store where you buy packaged food because they want better for you options. And that as a packaged food company, what they can do is try and do better for you through a shorter ingredient list, what food companies call clean labels, by adding more of these kind of trendy macronutrients, leaning into protein, leaning into fiber. But you're right, no one's going to confuse this for kale. So they're betting that there are times when convenience and taste will win over consumers.
That's the only thing that drives me. I don't know what they're talking about here, but I understand.
You're all kale all the time.
Oh, yeah, exactly. Christina, what's the, specifically for Kraft Heinz, I mean, other companies in the packaged goods industries have pursued separation plans. Is there a sense within the industry whether that's a good strategy, not a good strategy? Maybe Kraft Heinz thinks they can be a little bit smarter about it?
I think that there was a general agreement that splitting Kraft Heinz into two separate companies at that moment in time did not actually make a lot of sense because both halves were seen as somewhat weak. If you had one company that was doing really well and one half of the company that was struggling, then you could siphon that off and protect the stronger half. But in this instance, I think people thought it did make sense to pump the brakes on that and see if you could restore growth in at least part of the company before splitting them apart. So even if, Oscar Mayer meats or Maxwell House coffee can't be restored, maybe some of the other parts of the business can be. And then if they were to pursue a sale down the road or a split down the road, that would make more sense. So just trying to bring the company back to life before you auction it off.
Well, you mentioned a couple of brands there, mac and cheese being something that Kraft Heinz is willing to invest in. The Lunchables brand is also something that they're kind of beefing up, and Capri Sun as well, which I think we all remember from packing our kids' lunch boxes and having them ourselves. But also the other brands within its portfolio, including Maxwell House Coffee and Oscar Mayer deli meats, those are things that, has the company largely given up on it? I mean, if they're not going to refresh those, does that mean that they are for sale for sure?
They have said that they will invest in order to protect their market share, but they are not, as far as we know now, sinking a lot of resources in to get new consumers there to grow their market share. The CEO has said that he would not rule anything out in terms of a sale or a divestment, and they are reviewing the portfolio kind of broadly speaking to see what works and what isn't working. He said they're not actively engaged in looking for buyers for those brands, but that they would not rule anything out.
What's the market's feedback on this new CEO, or is it too soon to really hear anything?
Well, it's a tricky time. Shares of Kraft Heinz have been down since the split was paused, but it's also been a tough time for the food industry just in general. Consumers are strapped. The conflict in the Middle East has sent oil prices rising. There are concerns that will stress already strapped consumers out further. In general, the large food companies have been selling less food. So there is just concern broadly in the market. So I think people are willing to give Steve Kaling a shot. And in general, he is thought highly of. He presided over the split of Kellogg. So I think there was initially an expectation that he would do the same with Kraft Heinz. I think people are interested to see if his gamble works, but there is some skepticism that these are the brands that will be able to be perceived as better for you. That seems a little, maybe a little bit of a lift.
All right.
A little bit of a reach.
Yep, the stock up a little bit today, but down on a year-to-date basis. Christina Peterson, food industry reporter for Bloomberg News. We appreciate that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good morning. This is Bloomberg Intelligence with Paul Sweeney, John Tucker, and Scarlett Fu. We are live from our Bloomberg Interactive Broker Studio in Midtown Manhattan, and we are also streaming live on YouTube. We've got a lot coming up in this second hour of Bloomberg Intelligence. The markets are higher for a second day. We're going to check in with Catherine Chiglinski on some company news because MasterCard is buying a stablecoin startup bank, BVNK, out of the UK for up to $1.8 billion. And of course, oil prices are top of mind with diesel now topping $5 a gallon. So Lee Klaskow, our senior transport logistics and shipping analyst, will join us to discuss how these rising diesel prices are impacting freight demand. In addition, Grace Lee, senior portfolio manager for Columbia Threadneedle, will join us to give us her outlook for the markets as the Federal Reserve Open Market Committee begins its meeting on interest rates. They will come out with their announcement tomorrow at 2 p.m. Mandeep Singh, our global tech research head, will give us his take on the NVIDIA annual conference taking place right now, GTC. It has happened, and it's certainly, at least it moved the stock price yesterday. And finally, we'll check in with Jeffrey Langbaum. He is our senior U.S. REIT analyst on real estate, especially when it comes to office space. First, though, John will give us a Bloomberg Business Flash. Hey, John.
And we're green on the screen. How appropriate. S&P 500 up 40 points. That's up 0.6%. 67.39 in the index. The Dow Jones Industrial Average right now up 243 points, up 0.5%. And the Nasdaq 100 up 192 points. That's a rise of 0.8%. So we had a rally in oil. It's easing just a bit, so I guess traders are grabbing onto any shred of relief to send stocks higher. Energy, still the best performing major industry group in the S&P 500. And then we have the Fed meeting in Washington that got underway just after 10 o'clock this morning. Tomorrow, we're going to have the interest rate decision. I mean, there's no change expected in the benchmark. And also the quarterly projections, the dot plot. Meantime, Julian Emanuel of Evercore ISI says, in the face of war with Iran, markets have actually been pretty resilient.
If we had known that you were going to more than double from the December low in oil to where we got to a week and change ago, and we saw the string of payroll reports that we've seen over the last 6 months, would you have really thought that stocks would only have been down 5%?
Right now, checking Brent crude oil up almost 1%, 101.16. So it is pairing some of the earlier gains. Same thing for WTI is 94.21 a barrel. That's up 72 cents. Quick look at the travel stocks, broadly higher after we got a relatively bullish forecast from airline operators. For instance, like Delta, they're up 4%. You'd have thought the increase in the fuel costs would have really damaged them, but they seem to defy that, issuing a more optimistic sales target. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
Are you going to head out to the St. Patrick's Day parade later?
That's for rookies. I mean, you know, I'm a professional.
Yeah, exactly.
Did that for the first 20 years.
A special day to, you know, do whatever, celebrate.
So that would be a no.
I'll go to Saint.
Maybe.
I'm going to St. Stephen's Green down the Jersey Shore for a pint. They pour a proper pint there, so I'll be looking forward to
So
that.
someone's celebrating.
No, I celebrate this blessed day every day. My Irish heritage is something to celebrate on a daily basis, Scarlett.
All right, there you go. Thank you. You're not wearing green either, I just noticed. And
Hey,
Paul
again,
is.
for rookies.
Paul's in the spirit of things.
Yeah.
All right, let's take a look at some stocks on the move today. Scarlett Fu with Paul Sweeney and John Tucker, and we're joined right now by Bloomberg's Natalia Knežević. Natalia, get us started.
Yeah, let's start with Delta Airlines. The ticker is DAL. Shares are up by almost 4%. The company issued more optimistic sales target for the first quarter. It says bookings by leisure and corporate customers accelerated into March. It now expects high single-digit revenue growth for the first quarter, up from previous forecast between 5 to 7%. Now, the company said it's well-positioned to navigate this current environment. As we know, airlines are struggling how to navigate flights around the war zone, higher fuel costs, which represent about 30% of all total operating expenses for U.S. airlines. And now the bad news, guys. So airlines executives are saying that passengers could see higher ticket prices or they will remain elevated if the Strait of Hormuz isn't secured by the Memorial Day.
Well, it better be secured by Memorial Day.
I know.
This
This
thing
was
better
not
be in our
supposed to
rearview
be
mirror.
something that went on for months on end.
No, that's what the market, I think, is reflecting, like kind of shorter than maybe
Yeah, and you see
longer.
that in oil prices at least a couple months out, the contracts for later on this year. All right, next up.
Yeah, let's talk about Uber and Lyft. Both shares are up today. Companies announced several autonomous vehicle partnerships with NVIDIA. So RBC Capital Markets analysts are saying that Lyft's proposal is focused on companies adopting NVIDIA's accelerating computing capabilities. They want to build new generation of mapping platform. Now we also know that Uber wants to launch a fleet of NVIDIA software-driven autonomous vehicles across 28 cities globally by 2028. But both stocks are really struggling. We see that Uber is down by about 3% year-to-date. Lyft is down by about 27%. We know that the company posted really disappointing earnings results, and yeah, we see still a lot of decelerating growth, especially for Lyft.
All right, how about Eli Lilly?
Eli Lilly, we see that shares are down by 3.4% today. HSBC cut rating to sell from hold. Now this is the only sell rating for the company. So HSBC is basically saying that the total addressable market for obesity drugs and pills can be less than expected. It said also that Novo Nordisk will fight back, which means that less market potentially, right, for Eli Lilly. Interesting. So now this price target from HSBC implies a 16% move to the downside from yesterday's close, considering the fact that the stock is already down by 10% year to date. But other analysts are really optimistic. They see the price hovering at above 1,200 by the year end.
All right, very good. Natalia Knežević, we appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. A little M&A trade on the tape here today, Scarlett. MasterCard will acquire the stablecoin infrastructure startup BVNK for as much as $1.8 billion. Have no idea what that is. So I'm going to go to somebody who does. Catherine Chiglinski, U.S. Finance Team Leader for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Catherine, what is MasterCard buying? What is BVNK?
Well, it really does a lot of the stablecoin infrastructure. So I think that's been a huge bet for them, right? Like MasterCard and its rival Visa have long dominated the payment infrastructure world. And this deal with BVNK and MasterCard, I think really just allows MasterCard to actually boost its sort of digital payments operation without actually having to build some of the technology itself, which I think is a real boon for it.
There's also, kind of this strategy that MasterCard has taken over the last few weeks, few months, because earlier this month they launched what they call a global partnership network with a whole bunch of digital asset, crypto-related firms for more collaboration. It sounds like, they're moving in that direction, but I don't know what it really means in terms of what changes for consumers.
Yeah, well, I don't think a ton will change for consumers because, I think MasterCard is still very much wedded to the idea that regular payments are its bread and butter. I do think, though, that they want to be a player in all these different markets, and especially as we see the adoptions of digital currencies increase, I think they want to have at least the back end so that they can handle a lot of that. So I think those partnerships and this BVNK deal really are helping them sort of toggle both ends so that they can get bigger with the growing market and have that technology ready so that as it continues to grow and they can really seize on it.
When I first started learning about fintech, one analyst said, just buy Visa and MasterCard. I mean, no matter what the technology is, it's going to flow on their platforms to some degree. How is that playing out? How are MasterCard and Visa and maybe even Amex, do they feel like they're participating in this transition to financial technology and digital
in many
banking?
ways, yes. I do think that they have been, seeking different ways to get their, to establish footholds in these markets. In other ways, you are still seeing deals. You're still seeing them buy BVNK. I think there is still room for them to grow. But in the end, yes, will they find a way to sort of have their, have their fingers in all these different markets? I 100% believe so, just because, it really is this benefit of even if, most of our markets are still relying on sort of regular payment systems, they want to be, intertwined with sort
there's partnerships that it's formed with this, network, this global partnership network that it announced, and then there's actual M&A. At what point do they buy something wholesale versus just form a partnership?
Yeah, well, I think there's a careful divide. Obviously, I think it has a lot to do with price these days for these assets, especially when you think about how hyped up sort of the digital asset space is. So I assume, like many companies, they're going to be pretty careful about exactly which ones they buy and which ones they partner with. I think some of their partnerships have also been really to expand it widely. And I think, but with BVNK, I think they're getting, specific data infrastructure that's going to help sort of beef up their back end.
Boy, these stock prices performed just about in lockstep. Visa and MasterCard over the trailing 5 years on a compounded annual basis, their stock's up about 7% per year, both of them. But that's lagging the S&P, which has been up about 13%. So a little bit of an issue there, but performing kind of in lockstep with each other. Catherine, thank you so much. Appreciate that. Catherine Chiglinski, U.S. Finance Team Leader, Bloomberg News. Talked to us about MasterCard buying in a little bit more into that fintech space here. I think one of the interesting news items from yesterday, Scarlett, was diesel over $5 a barrel the first time in several years.
Do you know anyone who drives a car using diesel?
No, and I like to keep it that way. No, but I don't. I mean, now it's just gas or it's electric.
Yeah,
but all the trucks, you think about all the trucks and the farm equipment and all that kind of stuff, that's all diesel. And that's as somebody mentioned it today, that's the fuel of business.
That's the industrial economy, absolutely.
I'm waiting for the fuel surcharges to kick in for any delivery that I get.
That's a good one.
Is that going to happen?
That's a good one.
I'm sure it will. Just wait a few days or
weeks.
You
know what's going to have a big effect is on the truckers out there. And that's going to be a big thing because they're already razor-thin margins, a lot of that business. Lee Klaskow, he joins us now, Senior Transport, Logistics, and Shipping Analyst for Bloomberg Intelligence. Lee also hosts a weekly podcast, Bloomberg Intelligence Talking Transports. I actually listen to that because I consider myself a rail and truck guy. That was my first job. So
I like the way you put that. I actually listen to that.
I'm not a podcast guy.
It's good. Everybody should listen.
I'm not a podcast guy, but I got a 2-hour train ride every day. So Lee joins us here. Hey, Lee, what's this big surge in fuel costs mean for the truckers?
Paul, I appreciate your support. It means higher costs and lower margins and possibly less demand. I mean, that's really what it means. I'm sure you've seen diesel prices hit $5. We haven't seen that since September of 2022. Back in 2022, fuel accounted for about 28% of a trucker's cost. It typically hovers around 20 to 25%. So, hopefully, the prices that we're seeing now are temporary. Obviously, that all depends on what's going on in the Middle East, but it's definitely going to crimp margins and probably crimp demand just because, the longer that fuel is higher, folks out there will just have less money to spend on stuff.
What about the transition to electric vehicles for the trucking industry? Once upon a time, that was a big talking point, and it was kind of seen as, the future. Is that still the future for this industry?
It may be the future, but the future is nowhere near, especially for the over-the-road trucking companies. I mean, electric does make sense for certain applications, but those are few and far between. I think the technology has to get better. You have to remember that, trucks can only haul a certain amount of weight, and electric vehicles tend to add to a weight of a truck, so that means that's less stuff that they can haul. And then also you have the whole, the reality of some of these trucks are just going across the road, and they need to be sure that they can charge their trucks, and the costs are just so much more expensive. So it's not like a shipper's I'm going to spend 50% more on rates just because you're driving an electric truck. That's just not going to happen.
So what are obviously fuel's a big issue for truckers here, but what's the demand side of the equation? What's it been over the last several months, and has it materially changed since the war in Iran began?
It's all about the consumer, really. And so, I would say demand was tepid, but it was at least growing. What you have here is the inflationary pressure from higher fuel costs, the inflationary pressure for higher food costs, coupled with the fact that I think a lot of folks were hoping that interest rates would start coming down, and that seems to be slowing as well. And therefore that impacts, end markets like housing and the automotive industry. We don't think that, the consumer is going to totally pull back and this is going to drive us into a recession. But definitely the consumer is going to pull back, and it is going to impact demand. And people, will have to shave off expectations for GDP the longer this conflict goes on in the Middle East.
John Tucker mentioned two words, fuel surcharge. And I believe either FedEx or UPS at one point did tack that on for a while before removing it once oil prices came back down. Is that in our near future, Lee?
It could be. It depends on how high we go. And, a lot of other transportation companies like trucking companies, whether it's truckload or less than truckload and railroads, they do all have a fuel surcharge. And when fuel spikes quickly, like we've seen, the lag effect can be a drag on margins because they are paying for fuel today and then charging a surcharge from the past. In trucking, that delay or lag isn't that long. It's only a week, but for railroads, it could be 30 to 60 days. So that can impact, be a headwind for earnings going into the first and second quarter. But what I'd say, over time, it kind of plays out because when fuel prices decline quickly, it becomes a tailwind for earnings.
All right, good stuff. Thank you so much. Lee Klaskow joining us to talk about fuel costs, especially when it comes to the freight, logistics, and shipping industry. He is our senior transport logistics and shipping analyst. Fuel surcharge will show up in so many different ways. It's just a matter of time, it feels like.
And why not? It's a direct cost. Pass along, I guess, to the extent you can. We already heard the airlines saying that they're going to try to pass through, push through some of their fuel increases.
And it's showing up in their ticket prices as well. But they don't separate it as a fuel surcharge per se. They just move the price up. Dynamic pricing.
Yep, there you go.
Makes me miserable. All right, we've got a lot more coming up on Bloomberg Intelligence. We're going to be checking in with Mandeep Singh. He's our global tech research head here at Bloomberg Intelligence on the NVIDIA annual AI event. It's called GTC. Jensen Huang spoke at it yesterday, gave some bold predictions for revenue down the road. We'll discuss what it means for NVDA. Grace Lee of Columbia Threadneedle will be joining us as well. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. So we have the backdrop of higher energy and fears over stagflation. With that, the Federal Reserve officials, they started their two-day meeting today. No change to their benchmark rate is expected. We're also going to get the dots. The economic summary projections. Oil prices still elevated, but they paired some of the earlier gains. So we'll latch onto that as the reason why stock averages are higher. Brent crude is up 1.5%, 101.69. And WTI is up 1.4%, 94.83 a barrel. The Dow Jones Industrial Average up 182 points right now. That's a rise of 0.4%. 47,129 on the index. The S&P 500 up 28 points. That's up 0.4%. 67.28. The Nasdaq 100 up 141 points, and that is a rise of 0.6%. Some of the individual movers today, you have shares of Qualcomm up 2.3%. Board of Directors increasing the quarterly cash dividend and also approving a $20 billion repurchase authorization. MasterCard says it will acquire stablecoin infrastructure startup BVNK for as much as $1.8 billion. Traditional payment networks like MasterCard trying to position themselves to remain players of choice in whatever technology becomes prominent. Uber and Lyft getting a lift. They announced separate autonomous vehicle partnerships with NVIDIA. Uber is going to launch a global fleet of NVIDIA software-driven autonomous vehicles across 28 cities globally by 2020. I mean, you did this, right, when you were out in California?
What's that?
Jumped
Waymo.
in a Waymo with no driver?
Yeah, somehow my son convinced me to do it.
I'd be in the back
that's a tourist
cowering.
activity, by the way.
It might be. It might be. We went to In-N-Out Burger and back. How California is that?
Okay, we check the markets for you right here. Just get it delivered by drone. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
Can I get to some headlines from social media?
Yes,
from
please.
President Trump. John Tucker, thank you so much. We appreciate that. President Trump out on social media comments in a post on Truth Social. President Trump says, "I always considered NATO a one-way street. NATO will do nothing for us in time of need. Same goes for Japan, Australia, and South Korea." And the last post, "We no longer desire NATO's help on Iran." So there you go, changing the tune yet again. So looks like the U.S., we are in it alone, I guess, as it relates to that part of the situation there. Let's get back to these markets where we do have green on the screen here. Grace Lee, Senior Portfolio Manager for Columbia Threadneedle, joins us. She's up in Boston. Grace, how are you and your cohorts at Columbia Threadneedle, your colleagues, how are you kind of positioning your portfolios, positioning your approach, given some of the geopolitical crosswinds, which have really reared their head, I guess, really over the last three and a half weeks?
Yeah, thanks for having me, Paul. I think that we're trying to be very balanced about this. It's surprising that we've had, over the last 3 years, the Russell 1000 is up on average 25% a year. So in this market, given all of the geopolitical risks and potential slowdown in the job market, some of the AI-related risks as well, I think we've got to at least be a little bit more cognizant of potential tail risks as well. What is the fifth standard deviation event that could cause oil prices to get to 150, or the private credit concerns to really spill over into a broader market event. So I think we're trying to be very cognizant and not lean too much one way or the other.
I'm curious what qualifies as a haven, post the start of the Iran war, because you look at how the different sectors have performed since the end of February, and on a 24 industry group basis, energy stocks make sense given the rise in oil prices. Software and services bouncing back from a pretty dismal couple of weeks. Chip makers and telecom stocks, those are the only groups that are positive so far in March. What is a haven right now?
Yeah, I think it's been a very interesting sort of barbell market. The safe havens, in fact, I think the safe havens worked so well earlier in the year that they haven't participated as much in the sort of normal safe haven trade. The consumer staples, the utilities, I do think that people will come back to them as if in fact the war drags on. I think that those are the right places to be, whether it's healthcare, consumer staples, utilities, the traditional safe. But again, I think the consumer staples sector was probably up, maybe I think utilities were some of the best sectors, for the first couple months until the war happened. And I think that the stronger dollar has also impacted, maybe some of the consumer staples, which do have multinational exposure. So they might have pulled back a little bit on that. But I do think they will serve as traditional safe havens again if the war drags on.
Grace, one of the issues prior to the Iran conflict
Yeah, I think I don't think investors are being nuanced enough about what's going on in private credit. I think what we saw in the fall was more fraud related, and frankly, it was bank lending more so than the private credit firms. I do think what you're seeing some of the software sector where private credit and private equity have been very active in terms of their investments over the last couple of years. I do think that could become a real issue, and but then again, there's varying degrees of investment activity at different firms, and I think investors aren't willing to really and possibly even stronger after the after the dust clears or settles here.
Good stuff. Grace Lee, thank you so much for joining us today. Grace Lee is Senior Portfolio Manager at Columbia Threadneedle, joining us from Boston. And one thing we mentioned, which is chip makers outperforming the market. They're up so far this month, not by a whole lot, but they are higher, which is outperformance, is NVIDIA. NVIDIA is holding its annual AI conference this week. Jensen Huang spoke yesterday, and he gave $1 trillion forecast.
Saw that.
And we're trying to figure out whether that is a meaningful change from what it had already kind of indicated to investors, whether it really changes, the landscape here for NVIDIA and for the chip making industry overall. Let's bring in Mandeep Singh. Mandeep is our global tech research head here at Bloomberg Intelligence. So this new forecast of $1 trillion, is it new? Does it meaningfully change what NVIDIA was already projected to do, Mandeep?
So two things here. One, every company in the tech land gives a backlog or, a forward-looking number. To me, this is NVIDIA saying we have a 3-year backlog number of $1 trillion through 2027. And the reason why I think they did that is because Broadcom in their earnings call said they expect AI revenue of $100 billion. So Broadcom's revenue run rate is around $32 billion. They said in the next 2 years, they are going to $100 billion. And who are Broadcom customers? Google, and then you have got Meta and, some of the customers of NVIDIA. So from that perspective, I think Jensen had to give a 2027 number because there is a Broadcom number out there. And when you, do the math, most likely they'll do $500 billion in revenue in 2027, NVIDIA. Next year, like 2026 would be around $370 billion. 2027 would be $500 billion. So when I apply that $100 billion to $500 billion, I get to the same ratio as they are right now. I mean, AMD will be low single digit or mid single digit type of market share. So from that perspective, what Jensen is saying is, look, guys, I'm not losing market share to Broadcom or AMD. I have visibility. These hyperscalers will still make up 60% of their revenue, and this pie is big enough that all three can do well.
All right, the numbers are staggeringly big, like they always are, and I trust you that you know what you're doing on the math. What else will the smart folks at this conference be looking for? What do they need to hear from NVIDIA here?
The margins. I mean, yes, you have guided to $1 trillion in revenue, which implies around $500 billion for 2027. What are your margins going to look like? Are you going to take a slight cut in your margins? And that's where that circular financing element comes into play. If CoreWeave and Nebius are ramping up on NVIDIA, and NVIDIA is investing $2 billion in Nebius and $2 billion in CoreWeave, to me, that's sort of a margin offset. Yes, you're saying you have mid 70% gross margin, but then you are investing $2 billion in the company that's buying your chips. So from that perspective, I think NVIDIA cares about maintaining the margins, but these sort of investments are an offset to me in terms of, maintaining your margins.
Right, maintaining margins being primary goal number one here, primary concern here for NVIDIA. We also learned from GTC that NVIDIA is developing chips for data centers in outer space. Is this something that's going to add to revenue in a meaningful way anytime soon?
And probably Elon Musk knows the answer to this question, because he has been the most vocal about, setting up data centers in space. But to my mind, given how much cooling and, the cluster size of these AI data centers, yes, cooling is an advantage in space, but you can't set up a cluster of, 100,000 GPUs when one of the chips can fail. How do you replace that? And I think a lot of the other folks in the industry have called that point out, that you can't set up big clusters in space. Even if you can have a chip for space, AI needs large amounts of processing, big clusters of chips. You can't do that in space.
30 seconds left. I'm seeing that NVIDIA stock up 50% on a trailing 12-month basis, but basically flat year to date. What's the current story if I'm a stock jockey on NVIDIA?
I mean, I think there is still a lot of skepticism around NVIDIA being able to reach that level, even though I think if Jensen is guiding, I would believe him. He has visibility, and these growth rates are staggering. But with semis companies, you always have to think about when is that digestion period going to come, and what does that mean for EPS? And we will see an EPS decline when that digestion period comes.
It's funny, I didn't even think of NVIDIA as a chip company. It's an AI company, but no, really.
It is a chip company, yes.
And that's a cyclical business, I've been told.
Yes. Well, it used to be.
Yeah, I guess you're right, it used to be. I don't know. Mandeep Singh, Global Tech Research Head, Bloomberg Intelligence. He was born on third base, folks. He became a tech analyst when this whole internet thing started, and then AI. I mean, I could have been successful.
Now he's our Global Tech Research Head.
Yeah, he does it all, so we appreciate that. S&P up 24 points, the Dow up 140 points. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Renewed wave of stock buying today, but this lift that we're getting, it looks like it's fading a bit. And I got to think that the tweet from President Trump had something to do with it after calling for help in securing the Strait of Hormuz. Now he says he doesn't want NATO allies' help because they rebuffed him at first. Airlines did jump after some executives cited strong bookings as travelers rushed to lock in fares ahead of a potential rise in the fuel costs. You have Delta right now up 4%. Qualcomm gaining 2% on plans to buy back $20 billion in shares and also boost its dividend. As we look at the Dow Jones Industrial Average, up 96 points right now, so it's up 0.2%. Yeah, fading some of the earlier gains. S&P 500 is 19 points higher. That's up 0.3%. The NASDAQ 100 up 94 points. That is up 0.4%. Terry Weissman at Macquarie Futures says, you know what, investors, they are looking for clarity.
It's very difficult to take directional views at this point, right? I think the issue here is going to be about the duration of this war, and not just that, but what is on the other side of it when it ends.
And treasuries right now pretty much unchanged. The twos, which are more policy reactive, 367 the yield right now. The 10-year down almost 2 basis points actually at 4.19. The Fed beginning its two-day policy meeting. And meantime, Boeing signaling that several performance issues are going to weigh on its first quarter results from fewer than planned deliveries and wiring defects to the cost to turn around its reintegrated supplier. Shares of Boeing right now down 1.3%. Now, you know, I don't know if I believe this, but anyway, according to the National Retail Federation, spending for St. Patrick's Day is expected to reach a record $7.7 billion.
No.
Like on what?
Guinness.
Well, the top purchases, they say, food and beverages.
Yep.
Yeah, okay. And I'm told by the Donahoe family from the Emerald Isle that corned beef and cabbage is not any sort of traditional Irish
is that right?
meal.
That's good, because my dad used to make me eat that.
I mean, I love it.
Not really?
Yeah, I know.
Okay. Good to know.
I love it, but it's not traditional, supposedly.
You would know.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Poland Scarlett.
Exactly. Scarlet Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We've been following this office market really since the pandemic, as you talk about an industry that was really hit hard by the pandemic and is still recovering as we think about getting back to the offices, and different companies have different policies. But from a real estate investor perspective, what's the story these days? Let's check in with Jeff Langbaum, Senior U.S. REIT Analyst for Bloomberg Intelligence. Jeff, I know you guys and your team did some research on kind of the current state of the office market in the U.S. What'd you guys find?
Yeah, not just the U.S. We actually did a survey of cities in the U.S., in Europe, in Asia, Australia. And the story was largely the same in all of these major cities, which is companies want people back in the office, and the way to get them back is to offer high quality new space and highly amenitized space and adjacent to transportation. And if you do that, then the people will come. And then the other takeaway, which is interesting, I think, is that as of right now, at least so far, employees sitting in office buildings view AI as an expansion opportunity, less so a threat to office demand.
Okay, that seems kind of counterintuitive. Explain why that is. Why is it an expansion opportunity?
Well, it's a couple different reasons. Well, the first, I guess the most obvious as it relates to leasing is all these growing and forming AI companies need some place to have their headquarters. So there is a lot of tech leasing happening in some of these big cities that is directly related to this AI wave. So that's one thing. But as it relates to the survey itself, you know, a lot of the jobs that may be deemed irrelevant from AI or maybe back office, they're not the jobs that are sitting in the high-rise towers in New York and London and Hong Kong, and maybe, you know, if companies can find incremental business opportunities, you know, by making themselves more efficient, there's actually a need to expand their space in those types of buildings to take advantage of that opportunity, even if it does mean some job redundancy elsewhere.
Jeff, I think I know an A-quality office building when I see one, simply because I work in an A-plus quality building here at Bloomberg 731 Lex. What percentage of the inventory, office inventory in the U.S. would you say is A-quality?
It's pretty low, and what's interesting is there is such a need for more of it that even though there are a lot of empty or mostly empty older office buildings, there is now new construction starting to come out of the ground and being earmarked for new construction coming out of the ground, because there's no big blocks of available high-end new space. And, you know, we've got a couple of new buildings that are getting ready to start in New York. And, you know, you look back at 2 years or so ago, and that would have been crazy. Nobody would have thought that was possible. But that's where we are, because there's just not the space that people want to lease. There is no availability.
All right, so let's say like 80% is B and C. What happens to all that stuff in every city?
Well, the hope is that a lot of it turns to residential, and there is some of that, and there's increasingly more of that, but that's going to be a slow burn, and you know, it's going to take time for those buildings to convert. But as they do, that reduces inventory of office, which is helpful, and also helps ease the housing affordability and lack of availability crisis in some of these cities.
Right.
So that's one thing that will take, you know, years. The other thing is that, you know, knock one down and build a new office building. You know, we're going to see some of that over the next couple of years as well.
Wouldn't it be easier to turn those B or C grade office buildings into A grade office buildings? I mean, assuming you have the location, you kind of tear out the interior and rebuild it. Yeah.
So obviously the location is paramount, but, you know, depending on what age building you're talking about, the ability to retrofit to what is really required now for a high-end, high-tech, environmentally friendly, you know, all of those things. I mean, it's an expensive proposition, and in some cases just structurally challenging to do. And in fact, you know, if you've got a building that's largely vacant and you can get it cheap enough, you probably are buying it for effectively the land cost anyway. And so knocking it down, you know, really ends up being probably cheaper and easier in some ways than entirely retrofitting it.
Interesting. So real quick, San Francisco, I hear AI is saving San Francisco.
AI is saving San Francisco for now, at least. And, you know,
okay. Jeff, sorry, I have to cut it there. We're going to go to Washington, D.C. for President Trump. And thanks very much. Jeff Langbaum, Senior U.S. REIT Analyst for Bloomberg Intelligence. Right now, President Trump is participating in a bilateral meeting with the Taoiseach of Ireland, Michael Martin. Let's take a listen.
Yeah, probably they want to talk a little bit about tariffs, but I won't mention that. You know, we won't bring that up. But you might want to be discussing that a little bit. But it's an honor to have you, and thank you very much for being here. Thank you.
And may I thank you, President, for facilitating this visit, and in what is for us probably one of the most important weeks in the United States. And in many ways, you're affirming the tremendous bonds between Ireland and the United States that go back to the very foundation of this republic. And 35 million people in this country claim Irish descent and Irish heritage. And I spent the first 2 days in Philadelphia, going back really into the heart of that history, and the fact that 3 Irish people born on the island of Ireland signed the Declaration of Independence. It was printed by an Irishman, John Dunlap, and disseminated across the colonies. And Charles Thompson, who was discussed earlier, he designed the bald eagle, the seal of the U.S. So in many ways, our connection is foundational. It's historic. And the Irish helped to build America. We're very proud of that connection. And we think you hosting us here in the White House is affirmation to all the Irish Americans out there and to our diaspora in this country for what they've contributed to America. And that's very much through the prism this year, the America 250. It's a very exciting year. We're discovering new things. I mean, even a guy from my own city, a guy called Stephen Moylan, who was an aide-de-camp to Washington, he's regarded as the guy who came up with the phrase, the United States of America. First written record, and it's in New York in the history of those bombs.
Well, you told me something before that was maybe the most interesting of all. How many presidents are in some way related through blood with Ireland?
23.
Can you believe it?
23 Irish presidents.
They're great politicians. The Irish are great politicians.
Absolutely.
No, but think of it. 23 are in some form, and many of them have gone to Ireland.
Absolutely.
Grant
went to Ireland after his presidency.
Right.
I was saying earlier, Ronald Reagan's visit was an extraordinary one in a place called Ballyporeen in County Tipperary. And of course, John F. Kennedy, whose grandfather was Irish, came back, I think, early '63. That's a very memorable visit because of what the tragedy that happened subsequently in the assassination, which touched people in Ireland very deeply. So the Kennedy
Very popular.
Kennedy family strong
Yeah.
resonation with Ireland.
Well, we like the family too.
Yeah.
One person in particular, one very non-controversial.
I know
person.
that. Yeah.
But now he's doing a very good job. He really is. But we have more, I think, people here by far than you have in Ireland that are of Irish descent. We have, so you have quite a few, but we have a lot.
You have a lot more than we have. Yeah.
It's pretty amazing by a lot.
Absolutely.
Yeah. Anyway, thank you very much. It's a great honor. And any questions?
Mr. President, visit Ireland in September. When you stay at Tuesday?
Well, I'm having, it's a great thing, my son and my family. We have a great golf complex in Ireland, one of the best in the world, called Doonbeg. It's in Doonbeg. And it's been amazing, and Rory McIlroy loves it. They all love it. Great golfers. You have a tremendous golf tradition, and it was chosen for the Irish Open, which is a big deal. That's a big event.
Absolutely, looking forward to it.
Everybody wants me to be there. You just said, I hope you're going to go.
I did.
And we're going to try. We are going to try, but it would be an honor. But it was a great honor to be chosen. They only choose the best courses in the world for the, for the big opens. It's one of the big ones, the Irish Open. It's really become one of the most important tournaments in the world. It's going to do. I hear it's going to be a fantastic success.
A great success.
Yeah. It's a very hard. It's a very hard course, however.
What progress have you made, Mr. President, in getting America's allies to assist the U.S. in escorting those oil tankers through the Strait of Hormuz?
Well, we don't need too much help, and we don't need any help, actually. In fact, we just put out a notice. I was watching over the last couple of weeks, and all of our NATO allies were very much in favor of what we did. They thought it was very important. We were just discussing it, actually. Very important that we take out the nuclear threat from Iran, and we've done that very strongly, very powerfully. We've wiped out their Navy, wiped out their military in every aspect. Their Air Force is now decimated. They have no Air Force, no Navy. They have no radar. Their radar is entirely gone. Their anti-aircraft machinery is gone. Everything is gone. Their leaders are gone. I guess one of their top person was, they say, a lot of people say their actual top was killed yesterday, along with somebody else who was responsible for the killing. The man that was responsible for the killing of 32,000 people over the last 2 weeks, he was in charge of the killing of protesters. It's an evil group. I mean, they've killed much more than 32,000 people. And the man who was responsible for that was also killed yesterday. And all of the NATO allies agreed with us. But they don't want to, despite the fact that we help them so much, we have thousands of soldiers in different countries all over the world. And they don't want to help us, which is amazing. I mean, amazing. And I didn't do a full court press. Because I think if I did, they probably would be. But we don't need help. That war has been long prosecuted, as far as I'm concerned, almost from day one. We knocked out many of these things. We knocked out the Navy essentially in a couple of days. But I was surprised to see that NATO while they agree that it was a very important thing to do, they agree fully. Nobody said, oh, you shouldn't do it. They would have had a nuclear weapon within 1 month of when we had the B-2 bombers bomb the nuclear potential. I call it the nuclear dust. I think NATO's making a very foolish mistake. And I've long said that, I wonder whether or not NATO would ever be there for us. So this was a great test, because we don't need them, but they should have been there. The other thing is, and I think, very important, we didn't have to be there for Ukraine. Biden chose to spend hundreds of billions of dollars on Ukraine. And I guess the head of Germany just made a statement that, well, they weren't involved and they have nothing to do with the war. But at the same time, they think we did a great thing by knocking them out. Nobody wants to have Iran, or anybody, but nobody wants to have Iran with a nuclear, because these people are crazy. They're absolutely crazy, and they're vicious, violent. I mean, they killed, think of it, they killed, now I hear it's about 41,000 people. They put out a notice 2 days ago. Anybody that protests will be immediately shot and killed. That's pretty tough stuff. So everyone agrees with us, but they don't want to help. And we as the United States have to remember that, because we think it's pretty shocking.
President Macron has just said in the last hour that he will never join a task force in the Strait of Hormuz until hostilities finish. Yet yesterday you said...
Who said that? Who said?
President Macron of France. What's your reaction to that, sir?
Well, he'll be out of office very soon, so we'll have to see. I don't know.
On Doonbeg, you're building an extension to it at the moment, but there's been an objection put in, and it's being held back at the moment due to small snails. What are you disappointed about that?
Planning Commission is
I have not heard that. No.
Mr. President.
I mean, the course was built and it's been operated very successfully. Somebody's objecting. Human and Environmental Group is objecting to. That's not like the biggest problem I've ever had.
Mr. President.
How close the U.S. to announce a coalition of voting to secure the Strait of Hormuz? Which countries are joining? Which countries are?
Well, we've had great support from the Middle East. Qatar has been great. UAE has been absolutely been great. Saudi Arabia has been terrific. Bahrain has been very good. The Middle Eastern countries have been very strong in their support, and of course Israel has been our partner. Israel's been very, very strong along with us. It's been a very strong collaboration. I was against Iran long before I even thought about Israel being against Iran. If you look back, many years ago, I talked about Iran was a big threat to this country, to this world of ours, and turned out to be I was right. In fact, I said you have to attack Karg Island. You have to attack them years ago when they were acting up. They've been acting up for 37, 47, I guess now 48 years. For 48 years, they've been bad players, vicious players, and you can't let them have a nuclear weapon. If they got a nuclear weapon, I would say they would have used it within 24 hours after having it. And they would have had it if we didn't bomb them out from that great raid with the B-2 bombers 8 months ago or so. You would have had a nuclear war in the Middle East and maybe beyond. I think it would have hit Europe. Maybe not Ireland, but it would have hit Europe. I think you would have been a nice piece of it. It all gets you. It's big enough that you would have been affected. They would have hit Europe eventually.
Mr. President, your Director of National Counterterrorism, Joe Kent, he just resigned today. He said he can't support your conflict with Iran. What's your reaction to that? And did you?
Well, I read his statement. I always thought he was a nice guy, but I always thought he was weak on security, very weak on security. I didn't know him well, but I thought he seemed like a pretty nice guy. But when I read his statement, I realized that it's a good thing that he's out, because he said that Iran was not a threat. Iran was a threat. Every country realized what a threat Iran was. The question is whether or not they wanted to do something about it. And many people, many of the greatest military scholars are saying for years that president should have taken out Iran because they wanted a nuclear weapon. They were, if we didn't do the attack, or if, I'll go a step further, if I didn't terminate the Iran nuclear deal given to us, one of the worst deals ever made by Barack Hussein Obama. Remember when they sent Boeing 757s over there, loaded with cash, hundreds of millions of dollars? You would have been very happy. This was a wonderful, they sent hundreds of millions. People forget that. Does anybody remember? Right? You remember. Hundreds of millions of dollars in a Boeing 757. I think they had two of them loaded. They took the seats out and they put cash. And it was so much that there wasn't a bank in Virginia, Maryland, or D.C. that had any money left. They stripped them of all their money, put it into place, sent it to Iran, almost as ransom. That's not going to happen with Trump. And nobody ever did anything about it. Nobody ever said anything about it. Can you imagine if I did that? So they've been a threat for a long time. But they've really been a threat. If I didn't terminate Obama's horrible deal that he made, the Iran nuclear deal, you would have had a nuclear war 4 years ago. You would have had nuclear holocaust, and you would have had it again if we didn't bomb the site. So when somebody is working with us that says they didn't think Iran was a threat, we don't want those people because, and there are some people, I guess I would say that, but they're not smart people or they're not savvy people. Iran was a tremendous threat. And virtually every NATO nation, and this is the thing, if they told me it wasn't a threat, and therefore they don't want to help, but when they say it was a threat, and it was a major threat, every one of them, I think every one of them, I don't know of one that said they're not a threat, but when they say it was a threat, but we're not going to help, I think they're very foolish. You know, it's interesting. It's interesting because I could say this, that what's happening in Ukraine, we're probably in there for $400 billion. We don't spend any money anymore. They buy it from us and they pay full price. But Biden gave them between $350 and $400 billion of equipment in cash. Someday they'll have to find out about the cash. And you could say that wasn't a threat, you know, we're helping them. So we helped them, and they didn't help us. And I think that's a very bad thing for NATO.
Mr. President. Are there any repercussions for NATO, and are you still going to China?
Well, yeah, on China, it's a little different story. We're resetting the meeting, and it looks like it'll take place in about 5 weeks. We're working with China. They were fine with it. We're going to say, I look forward to seeing President Xi. He looks forward to seeing me, I think. But I do look forward to seeing him. We have a good relationship with China. China actually has become economically for us very good, as you know. It's much different than it was in the past. And we have a very good working relationship with China. So we're making it in about 5 or 6 weeks.
Mr. President, NATO for not supporting you on this. Any repercussions?
Well, no, I just think that it's not good for a partnership when they say what you're doing is a great thing, but we're not going to help. You know, they say what you did is a great thing, but we're not going to help.
Because the Iranian regime has told Sky News, if you put boots on the ground in Iran, it will be another Vietnam. Are you afraid of that?
No, I'm not afraid of. I'm really not afraid of anything.
Mr. President, are you rethinking the United States' relationship with NATO, possibly getting out? Or
well, I'm disappointed in NATO that we spend trillions of dollars on NATO. Think of it, trillions over the years, many trillions of dollars. It's one of the reasons we have deficits and we help other countries. And when they don't help us, I mean, it's certainly something that we should think about. I don't need Congress for that decision, as you probably know. I can make that decision myself. I'd work with some very smart people. And I'd always deal with Congress anyway, but I don't need Congress for that decision. But, you know, when you say rethink, I have nothing currently in mind, but I will say that I'm not exactly thrilled when we help them with Ukraine. Look, Ukraine would have been over in 1 day if we didn't help. Frankly, Ukraine would have been over in the first day. They had the best equipment in the world. It was our equipment, given by Sleepy Joe Biden. No charge, no charge. Hundreds of billions of dollars of the best equipment in the world, no charge. I will say that I'm not happy about it.
Mr. President, two questions, one on Iran and one on Cuba. Is Iran now a bigger foreign policy priority for you than China? And on Cuba, the Cuban government...
Iran is just a military operation to me. Iran is something that was essentially largely over in 2 or 3 days because the Navy was wiped out almost immediately. The Air Force came next. The anti-aircraft came next. I mean, we're flying over Iran. We could take out their electric capacity in 1 hour. We have all the, there's nothing they can do right now because everything is knocked out. They have no, again, no radar, no anti-aircraft. They have nothing. And we don't, and it was a decision I made. We discussed it, Pete, Marco, JD, all of us, Chris, we discussed it. We can knock out their electricity in a matter of minutes if we wanted to. There's nothing they can do about it. We can knock out their oil in Carg Island. The only thing we didn't take down was their oil because if we knock out, I call them the pipes, very complex. But if you do that, it'll take them forever to rebuild, meaning whoever, and hopefully it's a sane group of people, but whoever it is, it's going to be running that, and we're going to try to get people that are going to run it well, and, you know, it's going to be a prosperous, wonderful place. It used to be, you know, if you go back, it used to be the people are great, the people are smart and energetic, and it used to be very successful. Now it's a country run by fear. It's a country where they tell protesters, don't go outside because if you do, we're going to kill you.
And Mr. President, on Cuba yesterday, the Cuban government
well,
says
Cuba right now is in very bad shape. They're talking to Marco, and we'll be doing something with Cuba very soon. We're really focused on this, but we're dealing with Cuba. Marco, do you want to say a couple of words about it?
Yeah, I mean, Cuba has an economy that doesn't work and a political and governmental system that can't fix it. So they have to change dramatically. What they announced yesterday is not dramatic enough. It's not going to fix it. So they've got some big decisions to make over there.
But Secretary Rubio, do you support, and I know this is up to Congress, but do you support easing the trade embargo if you get more cooperation from Havana?
Well, I'm not going to discuss what we would talk about or not. Suffice it to say that the embargo is tied to political change on the island. The embargo is codified. And but the bottom line is their economy doesn't work. It's a non-functional economy. It's an economy that has survived. That revolution, it's not even a revolution, that thing they have has survived on subsidies from the Soviet Union and now from Venezuela. They don't get subsidies anymore, so they're in a lot of trouble. And the people in charge, they don't know how to fix it. So they have to get new people in charge. That's what has to happen.
And the relationship we have with Venezuela has been, I think you could almost say, incredible. It's been really good. It's been good for Venezuela, and it's been good for us. And I congratulate the Venezuelan baseball team because that was a big win. And I guess they play another game tonight in the finals. And I said a lot of good things have happened to Venezuela lately. This is the first time they've ever been in the finals, and it was pretty exciting. Yeah.
Iran is just a military operation to you, but do you not have a day after plan? And if so, what is your day after plan for Iran?
Well, we have a lot. Look, if we left right now, it would take 10 years for them to rebuild. But we're not ready to leave yet. But we'll be leaving in the near future. We'll be leaving in pretty much the very near future. But right now, they've been decimated from every standpoint. And again, we've had great support from countries in the Middle East, great support. But we've had no support from, essentially, no support from NATO.
What about your relationship with London? Has it been damaged by the fact that Keir Starmer isn't supporting you in this war? And has your opinion of Keir Starmer changed because of this?
Well, he hasn't been supportive, and I think it's a big mistake. You know, they make a lot of money on trade with the United States. I went out of my way, as you know, they couldn't make a deal with Biden because they had no real administration to make a deal, Biden. But we made a deal. We made a good deal for them, and frankly, probably wasn't appreciated. I do look forward to seeing the king. He's going to be coming, as you know, very shortly. But But no, I was disappointed because Keir was willing to send 2 aircraft carriers after we won, because essentially there's no threat for the aircraft carriers right now. And I said, no, we want things sent before the war, not after the war is won. So, yeah, I'm disappointed with Keir. I like him. I think he's a nice man, but I'm disappointed.
Mr. President, you said Joe Kent.
You see that man right there? You know who that is?
Churchill.
That's the late, great Winston Churchill. And Barack Hussein Obama did not want his bust in this office. Did you know that? And Barack Hussein Obama sent that bust back to England. They didn't want it. And when I came in, I was asked if I wanted it. I said, absolutely, I want it. And I put it right there, Winston Churchill. And, you know, unfortunately, Keir is not Winston Churchill.
Mr. President, on Joe Kent. Mr. President.
Mr. President, when will it be safe again? When will it be safe again?
Just could I
hold it? Okay, sure, absolutely.
Just make a number of points. First of all, I think, notwithstanding what has happened, the transatlantic relationship between Europe and the US is very, very important on a number of fronts. And I think we've had issues over the last year or two, but we settled them. And I think many of these leaders engaged with you, particularly on trade initially. Remember all the fuss last year, but we got a landing zone between Europe and the US, and I think we can get a landing zone again. And I think I just met with Mr. Keir Starmer last week. The British-Irish relationship is a very important one. Churchill was a great wartime leader, although in Ireland there was kind of a different perspective in terms of during our own war of independence and so on. He created his own bit of difficulties for us. But that said, he was a great wartime leader. Keir Starmer has done a lot to reset the Irish-British relationship. I just want to put that on the record. But I do believe that he's a very earnest, sound person who I think you have a capacity to get on with. You've gone on with him before. And you've gone on with other European leaders as well. And I think you have that capacity again. And I think everyone exists. I mean, you cannot have a rogue state with a nuclear weapon or the capacity for a nuclear weapon. Iran was the sponsor of terrorism. We sanctioned Iran. All European countries did, as a and the IRGC in particular is a terrorist organization. They sponsored Hamas. They sponsored Hezbollah, the Houthis. They created mayhem, a most malign force in the Middle East. The Irish position has always been, ultimately, can we resolve this? Can we get peace? And obviously there's preconditions before you get to that situation. We had our own conflict, which went on for 30 years, and we learned a lot from that in terms of how to try and bring about peace. And I think I've listened to you in terms of, you're correct, I mean, our hearts go to the Iranian people who have been repressed and suppressed for so many years, culminating in that savage murder of thousands and thousands of Iranians some months ago. No one was in a position to do anything about that. I think, and likewise with Ukraine, I mean, the Russians did invade Ukraine, have attacked civilian infrastructure and so on like that. And for the people of Ukraine who just want peace and an opportunity to live, I think we have to continue to work to see, can we bring peace, different regime to Iran where Iranians can live in peace again, and the people in the Middle East can live in peace. And you're doing your bit there in terms of the work in Gaza and so on like that. And I think that's what we want, is a peaceful resolution of conflict. That's where we come from as a small nation. Right. We've been peacekeepers all our lives, and we're the longest-serving nation in terms of provision of peacekeeping forces in the world, as it turns out. But we think ultimately all conflicts come to an end, and I think we have to try and work towards that end, and I'm sure European leaders and the US administration will engage, and hopefully we can get a landing zone somewhere.
Well, I mean, the only thing, and I agree with everything you said, but we helped with Ukraine.
Yes.
And they don't help with Iran. And they all acknowledge that Iran can't have a nuclear weapon. You yourself say, these are horrendous people. These are the worst people, and going back to Hitler, right? Going back to Hitler, these are the worst people. That's a long time ago, and there's been nothing close. Every problem, so many deaths, 90% of the people that got blown up by landmines, they loved them. Soleimani, we killed him. If we didn't, it might be a different story, because he was a horrible person, but he was a very powerful person and leader and smart. But we killed him. If we didn't, I think you'd have it. I did. But I think we'd have maybe a different situation. It wouldn't have been so easy as it has been, because it has been very easy. You know, it's all of their military is out, but you can always have somebody drop a mine in the water. It's like terrorism.
Yep.
And then you have the people that own the billion-dollar ship saying, well, let's not move that ship yet because we want. So we thought that Europe would help that because they do have some minesweepers. But it's amazing that, you know, they all said, what a great job. They would call me congratulating us on the great job we did with respect to Iran, and we knocked the hell out of them. They're no longer the bully of the Middle East. They were known as the bully of the Middle East, and they're not the bully anymore. But you would have thought they would have said, we'd love to send a couple of minesweepers. It's not a big deal. It doesn't cost very much money. But they didn't do that. So, you know, I think it's very unfair to the United States. Not to me, but to the United States. Go ahead, please.
Keir Starmer isn't making...
She's a fantastic reporter, by the way. Go ahead.
The Prime Minister isn't making the case to the British public as to why he should be supporting you. Could you do that now, talk to the UK and to GB News viewers about why it's in their interest that we help you?
Well, because we have a tremendous long-term relationship with the UK. I mean, people would say it's the best. I don't want to get into that, but we've had, it was the longest, the oldest, should be the best. Always was the best until Keir came along, and now, and I like him. He's a nice man. He says everything beautiful. He's a very nice man with a beautiful family. Everything's perfect, but he doesn't produce. And I think it's very inexpensive. I just said, you don't have to send me aircraft carriers. Send me a couple of minesweepers. We don't need your aircraft carriers. But even the aircraft carriers, he would only send them after we essentially won. I mean, he's sending them when there are no planes left, when the missiles are down to 8%. They have like 8% of the missiles. The rest we demolish the missiles, and the factories, largely the factories are going even as we speak. They just hit another factory. They have a lot of missile factories. They have a lot of drone factories. And so he's, you know, wants to send them when we don't need them. But we'd like to have minesweepers, because just in case. We don't know that there are any mines down, because we wiped out, I think, 24. They actually have, think of this for a country. They have 24 boats that do nothing but put mines in the water. This doesn't sound like a great country. This doesn't sound like a friendly country. But we killed all of those boats. They're at the bottom of the sea. But so we don't even know if there are any mines there. But if there are, you know, we'd like to have a little help in finding them. Probably most importantly.
Would you like Mr. President? You have confidence in Keir Starmer. Would you prefer to deal?
Well, it's not for me. It's really for the people of the UK to have confidence. I've been very critical of Keir, and I did it in a friendly way. I said, if you don't change your energy thing and get away from windmills and go back to oil and gas, and you have something that's no other country has. Very few countries have anything like it, the North Sea. You have some of the greatest oil and oil deposits in the entire world, the North Sea. They don't use it. You buy a lot of your oil from Norway. You know where they get their oil? From the North Sea. And you pay a very big price. So why are you paying a lot of money? And I tell them, and you have the better part of the North Sea. So why aren't they taking the oil from the North Sea? Why are they buying oil from Norway? But they have windmills all over the country, destroying those gorgeous Scottish fields and those beautiful fields all over the windmills, which don't work. They're tremendously expensive. And the best testament to that is the windmills are made in China, but China doesn't use them. You know what China uses? Coal. They're building 58 coal-fired plants right now, and that's up to them. But these foolish countries that are buying windmills, putting them out of business, I'm proudly telling you that we're going to try and have no windmills built in the United States during my...
What about Ireland, Mr. President?
They're very bad. They're very bad environmentally. They kill the birds. They're unsightly. They make a lot of noise. And for some reason, the environmentalists love windmills. Okay?
Mr. President, on Joe Kent.
Mr. President, you say he's a very nice man.
I think he's a nice man. I think he's a nice man. but I disagree with him on two things, primarily. His immigration policy is a disaster, and his energy policy is a disaster. And they're about the biggest policies you can have. You've allowed millions and millions and millions of people to come into your country that shouldn't be there. And by the way, that's all over Europe. Europe is a different place. It's a different place. And you know, I originate, to put it nicely, many of us do, from Europe. I love Europe. I've spent a lot of time in Europe. It's a different place. Bad things have happened to Europe. Very bad things. And you better do something about immigration, and you better do something about energy, or you won't have a Europe.
What's your time frame, Mr. President, for when cargo ships can safely go through the Strait of Hormuz?
It won't be, I don't believe, too long. We're knocking the hell out of the coast. It's basically the coast and the water, and it won't be too long. And the Middle Eastern states, including Israel, by the way, who has been terrific, the Middle Eastern states have been helping us a lot.
Mr. President, I'm joking.
Mr. President, on fuel prices, what do you have to say to the people in Ireland who are paying sky-high prices because of your war in Iran?
Well, I think the people in Ireland are very happy that I'm getting rid of, I have a lot of friends from Ireland, they're very happy that I'm getting rid of a nuclear power, a nuclear terrorist, and as soon as that war's over, which will be soon, your prices are going to drop like a rock. You watch.
Mr.
President, what do you think about our president's comments that your actions in Iran is breaking international law?
Say it.
What do you think about our president's comments?
Can you speak? You're speaking right into your phone.
Mr. President, how do you respond to the increasing attacks by the Iraqi militia groups against the U.S. Embassy and consulate in the Kurdistan region?
You want to answer that?
Yeah.
Do you want to?
Yeah, well, Marco, obviously, Secretary of State, has control over the embassy. Look, there have been a lot of militia attacks against our base, or our embassy in Iran. I think Marco's done a good job of limiting the number of people who are at that embassy so we can provide essential functions, but also protect our people. But it goes to show there are a lot of terrorists in that region of the world, and we've got to eliminate them when we find them.
And you can't give them nuclear weapons. You can give them rifles, you can give them guns, you can't give them nuclear weapons. I think we agree very strongly.
Just on the immigration point.
Yes, excuse me.
Just on first of all, I would say Europe is still a very good place to live in.
Good.
Just to let you know.
I'm glad to hear that.
And our view is you have to have robust and fair rules around migration. But on the other hand, a lot of people, within the European Union, we have free mobility of people. And in Ireland, our population is growing, but in a very positive way. Our economy is going well because we're attracting a lot of people from Europe and beyond into work, legally and validly in our country. In fact, I'd love if we could develop a legal pathway between the US and Ireland into the future because of our history and so on like that, that we could have a legal pathway because no one is in favor of illegal migration or and so forth. So you have to have robust rules for that. But fundamentally, I think sometimes Europe gets characterized wrongly in terms of it being overrun or whatever like that. It's much more robust now. There's much more stronger mechanism in place to facilitate legal migration. I think it's important that understanding is there. We need more economic growth in Europe. It doesn't have the same focus on innovation as you do here in the US. We discussed that earlier with the Vice President in terms of technology, in terms of AI. We need to pivot more to innovation as opposed to regulation. I think investing in people, and that's the key to, I think, our collective future. But we do take learn lessons.
Mr. President, the Irish President has said that your war against Iran is illegal. It's an attack on international law.
Who said that?
The Irish President.
Look, he's lucky I exist. That's all I can say. Because if you're going to allow countries that are sick and demented, and they are demented, to have nuclear weapons, everybody in the whole world should be very thankful. And I'm disappointed in NATO, very disappointed. I'm disappointed in a couple of other countries too. But they should be very thankful that this group of people feels the way we do. because if a country like Iran was allowed to have the power of a nuclear weapon, if we didn't stop them, I stopped them twice. I stopped them my first term when I terminated the Iran nuclear deal, which was Barack Obama's deal. It was one of maybe the worst deal I've ever seen. It gave everything to Iran, including billions of dollars in green cash. I don't mean cash. I mean green cash flown over by airplanes. I can't to this day believe that was allowed to happen. And come to think of it, it would be a good thing for somebody to look at. Does the president have the power to hand hundreds of millions of dollars of cash to terrorists? But it began with that, and I terminated that deal. If I didn't terminate that deal, we might not be here right now. If I didn't terminate that deal, unbelievable nuclear holocaust would have taken place. And then I did it a second time when we hit them with the B-2 bombers, and we totally obliterated their potential nuclear weapon that they would have had in less than 1 month. They think 2 weeks, but in less than 1 month. And it would have been, I believe it would have been a much different world than it is right now. We have to go. We're going to a lunch, so maybe we'll take one more nice question.
Can I ask you how you're dealing with your legal case against the BBC and their fake news documentary?
Well, the BBC was incredible. What they did is they had me speaking something I never said. And I've never seen anything quite like it. You know, CBS had that. We had the situation on 60 Minutes, and not the current owners, the past owners. The current owners, I think, are good, Ellison. But BBC took it a step further. They actually they put words in my mouth, and I said some pretty bad things. And I didn't say them. It was AI generated. And I said, I never said that. In fact, some of my people said, wow, that was pretty bad stuff you said. I said, what did I say? You know, I'm pretty good at this stuff. I mean, if you can go through years of these press conferences and you're a popular president of the United States that won in a landslide, that won all 7 swing states, that got record numbers of votes, I mean, so I guess I'm okay at this stuff. I said, I never said that. And then we found out it was AI generated. And they admit they made a mistake. BBC. But I watched them this morning for some crazy reason, and it was so inaccurate. Their reporting of the war was unbelievable. We have decimated that country. And if you watch BBC, it's almost like they're fighting us to a draw. They're not fighting us to a draw. It was very inaccurate news. It was fake news. So I'm very proud of the term fake news because it was my term. I came up with it, but it's no longer accurate. It really is. It's corrupt, fraudulent news. It really is. It's fraudulent. It's not just fake. It's beyond fake. It's really criminal what they do. But I watched BBC this morning, and I don't know much about BBC other than what took place, because people were calling me saying, that was a terrible thing you said. I said, what did I say? And I said, I never said that. And when we checked it, do you agree? They agree. It was somehow generated, I guess, by AI or something, with me saying unbelievable. So we brought a lawsuit against them. They admit they're guilty, but we'll see how it comes out. Thank you. I like that question. I like that question. Thank you very much. We'll see you later. Thank you very much.
All right, there you have it. Live from the White House in the Oval Office on St. Patrick's Day, the President and the Taoiseach live on Balance of Power. Thanks for being with us here on the Tuesday edition. I'm Joe Matthew in Washington. We're all matching today as the President makes news on this St. Patrick's Day 2026. Remarkable conversation there with the Taoiseach. By the way, the President's correct. They're on their way to lunch now up at the Capitol. This is what we do every year here, right? It's on the way to the Friends of Ireland luncheon up on Capitol Hill, which was set to begin about a half an hour ago. They'll end up coming back to the White House later for the presentation of the Shamrock Bowl. And as the media, as the reporters are led outside of the Oval Office, we'll just walk through and unpack a little bit of what we heard, because much of this conversation had to do with Iran, and that should come as no surprise. We didn't think we'd be talking about shamrocks the whole time. The president saying, we have had great support from the Middle East, Qatar, the UAE, Saudi, Bahrain, all great and terrific, referring to this coalition, the international coalition he has called for to reopen the Strait of Hormuz. NATO, not so much. The president says when they don't help us, it's certainly something we should think about and don't need Congress. When he was asked if there might be some punitive measure here for NATO countries that are not playing along. I have nothing currently in mind, the president said, but I'm not exactly thrilled. He said we've had great support again from countries in the Middle East, essentially no support from NATO. Toward the end there, he started talking about the Iran nuclear deal that, of course, predates his first administration. It goes back to the Obama era. If I didn't terminate that deal, he said, an unbelievable nuclear holocaust would have taken place. He said we wouldn't be here right now. And with regard to one of the biggest stories of the day here in the last 24 hours at least, the postponing, if not canceling, of the meeting with President Xi in April, he says we're resetting the meeting, and it looks like it'll take place in about 5 weeks, 5 or 6, as he was yelling over reporters at that point. And with regard to Cuba, he says we'll be doing something with Cuba very soon, having said earlier, again, just yesterday, that he is going to have the honor of taking over the island nation. Now, as we let the dust settle on that conversation, I want to bring in Wendy Benjaminson, and we'll check the markets for you in a moment with Charlie Pellet. It's been, I'll say risk on, but pretty modest gains. Right now, the S&P 500 is up 23 points. Wendy is Bloomberg's senior editor for news here in Washington and joins us now, having listened to and watched that along with all of us. Happy St. Patrick's Day. Wendy, it's interesting because this is part of the annual rite. You know, you pardon the turkeys on Thanksgiving, Absolutely. You have the Taoiseach on St. Patrick's Day. That got pretty heady for a while there, and a lot of reporters, including some from Ireland, asking some pretty challenging questions. This is a president not happy with Europe right now, is he?
Not at all. But this was a bet of his own making. You know, when previous presidents have gotten countries, Europe, NATO, other countries, to come along with us on whatever misadventures the administration of that time wants to do, you know, they give the allies a heads up that this is going to happen. They go before the United Nations and they make a speech about how important this is. They generate popular support at home. Trump did none of that. He built up a fleet outside Iran and he started bombing it, catching our NATO allies unaware. So the fact that now there are missiles going every which way in the Middle East, it's expanding to our Gulf allies who aren't happy about this but have no choice but to help. And so the NATO allies are kind of like, yeah, no, we're good. We'll after the bombing stops, we'll be happy to help aid commerce through the strait, but we're not going to send our blood to this effort that you didn't ask us for in the first place.
He got on True Social right before we heard that conversation, Wendy, and I'm not going to read the whole thing. It's a long one, but he says the U.S. has been informed by most of our NATO allies, in quotes, that they don't want to get involved with our military operation against the terrorist regime of Iran in the Middle East. This despite the fact that almost every country strongly agreed with what we are doing, and that Iran cannot in any way, shape, or form be allowed to have a nuclear weapon. Is he right? Did they all agree with what we're doing?
We don't know. He said that many of them have called him and said it was a good thing. Some of them have expressed some lack of displeasure that the Ayatollah Khomeini is gone. This is, you know, no one's shedding a lot of tears for that unless Mojtaba Khomeini, the guy who's taking over, is worse. So there's, you know, we don't really, the only person telling us it's going well is Donald Trump, and we don't honestly know.
Well, he's calling them out. It's not just NATO. He says, likewise, Japan, Australia, or South Korea. Speaking as President of the United States, we do not need the help of anyone, in all caps, which is really something. And I guess, I mean, this is consistent. He said that yesterday. We've got the greatest military in the world. We don't need anybody. Here's how it culminated in the Oval Office just a moment ago, Wendy. And for those of you who are just joining us now, here's President Trump with the Taoiseach just now at the White House.
So I think NATO's making a very foolish mistake. And I've long said that, you know, I wonder whether or not NATO would ever be there for us. So this was a great test because we don't need them, but they should have been there. The other thing is, and I think, you know, very important, we didn't have to be there for Ukraine.
great test, he said, and we didn't have to be there for Ukraine. Do we connect the dots on those two?
He's certainly trying to. He's trying to say that Europe asked us, the U.S., to help with Ukraine, and we did, and now basically they owe the U.S. And need to get involved in this Middle East war. Not exactly what happened. I mean, the U.S. did, and he's right, the Biden administration was all in on helping Ukraine defeat a Russian invasion because, that's obviously in the interests of the world to do that. Europe did not help as much as Donald Trump expected them to help, and so he's mad about that. The one point he keeps forgetting is the one time that NATO's Article 5 that says that if one of us is attacked, all of us is attacked, and guarantees that. The one time it was invoked was in 9/11 when the United States was attacked by Osama bin Laden, and that's why the Allies rushed to our aid. But he keeps saying that NATO has never been there for the U.S., and that's just simply not true.
Enter Joe Kent. I'm kind of amazed that the president didn't have harsher words for Joe Kent. When he was asked about this a short time ago, he said he knew him, read his statement, always thought he was a nice guy, Wendy, but always thought he was weak on security. Who we're talking about here is the director of the National Counterterrorism Center, a security-related position, I think we can all admit. And he has left the building, taking to X, Wendy, to write, "I cannot in good conscience support the ongoing war in Iran. Iran posed no imminent threat to our nation, and it's clear that we started this war due to pressure from Israel and its powerful American lobby." How important is this first resignation in the administration following this war that is now 18 days old, Wendy?
Well, I think it's extremely significant in the sense, not that Joe Kent was, such an important individual that can't be replaced, but in the sense that, for one thing, as Trump has been doing throughout this, we obliterated their nuclear program, but doesn't explain then why we need to bomb them now. He says Joe Kent was weak on security, but Joe Kent was hired in the first term and came back in the second term. So I don't know why he would have kept him on if he was so weak on security. But the most important part, I think, here is that Joe Kent said what sources have been telling our colleagues all around Washington, and it's sort of the quiet part out loud, that the United States, was doing Israel's bidding, that Israel convinced, who has always felt an existential threat from Iran, that they felt that they needed the U.S. to help them on this and to give them cover, and they asked Donald Trump to do it, and he did it. And I think that's the importance of Joe Kent's resignation letter. Not only, it also shows some real cracks in his own administration about whether this war is a good idea.
Well, it's interesting. We're just looking here. Producer Matt just grabbed the Truth Post from the day that Joe Kent was announced by the president. This is February 3rd, 2025. It is my pleasure to nominate Joe Kent as the director of the National Counterterrorism Center. As a soldier, Green Beret, and CIA officer, Joe has hunted down terrorists and criminals his entire life. Above all, Joe knows the terrible cost of terrorism, losing his wonderful wife Shannon, a great American hero who was killed in the fight against ISIS. Joe continues to honor her legacy. By staying in the fight, he will help keep America safe by eradicating all terrorism, from the jihadists around the world to the cartels in our backyard. This is the person he just described as weak on security. Wendy?
Yes, and not to mention Joe Kent was a Green Beret, and his wife was an intelligence official in Syria. So yeah, not exactly what he would call a MAGA, a woke leftist radical couple.
Correct. Boy, I'll tell you what. Wendy, thank you for helping us walk through this. I hope you have something green on there somewhere. Wendy Benjaminson with us live on Balance of Power, the St. Patrick's Day edition. Hey, Rick and Jeannie are with us, too. We're going to assemble our panel in just a moment. We're going to check in with Charlie, get an update on Wall Street. Top of the hour, same drill as ever. Now that we're through this deal in the Oval with the Taoiseach, we'll keep tabs on what he's doing on Capitol Hill, and we'll welcome our global television audience to the conversation at the top of the hour, 1 p.m. Eastern time. Right now, it's Wall Street. Let's check the markets with the aforementioned Charlie Pellet. He's at World Headquarters in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. A lot of green on the screen. Happy St. Patrick's Day, by the way. The Dow, the S&P, NASDAQ, all advancing right now. We do have West Texas Intermediate crude right around $95 a barrel, up 1.5%. Brent, 101.93. Barrel of Brent up by 1.7%. WTI, by the way, $94.97. So stocks are higher. This after oil eased from session highs, but does remain above levels that could stoke concerns about inflationary pressures as the war in Iran shows no signs of abating. Day 18 of the Iran war. S&P up 19, now up 0.3%. We do have the Dow up 96, up 0.2. NASDAQ Composite Index higher now by 82 points, up 0.4%. With the VIX at 22, the 10-year 4.19%. The 2-year, as Fed policymakers meet in Washington, 3.65%. Gold lower a little change, down 0.1% right now, holding above $5,000, 5,001 on gold. And again, crude West Texas Intermediate up 1.4%, 94.87 a barrel. So stocks are higher. Airline shares are also advancing. The executives say they are seeing some of the strongest booking trends in the industry's history as premium leisure and corporate travelers rush to buy tickets ahead of a likely surge in prices because of fuel costs. Benedict Camel is managing editor for space and aviation with Bloomberg News.
Where it might start hurting is more on the sort of economy-minded end of the spectrum. So people who book cheap tickets, who are cost-sensitive, and the airlines that cater to these kinds of people. So the JetBlues of this world, the Spirits of this world, that's where you might see more of a fallout.
Bloomberg's Benedict Camel, but today the full-service carriers of this world, they are advancing. Delta, case in point, surging 4.6%. American Airlines up 2.8%. And Southwest Airlines, among some of the discount names, up by 1.5%. So recapping here, the Dow, the S&P, NASDAQ, they are all advancing. S&P up 19, gain right now of 0.3%. West Texas Intermediate crude back above 95.02 a barrel. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we do thank you. Charlie Pellet's live in New York, where they take St. Patrick's Day seriously, and we'll have more from Charlie coming up at the top of the hour. Remember, St. Patty's with a D, right? St. Padraig, it's a D. Padraig has a D, and it's the Taoiseach. Everybody keeps asking me, what is this, Taoiseach, Tupac? It's the Taoiseach. That's the Prime Minister of Ireland. And he's in town here. We do this every year. He'll be back at the White House later on after the Friends of Ireland get together there for the big luncheon up in the Capitol. Then they'll do the presentation of the Shamrock. That'll happen during the late edition of Balance of Power. The Shamrock Bowl. Did you see the fresh shamrock he had going there? What do we call that? A corsage? It was like a shamrock corsage. Chris Wright had one as well, sitting on the couch, looking pretty sharp, I have to say. Wish I had one. Now, we do want to bring the panel in here to talk about a lot of stuff because we just made some news in that conversation. The President of the United States, first of all, taking to Truth Social to announce, and we just got to this with Wendy, that most of our NATO allies, as he says, are not interested in getting involved in securing the Strait. He says the Middle East has been far more helpful. He just said this in the Oval. We've had great support from countries in the Middle East, and he pointed them out. Qatar, UAE, Saudi, Bahrain, he says, all great and terrific. Essentially, no support from NATO. And if he had not terminated the Iran nuclear deal, he says, we would not be here today. An unbelievable, this is a quote, nuclear holocaust would have taken place. But we meet here as well at a time that the administration is seeing its first resignation since the start of this war, now 18 days in. And it's pretty remarkable that Joe Kent is making his way out of the building. We'll get to all of this with Rick and Jeannie. We want to stick with oil prices right now because I haven't talked to Mike McGlone all week. And we are looking at $101 a barrel for Brent, crude oil, some folks are celebrating, is not in triple-digit territory, but we are higher right now. We're up almost 2% to $95 a barrel. Miami Mike is with us right now from our Miami Bureau. Bloomberg Intelligence Senior Commodity Strategist. Do we just kind of hover around these levels, Mike, till the straits reopen? A lot of folks are making a big deal about some of the derivatives today. Diesel at $5 a gallon. How concerned are you?
Very concerned about the demand destruction, Joe. If this continues, this is a global energy crisis, potential recessionary trajectory. And remember, gold last year predicted this. I mean, it rallied at its best year since 1979, so it's actually coming down a little bit. But to me, that's the current trajectory. We need a swift resolution of the disruptions in the strait as soon as possible. But every day that goes by, this is a potential recessionary trajectory. But we'll also see markets already looking ahead. The futures curves, not just in crude oil, but in natural gas and corn and soybeans and wheat, they're all expecting this pump in prices to bring on that supply, producers to hedge, and prices to head lower, most notably by midterms.
Interesting. So a lot of headlines today on diesel, as I mentioned, $5 a gallon for the first time or above since December of 2022. And then you've got jet fuel. The CEO at Delta today pointing to this massive uptick. He says the price has basically doubled in the last 18 days since the start of this operation. You point directly to demand destruction, suggesting that high prices are the cure for high prices?
Absolutely. Well, crude was on a low price cure trajectory, and this pump is a bit of a gift for the oil patch, because they know it always happens. You get low after high, and it gave them a chance to delay that a little bit. But you mentioned diesel. Diesel is the grease of the global economy, and spiking to $5 in the U.S. is really bad, and the U.S. is the shining star of demand of global economic growth and supply. It's the rest of the world that's really having big problems, most notably Europe and even China. Most of that crude goes to China.
Yep, it really is an economic indicator here, right? Or I mean, when you're talking about diesel, this is what drives our economy. To your point here, all the talk about this international coalition, Mike, are investors, are oil traders? I shouldn't even use the word investors. Are oil traders paying attention to this? The fact that NATO nations are not with us, or does that not change the dynamic when it comes to reopening the strait?
Oh, absolutely. But reopening the strait is the 10. Everything else is a 3 or lower. Must reopen, how they do it. If it's a ceasefire, that's probably a failure on the U.S. military. Right now, the goal seems to just be beating them as hard as they can until they no longer have offensive capabilities. And that's what Trump seems to be quite enthusiastic about. But so far, this is a bit of a failure of the invasion. What I'm hearing in oil traders is they're saying is, you broke it, you fix it.
The old Pottery Barn. 68 degrees, I see, with a high of 70 today in Miami. Mike, I hope it's going great down there, and thank you for helping us walk through it. Quick breaker on the terminal before we go to the panel. This is pretty important. Arizona is charging Kalshi with operating an illegal gambling business. Criminal charges here, guys. A significant escalation in some of the legal battles that you've seen states pose against Kalshi. And the prediction markets here. DraftKings, look at that, James. Yeah. DraftKings up 1.5%. Don't tell Derek Stevens about this yet. It's still coming to form. But this is just breaking right now. Kalshi, Arizona, criminal charges in illegal gambling business. As we assemble our political panel to talk more about the business of war. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is a Republican strategist and partner at Stone Court Capital. Rick, what do you make of what we just heard from the President of the United States? We can chew on diesel all day long here and some of the other side effects, but the fact of the matter is we are not getting the help that was requested when it comes to reopening the strait. How important is that for you, or is the President right? We don't need him anyway.
Well, I mean, the president's made a point all along his presidency that, he has this go-alone strategy and that, the might of the U.S. is enough to satisfy any needs that he might have on a security basis. And there is an argument that the attacks in Iran have been extremely successful as it relates to, basically the U.S. and Israel working together to accomplish their immediate security goals of basically, disempowering Iran's conventional weapon systems. But obviously, I think the biggest issue that now he's trying to deal with is this idea that he can't get oil out of the Strait of Hormuz. And for that, he wants to spread the risk. And it is a legitimate argument to say that other countries are the ones reaping the benefits of the Strait of Hormuz, not the U.S. And but like he has set us up as the police in the region, and he didn't invite the rest of the coalition of the unwilling to participate with him. And so now doing it after the fact, really confuses the message. And I would say the most confusing message in all of this is asking China to somehow come in and protect these fleet of tankers from their ally, Iran. What are they going to do? They're going to shell Iran? They're partners. And so there are a lot of people in the national security field scratching their head wondering how in the world do we think this is going to happen? Because, by the way, Iran is getting oil from Iranian tankers that are making its way through the Strait of Hormuz. So they don't have the same problem the rest of the world has.
Wow. Becca Wasser at Bloomberg Economics, Jeannie, crunched some numbers. Their analysis has been fantastic in the last 18 days. Drone and missile launches by Iran are down 88% since the start of the conflict. Iran has fired at least 3,678 projectiles at the Gulf states since the start of the war. 864 ballistic missiles, 38 cruise missiles, more than 2,700 drones. They have retained the capacity to fire a couple of ballistic missiles, 5, say, every day in the past week. But clearly their ability to wage war has been extremely diminished. Why wouldn't our allies from NATO join us at this time of what appears to be a lower level of risk?
So happy St. Patrick's Day. I hope you have a Guinness waiting for you somewhere. You know, Joe, the Irish have a saying, build the life raft before your boat is sinking. It's not really an Irish saying, but we'll say that on St. Patrick's Day. And Donald Trump hasn't done that in this case. What has he done? He has attacked, he has tariffed, he has threatened, he has said he would take over from Denmark, he would take over Greenland. Even this morning before this press conference, he was attacking the allies in NATO. That is no way to build consensus. That is no way to attract alliances. So that is why they won't jump in. And, you know, we have what? A new Pottery Barn rule. We break it. Your allies who you've been attacking are supposed to clean up the mess. That's not how life works when you're Irish, Joe. So this isn't going well. And, you know, for all the diminished capacity of Iran, let's not forget, Iran in this war has one goal, and that is to survive. And according to our own intelligence estimates out this morning, they have not only done that, what Donald Trump has successfully done is created an Iranian regime which is likely to remain in power for the unforeseen future, which is more hard-lined than ever and more committed than ever to, guess what? Rebuilding its nuclear, ballistic, and the rest of its programs. So he hasn't had success. The military has had success, but you don't win wars just on hard military operations. You've got to be strategic, and he has not been that.
Rick, we have a first resignation. The president was really pretty blasé when this came up. He didn't attack Joe Kent at all. Said, in fact, I read the statement. I don't think he's great on security. This is the director of the National Counterterrorism Center. And I'm sure you saw the statement on X. I cannot in good conscience support the ongoing war in Iran, which he says posed no imminent threat to our nation. Clearly, we started the war due to pressure from Israel and its powerful American lobby. Is this a significant moment for you to see this conversation go in the public sphere like this?
Yeah, but probably for a different reason than most people are looking at this. You know, Joe Kent was criticized by a lot of Republican lawmakers for not having the experience that you needed to have in order to be at the helm of the NCTC. And you know, some of his views in the past, including shutting down the FBI, were very much questionable. And I see this really as a political dynamic. We have been talking in the past about sort of the splinters within the MAGA movement. And I think this is more representative of a splinter in the MAGA movement than any kind of internal administration debate, because, you know, we know that the MAGA movement, in many ways, generated through the America First ideology, were absolutely against these kinds of incursions into other countries. And I think this is one of the highest profile departures of this policy that is really fueled by political ideology and not a dispute within the administration about counterterrorism.
He was a top aide to Tulsi Gabbard, Jeannie. To Rick's point, we've got about a minute left. How significant is this for MAGA?
It's very significant. And I think we should also underscore he also has been charged with having ties to white nationalists in the past, something he has pushed back on. But I do think the big issue here is about a split in the Republican coalition. As unpopular as this war is, Donald Trump's poll numbers are sustaining. What could really drag down Republicans as they go into 26 is a split in MAGA. And his resignation today is a signal that the frustration of Joe Rogan and others over endless wars after being sold something else in the campaign, that is having an impact. And Kent's resignation underscores that.
Wow. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis with us on the Shamrock Edition. You both look good. Thank God I wore the green tie here on the program. We'll have much more with our panel in our second hour. Kaylee's on the way in, and so too is our global television audience. Thanks for being here on the fastest show in politics. We'll keep our eyes on the Hill for the Friends of Ireland luncheon.
Washington, D.C. This is Balance of Power with Joe Matthew and Kaylee Lines.
It's the first resignation since the start of the war. Welcome to the Tuesday edition as the administration's head of counterterrorism quits over the conflict with Iran, saying there was no imminent threat against the U.S. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, the president was just asked about this by reporters in the Oval Office. He didn't have much to say, did he?
No, he suggested that he always thought he was a nice guy. Granted, others within the White House have pushed back more heavily against the statements of Joe Kent, suggesting he was making false claims about Iran and the operations there. But it is worth noting that this really has highlighted a rift between different members of the Republican Party itself, specifically the MAGA isolationist ring versus those who are more supportive of our operations in Iran. You know who was very quick to herald what Joe Kent was saying today? Former Congresswoman Marjorie Taylor Greene.
How about that? Really interesting, and they might have a lot in common at this very moment. The president downplaying this, though, as we move into day 18 and the Strait of Hormuz remains closed. Kaylee, the president on Truth Social and in person with the Taoiseach, who's in town today, speaking with reporters in the Oval Office, just castigating our NATO allies, criticizing Republican, or I should say European nations for not helping us out here, but suggesting that the Middle East may be part of an international coalition. We just haven't seen that unveiled yet.
Yeah, and when it comes to the criticism of our NATO allies, he also repeatedly, after saying the same yesterday, said that we do not need them for these operations in the Strait of Hormuz. And if we don't need anybody, I guess, Joe, it begs the question, why is the Strait of Hormuz not open currently for transit? It's a question we'll pose to the former chair of the House Foreign Affairs Committee, Michael McCall.
Yeah, I'll be deeply curious to hear what Mr. McCall has in mind, and we'll bring it to the White House for an update from Tyler Kendall. We should note, not only is the lawn green today, but so too is the dyed fountain on the north lawn of the White House. So we're in the spirit. We're all on brand today here in Washington.
Yeah, I bet they are in New York as well. So let's check there now as we turn to the markets with Charlie Pellet.
Right,
Charlie, happy St. Patrick's Day.
Thank you very much. Indeed, we do have the stock market on brand today with the Dow, the S&P, NASDAQ all solidly in the green. Big St. Patrick's Day march here in New York. We got the S&P right now up 23, higher by about 0.3%. Dow Industrials up 128. That is a gain of 0.3%. NASDAQ up 90 right now, higher by 0.4%. And a VIX holding above 22 now. The 10-year, 4.19% with the 2-year, ahead of tomorrow's Fed decision, 3.65%. Gold, lower little change, but still above 5,000, 5,003 on the precious metal, down now by about 0.1%. Everybody keeping an eye on West Texas Intermediate crude, 95.21 a barrel, up now by 1.8%. Brent, the global benchmark, 102.22, barrel of Brent up by 2%. And diesel above $5 a gallon. Our Mike McGlone saying not good for the economy as it pushes up supply chain costs. So again, the Dow, the S&P, NASDAQ all higher. We are seeing oil stocks, the oil majors advancing today along with the price of crude. ExxonMobil up right now by 1.8%. Chevron up 1.4%. ConocoPhillips up by 1.6%. Again, recapping here, S&P up 24, up by about 0.4%. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, as we've told you, it is a St. Patrick's Day celebratory day with a number of events held at the White House, including a bilateral meeting between President Donald Trump and the Irish Taoiseach. And of course, that meeting in the Oval Office earlier was open to the press, in which the president and the Taoiseach, for that matter, fielded a number of questions from reporters. And in the presence of a European leader, President Trump had many critical words for Europe itself, specifically our NATO allies, who have so far not answered his call to help reopen the Strait of Hormuz. Here's a taste of the rhetoric from President Trump.
So I think NATO's making a very foolish mistake. And I've long said that, I wonder whether or not NATO would ever be there for us. So this was a great test, because we don't need them, but they should have been there. The other thing is, and I think, very important, we didn't have to be there for Ukraine.
Saying we didn't have to be there for Ukraine, and essentially, I guess, connecting the dots between this conflict and that one. Let's see what Tyler is hearing. We go to the White House now. Bloomberg's Washington correspondent Tyler Kendall is on the North Lawn, where, yes, the fountain is dyed fluorescent green, Tyler. It's not quite in your shot there. It matches the lawn. Tell us what the president is talking about here and whether there'll be some sort of punitive action that follows this for our NATO allies.
Well, President Trump, Joe, at the moment says that he doesn't have any punitive action in mind, but I will say that our own analysts at Bloomberg Economics have pointed out that our European allies in particular are in this tough spot because they are constrained not just by politics, but also by capabilities. But there is this growing fear among allies that the White House could disengage from the war in Ukraine if they don't engage when it comes to the conflict in Iran. And President Trump there bringing up Ukraine almost unprompted when he is talking about what has been at this point a long strained relationship between the U.S. and traditional allies, particularly around defense spending in the regions. And now it appears that President Trump is actually abandoning his call for our allies to surge resources to help secure the Strait of Hormuz, which is really what this comes down to, with him telling reporters just moments ago, quote, "We don't need too much help. We don't need any help at all, actually." Now, President Trump, of course, was addressing what has appeared to be wariness from our allies at best when it comes to his demand for them to send naval escorts to help secure the critical waterway. Take today, for example, we heard from the French President Macron confirming that his country will not send military assets to secure the strait, but that they stand ready at this point to help once the situation gets a little bit calmer. Because, Joe and Kaylee, we have now repeatedly heard from our allies that at this point they're not a party to this conflict, and that NATO is this defensive alliance. It is raising questions, though, after President Trump yesterday signaled that Secretary of State Marco Rubio could announce a coalition tasked with securing the strait. When asked directly which countries the U.S. is currently talking about with this, he sort of sidestepped the question, but did highlight bilateral ties between the U.S. and many Middle Eastern countries currently embroiled in the conflict.
All right, Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much. And we go to the other end of Pennsylvania now. Is joining us live from Capitol Hill is Congressman Michael McCaul of Texas, who, of course, is the chair emeritus of the House Foreign Affairs Committee. Congressman, welcome back to Bloomberg TV and radio. It's good to have you, sir. I would love to begin with your assessment as to whether or not you believe that we need allied help in the Middle East with the Strait of Hormuz right now, as the president contends we don't need anyone's help. If that is the case, why is the strait not open for transit?
Well, we can't do it alone, Kaylee. I was in the White House yesterday, but I think the president's point is we're always there for NATO. We're always there for our European allies, and they should be there in our time of need. But if I could take that further with your business audience, you know, the United States is a net gain producer of energy. It's Europe that needs this probably more than we do. Certainly China needs it a lot. I mean, their majority of their oil comes from Karg Island and from Iran. But the Hormuz Straits are being cleared currently by our military. The sea mines, the drones are really the biggest problem in the asymmetric warfare. But I think in terms of cost sharing, burden sharing in this conflict, you know, it seems to me our friends and allies ought to be a part of this operation.
You know, it's interesting. Mr. Chairman, welcome back. It's good to see you. You've been walking through modeling and possible scenarios like this, I know, for a lot of years. And there are a lot of questions about what the president should be focused on. As he just said, we're resetting the meeting with China. The word he used was reset. Looks like it'll take place in about 5 weeks. Do you worry that whether it's South America, the Caribbean, Greenland, now Iran, that the president isn't focused on the biggest threat to the United States, which is China?
I think, and there's a valid point there when it comes to our military resources. We are moving, like, for instance, our THAAD defense system out of South Korea, moving that to the Middle East. So I do have some concerns along those lines. On the other hand, I think if you look at it from a geopolitical standpoint, the pressure that's being put on the countries that are so dependent on Iranian oil, like China, when they see a free Venezuela and American companies controlling that, when they see Cuba on the horizon, when they see their adversary alliances, you know, China, Russia, Iran, North Korea, Venezuela, Cuba, all in this together, that is now being impacted by energy. And so I think going into these talks, to answer your question, Joe, is that, Condoleezza Rice once told me, you want everybody to like you. They're not always going to do that. You want them to respect you. And if they don't respect you, you want them to fear you. That is something that President Trump carries very greatly into these talks. There's no question that the dictators in the world today, whether it be Putin or Chairman Xi or the Ayatollah, the new one now, have great fear about President Trump because he is unpredictable. He will negotiate, but if you don't negotiate in good faith, there will be consequences.
Well, let's talk about one of those dictators you just mentioned. For Vladimir Putin and for Russia, has President Trump actually handed you an incredible gift with the relief of sanctions and higher oil prices?
I disagree with that action. I personally, I have a sanctions bill ready to go with Lindsey Graham. Once we get the nod, that it's time to do it. This is a setback for that legislation because we've lifted sanctions on Russia. Why am I against that? For this point, primarily, Putin and Russia are providing the Iranian regime with military intelligence to take out American targets and kill Americans. Why in the world would we be rewarding that kind of behavior by lifting sanctions for a temporary decrease in gas prices? We can do that by other means. I think we need to put more pressure on Russia, not less. And these Shahed drones, by the way, that Iran have been threatening our American troops with, were basically given to Russia, have been co-produced in Russia now with the Iranians, and now are being used to kill Americans. So it just, who's your friend and who's your enemy? Russia is not our friend. They are an adversary. They always have been. And I don't think we ought to be letting up pressure on them right now.
To that end, do you worry that the president might condition our support for Ukraine based on the way NATO behaves with Iran?
To some extent, and let's not forget, Ukraine volunteered its expertise to deal with this asymmetric warfare with the drones. They have the best capability, in some respects better than we do. Think about this. We pay millions of dollars for an interceptor to take out a $2,000 drone. Ukraine, for 4 years now, have developed very innovative technology to counter these Shahed drones in a very effective but also very cost-effective way. I applaud Ukraine for helping the United States out, and I think the United States should reward that behavior, not punish that behavior.
Mr. Chairman, I'm sure you've seen the news today that Joe Kent has resigned as the head of counterterrorism at the DNI under Tulsi Gabbard. And in his resignation, he in part suggested that there was no imminent threat posed to the United States by Iran. I wonder if the briefings that you have received would dispute that, and what you make specifically of him pointing the finger at Israel, suggesting it was Israel that made President Trump take this action.
Well, I think this was a bad appointment, the National Counterterrorism Center. I mean, if anyone should understand the threat level, the fact that they've tried to assassinate the president, Mike Pompeo's under indictment. I'm under indictment in Iran because of Soleimani. There are sleeper cells here. I think he was part of this wing in my party that's isolationist, that's becoming increasingly sort of anti-Israel, if you will. And I disagree with it. And I'm frankly, it's time for a new leader at NCTC, and I look forward to that. So, I disagree with his assertions. I think the threat level, given the conflict in Iran right now, is on high alert, as you've seen demonstrated with the last 4 attacks, one in my hometown of Austin, one with a Boston bombing type style attempt in New York, Virginia, in a classroom, and then in a synagogue. And I think you're going to see more of these. So for the guy who's supposed to be connecting all the dots to say that there was no imminent threat, I would respond to him, there's been an imminent threat since 1979. when the Ayatollah took over Iran, and in a dark veil of terror descended on the Middle East, spreading terror through its proxies for almost 50 years. I think it's high time that I applaud the president for this very difficult decision, because no other president's done it since President Trump.
Chair McCall, we've got to ask you about Cuba while we have you. And our remaining question, there's a nationwide blackout and it looks like a regime that's about to fall. The president says, "I do believe I will be having the honor of taking Cuba." That's a direct quote. "I think I can do anything I want with it." As remarkable as that rhetoric is, what should he do with it?
Well, the president always speaks in very bold, terms, but I think what he's saying is there are winds of change in the air. There are winds of freedom. After Venezuela fell, the people in Iran rose up to the Ayatollah, and the people in Cuba have attacked the Communist Party's headquarters in Cuba. We have another opportunity, I think, with Cuba for freedom, and democracy that we haven't seen in a long time. John Kennedy had the Bay of Pigs operation that failed miserably. I don't see a military-style invasion, but rather, as we talked about, the global markets of energy. Cuba now has been cut off of their energy supply from Venezuela and Mexico, and now, importantly, Iran. So their economy now, I believe, is going to be decimated, and will provide the ingredients that are going to be ripe for a revolution and an overthrow of that communist dictatorship. That could be another yet hugely profound and historic geopolitical moment.
Wow. Really important conversation with Michael McCall, Congressman, of course, Republican from Texas, but also Chair Emeritus of the House Foreign Affairs Committee. Mr. Chair, thank you so much. Really interesting, Kayleigh, what we learned there. We want to play this to the panel now. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are back with us. Rick is our Republican strategist partner at Stone Court Capital. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, and again, a Bloomberg Politics contributor. Rick, what did you think about that? I want to talk about Iran, but I have to ask you about what the chair just said about Cuba. Can we do better than the Bay of Pigs this time, Rick?
Yeah, well, it's nice to see someone on Capitol Hill giving us a little straight talk about these issues that you just fired off at him. I thought it was a terrific interview. Look, I mean, Cuba's economy has been decimated for decades. And what we have done by cutting off the supply of oil from these competitors in the region is just to put it over the brink. The reality is it was an unsustainable political system for a long, long time, and it's now collapsing under its own weight. My hope is that exactly what Congressman McCall said. The people of Cuba say we've had enough. They've been protests in the past and have been put down by military strong-arming, and it's about time that all that becomes a reckoning. I actually applaud Donald Trump's efforts to try and get the current government to step down. A bloodless coup, in essence, would be probably the best thing that could happen for the Cuban people.
All right, Rick Davis and Jeannie Shanzano are going to be sticking with us. We'll hear from Jeannie in just a moment as we continue on here on Balance of Power, focusing not just on Cuba, but of course the ongoing conflict with Iran now on day 18. We'll have more on that up ahead when Ilan Goldenberg, the Senior Vice President and Chief Policy Officer at J Street, joins us as to where this conflict goes next. Keeping in mind, President Trump did say at the White House that we're not ready to get out yet, but he suggested getting out could be soon. I guess we'll see whether or not that is the case. So stick with us here on Bloomberg TV and radio.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that the state of Arizona has filed criminal charges against closely held Kalshi for operating an illegal gambling business in the state. Now, this marks a significant escalation in the legal battles between Kalshi and several states that have accused the prediction market exchange of circumventing state gambling laws. Stocks are higher. Wall Street staging a cautious advance. Stocks are rising after oil eased from session highs. However, oil is now on the move at $96.01 a barrel. Last update, we had oil right around $95 a barrel, so we've seen a dollar increase since our last report. Right now, WTI up 2.7%. Barrel of Brent above 103, up now by 3%. Bottom line, though, stocks do remain higher. The Dow, the S&P, NASDAQ, all in the green. S&P up 24, up by 0.4%. The Dow right now up 0.3. NASDAQ higher by 0.4, with a VIX at 22. The 10-year, 4.19%. The 2-year, ahead of tomorrow's Fed decision, 3.66%. Gold flat on the day at $5,005 the ounce, and West Texas Intermediate crude again, 96 a barrel, up by 2.6%. Kraft Heinz is rolling out a series of healthier products to bolster some of its lagging brands. Kraft Heinz shares up now by 0.5%. That word from Kraft CEO speaking with Bloomberg. Qualcomm plans to buy back another 20 billion of its shares. It's also raising its quarterly cash dividend. Qualcomm up today by 1.9%. Recapping, stocks higher. S&P up 0.4%. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Checking on the markets for us, and of course checking on oil as we see Brent crude above triple digits, above $100 a barrel. Again, could close at that level for the 4th day in a row. We haven't seen a streak like that in some time, as we consider that the Strait of Hormuz is still effectively shut to transit, including for energy flows, despite the efforts of President Trump to try to get allies and even some adversaries alike on side to build a coalition to reopen the Strait of Hormuz. He obviously expressed great displeasure both yesterday and today with NATO allies specifically who have not agreed to do so. And as we consider the situation in the Strait, in this war with Iran more broadly, as we are now on day 18, we turn to Elon Goldenberg, who is Senior Vice President and Chief Policy Officer at J Street. He also served as an advisor, a special advisor to Vice President Kamala Harris on the Middle East in the early months of the war between Israel and Gaza and the aftermath of October 7th. Welcome, Elon, to Bloomberg TV and radio. It's great to have you. And I was struck yesterday specifically by a post on X that you made, basically with your observations of this war now nearly 3 weeks in, including your suggestion that the options for ending it are now all bad. But I was especially struck with the fact that you years ago convened a group of, and this is, I'm using your words here, security, energy, and economic experts to walk through the scenarios for a U.S.-Iran war and the implications for global oil prices. You said what we're seeing now was considered one of the least likely but worst outcomes. Do you think this administration was prepared for it, and what do they do now?
Yeah, I don't think they were, and thanks for having me. The scenario that we ran looked at kind of small-level war, mid-level war, or something really significant, and the conclusion was only when you really threaten the Iranian regime with regime change and really make it existential for them are they going to start doing things like shutting down the Strait of Hormuz. They want a way out of it. They didn't really want a direct fight with the United States because we are much bigger. We are much stronger. At the end of the day, things will be worse off for them than they are for us. But if you push them into a corner and give them no options, this is where they go. And the challenge we have specifically with the Strait of Hormuz is it's a very small area right next to Iran. So it's very easy for them to disrupt it. All they have to do to successfully disrupt shipping is have a small boat go in there every once in a while, drop a mine, fly a UAV in and hit a ship. All you need is a couple of ships to explode, and suddenly nobody is pushing anything through the strait, and you're talking about millions of barrels of oil who aren't getting through. I actually think the one thing about this scenario that nobody really expected is, one of the other reasons people thought it was unlikely Iran would close the strait is that's how Iran gets all of its oil out. But what's been kind of crazy about this scenario and people didn't anticipate is they're still pushing their oil out. They're just not letting anybody else push their oil through.
That's right. We see that they have, in fact, been doing a little traffic control in the strait. Elon, the head of the International Maritime Organization, Arsenio Dominguez, was speaking to the Financial Times, and said military assistance is not a long-term or sustainable solution to open up the strait. Do you believe that diplomacy is the only way to keep it open, or should our NATO allies be showing up to help us out?
I think at the end of the day, you're going to need a deal. You can have short-term military escorts going through the strait and get more ships in, but the problem is that takes a huge amount of ships to actually be able to do something like that for a sustained period of time. You know, our NATO allies don't have that many ships that are capable of doing that. We don't have that many ships that are capable of doing that because, you know, ships go out for a couple months at a time. On top of that, then they have to transport back home. Then you have to spend time at home. You're already seeing this if you've seen stories about the Ford, which is an aircraft carrier that's going to be at sea for almost a year now, and things are starting to break down. Ships need time at home. And so I think that becomes very expensive very fast when you're also looking at things like a scenario of China and Taiwan and trying to secure the Indo-Pacific, you know? So
yeah, it's it's incredible to see the military presence that we have built up, despite, of course, President Trump suggesting that he didn't want to start any new conflicts in the Middle East specifically. And it was for that reason, perhaps, or at least in part, that the director of the National Counterterrorism Center, Joe Kent, handed in his resignation today, saying he cannot support this war in Iran. But his reasoning here, and I'll quote him directly from his post on X, "Iran posed no imminent threat to our nation, and it is clear that we started this war due to pressure from Israel and its powerful American lobby." Now, Elon, obviously we have seen even the Secretary of State, Marco Rubio, suggest that it was clear to the U.S. that Israel was going to make a move on Iran and that the U.S. was going to have to participate. I wonder your assessment here of to what extent Israel did force the hand of the United States when President Trump has suggested it was he that forced Israel's.
No, the buck stops with the President of the United States. When the President of the United States puts American troops in harm's way, he is the one who's responsible for that. Netanyahu wanted to conduct strikes on Iran during Biden's presidency, during Obama's presidency, even like the previous Israeli prime minister pushed for it in Bush's presidency, and U.S. presidents said no, and Donald Trump said yes. So I think really the responsibility has to be ultimately on Donald Trump and the United States. And the other thing about this is I actually think specifically Joe Kent's statement in his letter actually started to border on kind of anti-Semitic tropes when he's talking about, the media influence and, Israel tricked Donald Trump into this war and Israel caused the Iraq war. That's some conspiracy levels, theory level stuff. And look, I work for an organization that pushes for a complex, nuanced conversation about Israel. We don't need to just be supporting Israel no matter what blindly. We can have disagreements. We can have real discussions about policy. But for me, Kent went too far, way too far, even if I agree with him on the fact that the war was a bad idea in blaming this on Israelis when really ultimately it's up to the President of the United States.
Interesting. Just lastly, with all of that said, Elon, we're looking at a massive investment, $21 million that AIPAC has spent in 4 open Illinois congressional races. This is primary day. It looks like AIPAC could see only one of the 4 turning to its favor as it tries to install a group of pro-Israel Democrats in blue seats, in this case in Illinois. How important is that investment, and how concerned will you be if they don't pay off?
Look, the organization I work for, J Street, is pretty much opposed to what AIPAC is doing completely. We are, very much, we are one of the candidates that AIPAC went after. Is the grandson of Holocaust survivors running in Illinois, who deeply loves Israel, as I do, and is also critical of the Netanyahu government. This is the problem. What AIPAC has done is they have defined pro-Israel as pro-Netanyahu, and it's been very clear from the way Netanyahu has conducted this war in Gaza, the way he has behaved in terms of intervening in American politics, that there's no love for Netanyahu, who's incredibly unpopular among American Jews and among, American voters. And so if definition of supporting Israel is supporting Netanyahu, that's a terrible, narrow definition. That's not where 70% of American Jews are. And that's why J Street exists, to make the alternative case that you can be pro-Israel and critical of Israeli policies, just like you can be pro-America and critical of Donald Trump's policies. Those aren't the same thing.
Yeah. Elon, thank you. We appreciate the conversation. Elon Goldenberg, J Street, he is Chief Policy Officer. Thanks for joining us on Bloomberg. As we play it to the panel now, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are back with us. Jeannie, I'm not sure your thoughts on this because we could take this in a lot of different directions here, but now that it is primary day and you have a spend on this level from AIPAC, what do you make of Elon's response there from J Street?
I think he's underscoring what a lot of people have been talking about. There was this fascinating piece in Punchbowl this morning about $21 million spent by AIPAC, and to your point, just one candidate likely to win. Those are not good odds, but it goes along with what we have been seeing, and I think Elon beautifully underscored this, which is the idea that Americans and many Jewish Americans and many people in Israel differentiate between the regime, Netanyahu's government, and support for Israel itself and the Israeli people. And you have in the United States this real concern about the lobby, the ability of AIPAC for many, many decades going back to fund candidates and campaigns who were do their bidding in government, that has made the United States almost inseparable from a policy perspective as it pertains to foreign policy. And I'm not saying that is true. I'm saying there are concerns out there, which is why I think his argument is so important. The buck stops with the President of the United States. And I want to underscore what he said. Israel, Netanyahu rightly tried to get Joe Biden twice to go into Iran, and Joe Biden said no. Same thing with Obama, and you can go back presidents. That's absolutely Netanyahu's right to do that. He should be doing that in the interest of his own country, but our president should be doing our bidding and what's in our national interest. And the problem we have with this war is the president has yet to articulate clearly how any of this is in our best interest as gas prices soar, and we are all scratching our heads wondering why we are there.
All right, Rick Davis, we've got a minute left. Would love your response as well.
Yeah, look, I mean, the reality is Israel has been our greatest ally in that region for decades. It's the only democracy there, and they have been enormously helpful to our national security, and it is in our security interests for the preservation of the Israeli state, which Iran has been avowed to destroy since the Ayatollah Khomeini took over 47 years ago. So I don't think there's much of a debate as to why we are in this war or why we think it's in our national interest to defeat the largest terrorist regime in the world. I think the issue is, in this case, I would say domestic politics. How you frame that's going to be totally different.
All right, Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, the both of them. Thank you for joining us on Balance of Power today. And we still have more ahead as we turn next to Maya McGinnis, the president for a committee for responsible federal budget, as we consider the supplemental funding request that could be headed Congress's way. We'll have more next on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are rising after oil eased from session highs. The VIX is coming down, and the Dow, the S&P, NASDAQ are all advancing. Got to begin with West Texas Intermediate crude. Did touch $96 a barrel last update. $95.20 right now. It is gaining 1.8%. A barrel of Brent, 102.19, up now by 2%. The Dow higher by 170 points, up 0.4%. S&P up 28, now up 0.4. NASDAQ up by 0.5%. The VIX holding above 22 with a 10-year ahead of tomorrow's Fed decision, 4.19%. Gold down $4 the ounce, down 0.1%. Spot gold just above 5,000 at 5,001. Crude WTI up 1.8%, 95.19 a barrel. Realtor shares moving higher after pending sales of existing homes unexpectedly rose in February for the first time in 3 months. Buyers are taking advantage of lower mortgage rates and slower price growth. The National Association of Realtors says an index of contract signings was up 1.8%. The median forecast of economists surveyed by Bloomberg was for a gain of 0.6%, a decline of 0.6%. Among some of those realtor stocks, Zillow Group up 6.1%. Open Door Technologies up by 6.6%, and Compass Inc. up now by 2.7%. Recapping, S&P higher by 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, many thanks. Charlie, we'll have more on the markets coming up at the top of the hour, 2 p.m. Eastern Time, as we talk politics here in Washington. And there is a direct connection today, certainly has been the last 18 days, Kaylee, with our eyes, of course, on energy prices. And there's a big question about the cost of this war beyond our investments and beyond the loss of life. Never mind the more than 140 wounded Americans that we've learned about. The war, we know, cost $11.3 billion in the first 6 days. That was the report from the Pentagon to Congress following some briefings on Capitol Hill. Based on reports that we have seen since then, we're approaching $16 billion. This is day 18. And of course, there's no sense of how expensive this conflict could be in the end.
No, and of course, it's also about our stockpiles, right? Mm-hmm. We are expending a massive amount of munitions, not only to strike thousands of targets in Iran, but also to act defensively as Iran is sending out drones and missiles of its own, even though that activity has indeed slowed down with the success of some U.S. strikes against those capabilities. But to your point, Joe, it all comes at a cost. And while the Pentagon has a massive, massive budget, there is percolating here in Washington an idea that the White House is getting ready to come to Congress with a supplemental funding request in regard to this that we've been told could be to the tune of $50 to even $100 billion.
Yeah, that's right. We haven't heard the number yet. A lot of lawmakers are already pledging to vote for it without hearing that number because it's an effort to support the troops. But Kaylee, we're looking at the first $1 trillion defense budget in history, and the president is projecting a 50% increase for next year.
$1.5 trillion. It's a massive price tag. And of course, as we consider massive federal spending, we turn to a voice we talk to about that particular subject quite often. I'm pleased to say Maya McGinnis is back with us here on Bloomberg TV and radio. She's president of the Committee for a Responsible Federal Budget. And Maya, it's been a while. It's great to have you back on Balance of Power. When we consider this supplemental idea in particular, it also is worth pointing out that even when this request does come, it might have a very difficult time getting to 60 votes in the United States Senate, where you would need a significant number of Democrats to support it, and they are all largely against this war with Iran, which then points us to another potential budget reconciliation package. How nervous does that make you?
All of this makes me nervous. The national security situation makes me nervous, and the fiscal situation makes me nervous. And certainly what's going on right now is revealing huge new costs that we're undertaking, and also probably future costs that we're going to have to deal with, both from some vulnerabilities that have been revealed and bringing down of some of our weapon systems we're going to have to build back up. So yes, this has become a huge political hot potato. Democrats who are feeling left out of the process are likely not to support a supplemental, and so it may have to go through reconciliation. But you're hearing a great deal of concern from even within Republicans that reconciliation may not be the way to go. There's another little piece of this, which is in OBA, the big tax bill, A lot of defense spending was also included in that bill, about $150 billion on top of the normal appropriations. So we know that there's more set aside for defense already. What we don't know is how it would be spent, how it's going to be spent, if there's money there that could be used before there's a supplemental or reconciliation. So I think the big question is, not only is what is the strategy of this war that we're in, but where are the needs and where are the plans for spending the money we already have before we put in place new dollars. And I think everybody would agree, national security is sort of the first most important claim on budgetary dollars. But the defense budget is big and complicated, and the money may already be there.
Maya, it's great to see you. You issued a statement following the President's State of the Union that said the state of our union is more indebted than ever. Ultimately, you wrote, the President's agenda thus far has added significantly to the national debt, and we will be spending even more because of our past refusal to pay for our priorities. You point out interest payments on the debt will total nearly $17 trillion between now and 2036. That's before a protracted war in the Middle East. How much worse could this get?
There's no ceiling on how much worse this could get. First, this is one of those moments that reminds us how dangerous it is that we're already spending more on interest payments than we are in national defense. This is why we don't want to be in that situation. Second, a situation like the one we're in could have huge costs in terms of if it costs $1 billion a day or anything close to that, those costs could skyrocket so quickly. Also, it could have profound, pronounced economic effects, what we're seeing all the time and talking about all the time right now, which could have a hard-hitting effect on the U.S. economy. And this could get worse before it gets better. One of the main reasons you want a strong fiscal foundation is to be ready for moments like this. And the big concern is that the U.S. has borrowed so much just for consumption, just for things we didn't want to pay for, that when real emergencies come along, we are not in good shape to respond to them or have the fiscal flexibility to do so that we should be able to if we had been in better fiscal shape.
Well, so when we consider emergencies, the Committee for a Responsible Federal Budget put out a new break glass plan, essentially how you withstand an economic shock without having to contribute more to the deficit, like we've seen with shocks in the past, like COVID, for example, and stimulus checks. I wonder if you see us as getting closer to that kind of break glass moment, especially with a war in the Middle East that could potentially have dire economic consequences with a supply shock and potential reinflationary effects. Are we on that trajectory right now?
Yeah, exactly. When we released this a week or so ago, maybe a couple of weeks ago, we certainly didn't think that an emergency would be hitting us quite so immediately. And the concern is that if we have to borrow for an emergency, if it's a supplemental for the war that we're going through right now, if there's a recession, if there's another kind of emergency that's unanticipated or a pandemic, we don't have the same fiscal space to borrow that we have had in the past because our debt is at near record levels. And so what we're recommending is that if we do borrow $50 billion for what's going on right now, or even more, we need to offset those costs. Not immediately, not in the same moment if you're in a recession, but you need to have a plan not only to borrow the money for the emergency, but how to offset it. And more than that, we think you should offset it by $2 to 1 so that we would start putting down payments towards deficit reduction, put in place automatic changes to the budget, put us on a trajectory so we would bring our deficits down to the goal that so many people are starting to think makes the most sense, which is 3% of GDP compared to the 6% where we currently are. But don't use an emergency or don't let an emergency create an even more indebted situation than we currently have. We need to agree that whenever we borrow for an emergency, we're also going to have the plan to offset or pay for those costs and use it as a moment to get our fiscal house in better shape than it currently is. I hope lawmakers will put this in place. I'm sorry.
No, we saw your testimony to this end before the Senate Finance Subcommittee on fiscal responsibility and economic growth, Maya. The idea of a $1.5 trillion Pentagon budget. Of course, that would, I guess, presumably go through regular order to get a number of that size. A 50% increase would mean what for our national debt?
We are talking trillions more. We are talking multiple trillions more just from that increase. And it's not to say that we do or don't need that. One of the things about our group, we don't really weigh in on the policies. What we want is to be able to have a national security budget that reflects the risks of the world that we're in. We don't want to be deciding national security based on our budget. And we have switched to where that's the situation. Now, that sounds like a huge increase. Given that we can't even audit the Defense Department, we need to understand the money that's there already, and there are certainly savings to be had in the procurement process, in paying for outdated weapon systems. Right now, we have basically a defense posture that's set up for last century's threats instead of this century's. We really need to rethink all of that. There will be new costs, and there's probably trillions of dollars of savings we'll be able to get over time. But if there are needs for defense increases, we have to budget for them. We have to be willing to figure out where we're either going to pay more in taxes or reduce spending in other parts of the budget. But right now, this offhanded sort of approach of we can just increase the defense budget by 50%, there's no room in the budget for that. And this is the moment that people have been warning about, that the world is very risky, and we have a budget that now makes us very vulnerable.
Well, and Maya, on this idea of finding other offsets elsewhere in the budget, we've all seen the pie chart. When you look at U.S. federal spending, we spend a lot on the military. Non-defense discretionary spending is a pretty small slice of the pie. Is the money even there to offset if we're going to increase this by 50%?
Well, the money is there, but it's not in places where people are willing to talk about it. One of the things we talked a lot about in this hearing was the fact that we spend $6 per senior on every $1 we spend on children. Is that a budget that makes sense? Is sending checks to people who might not need them the top priority when we should be making sure that programs like Social Security don't become insolvent in 6 years, which is going to happen? But we need to look at all areas of the budget. We need to put everything on the table, look at our healthcare, look at our retirement, look at other areas of defense, just non-defense discretionary. We're not going to be able to find the savings if we don't look at all parts of the budget. DOGE, for instance, I think focused on very tiny slivers and missed some of the areas like healthcare, for instance, where some of the most savings can be found. We're going to have to get serious. The situation that we're seeing right now in the Middle East, that's kind of the wake-up call, but this was true even before this. We have got to get serious. We're going to have to look at every single one of the slices of that pie chart.
Do you worry, Maya, and I don't know what you're hearing from lawmakers on this, but the idea of a supplemental becoming a reconciliation bill, essentially, the president asks for more money to prosecute the war against Iran, and lawmakers say, fine, but I need to have mine too, and this turns into a very well-decorated Christmas tree by the time it reaches the floor. Lawmakers see an opportunity, a vehicle to attach stuff to it. They may not need a reconciliation bill. Is this going to be the next train like that leaves the station?
I so worry that everything can become a Christmas tree right now. There's no norm anymore that we basically budget. We barely put out budgets, right? Regularly, the budget committees don't put forth budgets, and they're almost never adopted. We don't deal with the trade-offs. And basically, a lot of lawmakers have figured out that the best way to kind of pander to the public is give more things without having to pay for them. And so then it becomes a race for who can borrow more. We're seeing this in the talk about how to make things more affordable, for instance. So yes, any supplemental is almost surely going to have other unrelated items piled on. The supplemental will probably be too large, and other items that are unrelated will probably be thrown in, sort of that horse trading of trying to get other people's votes. Yeah. We need to bring back some real structure to the budgeting process. We know emergencies will happen, for instance. We should set aside resources in advance each year in the budget so that there's already an emergency savings pool set aside rather than having to borrow more. But you bet I worry about this. Right now, before a midterm election where things are getting political, as if they ever aren't, we will surely see people bidding up the cost of any emergency bill that they start to discuss, whatever form it takes.
Maya, we just have about 30 seconds left here, but obviously all of this is on the spending side. On the revenue side, if the administration were to decide to pursue a, say, gas tax holiday because of the higher energy prices emanating from this conflict, what revenue impact would that have?
Yeah, so the gas tax, depending on how many months one puts out, it's quite costly. You're talking about tens of billions of dollars adding up very quickly. And importantly, it doesn't actually end up making the costs cheaper. Those things lead into more demand for the product, which actually pushes up the cost of gas. So I know it's not what people want to hear, but gas tax holidays aren't effective and they are expensive.
Sounds like we're going to need a bigger piece of glass to break Maya. She is the voice of reality here in the nation's capital. Maya McGinnis, it's really great to see you, Maya, President for the Committee for a Responsible Federal Budget, with some sobering truths there that most lawmakers don't want to deal with right now.
Indeed. Of course, we've had the pleasure of speaking with some lawmakers here on Balance of Power today with the chair, Michael McCall, and we'll have more coming up in the late edition at 5 p.m. Eastern Time. So we'll see you then on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms, radio, TV, YouTube, and Bloomberg Originals. Yes, indeed, this is Bloomberg Business Week Daily. Carol Masser, Tim Stenivek on this Tuesday, March 17th, 2026. Yes, indeed, it is.
Happy St. Patrick's Day, I thought you were going to say.
Happy almost Fed decision. We get that tomorrow.
Did you see the press pool at the White House today?
Some of them were very festively dressed.
A lot of green?
Yeah, I felt a little like I wasn't dressed for the day.
This is what also
That's
makes
okay.
a city like New York a lot of fun. As I walked to work, came up from 42nd Street, a bunch of folks in kilts and bagpipes and getting ready.
Oh, you had a much better
for the
commute than I did. I
parade.
didn't notice any of that stuff.
I took a little pictures, but
Okay.
I was very discreet.
I was
kind of back
underground.
shots.
I was underground the whole time. Hey, not underground. The Federal Reserve kicking off that 2-day policy meeting. Stocks are higher. What do you think they're talking about in Washington right now at the Fed? Oil prices?
I think so. Inflation.
Yeah.
How do they think about that longer term, right? And this is everything that we are trying to figure out what it means longer term. We do have U.S. stocks somewhat higher. You've got, I'm looking at WTI crude off its highs of the session. It was up as much as 5%, still up about 2.5%. So we're watching that trade. I think, again, Tim, it goes back to we're worried about how long this war lasts. What does it mean longer term in terms of the region and the impact on global energy supplies and also on prices? We worry about inflation.
Hey, one thing we're going to be focused on today is the view from Israel on the ground. We ask what the mission is of the country, the view on Iran, and what it wants to be post-war. A lot of questions we're going to get to with Dan Williams a little later.
Yeah, and as you said, on Iran, too, it's like the question of what do they want longer term? What do the people of Iran want? So that is something we're going to tackle. Add it all up as we kicked off our broadcast. We're going to talk about global energy prices and the markets. Dr. Ellen Wall back with us, author of Saudi Inc. I keep thinking about the region and its role in global energy markets. So curious what she has to say about the reality of oil and energy in today's world.
And there's an oasis of calm as the U.S. war in Iran jolts markets, at least when it comes to markets. Yeah. Look, Bitcoin. And we're going to talk about it, why MasterCard is charging head, too, on cryptocurrency.
I looked at Bitcoin year to date versus like the S&P 500. Some big outperformance.
For now.
Exactly. Is it fundamentally based? What does it mean? A lot to get into. First up, though, let's get a check on the trade. Let's toss things over to Charlie Pell.
All right, thank you very much. Bitcoin right now, by the way, up by about 0.3%, 74,479 on Bitcoin. Cannot wait to hear Ellen Wall's comments on oil. That's where I'm going to begin with West Texas. Intermediate crude was trading back above $96 last hour. Right now, $95.69 on WTI, showing a gain now of 2.3%. Brent is above 103. Barrel of Brent, the global benchmark, 103.04 right now, up by about 2.8%. Bottom line here, stocks are staging a cautious advance. The S&P's up 25, up by about 0.4%. The Dow up 113, up 0.2. NASDAQ up 122, up by about 0.5%. The VIX just above 22 right now with its 10-year. The Fed meeting underway, 4.19%. The 2-year ahead of tomorrow's decision, 3.66%. Gold, lower little change, down under 0.1%, but holding above 5,000 at 5,003 the ounce. Crude, West Texas Intermediate up 2.2%, 95.50 for a barrel of WTI. We do have airline shares advancing today. Some executives are citing strong bookings as travelers rush to lock in fares ahead of a potential rise in fuel costs. Case in point, Delta is surging almost 7%. American Airlines up 3.8%, and Southwest, among some of the airline names, up now by 2.9%. So again, recapping, West Texas Intermediate crude, 95.58 a barrel, S&P up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, Israel said it killed Iran's security chief, that in an overnight attack, intensifying a region-wide war that shows no signs of abating, and we are well into our third week. President Trump earlier today from the Oval Office referred to that action. He also talked more broadly about the U.S. war in Iran, including timing. He talked around noon Wall Street time today.
We're not ready to leave yet, but we'll be leaving in the near future. We'll be leaving in pretty much the very near future. But right now, they've been decimated from every standpoint. And again, we've had great support from countries in the Middle East, great support. But we've had no support from, essentially, no support from NATO.
And that, of course, is President Trump earlier today from the Oval Office. With more on what's going on, we want to head first of all to Jerusalem and to Bloomberg News Jerusalem journalist. He is Dan Williams, where it is later there, of course, in Israel. Dan, good to have you here with us. Glad we could check in with you. Glad to see you are still safe. There's so much going on. What do we know about the security chief in Iran that was said to be taken out?
I think it would be fair to say that he was the de facto, at least publicly available ruler of Iran after Israel and the United States, in the early hours of this war on February 28th, killed the supreme leader, Khamenei. As everyone knows, Khamenei was officially succeeded by his son, Mojtaba, but that man has not been seen in public. He is rumored to have been injured in an Israeli strike or a U.S. strike, and indeed, Trump, the U.S. president, has even speculated that he might not be alive. By contrast, Ali Larijani, a veteran member of the national security echelon in Iran, was available for interviews. He made televised statements, and he even marched in an annual parade or an annual march on Friday in Tehran as a sign of his defiance. It's possible that as a result of that public appearance, he enabled the Israelis to tag him and track him and ultimately kill him overnight.
Dan, obviously it sends a message to the way that Israel and the U.S. view the leaders as they are right now. But I'm wondering, with the killings of the top brass in Iran, who is left to actually be the leader of the country?
Well, if you ask the Israeli or U.S. leaders about this, that would be the Iranian people, the Iranian public. They said at the outset of this war that the secondary objective, the initial objective, was to degrade, destroy Iranian capabilities, namely ballistic missiles, what remains or remained of the nuclear program, and in the case of the U.S., also the Iranian Navy, in order to enable maritime traffic free of Iranian harassment in the Gulf. A secondary role or a secondary objective was to create a space, as they put it, for the Iranian people to take over control of that country. Israel assesses that 70 to 80% of the Iranian populace oppose this regime or have opposed this regime. And while that is hard to assess objectively, certainly from outside, just 2 months ago, we saw protests sweeping Iran and a very brutal crackdown by the Iranian state. So the official line is that the allies are seeking to destroy that regime and embolden to the extent possible, or create the conditions to the extent possible, that will enable protesters to come back into the streets and actually give that regime the final push required to topple it and replace it.
Dan, we're going to talk more about Iran in a segment right after you. What I want to ask you, though, about in terms of Israel, the foreign minister earlier said the war is effectively, quote, already won, but vowed to, quote, continue till the point the mission will be completed. What exactly is Israel's mission? And I got to ask you, when we talk about backing and what people and citizens want, what do the people of Israel want? Are they still backing their prime minister? Will they still back him after all of these conflicts are over?
Well, that's an excellent question. I think while the allies, at least at the level of their leaderships, their militaries are very much in sync about the objectives here. They say they speak repeatedly. And in fact, the U.S. military has compared or described the Israeli Air Force as a peer air force to the U.S. air assets being brought into the region. Quite an extraordinary statement for the U.S. power, this dominant power in the world, to be speaking about what is basically a regional power in the form of Israel. Nevertheless, the Israeli public, to judge by polls, unlike the American public, are broadly in support of this war. This war has not found popularity among the Americans. There's a very good reason for this. One is geographical distance. Americans are on the other side of the world. Israelis are in the region, feel directly threatened by Iran, not just by its statements, but its actions, including the support of proxies such as Hamas, which Israel has been battling for 2.5 years, albeit in a state of ceasefire right now in Gaza, a fairly fragile ceasefire, but a ceasefire nonetheless. Hezbollah in Lebanon, where there has been an eruption of violence. There have been also Iranian-backed militias in Iraq and in the past in Syria and currently in Yemen as well. So the Israelis would appear to be seeing this as the crowning battle or the last war of this multi-front campaign that's really in its third year now.
Dan, 30 seconds, but do the people of Israel still back their prime minister? Who was on...
That's hard.
Yeah, go ahead.
His approval ratings have improved given his conduct of recent policy issues, I believe, including this war. There is an election later this year. I think that's the ultimate plebiscite, because no matter his successes, and there have been successes regionally on the battlefield, they will remember the October 7th attack, which began this multi-front campaign, a disastrous attack for Israel, which happened on his watch.
Dan, so appreciate it. Please stay safe. Please be well. Bloomberg News, Jerusalem journalist, of course, there in Jerusalem, in Israel. All right, so that is our view from Israel. Let's get to a view on Iran.
Back with us, Alice Vitanka, senior fellow at the Middle East Institute, specializing in Iran. He's also senior fellow of Middle East Studies at the U.S. Air Force Special Operations School and teaches as an adjunct at Wright-Patt Air Force Base. He's the author of several books, including The Battle of the Ayatollahs in Iran, the United States Foreign Policy and the Political Rivalry since 1979. He joins us from Washington, D.C. I want to just pick up where we left off with Dan and the killing of this latest figure in Iran. Where does that leave the country in terms of leadership right now?
Tim, obviously it's a pretty big news. Ali Larijani is a figure that anybody who's been watching Iran knows has had one or another senior political role for pretty much as long as the Islamic Republic has been around, 47 years. And he most recently returned as the head of the Supreme National Security Council back in August of last year, with the sole job as trying to sort of coordinate best policies as they, right after the 12-day war. And now he's gone, most likely, although I haven't seen Iranian official confirmation, but he's probably gone. And I don't think we should underestimate what that means. It's pretty significant, at least a psychological blow. But I wouldn't be surprised if it's quickly replaced. I mean, the regime is still able to put people in senior positions, at least for now. Whether that means that those are the best people they have, or whether it just suggests that they want to show continuity, which is obviously very important for him, from a psychological point of view, to show that they're not on their way out.
Alex, Tim just turned to me and he says it sounds like whack-a-mole, and it does. It feels like as soon as you've reminded us the regime is not one person, and that as soon as someone's out, they find somebody else. But having said that, not everybody is interchangeable, and not everybody is a supreme leader. So I guess I keep wondering, Israel's Prime Minister Benjamin Netanyahu said in a video statement that his military is, quote, undermining this regime, meaning Iran, in the hope of giving the Iranian people a chance to remove it. Is it true? Has the regime been undermined? And is this what Iranians want?
Well, Carol, there's no way to deny the fact that the regime is undermined massively. Certainly, it's never been under such amount of attack in its history. And I would also say, Carol, no doubt in my mind that the people of Iran, by and large, really want to see the end of this regime. Obviously, from their point of view, they want the regime to fall with minimum casualties, minimum damage to the country's infrastructure. But the Islamic Republic, in the eyes of many, are a political system that brought one crisis or disaster upon the nation after another, going back to 1979. I mean, they made a host of bad decisions. You could go back to the taking over the U.S. Embassy in November of 1979, provoking Saddam Hussein to attack Iran in September of 80, and I can go on. Look, the regime is weak. It's not on its way out just yet. The big question, and I think that might answer partly what you're asking me, Carol, it's not just that the figures, all of them have to go. The question is, does Israel and the United States perhaps have it in them to accept so-called pragmatic figures from within the regime emerge as possible candidates to take over? That kind of tallies nicely with what President Trump has been suggesting a number of times over the course of this war.
Who are there any of those figures that we know about? Have those figures been identified, Alex? Are there any names of people who might be pragmatic and acceptable to the United States and Israel?
Well, that's a big question mark. I mean, I can give you names, Tim. Let me give you a former president, Hassan Rouhani. For some, he might be just pragmatic enough to be able to change course, take the country in a different direction. Many others would oppose him, say, well, that's not going to solve much. He's been part of this system from day one. So why go through all this trouble just to have someone like him in place? So really, I guess it comes down to how much appetite you have, if you are U.S., if you are Israel, for this war to continue, to get to a point where you say, I've eliminated all of them. Or you say, well, I don't want to stay here for months and years. I want to have somebody who is sensible enough to compromise and I will then call it a day and move on.
You know, Alex, one of the things that we keep talking about as we look at this war now in its third week, and it's something that, you know, President Trump said earlier, he talked about the war in Iran. He said that everybody in the world should be thankful, and that if he and his administration had not taken all the steps it has on Iran, including withdrawing the U.S. from the landmark 2015 accord to curb Iran's nuclear program during his first term, that in his words, an, quote, unbelievable nuclear holocaust would have taken place. Is he right? Is this something that actually changes the trajectory of the region, of perhaps Iran's role with the world?
Carol, that's a great question. I mean, that was certainly the motive. That's how the president has tried to sort of, if you will, sell this to the American public.
But is it a sell, or is it maybe right?
Depends. Look, if the regime collapses, in the sense that we can say Islamic Republic is no longer here, is no longer relevant, Iran has moved on, the region will move on, then I would say that's pretty, I mean, to end something that's been with us for 50 years in less than a month, that, you know, I know the world is going through an energy crisis, but it's still a significant success. But if the remnants of this regime stay with their thousands of drones and so forth and act like spoil is going forward, then the question becomes, was this the wisest way to do it? Why the timing? Why rush into something? And all sorts of questions can be then asked. But obviously, it's too early to judge. Let's see what, how long more this war goes on, and what you know, what any political transformation, major one, might come out of it.
You know, Joe Kent, the director of the National Counterterrorism Center, resigned over the war with Iran. He claimed that Israel had misled President Trump into believing that the regime in Tehran posed an imminent threat. He said, Iran posed no imminent threat to our nation. It's clear that we started this war due to pressure from Israel and its powerful American lobby. Those are the words of Joe Kent. Is he right that this country posed no imminent threat to the U.S.?
Look, I certainly, as an open source analyst, did not see any Iranian intentions to attack the United States anytime soon. They just didn't have that capacity. But the point is, and obviously, the Israelis sit in a very different part of the world, so they have a very different perspective. They are much closer, and the regime in Tehran for decades vowed to destroy them. So they have a very different sort of sense of threat when it came to the Islamic Republic. Another way of looking at this, Tim, is the Islamic Republic did not do itself any favors going back to 1979, not sort of looking for ways to, you know, if you will, mend ties with the United States after hostage crisis of 79. So again, depends how you measure hostility. The intent was never certainly to be a friend or partner of the United States. Ali Khamenei, the last supreme leader, openly talked about, you know, getting the United States out of the region. So, but did I see an Iranian effort on the way to attack the United States? As I said, I certainly, in my position, did not see that. But I also didn't see them wanted to be friends with the United States, if that makes sense.
Alex Vatanka, thank you so much. Such a go-to for us. Senior fellow at the Middle East Institute, specializing in Iran. When we come back, though, we add all this up and get the latest for global energy markets. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all advancing. S&P right now higher by 0.4%. Stock staging a cautious advance. Traders trying to look through the potential implications of higher oil prices. Right now, West Texas Intermediate crude is up 2.4%, 95.77 a barrel. Last hour, we did see a print of 96. Brent, the global benchmark at 103.24, now up by 3%. Again, the S&P holding on to a gain of 0.4. The Dow up 0.3%. The NASDAQ Composite Index up 0.5%. The VIX at 22 with a 10-year ahead of tomorrow's Fed decision at 4.19%. The 2-year 3.66%. Gold is at $5,007 the ounce, little changed, up under 0.1%. And again, West Texas Intermediate crude up 2.5%, 95.82 a barrel. AI data center developer Nebius Group says it intends to raise about $3.75 billion in convertible debt. That's on the heels of a commercial deal with Meta Platforms. Nebius right now down 11.8%, Meta down 0.4%. Qualcomm plans to buy back another $20 billion worth of shares. It's also raising its quarterly cash dividend. Qualcomm shares up 1.9%. Recapping, S&P up 0.4%. West Texas Intermediate crude up 2.5%, 95.83 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much. Charlie Pellet setting us up so well, taking a look at where we are in terms of the energy trade, WTI and Brent. Both are higher, but we're looking at them definitely off their top levels, highest levels of the session. Having said that, President Trump, he made a lot of comments earlier today from the White House in the Oval Office. He said that as soon as the war is over, oil prices will drop like a rock. He says it won't be long, too, before cargo ships can move through the Strait of Hormuz.
I have a lot of friends from Ireland. They're very happy that I'm getting rid of a nuclear power, a nuclear terrorist. And as soon as that war is over, which will be soon, your prices are going to drop like a rock. You watch.
All right, we will be watching. We are watching. President Trump, of course, earlier today from the White House. As for oil, as we mentioned, it is higher off its best levels of the session, but we do know Iran has continued attacks on energy infrastructure around the Middle East. And then, of course, we talked earlier with our own Dan Williams from Israel, how Israel has killed senior Iranian officials. We want to get another check on the energy markets because the longer this goes on, we think about short-term but also longer-term impacts. Dr. Ellen Wald is back with us, president of Transversal Consulting, senior fellow at the Atlantic Council, author of Saudi Inc., once again with us from Boca Raton, Florida. Ellen, is President Trump, first of all, great to have you back. We love talking with you. Is President Trump correct that as soon as the war is over, oil prices will drop like a rock?
Oil prices will definitely drop when the war ends, and it's clear that shipping can resume, but we're not going to return to the previous state of affairs immediately, and that's very clear. First of all, there's going to be a huge backlog. We're going to need to see the stores of various products, crude oil, but also various petroleum products be refilled, and then there's also the damage that's already been done that has to be contended with. For example, Iran landed its first hit to an oil and gas field in the UAE. We don't even know how the extent of the damage, how long it might be offline. When it comes to LNG and natural gas prices and the LNG trade, it's going to take Qatar at least a month to get its facilities back up and running. So there's going to be some long-term reverberations of this. And so while crude oil prices and futures may definitely drop, we're definitely not going to see, return to everything as usual.
Yeah, I'm looking at futures many months out at this point, and we're still, if we go to December of this year, Ellen, for WTI, traders are still betting that's going to be $76.25 per barrel. And that's a price that we hadn't seen in years until earlier this month. So at least the way that traders are thinking about this, they're not looking at this. Either they're not looking at it ending anytime soon, or they're looking at the repercussions of this extending far beyond.
I mean, it depends what dropping like a rock means. Does dropping like a rock mean that prices will be back, in the 80s or 70s? Yeah. Does it mean they'll be back, does it mean we'll see $50 oil, which is what Trump claimed we were going to see right after, the Venezuela, debacle or the Venezuela victory, whatever side you're on. I'm not sure that we're going to see that. We will definitely see a drop simply because the danger presumably will be removed, but the long-term repercussions are going to be felt for a long time. I mean, agriculture, just backlog of products, this is going to take some time to unravel.
So talk to us about those longer-term implications. When you say it's going to take a while, how long, Ellen? Are we talking a few months? Are we talking 6 months? Are we talking a year?
I mean, I think that the markets are incredibly resilient at, rerouting things. So I think that we will see markets take the most efficient and best ways to sort things out. But the real test is going to be the extent of the damage. How long is it going to take to get these oil facilities? We don't know how much more is going to be damaged. We're still in the phase of Iran has the capability to destroy and damage oil production in its neighbors. We don't know how much how much more damage it's going to do. The more damage it does, the longer it will take to to recover from this. So yeah, 6 months I say is probably a minimum.
What's more problematic? Some of those other Middle Eastern targets or, oil operations in Iran? And I only bring that up because the president did reiterate that the U.S. could knock out oil on Karg Island, adding that it hasn't done so yet because of how long it would take to rebuild it. Nation previously bombed military targets on the key Iranian export hub, but spared its oil infrastructure. If indeed that happened, what would that do to energy markets short and longer term?
So I think that energy markets are really operating in general without counting for Iranian oil. So if all Iranian oil is off the market, I don't think that that's going to push prices up all that much because, it's really just China that is buying Iranian oil anyway. So, China is probably going to buy more Russian oil to account for a loss in Iranian oil, or it will buy oil from elsewhere. It would be great to have that oil available for the market and also for Iran when it's in some kind of rebuilding stage. But if that oil is off the market, I don't think that is going to have the biggest impact.
Ellen, if we are indeed, and we are a net exporter of oil, I think a lot of people have this misconception about what it means to be energy independent when a conflict many thousands of miles away that cuts off 20% supply of the world's oil has such dramatic effect on West Texas Intermediate. Can you explain that connection for people?
Yeah, exactly. I mean, oil is a global commodity and it's priced globally. So even though we don't really import all that much from Persian Gulf countries at the moment, what happens anywhere to oil impacts the price at home. Now, that doesn't mean that we're going to see shortages. I don't think we are in danger of seeing shortages of any sort, but because most of the price of gasoline is the price of the barrel of oil, we are impacted by the fact that, when prices rise because of any kind of global incident, we are going to feel that at home.
Is there a way, though, for the U.S. to become more energy independent if we do, in the words of the president, drill more here in the United States? Or is the challenge, the oil that we extract here, or the oil that, maybe we'll get from Venezuela is not necessarily the oil that we can be using or we can be refining?
Right. I think that the best way to insulate the United States from the kind of price fluctuations that we're seeing is actually to become more oil interdependent. And I think that we do that by strengthening our connections within North America. One of the biggest reasons why we aren't feeling, these impacts beyond just in the price of gasoline and the price of diesel is that we have such a great interface with Canada. Most of our oil imports right now actually come from Canada. And so if we can strengthen our interdependence as part of the North American oil ecosystem, then we are even better insulated. The other way to do that is to do more refining and to produce more diesel here in the United States, to produce more gasoline. California, for example, can only use gasoline that is produced and refined in California. Well, that needs to change, or California needs to have more refineries. The more that we can have our own refineries, and the more that we can do that, the better insulated we can be from global issues, and also the more we can help assist. We started this war in a sense, and we have the capability to assist other countries that are more impacted by it. And if we produce more at home and we produce more products, we can help other countries more by exporting.
Ellen, you mentioned Canada. I don't know if you've seen any of the stories over the last year, but we're having some troubles with that relationship, certainly with this White House. Having said that, I do think about the administration and how they do think about national security, and that includes energy security. Does this somehow grease the wheels, no pun intended, in terms of that relationship, the U.S. and Canada, to kind of figure out something a little bit more constructive?
I think it absolutely should, because the better relations we can have with Canada, the more ease of transportation of goods, services, but also the things that we need to, build oil infrastructure will be better. Canada really has no choice but to export a lot of its oil through the United States. So the United States technically imports that oil, and then a lot of it is also exported or used in the U.S. Now they do have the option to export via ports in Vancouver. But the more that we can work with Canada and build more infrastructure and do more exchanges, the better those relations will be, and the more flexibility we'll have in terms of gasoline and energy prices in general.
One distinction I want to make, because we have a great story out on the Bloomberg too, about just reminding us that U.S. diesel rose above $5 a gallon for the first time since December of 2022 because of what we are seeing, the surging oil prices amid the war and disruption in the Middle East. We talk about diesel, its role in freight, agriculture, construction industries, and so everybody's kind of trying to juggle and manage that. What do we need to understand? I mean, we talk about energy as this bucket, but there are different pieces within that bucket.
Absolutely. And one of the reasons the diesel prices are surging is because we didn't have a lot of diesel in storage. And so we haven't had that cushion to kind of fall back on, whereas in terms of gasoline, we had more in storage, and so we have more cushion to fall back on. But increases in diesel prices are really what reverberates throughout the economy. And that's really where we will see people who aren't buying diesel gasoline might not necessarily feel it at the pump, but diesel is what's used in trucking, it's what's used in construction. And so we will feel those increases in other ways in the economy, increases in grocery prices, for example, and other goods that need to be transported. I mean, our trucking is, I would say, the lifeblood of this country. I mean, everything is transported via trucking, essentially. And so we're going to feel that in the economy in a variety of ways.
Yeah, and I think, Carol, a complicated time, to say the least, for a midterm election.
One would think, right?
For an administration that has been so focused on affordability. Dr. Ellen Wald, always great to see you. Thanks so much for joining us on Bloomberg Business Week Daily. Ellen Wald is president of Transversal Consulting. She's senior fellow at the Atlantic Council. She's the author of Saudi Inc.
Quick check on WTI crude. We're still up about 2.8%, $96.14 a barrel. Go on over to Brent, and we're seeing that also trending higher, but off its highs of the session, up about 3.2%, $103.48 a barrel.
Okay, so also looking at the futures curve and looking at months out, it's still above $70 a barrel. So the question is, how much does that drop, and how quick does that drop if and when this war ends?
All right, from energy to crypto we go. Stick around.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Oil higher along with stocks. S&P up 20 right now to 67.19, gain there of 0.3%. Wall Street is staging a cautious advance. West Texas Intermediate crude up 2.8%, back above 96 now, 96.12 a barrel. Brent crude 103.50. It is up by 3.3%. The Dow up 97, up 0.2%, while Nasdaq is up 104 now. That is a gain of 0.5%. The 10-year 4.20% with a 2-year 3.66%. A Fed decision tomorrow. The VIX now at 22. Spot gold at $5,002 the ounce, down 0.1%. And again, West Texas Intermediate crude up 2.8%, 96.16 a barrel on WTI. Bitcoin, meanwhile, up 0.6%, 74,678 on Bitcoin. MasterCard says it will acquire the stablecoin infrastructure startup BVNK for as much as $1.8 billion. That's 4 months after negotiations between BVNK and Coinbase Global for a roughly $2 billion deal fell apart. MasterCard down 0.1%. Coinbase today up now by 4%. Bentley Motors, which is owned by Volkswagen, planning to cut 275 jobs as the British luxury car maker grapples with falling sales in China. Volkswagen ADRs up today by 0.8%. And just getting word that Unilever is considering a separation of its food assets as it looks to streamline its portfolio. Unilever is the parent of such brands as Hellmann's and Knorr. ADRs of Unilever up now by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters in New York City. Hey, surprising perhaps, but true. This is something we've been talking about a lot here at Bloomberg. Bitcoin been somewhat of an oasis of calm relative to the volatility that we've seen certainly in the equity markets, also in gold and oil, with its value pushing through a crucial psychological mark of $75,000, Tim.
Yeah, you look at the chart on the Bloomberg terminal, Bitcoin up about 13% since the U.S. War in Iran began at the beginning of this month, the end of last month. The S&P 500 down about 2% over that same period of time. I want to bring in Monique Malima. She's Bloomberg News equities reporter. She covers Bitcoin. She joins us from Toronto. Monique, a few weeks ago, if we were talking about the idea of Bitcoin as a safe haven, it was moving in the opposite direction of gold, and now it looks like there's been a little bit of a sell-off in equities, and people have been going to Bitcoin. Is Bitcoin earning back that safe haven label?
That's what people in the crypto industry are certainly hoping. We've seen Bitcoin, like you said, it's outperforming gold, it's outperforming equities since the start of the war, and we've seen some investors kind of come back to the crypto industry. It's also important to keep in mind that this is coming after there was a large sell-off in crypto earlier this year and late last year. So some of this is also just Bitcoin regaining some of what it lost earlier and kind of starting to, what some people are saying, hit a bottom for those low prices that we were seeing. So that's bringing investors back to it and people giving it a second look now.
Right. I think I might have said at the top, was it that crypto was up on the year, but it's actually down on the year
Bitcoin
still.
specifically, right? Down about 15%.
Yeah, exactly. Even though we've seen it move up since the war began. You know, Monique, I totally get that everybody in the crypto industry wants it to do well. Who's actually buying crypto at this point?
So we are seeing some retail investors come back as people are trying to figure out what's the best way to try and invest at this time of the war. And, you know, but as a whole, volumes are still considerably down from last year, particularly on some of the larger exchanges. So we're not seeing the same level of crypto investment that we saw a year ago, but there are some people who had kind of gone to the sidelines a bit when the crypto prices really fell last year and are now coming back to the markets.
Hey, just real quickly, CoinDesk reporting Wall Street Investment Bank Citi lowered its 12-month price targets for Bitcoin, also Ether, and they cited slower legislative momentum in the U.S. That matters more, right, in terms of Bitcoin and actually the crypto market's future, just quickly.
Yes, that's been a key focus for investors. The market structure bill, people are really hoping to see get passed before midterms because we don't know what the makeup of the government will be post-midterms, but that has been stalled. The industry and the lawmakers are still at odds over some of the rules around stablecoin yield and other factors, and until that bill gets passed, a number of analysts and investors are saying we're not going to see this large breakout in crypto because people really want to see rules come into play.
All right, going to leave it there. Thank you so much. Really appreciate it. Monique Malima, she is Bloomberg News equities reporter. We're going to stay in the crypto industry.
Yeah, now to MasterCard, which said it will acquire the stablecoin infrastructure startup BVNK for as much as $1.8 billion. 4 months after negotiations between BVNK and Coinbase fell apart for roughly $2 billion deal. For why and why now, we bring in Bloomberg News consumer finance reporter Paige Smith. She joins us here in the studio. We're going to get to why and why now, but I think for a lot of people might be watching and listening right now, they might have never heard of BVNK until your story early today that crossed the Bloomberg that said this up to $1.8 billion deal was happening. What is it? What are they getting?
That's a very good question. I think it's also important to kind of understand who is actually buying BVNK as well, which is MasterCard. MasterCard is, one of the biggest and most traditional payment networks in the U.S., and it's an entity that works with a lot of the big banks that we cover every day and talk about day in and day out, but they are acquiring BVNK, this London-based startup that is also really quite young. We were mentioning earlier that it was founded in 2021, and basically what BVNK
So it's 5 years old.
I know. Listen, I would take a $1.8 billion.
It's a mere pre-K.
It's a pre-K.
Exactly, pre-K. But the firm is it's a stablecoin infrastructure company, to answer your question, Tim. So basically what they do is they provide they enable those on-ramps and off-ramps for, say you're someone living in Buenos Aires and you want to, your currency is quite volatile. You want to tap into something that's a little more stable. So you want to tap into stablecoin technology to be able to do that.
Does that kind of make sense? I think I saw a story also on the Bloomberg or somewhere in doing kind of some prep for this, is that Mexico talked about digital transfers beating, I guess, regular traditional cash transfers for the first time or something. So, I mean, it kind of is logical, isn't it?
It definitely is, and similar but different. That was a great story actually done by our colleague Maria Clara earlier today that basically did say that, the digital transfers from specifically, I believe it was U.S. to Mexico, but
Right.
certainly remittances, and that's definitely something that could be enabled or sped up with stablecoin.
Does it show that MasterCard is moving in a different direction than it has moved? Does it show a change in strategy, or does it say, hey, this is how we think the future is going to roll out? We want to be prepared for it.
I would say the latter, but it's more of a doubling down of strategy that MasterCard had kind of already enunciated. Earlier, I think it actually was last week, MasterCard announced this sort of digital currency, crypto adjacent network, partnership network that really, it basically speaks to this broader trend, right, of these digital, more traditional financial firms wanting to get in on these emerging technologies, especially in the payment space. So if it may be MasterCard with this payment, with these partnerships, and also now this acquisition today. It's Visa with sort of broader investments and technology developments in as they pertains to stablecoin. But one really important thing to keep in mind is that your credit cards are not going away anytime soon. Consumer payments, especially in the U.S., I think are certainly here to stay, and that's because the banks really like it that way.
They make some decent fees off of these.
They do. Interchange fees,
rewards.
Yeah,
I think it's saying
the infrastructure as it is a lot of people get paid.
Right?
It's alive and well.
Hey, 30 seconds left, Paige. I mean, but how should we think about stable coins kind of changing how money moves around?
That it's much more instant, I would say.
Okay.
And while some of the players may be changing, I think that this trend of the existing players trying to move in to take advantage of those emerging technologies, that's a trend that's here to stay as well.
All right, good stuff. What are you thinking?
I'm thinking how hard it was to send From a concert that I went to like 10 years ago, I bought a ticket for my friend. He lived in London. He wanted to pay me back for it, and we just couldn't make it happen.
It's
He's like,
really
I'll give you money next time
Through this, yes, to
next time I
Canada.
come to the U.S.
It's tricky.
Yes.
Yeah, we had to kind of deal with that when we had a daughter overseas. Like, it's
Not
just
easy.
Good old Western Union transfers.
It's tricky. Thank you so much. Paige Smith, Bloomberg News consumer finance reporter, right here in studio. Hey, when we come back, we're going to take a look at stocks on the move. Stick around.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading
Already?
on this Tuesday. I know time flies.
Time flies when you're having fun.
Woo-hoo! We are having fun.
I know.
Investors are actually somewhat enthusiastic, but I have to say cautious, I think, in the trade, certainly ahead of tomorrow's Fed decision. What does that mean? Definitely off our best levels of the session. S&P just up 24 points, little change, up not even quite 0.4 of a percentage point. You've got the NASDAQ 100, so that big tech trade, and others, 128 points to the upside, Tim. That's good for a gain of about 0.5%.
All right, let's talk about some stocks that are on the move today. I'm Tim Stenovec, along with Carol Masser. We're joined by Bloomberg Television Markets correspondent Nora Melinda. Nora, what are you watching?
Well, I've got my eyes on some of the airline companies. We're seeing Delta Airlines up higher alongside American Airlines and a few of the other names in that S15 AIRL index. This, of course, is after we've heard from different carriers that they are relatively bullish looking at the future. We do know that there's been so much conversation about the price of oil and fuel and what that means for flights. So you are seeing a lot of people coming out. They're essentially saying that this is the strongest booking trends that they've seen in industry history, some of those. So we are seeing both premium leisure and business travelers. They're out here snapping up airline tickets because they're really just trying to get ahead of what could potentially be a surge surge in prices.
So lock in a price.
Right. So they're trying to get ahead, planning in advance. Don't know if you guys are planning some flights coming up, but
we have a bunch of work stuff.
Do we?
Yeah, we actually have a flight home, but I don't think we have a flight there.
Listen, we'll get there.
We actually have a lot of stuff coming up.
This is the S&P 500, S&P 1500 Passenger Airlines Index. So it has 9 different companies in it. It looks like the only one that's lower today is JetBlue, but that's kind of an idiosyncratic story. But yeah, 8 are higher. And look at that. I mean, Delta up 6.6% right now.
Just on a tear.
Yeah.
So clearly people are...
On a day when oil is actually higher.
Right,
yeah.
right.
Exactly. All right, so we're watching those names. Good stuff. Uber and Lyft. I've been watching this too. Tim and I have been watching this as well.
You're just still waiting for your driverless car.
Maybe it's coming.
Send me a Waymo. I'll take it everywhere. Anywhere.
What'd you do in New York City?
They have them in New York. They just have drivers behind the wheel. I saw 2 of them the other day.
Did you?
Oh, there you go.
I think I would.
They're training.
I think it's going to be incredible training. I think it's going to have to shift in terms of New Yorkers and how they look and think about things. But man, I feel like I'm darting all the bikes.
Fair.
You know, the delivery guys.
I know.
Who are flying around not you, but.
As Tim stares.
Come on, you know. How many times have you walked off a curb and almost been.
No, I know. I'm not.
Just whacked.
Not Tim.
I'm just pointing out if the.
You're careful and cautious.
Yeah.
I know you are.
The cyclists in the city notwithstanding, if we're talking just about the cars, I think it's fair to say what you and I love about the driverless cars is that they follow rules.
They follow rules.
And if you follow the rules of the road, you will not get hit by a car.
Because we've talked about this.
Anyone.
We think that
if everybody just does what they're supposed to do.
It's also
only.
It's also the spa music when you sit in and you're like nobody talks to you.
Right.
Okay. Anyway, we digress. Go.
Uber and Lyft, 2 names that we're watching. Both companies, along with NVIDIA, announcing separate autonomous vehicle partnerships. And so we did hear Deutsche Bank analysts are saying that many self-driving car companies don't actually have an existing ride-hailing business. So they feel as though this makes Uber's network a fastest, more efficient way to really scale. So you're certainly seeing shares of both Lyft and Uber higher. Uber seeing its best day since June of last year. And lastly, let's end things off.
Carol's still thinking about that.
I know.
I'm riding Waymo.
Okay.
Sorry, no.
As you should.
Yeah. Okay. So those are Lyft and Uber.
Yeah.
You've talked about planes.
So wait.
You've talked about automobiles.
So you could either take your plane or your driverless car to Six Flags Entertainment.
There it is.
And hop on a roller coaster.
Okay.
Yes.
Ticker fun. FUN. The ticker on
also
this
kind
name.
of driverless if you think about it. You're just out there.
You're just there. Well, we're seeing shares of the company up about 7.6% right now. This is after Jana Partners, which we know is an activist investor. Essentially, they're pushing Six Flags Entertainment to pursue a sale and appoint a new chair. They're essentially citing concerns about the board's ability to deliver for shareholders. They said they've seen an alarming pattern of board dysfunction and disjointed decision-making, and they're urging the company to engage with potential buyers. So, I mean, it sounds as though investors pretty much agree.
When's the last time you were on a roller coaster?
Coney Island about 3 years ago.
Really?
Yeah, 2 years ago. 2 years ago.
The rickety wooden one?
Yeah.
Wow. 2 days ago. For me.
Where were you?
2 days ago?
Yes, I was in Dollywood.
Oh my God.
In Tennessee.
How was it?
It was phenomenal.
Very cool.
Dollywood. They say everybody has to go to Dollywood.
You have to.
They call it kind of the tacky tour, right? You go to Dollywood, you go to Elvis's house. I mean tacky in a good way. Heart tacky.
Carol Masser.
It was great.
I didn't make it up. Somebody
That's what they said.
Yeah.
It wasn't you.
All right, good stuff. Nora Melinda, thank you so much. Be sure to check out our Stock Movers podcast. They are 5-minute episodes, big winners, big losers in the market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
I'm looking at shares of NVIDIA down about 0.4%. It is day 2 of NVIDIA GTC, that is NVIDIA's developer conference. In just a few minutes on Bloomberg Business Week Daily, Mandeep Singh is going to be joining us. He's Global Head of Technology for Bloomberg Intelligence. He's going to talk a little bit about some of the partnerships that have been announced and what we need to know about that revenue target that Jensen Huang laid out yesterday.
Yeah, and I'm just looking at the stocks right now. It's up about 10% year to date, the Philadelphia Semiconductor Index. So we have definitely seen that sector as a whole moving up. So looking forward to talking to Mandeep. We're going to continue, of course, to track any comments out of the White House. And then we're going to talk a little bit about the markets, why one of our market guests, is actually going to kind of equate it with March Madness.
Did you do your bracket yet? BRKT Go on the terminal.
I don't. Did you?
Yeah, I started it.
Really?
Yeah.
is CBS News on the Hour, sponsored by JTV.com.
I'm Jennifer Kuiper. President Trump has some words for a senior counterterrorism official who has resigned in protest over the U.S.-led war against Iran. CBS's Linda Kenyon.
Joseph Kent was the director of the National Counterterrorism Center who posted, "I cannot in good conscience back the war against Iran." He added, "Iran posed no imminent threat to our nation." President Trump said he couldn't have been more wrong.
When somebody is working with us that says they didn't think Iran was a threat, we don't want those people.
And on a personal note,
I always thought he was weak on security, very weak on security.
Kent was known for aligning himself with various far-right figures and for supporting President Trump's claims of election fraud. Linda Kenyon, CBS News, the White House.
Israeli officials say 2 more top Iranian figures have been killed in overnight strikes, including the Islamic Republic's top security official, Ali Larijani. Then the Pentagon says that more than 200 U.S. service members have been injured in the Middle East during the war and 13 have been killed. President Trump is rescheduling his trip to China amid the U.S.-led war in Iran. And instead of heading there this month, he'll go in 5 or 6 weeks.
I look forward to seeing President Xi. He looks forward to seeing me, I think. But I do look forward to seeing him. We have a good relationship with China.
As Miami International Airport, a nonprofit group, is distributing food to help TSA agents who are working without pay.
In the employee parking lot at the airport,
Thank you. Have a good one.
TSA employees lined up in their cars getting bags of food from Feeding South Florida. President and CEO Paco Velez says
it's really important to make sure that folks have something to eat on the table.
The workers are picking up bags full of staples, including milk and produce, and Velez says they're going to work.
Knowing they're not going to get paid, but trying to make sure that they're keeping our airlines safe.
Allison Keyes, CBS News.
Lingering pain at the pump.
The national average for a gallon of regular gasoline is now $3.79, according to AAA. That's up 7 cents in just the past day.
I'm getting way less gas and paying way more money.
Average gas prices are now up 90 cents a gallon from a month ago. Jim Crisula, CBS News.
Hundreds of thousands of people are taking part in or watching New York's St. Patrick's Day parade.
The Irish flag is getting plenty of sunshine as marching bands and bagpipers move through. New York Archbishop Ron Hicks experiencing his first St. Patrick's Day parade.
Before the Mass, everyone was telling me this day was going to be big. It was going to be special. It was going to be something that I had never seen in my entire life. And it has lived up to the hype.
Mac Rosenberg for CBS News, New York.
Stocks are up. This is CBS News. A Harlem legend has died. CBS's Deborah Rodriguez has details.
It's showtime at the Apollo.
Co-host Kiki Shepard has died.
All right, we'll bring out the lovely Kiki Shepard. All right.
She hosted with Steve Harvey from 1987 to 2002, introducing aspiring performers at the iconic theater.
During the 60s, when Bobby Bland would take his brassy blues band to the Apollo, he'd leave the women screaming.
She appeared on TV shows like A Different World and Baywatch and worked on Broadway in the 1970s and 80s. Her publicist says Kiki Shepard suffered a massive heart attack in Los Angeles. She was 74. Deborah Rodriguez, CBS News, New York.
Amazon says it has started offering faster U.S. deliveries of selected products for a fee. It says customers in more than 2,000 cities, towns, and suburban areas can now get orders from among 90,000 items delivered in 3 hours. Jennifer Kuiper, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, less than 55 minutes to go until we wrap up the trade on this Tuesday.
Happy Fed Eve.
I know, exactly.
Fed decision
Happy
day.
St. Patty's Day.
Yeah, wow.
I know, what else?
That's it. The Ides of March was on Sunday.
Yeah, well, I know we kind of missed it. Did we get Micron earnings also tomorrow?
We got Lululemon today.
Yeah, we do get Lululemon. Yeah, Micron tomorrow. We're just kind of doing our thing.
Sometimes you think that I have answers like as powerful as the Bloomberg terminal. And I don't have the answer. And I would just refer you right to the terminal.
You do. Stocks are off their best levels of the session, but we are green across the screen. We're going to get to the market trade in just a moment. We are going to talk, though, a lot about NVIDIA.
Yeah, it's day 2 of GTC, the company's developers conference. Bloomberg Intelligence's Mandeep Singh is here. He's going to be speaking to us all about the highs, the lows, the partnerships, and that $1 trillion number that was thrown around by Jensen. We got a little clarity today.
Yeah, the reality of such. Also, March Madness as perhaps an appropriate metaphor for the state of the world and financial markets right now. Greenwood Capital's CIO will explain that one.
BRKT on the Bloomberg terminal. Fill out your bracket. You've got about another day to do it. Also, we're going to hear from Oak Tree Capital Management co-chair and co-founder Howard Marks during our 4 o'clock hour.
All right, a lot coming up over the next 2 hours. Let's get to it, though, and check on that trading session. Here's once again Charlie Bell.
All right, I thank you very much indeed. Micron after the bell tomorrow, up right now by 4%. We got Lululemon coming up after the close of trading today. The Dow, the S&P, NASDAQ all advancing. Got to begin with the big story continues to be oil. West Texas Intermediate crude back above 96.04 right now, up 2.7%. Barrel of Brent up 3.2%, 103.41 for Brent crude. The Dow, the S&P, NASDAQ all advancing right now. Stocks staging a cautious advance. The S&P up 17, up 0.3%. The Dow up 82, up 0.2%. NASDAQ up 80 for the NASDAQ Composite Index, a gain right now of 0.3%. The VIX at 22, the 10-year on this Fed Eve, 4.20%. The 2-year ahead of the decision tomorrow, 3.66%. And spot gold, little change, down under 0.1%, but holding above 5,002 the ounce. Crude, the big story, 95.94 right now, up by 2.6%. Well, as for markets, oil, and the war on Iran, Marta Norton is chief investment strategist at Empower Retirement.
While this might be longer than most of us would like to see, it's not an actual long-term disruption, and we will see some sort of normalization. I think when we're thinking about scenarios, maybe you're looking at a few weeks, maybe a month or more of disruption, but not something that stretches into the 6-month type of time frame, and I think that's undergirding markets broadly.
Empower's Marta Norton discussing the price of crude oil. Oil majors are higher, along with crude. ExxonMobil up now by 1.2%, Chevron up 0.8%, ConocoPhillips up by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that. Came out about different partnerships that NVIDIA had with different companies. That happens every few months at these GTCs, whether it's in San Jose in March or back in October, I believe, in Washington, D.C. What are the most important partnerships that have been announced?
I mean, look, they're trying to expand the ecosystem, and they want to convey to the street that it's not just about the data centers, but also about autonomous vehicles with the Uber and Lyft partnership. And actually, the stocks were up today. So physical AI is a big theme for NVIDIA. And their whole thing is, we are a systems company. Don't treat us like a chip provider who's just supplying the GPUs.
Okay.
We do end-to-end systems.
But how much do they make from just the chips versus how much they make from these other markets?
I mean, right now it's all data center driven.
Exactly. And the idea is that they want to show that there's this physical AI. There are these robots that are going to be folding our clothes and doing our dishes, and that's going to be powered by NVIDIA. You cover Uber and Lyft. You cover ride sharing. Is there a future there for NVIDIA inside these cars?
I mean, it's a moonshot for me. And
Okay.
look, all these hyperscalers have moonshots. In the case of Alphabet, we know Waymo has paid off, but it took more than 10 years, you know, for that to get to a certain point. So from that perspective, I think it's still ambitious in terms of revenue generating opportunity. But look, I think that's what you can do as a CEO, is to say that you have technology that is pervasive, that is not too niche. And NVIDIA has proven, you know, the fact that they're guiding to $1 trillion in revenue through 2027 is a testament to the fact that they have expanded the addressable market in a big way.
Address that number, because we did see the stock pop in the aftermarket on it, and then it pulled back again. And all of us were kind of like searching through and like reminding us about what they've said. Was that a big upgrade in terms of their forecast, or not really?
It certainly is. From a growth perspective, 2027 growth numbers, consensus numbers are at least 5% above where consensus was based on this 1 trillion guide. The reason why they are not getting the credit from investors right now is because it's all driven by NVIDIA's supply agreements. They have locked in TSMC's supply. I would argue if Google GPUs have more supply, they would be growing faster too. So right now, because the market is so supply constrained, if NVIDIA is saying they have locked in 70% of TSMC's wafer capacity, well, guess what? Anyone else who wants to make a chip cannot make a chip because there is no supply of TSMC wafers.
That's amazing. 70%.
Yes.
Wow. That's
and
amazing.
they prepaid $95 billion. NVIDIA did. If you look at their just recently reported quarter, they had $95 billion in prepaid commitments to their suppliers, notably TSMC and, you know, some of the memory guys. So
they own it, and it's harder for everybody else.
I would argue Google GPU is a very close second to NVIDIA. The problem is they cannot ramp up supply.
So explain how that constricts a company like Broadcom or AMD.
So Broadcom also guided for $100 billion in revenue for 2027, which is why I think NVIDIA gave that 2027 number, is because...
So Broadcom says $100 billion, NVIDIA says $1 trillion?
Trillion through 2027. So if you kind of do the back of the envelope math, it equates to about $500 billion in revenue for 2027.
Okay.
So from a ratio perspective, Broadcom and NVIDIA are currently at, you know, Broadcom has a 10 to 15% market share. NVIDIA has almost 75%, and then you have AMD. That ratio is still more or less in line in 2027, and that's why they guided to that.
But the $500 billion extra figure, does that imply no growth then in the industry that year? Or for NVIDIA that year, if they're bringing in $500 billion this year in that category and $500 billion next year?
So right now they're at a $215 billion run rate in data centers.
Okay.
In 2026, it goes to $375 billion. So that's together, like a 70%.
Okay.
Yeah.
And then for 2027, it gets to $500 billion, which is another 35% growth. So their growth is still astronomical when you think about a company of this scale growing at 70% and then 35%. That's phenomenal. So there's nothing to take away from, you know, what they are doing in terms of execution and how they're ramping up. But partly that has to do with how well they have managed the supply chain. It's like the Apple days, you know, when Apple was ramping up iPhones, they had a lock on the supply chain. Similarly, you see that with NVIDIA. They have managed the supply chain extremely well in an environment where everyone is supply constrained. NVIDIA did a great job of managing that.
Mandeep, in terms of NVIDIA putting that lock on the supply chain, is that because the visibility and the actual orders, they're there? Like, I keep wondering, how much are they kind of locking in just to make sure they own it, right, and have it as the demand comes in? Like, how much are they guaranteed actually comes to fruition?
Well, they have the best performing chip. And that's why, you know, I said it's really a tight race between NVIDIA and Google GPUs. Everyone else is behind. And so from that perspective, the fact that hyperscalers are still 60% of NVIDIA's $500 billion revenue in 2027 just goes to show that there is no other place to go. If Meta wants to add AI infrastructure capacity, they have to get NVIDIA chips. Same thing, even Google, with their TPUs, is a big NVIDIA customer. Why? Because that's the only way to add AI infrastructure capacity, not with their own TPUs. They cannot make more TPU chips. So that's why all these hyperscalers are still such a big chunk of NVIDIA.
It's pretty remarkable, right?
Yeah, I'm looking
in terms of really no competition, right? Or at least they're not in the position of where NVIDIA is at this point.
I think that supply factor is huge. If TSMC was to somehow raise their supply of chips, then I think Google TPUs has a shot at really ramping up faster. But until that happens...
Are they not doing that, or they can't do that?
You can see TSMC's CapEx for 2026. And all the CapEx, it takes about 18 months to ramp up a fab. For it to be online. So this is, the lead times are quite long when it comes to ramping up supply of TSMC's manufacturing capacity.
Just a few of the headlines on partnerships. Salesforce teams with NVIDIA on AI agents. Hyundai, Kia, NVIDIA expand autonomous driving partnership. IBM announces expanded pack with NVIDIA. Salesforce, I mentioned. ST Microelectronics to partner with NVIDIA. The headlines go on. HPE unveils AI factory supercomputing advancements with NVIDIA. Does everybody want to work with NVIDIA?
I mean, that's if you have a 75% market share in one of the fastest growing areas in the enterprise market, and everyone sees it's going to be $1 trillion market, then you go with that 75%.
Here's one. L'Oreal expands AI partnership with NVIDIA.
I think it's just wild.
L'Oreal?
They're planning to use 50% of free cash flow for investor returns. Is that smart when they say they're going to do buybacks, dividends?
It is the Apple playbook. To me, Apple did exactly that in terms of, being shareholder friendly with their buybacks and reducing the share count. You're seeing that.
Such great stuff. As always, Mandeep Singh of our Bloomberg Intelligence team.
It's 3:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ, all advancing right now. Price of crude advancing as well. West Texas Intermediate, 95.83 a barrel, have been trading above 96. Right now it is up 2.4%. Brent crude, 103.25, up by 3%. Bottom line here, stocks higher with the S&P up 22 now at 67.21, up by about 0.3%. Dow Industrials up 103, up 0.2%. The NASDAQ Composite Index up 97. For NASDAQ, a gain of 0.4%. The VIX at 22, the 10-year 4.19%, and ahead of tomorrow's Fed decision, the 2-year 3.66%. Gold, $5,000 the ounce even, down 0.1%. And again, West Texas Intermediate crude up 2.5%, 95.87 a barrel. Tracy McMillian is head of Global Asset Allocation Strategy at Wells Fargo. She told us this morning she is keeping an eye on what is happening with the price of crude oil.
You know, the most important thing for markets right now is how much traffic is moving through the Strait of Hormuz. And so that's impacting the price of oil. And then in turn, that is impacting inflation calculations globally.
Tracy McMillian of Wells Fargo Bank, and we'll have a whole lot more on oil and energy coming up for you in just a moment right here on Bloomberg Business Week Daily. Briefly, airlines are jumping as some executives cite strong bookings as travelers rush to lock in fares ahead of a potential rise in fuel costs. Case in point, Delta up now by 6.5%, American up 3.3%, United also up 3.3%, Southwest up by 1.9%. Recapping, WTI up 2.5%, 95.86 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. President Trump today saying that as soon as the war is over, oil prices will drop like a rock. And Carol, he says it won't be long before cargo ships can move through the Strait of Hormuz.
Time now for a conversation on commodities. We like to look at it. There's been so much going on in this group. It is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, you can head to goldencrestmetals.com/guide. That is goldencrestmetals.com/guide. And we have seen, Tim, prices oil, WTI, and Brent crude, although we're off our best levels of the session, our highest levels, I should say, of the session.
Yeah, up 2.5% for WTI, 95.82 right now. Brent over $100 a barrel, 103.40. That's up another 3.1%. As we speak. Let's bring in Samantha Dart. She's co-head of Global Commodities Research at Goldman Sachs. She joins us from New York City. Samantha, good to have you on the program. We talk a lot about gas prices and how they're up about $1 just going back to a little over a month ago. But you have a note out talking about other refined products. We're talking jet fuel, we're talking heating oil, and diesel, for example. Why are other refined products more affected than, traditional gasoline prices with this shock?
Yeah, the majority of the crude that you're missing from the Middle East is heavy crude. And that type of crude tends to produce more of what they call the dirtier products. So your diesel, your jet fuel, fuel oil. So you end up with a production of those refined products in particular, more impacted and losing more barrels than gasoline at the margin. So jet fuel, I think, is the best example of that, with prices skyrocketing.
Yeah, I always think this is important when we dig, and we did a little bit of this with an earlier guest, Ellen Wald, but just like understanding, again, we talk about commodities, we talk about energy, and we throw everything into the same kind of bucket, if you will, but understanding the distinctions and differences in terms of how it can impact our world. Talk a little bit more about this, and when it comes to refined oil products, where it's all coming from, how it gets around the world, and certainly how it can affect the global economy and specifically the U.S. economy.
Yeah, on one hand, you have this outright supply of a lot of these products from the Middle East that is not crossing through the strait, right? So, for example, a lot of your Asia naphtha comes from the Persian Gulf. A lot of your European jet fuel comes from the Persian Gulf. But I think in addition to that, because you're also losing a lot of crude supplies from that same region, you end up losing your ability to produce additional barrels of those products, whether it is in Asia or Europe or in other places. And because these products are widely traded, what we end up seeing is that product prices, from gasoline to diesel to jet fuel, they go up everywhere because you end up, if it's cheaper here than there, you end up trading and moving those products around so that you equalize the price. So even though certain regions are more directly impacted by the volumes not crossing the strait at the moment, your marginal increase to product prices, they end up impacting all the regions.
You know, I'm looking at the futures curve on the Bloomberg terminal right now in terms of where we think, or where traders rather, think that at least WTI is going to go over the next few months. What's your prediction in terms of, okay, if there is some sort of ceasefire, if the Strait of Hormuz opens, how quickly and where will oil prices get down to?
Yeah, think about it this way. I think there are two key variables here. One are the volumes that we're losing every day. And two, the market perception of the duration of this conflict. The volumes we're losing are still extremely high. We have barely anything crossing the strait at the moment. And even taking into account the IEA Strategic Petroleum Reserves release that was announced last week, we end up with north of 10 million barrels a day of oil and products that we're missing every day. So that's one. But the second component that goes straight to what you just said is that market perception of duration. And the more concerned the market becomes, that's when you tend to see your Brent prices cross $100 a barrel. That's the signal that it sends, because you can only destroy demand more significantly once you're above that threshold. You don't, historically, we haven't seen much of a response below $100 a barrel. We're now seeing, you probably saw the headline of SAS curtailing flights because they probably can't pass through such an uptick in jet fuel prices to consumers. So that's the signal that the market is sending. So to your point, if you have, let's say, a ceasefire tomorrow, the signal that sends is, then maybe the disruption through the strait is not going to last much longer. It's going to take, a few weeks to restart refineries, restart oil production. But of the need of destroying demand, that goes down, and then you can give up a lot of your risk premium. You could, just as easily as you've gone above $100 a barrel for Brent, you could be back in the low 80s.
Right. Demand destruction can certainly happen. Hey, one of the things I think about, Samantha, coming out of this war, we hope sooner rather than later that there is an end to the U.S. war in Iran, and Israel pulls back as well, their involvement. Is there something different that we're going to see in terms of national security moves when it comes to energy supplies and maybe things being built out closer to home where they can be? Is there something longer term that happens in terms of the global energy supply chain?
I think that's such an important point. And it's not just what's happening now. I think since the COVID shock, we've seen how we can be vulnerable to supply chain disruptions. That was followed by the European energy crisis in 21. And now we have this conflict that is getting a lot of disruption worldwide. So I think you're absolutely right. This ends up incentivizing, I think, the widespread build out of strategic reserves, initiatives like Project Vault in the US, or the strategic reserves build out that we saw in China even last year. I think we're likely to see more of those initiatives, exactly because countries are likely to try at least to become more self-sufficient. You look at Europe today, for example, almost 50% of Europe's energy consumption is still covered by imports.
Yeah, right. I mean, it's just tremendous. And you think about, too, certainly Asia, China, we talk about this a lot. I wonder if, in terms of you guys game out scenarios longer term, do you see a world where global energy markets, Iran is not really factored in because of some of the restrictions, right, in terms of where it can go? Is there a world where Iran is a part of that global mix?
It's really hard for us to say. What we do best, I think, is count the barrels and work the scenarios of how pricing can respond to different supply availability. So right now, Iranian cargoes are pretty much the only ones crossing the strait, and not even the usual number of tankers. So we'll continue to look through how that crossing evolves, what's available to the market, and work through the scenarios.
You know, I want to just talk about domestic production a little bit. And, you know, our own commodities, Bloomberg Intelligence analyst likes to say the cure for high prices is high prices. But with the oil industry, it's not as easy as just producing more, especially if it involves infrastructure. And I'm wondering how higher prices here in the U.S. affecting consumers might make production change in the U.S. or cause companies in the U.S. to invest more in production like the president wants to see. Is this enough of a supply shock to do that, or does it seem so short-lived that companies will not make the CapEx investments to increase production?
So firstly, I would say that your last point, I think, is exactly right. Usually we see lack of investment in supply reflected in a back end of the forward curve that rises and rises, and that signals the need for additional long-term investment. These things can't be built overnight. But I would say, given the rally that we've seen in oil so far, what we've seen is that a lot of oil companies in the U.S. have hedged. So you see at the margin a little bit of an increased incentive for growing production, but that's not overnight either. I mean, we like to call shale short cycle supply because it doesn't take years to show up. It takes months, but we're still talking 6, 9, 12 months to see that show up.
All right. I don't know if I can do this with the co-head of Global Commodities Research, but I'm going to go ahead and do it anyway. Samantha, should we be talking, or do you guys talk about, as a result of this, it's a reminder that it's good to have different forms of energy. And I think about alternative energy, which has taken a major backseat. Certainly, it feels like with this administration. I know Europe and the world thinks differently in terms of alternative forms. But do you factor that in about how this war again is reminding us that it's good to have different forms of where our energy comes from?
No, but again, I think you're exactly on point. So, for example, let's look at China. China dominates in a lot of metals production and refining, but not so much in oil and gas. They are net short oil, they are net short gas. So what did China do? They invested a lot in EVs domestically. So you're shifting your demand towards electricity, because electricity you can produce. And to produce electricity, they are relying again on what they have, which is coal. They can produce it and stockpile it, and renewables as well. So if you turn to places again like Europe, Europe has some oil and gas as well, no question, but those reserves are not growing. So by investing in more renewables, yes, they can become a little bit more resilient. The only thing is they shouldn't shut down their alternatives.
Samantha, we got to run. We got to continue this in the future. Samantha Dart over at Goldman Sachs. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index, Russell 2000 all higher, along with the price of oil. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shai. That's right. U.S. stocks positive in a choppy session. The Dow's currently up 82 points. S&Ps are higher by 19, and the NASDAQ, that's up by 0.4%. The U.S. 10-year yield is at 4.2%. Gold is in the red. Oil is in the green. And Bitcoin, that's trading higher by 0.7%. Among the main 11 S&P sectors, leaders were energy and consumer discretionary. Only healthcare and staples were in the red. And leaders to the upside in the Dow, IBM and Amazon, while J&J and Salesforce led to the downside. And speaking of Amazon, the company sees AI doubling AWS sales to $600 billion by 2026. In deal news, MasterCard buys stablecoin firm BVNK for up to $1.8 billion. And in the airline space, Delta raised Q1 revenue forecast on demand momentum. In other news, Qualcomm is buying back $20 billion in stock. And wrapping things up, Lululemon reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. And for live breaking news over your Bloomberg, type in Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Daddy, can I drive?
Yeah, sure, why not?
Do I look like I drive a minivan?
Shut up and drive.
Don't drive angry. Don't drive angry.
I'll drive. Shotgun.
This is the drive to the close.
If you had access to a car like this, would you take it back right away?
On Bloomberg Radio.
Mike's hot, so here we go. All right, folks, we are just
Mike's
back. 18 minutes until we wrap up the trade on this Tuesday, March 17th. Keep in mind, we're talking about a lot of stuff. The war, obviously, we get it. There's things going on, but let's not forget we do get that Fed decision tomorrow. That's what we'll be talking about at this hour tomorrow. So 24 hours from now, of course, we get the decision at 2 p.m. Wall Street time. We'll be all over it. And we'll see what the Fed has to say, how they factor the war in and how they think about inflation and how many dissents there are. I think
just a little deep tease in about 25 minutes. Just a little mental math there. We're going to be speaking with StartupPal, U.S. and Canada economist for Bloomberg Economics. He's going to be joining us here in the Bloomberg Interactive Broker studio.
Yeah.
He is going to give us a little idea of what the Fed conversation is happening in Washington right now.
I'm thinking Walter Todd might have some thoughts, too. He's President and Chief Investment Officer at Greenwood Capital Associates. He joins us from Greenville, South Carolina. Good to have you here. How are you? And how are you looking at kind of the market environment against the major macro environment that's out there?
Yeah, hey, good afternoon, guys. Thanks for having me. March Madness. We're a host city here in Greenville for the first round, so that feels like what the world feels like right now, and certainly markets over the past several weeks. As investors try to digest everything that's going on. If I told you the headlines, if I'd had the headlines ahead of time, we're going to go to war with Iran. Oil is going to be up 50%. I'm not sure I would have guessed gold would be down 5%. The equity market would be down around 2%, given that scenario. So it's a little bit hard to figure out. It's kind of like picking the brackets and trying to figure out who's going to win the championship.
BRKT on the terminal.
That's what he's doing.
That's
But
right.
Walter, go there, because we just did a story about how Bitcoin is kind of an oasis of calm. If you look at Bitcoin over the last 2 weeks, it's actually rallied, easily outperformed what we've seen in U.S. equities. I just feel like there's a lot of cross currents that don't exactly make sense to me, considering the macro. So what does it mean? Investors looking past all of this, or what?
Yeah, I think what you're seeing in the market is just kind of this. We saw it first in the equity market, this rotation trade that happened, late last year and into early this year, where people didn't want to get out of equities. They just wanted to move from, say, the Mag 7 to value and small cap. I think that's kind of what you're seeing here, just across asset classes, right? You mentioned the Bitcoin was underperforming for a long time, and more recently you've seen a rotation into that trade. We've seen some rotation, not too much so into bonds, but I think people are trying to keep money allocated somewhere in hopes that we're going to get some type of resolution to this situation. I just find it hard to imagine that, the lows a week ago, we were down 5% in the overnight futures market.
Yeah.
It's hard for me to imagine that we get through this episode with that's it. I mean, that's all we get.
I'm so glad you went there because I know a lot of people who are wondering, wait a second, what has actually changed in the trade since then? And if anything, or in the macroeconomic scenario, if anything, the end of this has, I think, gotten even muddier for a lot of people. So what at what point does the market say, wait a second, this is not, quote unquote mission accomplished at this point, and this does increasingly look like it could be an extended conflict?
Well, Tim, your guess is
well. It's not for you to make a prediction. It's like what has to happen? What has to happen for people to understand that? And I'm not saying it's going to happen, but I think a lot of people are like, wait a second, where's the sell-off as a result of this?
Right. No, I think it's again the continuation of oil, staying above 95, going back into 100. Recall that futures overnight a week ago. Oil hit 120. WTI did in the overnight market. So if we breach 100 again and stay there for multiple days, that might be something that catalyzes that move. You mentioned the Fed meeting tomorrow. I mean, depending on what they say, that could be a catalyst for the market to maybe retrench a little bit. So there's it seems like there's weeks worth of headlines every day right now. So there, you could get headlines that move the market one way or the other in that direction.
Well, having said that, one of our big stories, and certainly among the most read, Walter, today, has to do with a top counterterrorism official, staunch MAGA Republican, resigning over the war with Iran. He claimed that Israel had misled President Trump into believing that the regime in Tehran posed an imminent threat. And he said he couldn't support sending the next generation off to fight and die in a war that serves no benefit to the American people. He says, I pray that you will reflect upon what we are doing in Iran and who we are doing it for. It makes me wonder, what could come next? And do all of us as citizens, but also as investors, I mean, that's kind of our world in a big way, that's your world, have to be ready for maybe what comes next? Could it possibly be Cuba? Is it continuing to be, potentially a White House and a president who kind of does what some say what he wants?
Yeah, I think in this day and age, as an investor, you're running portfolio with other people's money, you've got to be flexible and pragmatic. I mean, this is all of these situations are very fluid and changing rapidly. So for us, that means staying disciplined to allocations, not just now, but on a timely basis, at quarterly at least, for example. It's maybe keeping a little extra on the side to take advantage of some volatility. We still have individual name volatility that is off the charts, and this goes back to 2025. And you can take advantage of that both on the sell side and the buy side as you see those moves. But again, to your point, there's just it is an extremely fluid situation. It's exhausting at sometimes doing this every day. But you've got to be pragmatic and take in the information as it comes.
Walter, just to wrap up, 40 seconds. So what does pragmatic mean in terms of portfolio management? Is it cash, short-term duration on the fixed income side? Like, what does that mean just quickly?
Yeah, I think it's staying disciplined to your allocations for one. I think it is having a little bit of extra cash on the sidelines to take advantage of the volatility. And I think it's looking for defensive growth. So, for example, healthcare is a sector that we like right here in the market as well.
Are you buying defense? Are you suggesting to investors buy defense?
You mean like
defense stocks?
Not defense.
I mean like defense makers, government contractors in the defense world.
Yeah, no, I think certainly having an allocation there, makes sense as well.
All right. Hey, listen, always good to check in with you. Good luck though on your brackets, and we'll see what happens there. Walter Todd, President and Chief Investment Officer at Greenwood Capital Associates, joining us from Greenville, South Carolina.
Look, I think a lot of people share what Walter's thinking, which is, okay, well, why did we see a decline of 5% in markets, and then now everything's back, and oil's still high, and there's no clear end to this.
Yeah, and then, when people talk about earnings estimates, that hasn't come undone yet.
No,
we're getting ready, right?
Yeah.
So we go back to fundamentals soon. Hey, folks, we're counting you down to the close, Tim and I, on this Tuesday. Stocks hovering near their kind of worst levels of the session, still green, though, across the screen.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we're just under 7 minutes to go until we wrap up the trade.